Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. All eyes were on the OPEC meeting over the weekend. What's come out of that?
Well, yes, positive stuff coming in from there where the OPEC will increase production, but at a very modest pace. So what we've seen in the previous month is that OPEC increasing production by 400 and 500,000 barrels per day. But for the month of October now, it's just about 137,000. So much lower, and that's the reason you are looking at 1 to 2% of gains in the crude prices in the Asia right now. What also has seen very strong gains has been metals as a sector, with gold prices trading near record highs of $3,600 an ounce. All of these markets are reacting to the weak U.S. jobs data on Friday and the U.S. unemployment that raised to 2021 highs as well. Traders are now assigning 92% chance of a 25 basis point rate cut by the Fed in the month of September itself. Not just gold, silver is trading at a 14-year highs. Copper price is trading at a 1-month highs. You also have some of these agri commodities doing quite well as well. So whether it's about coffee, rubber, we are trading at multi-month highs for many of these.
Manisha, thank you for that update there on the commodities front. Now, Japan's Prime Minister Shigeru Ishiba announced over the weekend that he will be resigning. He will continue his duties until the new LDP leader is elected. Ishiba came to power less than a year earlier, and since then, his ruling coalition lost its majorities in both the houses of parliament amidst voter anger over the rising living costs. He has instructed his Liberal Democratic Party to hold an emergency leadership race. With that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call on the other side to set you up for the day's trade.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, morning.
Hi, good morning. Is love in the air again? No, let me not be tongue-in-cheek, but I think the biggest headline came, this was on Saturday morning, right, when we had a statement from the US president sounding very different after months. So let's see, starting off with hope.
Well, did you see the US Open final, Prashant, last night?
I didn't see a single
Alcaraz.
game, Nigel.
Oh, no. All right.
What happened?
I saw a bit of it.
11:30.
11:30.
Wake up till
Yeah.
4:30. It just doesn't work.
By the way, it got delayed because President Trump had to make his presence felt out there.
I saw something that he's
and
late.
the audience, you know, they didn't hold back. You know, it looked like there were only Democrats in the stadium out there.
But New York, right, Nigel?
Yeah.
Finals in New York.
Yeah,
so New York
yeah.
is New York.
A couple of reasons, security reasons, it got delayed, the start was delayed, so a lot of booze out there, but we've got markets to contend with, so let's get straight.
We only have one market to contend with because rupee markets are shut.
That's yes.
And I think maybe that affects volumes as well, a little bit at the margin. We'll see. So, I mean, that's number one. Rupee markets, money markets are shut, so you don't have any cues from there. But it is very much equities which are open. Now, I'll start with what's top of mind, right? President Trump called Prime Minister Modi a great Prime Minister and insisted that ties are special. I think this is what is being talked about, what this means. Is this an overture? How much should one read into this? Is this thawing of relations, etc., etc.? Why don't we listen into President Trump himself?
I always will. I'll always be friends with Modi. He's great. Prime Minister, he's great. I'll always be friends, but I just don't like what he's doing at this particular moment. But India and the United States have a special relationship. There's nothing to worry about.
So that was President Trump. And then the reason it was seen as a thawing of relations is because Prime Minister Modi responded and responded warmly. That is the exact quote tweet which essentially came from Prime Minister Modi. Deeply appreciate and fully reciprocate President Trump's sentiments and positive assessment of our ties. India and the US have a very positive and forward-looking, comprehensive and global strategic partnership. And I thought that got people excited, and why not? I think, and that's absolutely correct. It's only factual without reading too much into it. This is President Trump's comments come right after him in a couple of days. 48 hours after you got that social media post from the president himself saying that, well, you know, too bad we've lost India to China. And then you got this, and then Prime Minister Modi responding. So a fair bit of chatter, a fair bit of speculation whether this was, this is thawing of relations. Some even going to the extent of saying whether this was kind of choreographed backstage and then, we saw what we saw on social media. And whether, things are working overtime. And this is the first step towards normalizing some of course, what has gone wrong over the last 1.5 odd months or so. So I think it's very significant for the market as well because, these 50% tariffs, the additional 25% tariffs have been the big hanging sword. I remember, 3-4 days back, you had, that tweet from President Trump and we said, well, it was looking less confrontational. This is 3 days back, middle of last week, early last week. So looks like, at least, I mean, the language which was being used, which was extremely sharp, etc., that's starting to soften a little bit. But we'll have to see. At the end of the day, platitudes will matter only so much. You need policy action, firm policy action. And the first, of course, is to take this 25%, this additional 25% off, and then work down the rest of the 25% as well. So that's something which we will continue to get you views on. Now, just to go to the US, you had a solid miss on US jobs data. The consensus number was 75,000 jobs, 22,000 were added, and it basically reinforced that on the 17th of September, a 25 basis point cut is a given. Could it be 50? There is some small pricing of even 50 basis points on the 17th of September, but 25 now seems to be a given. S&P was down about 0.33%. We ended mixed. The 10-year was down 7 basis points. The dollar index lost about 0.6% to about 97.77. So that is the overall picture in terms of both equity and macro markets and how they ended at. By the way, the dollar index, and we'll put that chart up later, it's an extremely significant trend line which rises up all the way from the global financial crisis, 2008, 2009. And we're exactly at that support at where we closed on Friday. Positioning, and this is important as well. So this is the second largest short positioning from FIIs and index futures ever. The first was on the 24th of February, about 2 lakh contracts. It's about 1.9 lakh contracts now. So extreme shorts, it sometimes acts like a coil and you go the other way. In any case, I mean, if you're wondering whether what we heard from Prime Minister Modi and President Trump will lead to the market doing well, I think mostly it's gone on the back of maybe a little bit of short covering, a little bit of lightening of shots from foreign investors. So I think this is a significant data point. By itself, it doesn't tell you very much, but accompanied by other news flow around it, I think becomes important to take note of. I'll just tie in the levels. Nifty, of course, on Friday managed to close above the 20-day moving average for the second day in a row. And until the low of 24,522 is not broken, the pullback can continue. On the way up, 980 to 25,000 is significant resistance zone for the Nifty. For the Nifty Bank, we saw a positive weekly close. That is last week. Here, supports out of the recent low of 53,561 and resistance is at the retracement levels 38 and 50, which is 54,490 and 54,777. So those are levels for the Nifty Bank as well. GIFT Nifty, I think, indicating a higher start this morning. Nigel is standing by with what the F&O stats are telling us. Nigel, over to you.
Well, the bulls will be eyeing a bold start to the week. And I'll give you 3 big reasons. The Nifty gold ratio, well, that is indicating that we're at extreme levels. That's point number 1. There is hope that maybe we get some kind of a breakthrough with regard to the sound bites that we're seeing on India as well as the United States. And point number 3 is the FIs, well, they're positioning in the cash market in terms of holding is the lowest we've seen in 13 years. And in the, in the F&O market or the index futures, it is net short. Let's take those points point by point. If you look at the Nifty gold ratio, that's come down to around 2.3. History suggests that, in fact, around these levels, we do see that the Nifty, either the Nifty bounces back or you have gold that cools off. So that's going to be, an important data point that we will be eyeing. The positive commentary from both President Trump as well as, the sound bites that we got from Mr. Modi as well as his team, that as well as positive. Let's get to the third point, which is the short positioning. The short positioning, well, they added close to 1,500 short contracts. In percentage terms, this is the highest short positioning we've ever seen. Keep in mind, when there were 2 lakh contracts, the short positioning was around 85%. So if you look at it in percentage terms, this is the important data point. 92.6% on the short side, that's an extreme level. And I'll tell you what, in the last 5 sessions or so, the FI net short positions have moved up by close to 10%. However, they're not getting follow through on the short side because the Nifty hasn't fallen. So that chart as well will come up for you. In absolute terms, you have around 1.9 lakh contracts on the short side. And in fact, the Nifty is more or less holding its ground. Well, moving to, the options data then, you have the 24,700 call that had a fair bit of open risk build up, 24,800 call, good amount of open risk build up. And on the downside, the 24,650 put a fair bit of open risk build up, which brings us to the levels. Last week's high is very, very important because, you have this high, 24,981. September 4th, that's the important high that we saw there. So that becomes a near-term resistance level. Going by the options data, 24,600, that's a support level. Well, moving to the Nifty Bank then, that was showing signs that it wants to give up its recent underperformance. However, the 20 DMA, well, that becomes the first resistance mark that you're looking at on the Nifty Bank. 2 stocks that I'm looking at from the broad markets, Amber Enterprises, they've gone ahead and they've raised 1,200 crores from one of their subsidiaries. Remember, when they acquired the subsidiary, it was doing only 300 crores of revenues. Last year, they did 2,100 crores. And now the fundraise, could say that the value of this particular subsidiary itself is 12,000 crores for a company that has market cap of 26,000 crores. So I'll keep an eye out on that one. The second one is Suntech, one of those big underperformers from the real estate basket, pumping in close to 500 crores via preference issue, promoter entity, bulk of that, and some renowned investors as well. So we'll keep an eye out on both these 2 names. Back to you.
Okay, all right. So we'll keep an eye out on some of these stocks. By the way, in Asia this morning, there's an important piece of news. There's political change happening in Japan, and the market is reacting quite a bit to this. We saw the resignation of the present Prime Minister, Ishiba, over the weekend. And the reason why the Japanese market is so excited is that one of the incumbents who could be a potential leader or successor, Takaichi Sane, he is seen as a protege of the former Prime Minister, Mr. Shinzo Abe, and he's very pro-growth, pro-deregulation, doesn't like interest rates going higher, which explains why there's a big rally in Japan this morning. Other markets are also not doing too bad at all. I mean, pretty okay. Just keep an eye out on crude. Yeah, that's what we've been talking about. So there's a lot of political uncertainty in Japan right now. The yen is weaker. But if this gentleman, Mr. Takaichi Sane, comes into power, then the market feels that the pace at which or the expectation of the BOJ rate hikes, that will change, which is why the equity market in Japan is higher this morning. Just one more word, keep an eye out on oil as well because of the OPEC Plus meeting that happened over the weekend. They are, increasing output, but not the pace at which they're increasing output is reducing. So the market's feeling maybe a little tighter supplies, and therefore oil is also higher this morning. Well, let's take the conversation forward. We have Taimur Beg, Managing Director and Chief Economist at DBS Group Research with us. Taimur, great to have you in our studios this morning. What a pleasant surprise.
Good morning. Lovely to be here.
Wonderful. So much going on, so much to discuss, including, of course, what your interpretation is of the US President's statement that he made. Tell us that, but also tell us this, that India has done a lot in trying to fortify our economy here, in face of those 50% tariffs. So whether it's GST, whether it's a couple of other measures, do you think, numerically at least, these local measures are enough to offset 50%? Maybe 50% goes because of what we've heard. We don't know.
Right. I will compartmentalize the two issues. I think there was a secular need for some growth supportive measures anyway, independent of tariff, Trump, and everything. So when we look at sort of the loan deposit ratios evolution over the last 12 months, when we look at the capital market environment, extremely buoyant 23, 24, but from late 24 to now, it's not been that great. So to some extent, the three-pronged measures that we've seen, income tax cut, the RBI cuts, and now the GST rationalization, are great measures independent of what's happening on the external side. India can control what's happening on the external side. Trump may change his mind tomorrow, make things better or worse. The only thing we can do is work on the domestic demand side and the non-US aspects, doing deals with Europe, and Singapore's prime minister was in town, doing deals with Singapore and so on. So from that perspective, I think one has to sort of keep an eye on the prize type mentality that, we want domestic demand, we want manufacturing investment. We do what we can. We can't control what the gentleman in the White House is going to do.
But is it enough? Is it an offset? I mean, just purely when you do the math in terms of the economic impact, the GST cuts coupled with the kind of monetary easing we've had, is it enough to offset this, roughly 1 percentage point hit because of the tariffs?
Impossible to answer. Absolutely impossible to answer because we don't know the duration and the magnitude of tariffs. We have other uncertainty from semiconductor and pharmaceutical. So it is helpful. Is it enough? Only hindsight and Trump's tweets will tell.
By the way, Taimur is got a, you said a lot is going on, but I think he's got a freer kind of day today, Taimur.
Yeah, I was surprised by the fact that there's not much going on today. Yes.
Because money markets are shut.
That's right.
Yeah. So yeah, I mean, you can talk to us.
Happy to be here.
Taimur, President Trump hailing Prime Minister Modi and Prime Minister Modi reciprocating, do you think this warmth between leaders will translate into policy?
I think that posturing and policy are interrelated these days, especially given the way Trump operates. If he wakes up in the morning and he's feeling good about himself, that will translate into some policy action, but it is transient. That's the problem. The U.S.'s biggest casualty, in my view, in the last 8 months has been the lack of reliability. Tomorrow, we might celebrate some exchange of warm words between the two leaders. That doesn't mean that it'll be like that a week from now. That uncertainty is paralyzing. When we think about the investment environment in the 12 to 24-month horizon with the U.S. demand in mind, it is exceptionally uncertain because nothing that happens tomorrow tells us what's going to happen day after tomorrow. This is, I think, is the biggest casualty, and this is going to hurt investments related to the U.S. It might solidify other investments outside the U.S. We use the acronym TOTUS, trade outside the U.S. 89% of global trade is outside. That, I think, becomes more reliable. With the U.S., that overhang is going to be debilitating.
Today you also have the virtual BRICS meeting.
That's right.
Right, which is, I don't think that's gotten too much attention, but what's your sense? I mean, it's going to be significant or, it's like, everyone is hedging their bets to see what happens next.
Right.
So
It's odd, right? On one hand, the narrative from the U.S. is they only care about the U.S. They don't care about the rest of the world. On the other hand, they do care about every single other alliance that is being made because they see it as a threat to the U.S. So if the BRICS talk about some currency, tariff on them if they do that. Yeah. If they're going to have a meeting, to your point, better keep it low-key because you don't want Mr. Trump to start tweeting about it. Yeah. So the U.S. is sort of inside, outside. You know, the one storyline that we completely miss out because we are so distracted by what's happening in South Asia, East Asia, and the U.S. is what's happening in Central America. U.S. Navy ships on the waters of Venezuela. There might be other countries where the U.S. might want to institute regime change. So on one hand, the U.S. only talks about fortifying its borders. On the other hand, it's really, really pushing its force outside all over the world, from the Middle East to Central America. This makes, again, life very difficult for government officials who have sort of built an edifice of trade and commerce around U.S. reliability. So that slipping and that inside out is causing a lot of uncertainty. Biggest manifestation of that is, of course, in gold prices. More so than rates, FX, equities, it's the gold price that shows how uncertain we are about the days ahead.
Well, Taimur, good to see you in the studio, and put it on a lighter note. You know, it's like in high school. You don't want to go on a date with me, but you don't want me to go with the others as well, right? So just on the lighter note. But let's take a couple of those aspects forward. One is on gold. You know, the kind of move that we're seeing in gold has been phenomenal. It's done better than most of the stocks as well. And that's one data point that we're tracking from an equity market perspective as well. Point number one, so where do you see that headed? And the dollar index. You know, when Trump, came to office, we saw it dancing way to around 110. Now, from an emerging market standpoint, it's extremely important. It's holding around that 97, 98. Do you see more weakness on the dollar index, or do you think from here on we see a bit of a rebound?
Nigel, with that jacket, I'm sure there were lots of dates, so that's not an issue. But, okay, so on the gold side, historic relationship between real interest rate and gold is very straightforward. When real interest rates are high, gold prices fall. When they're low, gold prices go up. With that relationship, which over a 20-year horizon is a very strong relationship, gold would be at $1,600, not at $3,600. That difference tells you how much geopolitical uncertainty is being embedded,
right.
Whether it is a central bank balance sheet operation or individuals in China, in India, people are looking at gold increasingly as a source of hedge. So that, to me, keeps gold demand elevated regardless of the Fed does.
Okay.
Typically, Fed cutting rates is a bullish sign for gold. I think that is now breaking down.
Yeah,
I think
that correlation is broken a bit.
And it's really about the uncertainty. And I think as long as the gentleman we have in the White House stays, that uncertainty premium would be reflected very strongly on gold prices.
Before you answer the point on the dollar index, what are you expecting the Fed to do?
They'll cut, and they'll probably cut again. They probably would have cut without Trump, shouting at them, and they probably would have cut even without all these uncertainty with Governor Cook and so on, because I think the Fed's discussion tilt certainly is going toward labor market as opposed to inflation.
Okay.
They will worry about inflation, I think, down the road if indeed tariff-induced inflation becomes big.
Yeah.
But for the time being, they'll just focus on the labor market. On the currency side, big bifurcation. Against developed markets, the US dollar has weakened substantially. In emerging markets, it's been very heterogeneous. So you look at a country like India, weakness pressure against the US, but when you look at overall DXY, substantial weakness. I think that it sort of again tells you that the dollar is sort of pushing out its power in very asymmetrical manner. Countries that are subject to a huge amount of tariff-related issues, they will see their currencies weaken a bit. Currencies that can sort of stand up a bit to the US are holding up against the dollar. The biggest casualty in all this is the euro. I don't think the Europeans want a massively strong euro, but if you look at rupee's behavior against the euro, the way it has weakened, and the euro strengthened against the dollar, with all this tariff-related cross-current, question about competitiveness, issues related to China, everything gets even more complicated by the euro's sharp climb.
Very quickly, Taimur, one last question in terms of just figuring out flows. And this hurts a lot because the numbers are so stark in comparison. Nifty is flat for the year. I just checked the numbers again. Korea is up 25% last year. Mainland China, 40%. Hong Kong, 50% equity market. Do you see anything changing in those patterns, or is this very durable growth that's coming back to maybe a China or South Korea? Because that's where the money's been going. So just want to figure out if there's any change in the near future.
I think that was more of a relative valuation play.
Exactly.
India had become expensive. The US is very expensive. I think I've come to the show in the past and talked about the fact that the relative valuation certainly meant that even US money managers felt deploying some risk to East Asia, in spite of all the tariff mayhem, was worth it, and it's paid off very, very handsomely. In the case of India, I don't think we should look at it as a 12-month horizon. Let's look at it as a 60-month horizon. The strength in India's capital markets has created very interesting secular tailwinds for deal-making going forward. When you think about Indian companies with 20-plus PE, they can find it very worthwhile to deploy that valuation to pick up companies in Korea, in Japan. So that outward investment, which we never really saw in the past, is going to help India because that brings in tech.
Okay.
Tech transfer. So I wouldn't sort of look at the ongoing weakness as a major source of worry. It's a bigger stock issue. The stock issue is quite positive.
All right, Taimur, have a wonderful day, a free day, and enjoy yourself in the city of Bombay.
With pleasure.
Thanks very much for dropping
Thank you very
by.
much, guys. Thank you.
Well, I think we're going to take a quick commercial break here. But before we do that, let me quickly run you through what's lined up here on the program. So at 8:35, you'll hear from Nikhil Narendran, partner TMT Tri-Legal, and Ganesh Natarajan, chairman at GTT Data Solutions. We'll talk about, the big fear on Friday, right? The IT index sold off heavily. Services on Trump's radar. How plausible is that? And should one really be worried is the question. 9 o'clock, Godrej Consumer Management comes on to talk about the GST bump that they expect. 9:20, Kenneth Andrade of Old Bridge Mutual Fund will talk to us about market views. 9:35, Uno Minda, stocks done extremely well. Impact of GST cut on auto parts. Vishal Goyal of UBS will be talking to us about financials at 9:40 towards the end. Lata speaks with KVS Manian on the federal bank's outlook for itself going forward.
All right, time to slip into a quick break. We've got a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. We're looking at auto stocks, some of them are Motherson, Amber Enterprises, you have Max Estates, Suntech Realty, and Time Techno Plus. All of them will be reacting to positive news flow. But on the flip side, Vedanta, Oro Pharma, Dr. Reddy's, and SpiceJet will be reacting to negative news flow.
Welcome back. Asian markets have been holding up. Wall Street had a negative close, but we have the US president finally, showing a bit of, not a climb down, but some softness in those comments. And will that be enough to give a leg up to the bulls again? They did show some sign of strength on Friday itself. Let's pull up the implied open. It's been suggesting a positive start, 34, 35 points higher. So not looking bad at all. Of course, our list of stocks is ready to prep you up for what you need to watch out for on Monday morning. So let's straight away get to the team. Guys, morning to all of you. Lots of stocks to discuss, but so let's start with those auto companies. I don't think anyone's waiting till the 22nd, right? Many of them have already announced price cuts.
So as of now, three major companies have announced price revisions, and those are Tata Motors, Mahindra and Hyundai. So while Mahindra and Mahindra was the first one to announce the price cut, and its price revision would be already has been implemented effective September 6. And other two companies, Tata Motors and Hyundai, have announced price revision that would be effective September of 2022 as per the GST announcements. Now, apart from these, so this would be positive considering that now all these new buyers can use the reduced rates for if they want to buy new cars or new bus or new trucks. But apart from these auto companies, one stock that might be in focus is Samvardhana Motherson, because over the weekend company has announced or unveiled its plan for FY30 and it's looking very aggressive. So on revenue front, gross revenue is seen at $108 billion versus $25.7 billion that company reported in FY25, and now it's, if you imply, that's almost 33% revenue CAGR over the same period. Also on ROCE front, it says it's going to deliver 40% growth, and one important part that its company has added that no company or no country will contribute more than 10% of its total revenue by FY30, and also will maintain dividend payout of 40%. And up to 75% of incremental revenue that company is expecting would come from new acquisition that would be from both auto and non-auto business. And lastly, on impact of tariff, companies say that there is no material impact from the US tariff announced so far.
All right, thanks a lot for that, Sir. Well, sources tell my colleague Ritu that Vedanta has emerged as the top bidder for JP Associates with a total offer of around 17,000 crores. I'll tell you what, the street will not like this unnecessary aggression when they have enough on their plate. Nuvama, they put out a few points why they don't like this. They say that they consider this event negative for minority shareholders. They are unconvinced by the rationale to acquire the group of assets. They're also getting into an unrelated business when the priority should be deleveraging. That's what Nuvama is saying. And in the demerged entity, this asset could be housed under Vedanta, where funding the entire 17,000 crores itself could be a bit of a challenge. And finally, they say that, culmination of the transaction is likely to restrict any kind of re-rating in the stock. So the short point is the street will not like this aggression, this diversification, and they would have preferred if Vedanta would have rather just focused on what they have on their plate. But we'll have to see how this deal goes. It's not a closure, but it's a step in that direction. So the street will take it negatively. Let's go across to Ekta. She's here to tell us about Dr. Reddy's and Oro Pharma. Hi, Ekta. Morning.
Morning. Well, I'll start with Aurobindo, which is in focus because the US FDA has inspected their Unit 12, which basically manufactures oral solids and injectables. They've received 8 observations. The company says all observations are procedural. Dr. Reddy's, US FDA completed an inspection of their API facility in the UK and was issued 7 observations. So I expect both these stocks to probably be in the red on the back of these two particular inspections because of the number of the observations being large.
Ekta, thank you very much for that. Well, Amber Enterprises, significant news flow there, and SpiceJet also in focus. Winnie's got details. Winnie, good morning.
Hi, good morning. So Amber Enterprises, positive news coming in here as one of the subsidiaries, that is Ilgin Electronics, has announced that they have secured 1,200 crores as funding, and this is strategic funding. Now, who have they raised this money from? This is from KISS Capital. They've raised 1,100 crores, and the other 100 crores has been raised from Incred Growth Partners Fund. This is going to be through compulsory convertible preferential shares. Now, what will help, what is the need for this fund? One, they'll be using it for organic as well as inorganic expansion. And this is mainly going to be in the EMS side and the segments of the company to grow furthermore. And positive and bullish commentary even coming in from the management on that front. So they want to focus more on expanding further in the EMS sector. The next one, we have SpiceJet. Now, negative or red is what we're expecting here. Why? Q1 numbers, subdued quarter coming in for the company. Revenues down 35%. The company has slipped into a loss versus a profit last year, and EBITDA is at just 12.3 crores versus 283 crores last year. So down almost more than 90%. Yields, they managed to hold on to around 6%. Rupees 6 was the yield in Q1 FY26 versus last year 5.9%. Load factor, that has come off as well. Now, obviously, if you look at cost X of fuel, that has seen a sharp increase of around 31%. So that is an impact that comes in on overall the performance. Other than that, in terms of the available seat per kilometer, that's fallen down by 28% as well due to the operational fleet reduction that one has seen coming in. And obviously, there seems like a delay that has come in this operational fleet expansion, which they're planned as well. So that is something that we'll be watching out for, but red expected for SpiceJet today.
Okay, all right, Vinny, thank you very much for that. Let's go across to Sonal. She's watching out for a few of the other stocks in news as well. Sonal.
Well, two realty stocks on my radar. Let me start first up with Sunteck Realty because they have issued 1.17 crore convertible warrants. This will be converted into equity shares amounting to around 500 crore rupees. The stock price or the issue price here is 425 rupees a share, which is lower than the current market price. This will be allocated to promoter and promoter group. For Max Estates, they are looking at foreign to Gurugram. They have secured developmental rights of 7.25 acre land parcel, which will have a potential of 1.3 million square feet, and gross development value will be more than 3,000 crore rupees according to the company. And the outlay for this transaction is around 534 crore rupees. The launch pipeline with this will be more than 17,000 crore rupees according to the company. Last, we have Time Technoplast because it has gotten into a strategic agreement. It's an MOU they have signed with Ebullient Packaging Private Limited. They will be acquiring 74% stake in that company. This is valued at 200 crore rupees. Also allows the company entry into packaging business strategically. So these are some of the stocks which are on my radar today.
Okay, all right, Sonal, thanks a lot for that. We'll keep an eye out on all those stocks. Here's a quick recap of all the top stocks that we're tracking, the ones with positive news flow. They include Samadhana Motherson, Amber Enterprises, Max Estates, auto stocks as well right on top. You have Sunteck Realty as well as Time Techno that will be reacting to positive news flow. Flip side, Vedanta, Auto Pharma, Dr. Reddy's, SpiceJet react to negative news flow. That's about the equity market action and stocks we're looking at. Let's hop across to Manisha, who's standing by to tell us what's transpiring in the commodities market.
Thank you for that, Nigel. I'll start with the crude oil prices, where we are looking at OPEC Plus meeting that was over the weekend, where the OPEC Plus has yet again increased production, but at a modest pace. In the months of June and July, we saw OPEC increase it by 400,000 barrels. August, September saw 550,000 barrels. But for the month of October, it's just about 137,000 barrels per day. So that is what has led to markets increasing there. Apart from the OPEC Plus meeting, it also has been about the U.S. non-farm payroll data on Friday, and the markets have reacted to that. After the data, we saw near all-time highs for the gold prices. It has hit a record high of $3,600 an ounce now. The traders are now assigning between 95 to 98% of a chance of a 25 basis point rate cut for the month of September. Remember, China has continued to buy gold for a 10th straight month in the month of August for its forex reserves, so that has been supportive as well. You also have silver trading at a 14-year highs, copper prices at a 1-month highs, and the soft commodities also seem to be doing quite well. So whether it's coffee, rubber, all of that trading in the positive.
All right, Manisha, thank you very much for that. So that is the commodities picture as things stand right now. So more later. What are the top brokerage calls of the day? Sudarshan is back with us with exactly that. So good morning.
Good morning, Prashant. So first one is Morgan Stanley has come out with a note on metals. It has upgraded most of the stocks from steel pack, upgraded JSW to overweight and target price is 1300, upgraded Tata Steel to overweight, target price here is 200, upgraded SAIL to equal weight and target is 140, and maintains equal weight on JSPL and target is raised to 1150 per share. It says it has turned constructive on steel spreads expansion and expects domestic steel prices to expand as demand is expected to improve going forward. Also, China anti-involution theme is gaining traction as per Morgan Stanley, and global macro factors are also turning favorable. And on the back of these, it has raised steel price estimates by 3% each for both FY27 and 28. Next one is Swiggy. Nomura has initiated coverage with a buy call and target is 550, initiating an upside of almost 25% from current levels. It says food delivery business is on a steady profitability path and is a key cash generator for the company. As for the quick commerce is concerned, it remains the main challenger, but profitability is likely to improve as well going forward, and it remains well funded for scaling quick commerce further, and risk of dilution remains very low.
All right, so thank you very much for that. So keep an eye out in this entire space. By the way, the metals index did very well last week, was up 5% Friday to Friday, and there is this Morgan call now coming with an upgrade to their entire space. More later.
I was quite happy looking at that note because we mentioned most of the points last week.
Yeah.
So, interesting.
Early and right. Well, we'll take a quick commercial break here. Dharmesh Kant of Chola Securities will be with us on the other side for some fundamental stock conversation. We'll discuss metals and some of the other stocks as well. Stay tuned.
Welcome back. Hope you're having a good morning. Well, we have Dharmesh Kant, Head Research, Chola Securities, who joins us on the show. Hi, Dharmesh. Good morning. Good to see you, Ben. Well, let's talk about Vedanta. Source-based information indicates from my colleague Ritu. She says that, they could possibly be the winner for JP's assets. Now, the bid could be around 17,000 crores, but if you, back calculate it, it could be work out to around 12,500 crores or thereabouts. I think the street will not really focus on that. They'll be saying why this unnecessary diversification. And that's what most brokerages are writing about. The stock, irrespective, is very, very attractive, at around 5 times, less than 5 times EVP on EBITDA. They have a demerger in the works as well. How would you view this, this move by the company?
Good morning, Nigel. I mean, it's again a negative move to our mind by the company, because if you look at all the business verticals which Vedanta would be acquiring through Jayaprakash Associate, if the deal comes through, are new verticals to the business. They don't have expertise in any of the verticals going by the earlier, business forays, and this would be in addition to the already 5 verticals they are having, and they are talking about demerging of all the verticals, and then again 3-4 more verticals added to that, 7-8 business verticals to take care of. Secondly, what is very important is there's already a huge debt in the books of the Vedanta. It's more than 2.2 times debt to equity ratio, and the cash flow management which they have been doing, I mean, dividends are being paid out handsomely, more than 100% kind of a dividend payout ratio. So dividend goes back to your home, it stays there. But as far as the debt and the interest component is there, it stays in the balance sheet. It's a cyclical business. Commodity in a downturn, it hurts the P&L and the balance sheet quite aggressively. So outlook out there to how to reduce the debt. In fact, through this acquisition, I think they would be adding more debt on the balance sheet. So net, though valuations look pretty attractive, nice cash flow, nice margins, and you are going into a metal upswing. And then this kind of a move will suddenly have, market participants have their own doubts. I think there will be a minor reaction on the stock price. It will not be an aggressive one till the time it comes through. But the upside which was to be captured in this metal upswing is likely to be missed by Vedanta Limited.
Nigel, if you remember, a couple of days back, we were talking about Vedanta, right? There's always something.
Yeah, always something. Always something.
A lot of value, but somehow it just doesn't, you can't quite grasp it.
But the important point is, let's pull up Vedanta 1-year chart, pull up the Nifty as well 1-year chart. We'll say that it's not moved. That was the point we're talking about, right? Yeah. But actually the dividend paid is 55 rupees, which, which gets a little bit covered in it. But this is the point, the street doesn't know what the promoter is going to do next. And clearly the street will not like this.
No, just look at the share price. I think it's at the same level where it was 8 years ago. So a lot of value, cash flow, no problem. Everything is there. It's just that, you got to have promoter intent to create value, which we will see. And we'll probably ask Mr. Anil Agarwal if we get the opportunity, what's on his mind in that sense, right? With this Jayaprakash diversification, completely different line of businesses, Dharmesh also pointed out. Dharmesh, President Trump, Prime Minister Modi, sort of back and forth indicates a little bit of thawing of the soured relationship. I don't know how much of it will show up in the markets, maybe because FIs are short big time. People perhaps lighten up because it's a big event whenever that happens, and we may suddenly wake up to something dramatic on the positive side. But how to play it? Do you think it'll show up in the IT services space, maybe a little bit more as compared to the others? Because that is a space which sold off on Friday as well on fears of this on a tax on services kind of thing, which was fake. We highlighted that on Friday. What's your sense, Dharmesh?
Yeah, good morning, Prashant. Very likely, I think now the rhetorics and how the comments are being made by President Trump, it looks like he is willing to negotiate and come down to the terms with India. Only thing is he has taken such a big stand. How to come back immediately is a point in contention, and slowly and gradually, I think things are likely to shape up in favor of India. So you are very right. Any day you can wake up with a very good news, which can be a good propeller to the markets. How to play this out? I think one is the auto ancillary space, which has been, negatively impacted through this move. So that will come into a big time play. Textiles is another segment where you can see a very good quick moves on the stock prices if anything positive comes out through. And IT to a large extent, yes, because it's very likely that interest rate cut is coming in this September policy of FOMC. So that would be sentimentally, positive. It's a tactical trading kind of a play which we can, set in as of now, going into the overall scheme of environment in which the market is operating. But on IT space specifically, we are not very constructive from, long-term perspective.
Okay, and then of course you have to, even if you're looking at a tactical play, you have to be able to navigate and do swift trades, given that the news flow is so choppy from the US. Dharmesh, we'll have more questions for you in just a bit, but since we're talking about IT, let's bring in two subject matter experts as well. There's been a fair amount of growing concern and some reports, some social media posts as well, indicating that perhaps the US could be thinking of imposing tariffs on services that are coming from India as well, including, of course, IT services. Now, this, of course, could be a massive, massive move for India. Not just this, there is a new bill that has been introduced in the US. It's called the Hire Bill, halting international relocation of employment. And this bill is talking about a 25% tax on any payments which are being made to Indian vendors for the services that they're rendering to US companies. Now, is this significant? Should one be worried about this? Well, let's ask Nikhil Narendran, partner at TMT Trilegal, as well as Ganesh Natarajan, chairman at GTT Data Solutions. Gentlemen, thank you so much for joining in. Let's actually, the good thing is that we have that statement from the US president, right? Otherwise, this news of a new potential bill being introduced in the Senate, it could have made the market very, very nervous. Nikhil, let me open with you. I don't know if you've seen the details of this bill. It talks about several penalties, penal positions as well. But these bills, such bills have been introduced in the past as well. Should one be worried?
Look, I think in the current scheme of things and the way in which rhetoric is driving actual decision making, I think we should be cautious at this point of time, because we have seen in the past several instances where similar moves were proposed, but it did not really materialize. But given the current scenario, it's very difficult to say one way or the other. Having said that, there are a few things that we need to keep in mind here. The whole WTO ecosystem, which currently has a moratorium on taxation of digital services, is about to be relooked at in March of 2026, which means that generally when you provide services online, for instance, your services that you subscribe from Microsoft and other companies, they're not taxed in, let's say, in India, right? It's taxed only in the US. So many countries like India and Indonesia and various other countries have been demanding that this moratorium should be relooked at, and India and other countries should be allowed to tax this as well. So US has always opposed this. And if you remember, sometime back, we had this equalization levy concept, which was known as a Google tax, which is also applicable on these companies. Due to US pressure, apparently, we revoked that position. Now, all these things will come back on the table, and it's likely that we will now look at a renewed angle as such when it comes to taxation of digital services. This will obviously have far-reaching implications also from the perspective of the General Agreement in Trade and Services, the GATS as it's known as. And look, it's a different regime that we are looking at right now.
Yeah, but as of now, just to confirm, because we have a treaty with the US, there is absolutely no withholding tax or any other format of tax that is levied by the US on Indian IT services companies. Correct, Nikhil?
So I think there is no direct impact on IT services per se, but if it's performed in onshore in US, there are tax implications.
Yes.
There are also aspects wherein high visa fees are often levied as a disincentive for provision of work from US itself, but directly when you're providing services, there is no direct impact.
Right. Gentlemen, morning. Mr. Natarajan, if I can come to you. How do you think about this? Is this possible? Are services tariff taxed anywhere? As Nikhil said, if you do work onshore, then of course you pay tax there. But for services rendered out of India, consumed in the US, right? I don't think there is any tax which is paid, anywhere. What is your sense? How will this play out?
No, you're absolutely right, and I don't think it's very likely. And I think, as the anchor was mentioning, there have been many attempts in the past to do these outsourcing bills, etc. And what I think Senator Moreno has tried to do is something very similar. But in that sense, I think the first point of resistance will come from American corporates themselves. I mean, every significant corporation in the Fortune 500, and indeed most of the IT CEOs who were at dinner with President Trump the other day, I think they all have huge investments in India, in GCCs, what is Global Competency Centers. There are over 1,600 of them in India. Plus, of course, the fact that a lot of their work is done by Indian companies. So I don't think this is going to happen in a hurry. So I'm pretty sanguine about that. And you're absolutely right. I mean, if there is a tax on Indian companies for exporting stuff, it's almost a double tax because we also pay tax in the US. And if the tax as is proposed by Senator Moreno's bill, if that is on the company which is doing the outsourcing, that's really a double whammy for them. So I find it very unlikely that this bill can go through in its current format. However, having said that, I think we need to be wary because till such time as somebody said, I mean, we wake up in the morning and it's good news all over. We have to be wary because anything can happen. And from very conservative Republicans and even White House advisors like Pete Navarro, for instance, we have to be wary of what might come next, but at the same time, nothing to panic about.
Do we have, so for say, a large IT services company out of India, any listed company, right? Out of 100 rupees in revenues, how much is work done in the US and how much, because offshoring in that sense is also a bit of a loose term, right? Some stuff is done outside, some stuff is done in the US itself. Do we broadly have that proportion for the industry, Mr. Natarajan?
See, you have to look at it in volume terms and value terms. So in volume terms, I would think that in a mature outsourcing contract, almost 75 to 80% of the volume of work is done offshore, which could roughly translate to maybe 40% or 50% of value being generated in the US and the rest of the value in India because of the price differential, as you can imagine. But having said that, I think there is a significant amount done offshore, which is the advantage both to the company as well as, of course, to the client. And which is why I'm saying that will probably continue.
Well, let's see. Just hope some of the social media posts, including one that came in from Laura Loomer, that this remain sort of views on the periphery and nothing more than that. Before we let you gentlemen go, Mr. Natarajan, you're an industry veteran. Must ask you this. I mean, beyond all this, taxation is fine and what changes, what doesn't. But large Indian IT services companies, from an investor standpoint, are also facing a bit of a real existential growth issue. With what's happening, the kind of AI disruption that's happening. And investors are asking tough questions because growth is just not coming by. How do you see this playing out over the next, say, 2-3 quarters?
I think 2-3 quarters is going to be probably, tepid at best because it's not just AI, it's also automation. It's also a demand issue at this point of time. In the medium term, I don't think there's a problem because most Indian companies are very much ahead of the curve when it comes to mastering AI as service providers, as well as using AI ourselves in our work. But even in our own company, GDT Data, our reliance on data engineering and AI is very, very high. And we're seeing lots of positive signs in the market. But yes, it'll take some time for the next sigmoid, if you will, to take off. But once it takes off, I think it'll be business as usual. So I'm pretty optimistic about the future.
All right, Nikhil and Mr. Natarajan, thank you very much. Short conversation, but we need your expertise as the story develops. If it develops, I hope it does not. And, it's just that reports and stuff which has happened in the past but doesn't go anywhere. Thank you very much, both of you. We'll take a quick commercial break here. We're going to come back and Sudarshan and Mitesh are going to be with us with technical trading ideas. Stay tuned. Coming up. Okay, welcome back. Let's just get the technical trades now. Sudarshan Sukhani and Mitesh Thakkar are with us with exactly that. Gentlemen, great to have both of you here. Appreciate your time. Mitesh, what's your sense? How are things set up this morning? Do we get a bit of a lift and will that stay? How do you trade it?
Yeah. I think the GIFT Nifty is indicating a modestly positive opening. Thereupon, I think the broader setup still remains Prashant contracting, which means that we might not see a move beyond 25,200 levels, and on the downside, 24,400, 500 zone will be holding on. This means that broadly in the index, you can deploy range strategies. So if you get declines to about 24,500, 520 zones, that's your area to take some long positions, and around 25,000, try to take profits. But more focus should be on stock specifically.
Okay. Sudarshan, what about you? How are things set up according to you?
Yeah, good morning. See, the Nifty is now in a trading range of some kind. The lower levels are not very clear, but the higher levels are around 25,000. So any trade in the Nifty should be done only on the buy side, but on a sharp dip or intraday correction, not at the open. So the trend still remains up, but a choppy market can cause a lot of pain. So look for dips and then go long. If you don't have a dip, wait patiently.
Okay, all right. Good morning, gentlemen. Good to see you all in. Mitesh, let's come across to you first. What about stocks in focus?
Morning, Nigel. A couple of metal names on the buying side. LMDC. It's been a call earlier as well. Now can be bought afresh with a stop below 73, 72.9 at. Look for a target of 78. Similarly, Tata Steel had a big breakout on Wednesday. Then Thursday, we saw some pullback and Friday a bounce back. So signals of continuation here. Buy with a stop at 164. Look for targets of 177. Astral is the other buy call. Recommend buying here with a stop below 1433 for targets of 1500. And RBL Bank managed to get past this 269 to 70 zone, which was an important level. So now that it's cleared that, there could be more upside. So buy with a stop at 268 for a target of around 280.
Okay, all right. Sudarshan, coming across to you. What's in your radar?
Yeah, just a small point. You know, today is the start of Pitru Paksh, when we remember our ancestors. And whom do I remember? I remember Mr. R.H. Patil, developer, creator of the NSE, every day. He gave us freedom and independence to Indian investors. I sometimes think, what would the world be like if the erstwhile BSE were still in control? So I thank him every day. Now for my trades. Fortis is a buy with a stop under 930. You talked about Vedant. Vedant is in my list as a buy. I also have some small shares in it. So Vedant is a buy with a stop under 436. HAL is a buy. Again, I have a small investment in HAL. It's a buying opportunity with a stop under 43.28. And M&M is my final buy, stop under 34.92. The trend is up. We should be looking for dips to go long.
Yeah, no, absolutely. That was a wonderful sentiment there, Sudarshan. Thank you very much for sharing that with us. Mitesh and Sudarshan, thank you for joining us. Good speaking with both of you here. 5 minutes to go for the market pre-open to kick off. We're going to take a quick commercial break here. We'll come back. Sudhir Sithapati of Godrej Consumer Products will be with us to discuss the impact of GST cuts on consumption and more. Stay tuned. Coming up. Okay, welcome back. We're, of course, this is Open Exchange. We are coming to you live from the CNBC-TV18 News studios. There's 16 minutes to go, market open. Now, in an exclusive conversation with CNBC-TV18, Finance Minister Nirmala Sitharaman outlined the government's economic roadmap, highlighting GST rationalization as a key driver for consumption without compromising fiscal discipline. Just want to play out that soundbite for you.
There's more money given already through the income tax cut. Right. The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18. That's right. With consumption going up, there's a potential for capacities to grow, investments to grow. It has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
You know, we've been getting you a whole bunch of reactions across industry segments to understand what this will do. I mean, those comments, of course, coming in from Finance Minister there. And let's talk to, an industry leader, Sudhir Sitapati, Managing Director and CEO, Godrej Consumer Products, Chairman at CII, National Committee on FMCG. Mr. Sitapati, good morning. Great to have you with us here. Prashant this side. 3 basic talking points for our viewers, which we want to discuss with you, sir. Impact of GST cuts, of course. How much will GST cut boost overall consumption, volumes, etc., and any change in growth expectations for FY26, right? So those are the 3 points. Let's just kick it off. Mr. Sitapati, welcome to the program. Could you give us a sense of what do these GST cuts mean for Godrej Consumer? What percentage of your portfolio is impacted? And what kind of volume bump do you see because of this? Go on, sir.
Firstly, Prashant, I'd like to thank the government that both the income tax cut and the reduction in GST across the board, both of these will spur consumption. Consumption has been a bit soft for a few years, but we have no doubt that a combination of these two, income tax and GST, will spur a consumption growth across sectors, not just for Godrej consumers, but I also speak wearing my CII FMCG hat. I think across the sector, it'll boost it. I think all of us are committed to dropping prices and passing on the GST to consumers as soon as possible. Now, having said that, to answer your questions, as far as Godrej Consumer goes, the main benefits are in the soap category, which is about 35% of our business. It's hard to judge how much volume growth will come at this stage. Certainly, it will grow faster than what it's grown in the past. But I think one of the advantages of GST is not only the categories where GST has reduced will benefit, but even categories where GST has not been reduced will benefit, because the overall spend on consumption or available spend on consumption and discretionary expenses will go up. So we're bullish not just on soaps or on the products that have benefited through GST, but even on the other ones.
So you're saying, as you see it for now, direct impact is the soaps category for you, which is about 35% of your portfolio.
Yes.
It'll show up the maximum there. Yes. And what is it growing? What has it been growing at? And ballpark, and we'll not hold you down to numbers, but any sense on what can happen here?
The soap category has been growing volumes at about 2% a year for the last 4-5 years. So it's not a very high growth category, but it's an essential category. So the category growth may go up by a couple of percent, but more importantly, because it's a reasonably large part of household expenditure at the bottom of the pyramid, it will free money for consumption in other categories.
Hi, Mr. Sitapati. Good morning and good to see you. And clearly, this measure is going to be a bit of a booster shot. But in the near term, do you see some disruptions due to stocks at dealers? Because we have that interim period, right, of roughly on 12-14 days odd.
There certainly will be some disruptions, mainly because the FMCG sector operates on an MRP regime. It doesn't operate on an end consumer price regime. So, the stocks that dealers are sitting with and what companies are sitting with are sitting at higher MRP. And just by passing on money to trade, it doesn't guarantee, in fact, it won't go to consumers directly. So there is a little bit of lag time before the MRP changes. Probably early next month or mid next month is when consumers will start seeing the reduced prices on FMCG.
All right, Mr. Sithapati, you said that this move is positive, but it'll be difficult to quantify it, right, in terms of what kind of benefit it could have on volumes, how does it change growth projections. That said, will Q2 be a little bit softish because of this uncertainty in the near term? And were sales as is impacted because of heavy rains, adverse weather conditions as well, even prior to this GST rationalization?
Yeah, I think it is hard for me to judge what will happen in September. There will certainly be a lot of pipeline changes in September, and therefore September 15 days could be choppy between now and the end of the month. But I think it's a very short-term thing. I think a combination of the GST price reductions and the available income basket for consumers will certainly mean a good Q3 and Q4 for all of us.
But Mr. Sithapati, you're not telling us that if that translates into this current fiscal, looking better than what you had earlier envisaged?
I certainly think this current fiscal will be better for most companies than what we had envisaged, because this is a meaningful and material change in a large part of ours and other people's portfolio in terms of consumer pricing.
Also, sir, I mean, while GST obviously is a big positive, large parts of the country have received extremely heavy rainfall, particularly in the north. Could that weigh on the way the business is shaped up in Q2? I mean, has there been any meaningful disruption in your supply chains, in your end-user markets, particularly northern states?
There has, and the end of August has been, many states were shut down and due to excess rains. But it's difficult to judge. I mean, about 5-6 days were definitely interrupted at the end of August due to rains. But we'll have to see. The quarter will, how things play out over the next 15-20 days. That will have a lower impact, by the way, on Q2 than the changes that pipeline changes on GST will bring in.
At a wider thematic level, sir, when tax on a certain product goes down, I mean, whether it's a hair oil or whether it's a bar of soap, I mean, in your experience, does that essentially leave more money in the hands of people to maybe, spend on other things? Now, we don't know. It could be any other service, any other good. Or does it lead to additional consumption in the same category? I mean, is there any reason to believe that more soaps will be consumed because of a cut in tax at all?
So I think it's a combination of three things. I think firstly, a little bit more soap and hair oil will be consumed, but you're right in saying that essentials are often not very elastic. And the elasticity of, let's say, categories that have gone from 28 to 18 will be higher. So the second thing that will happen is that these essentials are a large part of consumption, so money gets freed up for other things. But the third thing that also happens, which happened in GST 1.0, is a lot of unorganized sector which pays no tax and which is, often basically, a lot of it is illegal, a lot of it doesn't pay tax. They either come into the tax bracket or 5% makes the branded players who pay tax more competitive when compared to them. So these are the three effects that we expect to happen over the next few months.
Right, Mr. Sithapati. So, interesting to see, interesting times, but the second half of the year obviously should look much better because, things will be rationalized. We'll have more clarity on that front. But, earlier you were talking about, you were giving us a guidance. And do you want to tinker with that? We were briefly talking about high single-digit revenue growth, double-digit EBITDA growth for FY26. Any tinkering out there? And also the India margins were expected to move to mid-20s in the second half of the year. That's on course?
I think so. I think you see there's also been some choppiness in terms of raw material at the same time. So I would still say sitting here today that until we kind of see how GST plays out, how it plays out on pipeline, there are too many variables. So I would still kind of say that, what we thought would happen is likely to be roughly what happens. We will see as things go along whether they get better.
Yeah, absolutely. It's great to get that perspective from you, Mr. Sithapati. Really appreciate your time. Thank you very much for joining us here on CNBC-TV18. Thank you. All right, I think, we've got I think pre-open, which has now come to an end. Maybe, now we can take a look at some of the stocks which are coming up. 60 points higher at the end of the pre-open session. 24,800 plus is where things are at. And maybe put up Amber if we can, just a bunch of these names, right, which we put out with regards to specific, news flow. Amber is up, Amber will come up. Maybe the metals index and maybe a couple of steel stocks, JSW, Tata Steel, etc. On that Morgan upgrade, Amber is up 0.75%. There is the metal stocks which should come up as well. JSW is up 0.65. Vedanta, of course, is on the other side. So slightly maybe negative sentiment there. Tata Steel is up 1 1/3. Vedanta is down 1%, nothing large, but 440 on Vedanta. And maybe, the defense pack as well, because there is Max is at the bottom of the screen. So some news flow related names are there. 3.75% on Max. Defense, and we'll put this out with Dria, our colleague, in a bit from now with regards to the roadmap that the ministries put out with regards to the areas where there'll be procurement, and this is a long-term plan, but that's a defense space for you. So the Nifty Defense Index slightly higher, but it'll show up more in individual stocks and segments. All right, well, let's just get you the 9-10 call. Sudarshan is with us and so is Mitesh. Sudarshan, what do you have?
Well, it's M&M. Consider buying M&M with a stop under 34.92.
Okay, and Mitesh, what about you?
Well, you go with a long call on Tata Steel for targets of 177, 178.
Okay, all right. Before we get to the stock that I want to talk about, which is Vedanta, I just wanted to focus on a couple of another one, that is Prime Focus. I think we should get that stock up for you. I'm looking at the pre-open volume. That's close to 1 crore shares that's traded. That equates to close to around, this is on one exchange. Pull up the other exchange as well. There's close to 1 crore shares, which is close to 3%. So I'm not sure whether or not there is another large trade that's taken place, but we'll have to keep an eye out on that one. Prime Focus is the one that I'm talking about. The combined volumes is more than 1 crore shares on this one. That's one exchange, 5 lakhs. The other one is 1 crore shares also. We'll get back to that.
Nigel, on Friday,
yeah, that was Utpal.
Nimesh had put out on Thursday, that is last Thursday on D Street Chatter, Nimesh had put out that there's a large sort of block deal which will happen on Friday, and some high net worth individuals, Ramesh Damani, I think Madhu Kela, Utpal Seth, I think they've all sort of picked up large quantities in Prime Focus. The seller is, Stanley used to be a long-term holder. They used to own up over 20%. I think that is the block which is coming to the market. It's getting absorbed by many of these individual investors. I think a couple of funds bought as well. So just wanted to point that out.
Yeah, and the bottom of the screen, actually, that cleared the clarification. There was a large trade that took place in pre-open. That's the one that I was talking about. 1 crore shares have changed hands. So we'll have to see who were parties to that particular trade. That explains why we have those large volumes. Moving to Vedanta, well, sources say that Vedanta has emerged as the top bidder for Jayaprakash Associates with a total offer of around 17,000 crores, but that will be over a staggered period. The street will not like this too much, and they will view this as unnecessary aggression, and they have enough on their plate as well. Well, Nuvama, they put out a few points. They say they consider this event as negative for minority shareholders. They're unconvinced by the rationale to acquire the group of assets. They're also getting into an unrelated business when the priority should be deleveraging. And in the demerged entity, this asset will be housed in the Vedanta Limited, where funding of the 70,000 crores could be a little bit challenging. And finally, they say that the culmination of the transaction is likely to restrict any kind of re-rating of the stock. So explains why Vedanta is a little under the weather today. It's not a sealed deal, but the direction that it's moved, the street is not liking it too much. Well, let's go across to Sudarshan. He's here to tell us about auto stocks and Samadana Madhasan. Sir?
So over the weekend, we have seen that most of the auto companies have announced price cuts post GST reform that was announced last week. And first one is Tata Motors. It has announced price cut in the range of 30,000 to 4.65 lakhs. 4.65 lakhs is mainly for heavy commercial vehicles. And as far as passenger vehicles are concerned, price cut is up to 1.40 lakhs. For Hyundai also, it has announced price cut and it's in the range of rupees 60,000 to 2.40 lakh. And for both these companies, price cut would be effective September 22. As for Mahindra & Mahindra, it has also announced price cut that is in the range of rupees 1 to 1.56 lakh. But for Mahindra & Mahindra, price cut is already effective. That was effective September 6. And apart from these auto companies, Samvardhana Motherson would be in focus. Over the weekend, company has unveiled its plan for FY30. And now by FY30, it's targeting gross revenue of $108 billion versus $25.7 billion that company reported FY25. So almost an increase of more than 4x. Also, it's targeting to deliver 40% consolidated ROCE versus 18% FY25 and And one important point that company has mentioned that no single country or company will contribute more than 10% of its total revenue, and incremental revenue as far as it's concerned, more than 75% of incremental revenue by FY30 will come from the acquisition that company does in both auto and non-auto. On the tariff front, company is saying that there is no material impact.
All right, Sudarshan, got it. Thanks very much. So Samvardhana Motherson is reacting well to some of those statements. Stocks up 2.5%. Let's look at other stocks. The other one that's reacting very positively to all the news flow that we discussed, our top 10 list, is actually Suntec Realty. Let's pull up Suntec. Promoters are infusing some money in the company, and the market really likes the sound of that. So Suntec is up about 4%. Max Estates also, as they go forward with their expansion plans, reacting really well. These are the two stocks from the real estate pack. Maybe we can pull up Amber as well.
Flattish.
Amber is a little flat. Its subsidiary is picking up a lot of money, 1,200 crores from marquee institutional investors, including, I think, Chris Capital is one of the names. That stock's flat. Vedanta is actually not falling too much. I mean, if you expected a big sort of a drawdown, but let's see, this is pre-open. We'll see how, the market reacts. Right now, it's down about 1%. SpiceJet, let's pull up SpiceJet. Those numbers at the end of the first quarter print, they don't look very promising. There you go, 4% down on SpiceJet. Losses are still a concern. The fleet size is not ramping up as quickly as what one would have hoped for. So those are some of the early reactions, and we're about to set off 60 points in the Nifty.
Yeah, first rates coming up on your screens now, and what do we have? It's higher, 24,800 plus on the index, about 1/3% up. The Nifty Bank is up as well, but not very much, just blinking red and green. The small cap index is up 1/3%. The mid cap index will come up on your screen, and I think there's about a 0.4% bump as well. So yeah, broader markets opening a little better this morning as compared to the Nifty and the Bank Nifty. Actually, Bank Nifty is flat, so that's out of the equation. And the Nifty heat map should give you a quick sense of where there is more green and red. And there you go. So it's largely up and about. And metals, I mean, the two metal names, JSW and Tata Steel, that Morgan upgrade that I was talking about earlier, they're there. And on the other side, you've got a couple of financials, HDFC Life and Kotak, etc. There's ICICI Bank as well. So, but bulk of it, 45 odd names are opening in the green as far as the Nifty 50 go. Surabhi.
It's really metals all the way. I mean, all through the last week, the metals pack has been fired up, and it's all China related. Hopes that production cuts will kick in and therefore stabilize prices perhaps here in India as well. Tata Steel, JSW Steel, 3% on these stocks. Big moves coming through. Even Hindalco is up, but the rally in the party is more in the ferrous space than the non-ferrous space as the day kicks off. Mahindra and Mahindra announcing those price cuts, 1.5% lower. Tata Motors, 1.5% higher. Ditto for Tata Motors, also up 1.5%. Let's see what IT is doing. Not too bad, actually. Remember, IT had a very wobbly Friday because of some absolute fake piece of, information that was floating around. There were concerns, lingering concerns, but it seems that the statement from Mr. Donald Trump, that for now is stabilizing IT stocks. The index is up, TCS, Wipro, most of these stocks are also on the upside, so no problems over there. Some of the life insurance stocks are still correcting. SBI Life, HDFC Life, down between 1% to about 0.7%, depending on which one you're looking at. And banks are very quiet. ICICI Bank, Kotak, all of them. Axis Bank, absolutely at the flat line. Let's look at HDFC Bank, absolutely flat. Let's see if the Bank Nifty decides to lift off. But right now, a very quiet start for this one. Nigel.
Well, that's right. Let's keep a few stocks on the radar. The newly listed company, Vikram Solar, they won a 336 megawatt high efficiency solar modules. I think that's the reason why post their order win, the stock is up close to 4%, and volumes are very, very high. So that's one stock that I'm noting. The other one is Prime Focus, large trade on Friday, large trade today as well. Well, the street seems to be sniffing some kind of news out there because the volumes are extremely high, more than 3.5%. Actually, now more than 5% of equity has changed hands in the first couple of minutes itself. Suntec Realty, promoter showing the faith, the street likes it, the stock is up and about. Swiggy is higher. Nomura came out with the note. They have initiated coverage. Target price of around 550 rupees. The stock is up close to around 3%. They are pointing out that the food delivery business on steady profitability path and a key cash generator. So that's a couple of points that they put out there. Vedanta, timing is wrong. The metal index is up. Vedanta wants to foray, and take a new challenge on. Could be positive in the longer term, but for the near term, the street is saying you've got enough on your plate. Just focus on that. And that's why that's actually underperforming in today's trading session. So that's under some pressure as we speak. JTL is another stock from the broader markets. It's moving higher on very, very large volumes. And I think there was an announcement over the weekend about Ola, a couple of funds entering as well. The stock was under the weather in Friday's trading session because it was put in T2T. But today it's popping back up. It's up close to around 2%, though it was one of the big losers in Friday's trading session. So a good opening. We're holding at around 24,800. The broader markets, that's the one where you're making money.
Absolutely. By the way, so it's a 60-point bump on the Nifty. We're at about 24,800 as things stand right now. So it's a decent start. The number one volume-led gainer right now is NetWeb. NetWeb is trading with another 6% pop. And I must say it's completely re-rated, in the last, 5 days or so, basically, right? I mean, not completely but maybe a little. But it's gone from what, $2,300 to $3,200. It's gone up $1,000 in about 4 sessions, 5 sessions flat, and almost nearing 1 million shares on NetWeb coming through. The other one, of course, was E2E, where L&T picked up a stake. I can't spot it today, but otherwise it's done very well. TBO Tech is back to, it had that big move post the acquisition, then it sold off a little bit, but it's basically back at those high levels, 1,600 rupees or so, 1,615 on TBO Tech once again. What else? Shalby Hospitals had a very large move on Friday, and it went from, basically 196 to about 220 on Friday, and it's up another 20 bucks, 238 now, 240 basically. So in 2 sessions, Shalby's done phenomenally well. Prime Focus, of course, we've been highlighting. There's another large crore-odd shares which is traded. So 10 on Friday, 10 today. So 20% in 2 sessions flat. And then you got a name like Mosship. I highlighted this on Friday as well. And Mosship is up another 7%. So again, it's 5 sessions. Stocks gone up from 160 to 260, 266 actually today. So that is Mosship. And by the way, it's the 3rd largest volume-led gainer on the NSE. And that's the reason why we are highlighting it. More than 500,000 shares which are traded on this one.
Just a couple of more stocks, Prashant. The reason that TBO Tech is reacting today is because the deal was announced, mid of the week, but the con call was on Friday post-market hours. So that's why brokerages have come out with their notes as well. In our morning chat, on the day it was announced itself, the early morning, we had said that could be the stock. I think from there it's up close to around 20%. The other one we pointed out with regard to delivery-based buying is First Cry, Brainbees. The stock, it was at around 350 rupees odd. It's now at around 420 rupees. A big underperformer, but that seems to be coming back into play. And that's why that one as well are following up Friday's trading session with another 4% gain. So interesting to see whether or not it can hold on to that.
All right. Kenneth Andrade is now with us. He's CIO of Old Bridge Mutual Fund. Kenneth, great to have you with us here. Thank you very much for joining us. Really appreciate your time, and you're back after a while. Kenneth, we've got 3 powerful kind of things which the government's sort of done, government and the RBI, tax cuts, rate cuts, and now the GST cut as well. And perhaps there is more coming. From when we speak with bankers, we get a sense that the RBI is very keen to kickstart growth, and they are looking for ideas in terms of what they can do. From the government side as well, we hear this is the first of many coordinated steps. How has this moved the needle for you in terms of your thinking about what can happen for the consumption part of the market, Kenneth?
So yes, there are a number of events that have happened over the last couple of days, including the big GST cut that's been there. So the focus has moved to the domestic environment. Obviously, what's happening internationally in terms of realignment of the trade cycle. We necessarily have to refocus our entire energies into see how we can kickstart the domestic economy, and whether it's the central bank or whether it's the government, we're pulling out as many steps as we can to restart the domestic environment, and it's coming at probably an appropriate time in and around the festive season. So it's going to be good for volumes this quarter, for volumes going into this couple of months, and that should hold up the economy for a while. So yes, from an investment perspective, the focus is now the investing and the investors' focus is now on the domestic economy. We're heading into one of the biggest festive seasons that are there. and we've got all the right steps to see how volumes hold up during this cycle.
Kenneth, hi, good morning. Great to have you on. So, even if it is a, maybe only a tactical play, actually tell us if it's going to be more a structural or a tactical play for you. But how would you play this mega consumption boost, festive season boost? Would it be through the, say, the durable companies or the AC guys? Would it be through, plain vanilla FMCG? Where do you see some sort of durable improvement in earnings and some degree of perhaps valuation comfort as well?
I think biggest beneficiaries out here are discretionary spending. Okay, and that's where also the largest cuts have taken place. So you just keep an eye on how the cycle works out, especially for the automotive guys and the large appliances guys. Apart from that, may not be too much for too many of the other businesses, and the other businesses are all relatively small ticket items. But like I say, we should see a large volume throughput. And if you see a larger volume throughput, and if you see a larger volume throughput, the biggest fixed costs that companies are sitting on are the segments of the market which have relatively high fixed costs are the durables and the automotive guys. So those kind of companies should see a relatively higher increase in margins, or should I say profitability going into this season. Now, the second question that you asked me, whether it's a tactical play or whether it's a structural basis. Look, we need to do incremental things because the market and the economy is going to be dictated by the environment, which is both outside as well as inside. We've been through a reasonable amount of high single-digit growth over the last 2 years. With whatever is happening on the ground, they should continue. But I think the economy globally has to stabilize when we can find ourselves into that economy and then start a relatively higher GDP growth from there.
Okay, got that point. Kenneth, shifting the direction completely from local to global now, metals, in particular ferrous. There's a lot of excitement. Now, perhaps it's to do with the fact that China is actually looking at cutting capacity, maybe something else. But what do you make of it? What's your stance on metal stocks? And if you like anything, what part? I mean, ferrous, non-ferrous, or are you avoiding altogether?
So we've fairly indexed to the metal cycle as a fund house. So the fundamentals are all in place. Cash flows, capacity expansion, profitability, the domestic economy, even the international economy. Indian metal companies were doing pretty much okay. Okay, whether it is ferrous and non-ferrous, and the profitability or the near term will always be dictated by events that happen. And whatever is happening with the metal cycle today, it all adds back to incremental amount of cash flow. So if you look at all of these businesses, they're very stable in terms of balance sheet. They're very stable in terms of cash flows. They're very stable in terms of putting capacity to work. Anything incremental will add additional profitability, and incremental profitability actually bodes very well for some of these companies because most of them are getting now funding most of their expansion through internal accruals. So cutting capacity in China is one of the biggest events for the metal business or for the ferrous business to find some kind of price stability, and I think that's what really the market is reacting to in the near term. In the medium term to a longer term, I think we are very constructive on this category of companies, whether it's ferrous or non-ferrous. All of these companies are working with reasonably low cost of manufacturing. And it's a very protected market as far as the Indian environment is concerned. So margins are fairly stable also. So that's where we are. I don't think there's any large price risk on the downside to these kind of names. On the upside, obviously, it depends upon what happens internationally to determine the overall appreciation of these companies.
Kenneth, so you have exposure to metals, right? I mean, as a space.
Yes, we are fairly indexed to that.
Yeah. So run us through what you own, what you And divide it, if you can, into two parts: what you've owned for a long time and what you've bought recently.
Starting with metals, I think that's been in the portfolio from day one. We've got both exposure to the ferrous side and the non-ferrous side. That would be close to about 8% of the entire portfolio. We've been holding on to the category of pharmaceuticals that are there, mostly companies indexed to generics. I think a lot of capital is getting deployed out there in terms of finding a business model. Now there will be question marks around, is this the right time to hold these companies? But this is the right time for entrepreneurs to find their business model out there. And if I just step back a little, it's not everyone's right to win in whatever is happening across the world. You got to pick entrepreneurs who are reshaping their business model to address a structural change in the way business is actually getting changed. So we're not very apprehensive of that cycle. We're going down company by company and allocating capital into some of these businesses. Okay, from a discretionary spend side, I think real estate has been a reasonably large holding. Aviation is there for since the start of the fund. We've got an automotive business or Maruti, so as to say, which is about 5.5% of our entire holding. That's been there for the last 5 or 6 months, which has been a recent entrance, of course. And we hold a couple of small names in the QSR and the discretionary spendings on the alcohol side. So that's our discretionary basket put together. That would be close to about 32% of the entire portfolio right now.
So how many stocks in total, Kenneth?
We run with about 22 stocks. The category that we address is the focused equity fund, focus category, and Old Bridge Focus Equity Fund is the product out there.
Okay, so fairly sort of diversified in that sense. Nothing, of course, nothing in IT. I don't remember you holding IT services in any good measure.
Well, there's this one business that we hold, which is an HCL Tech, and that's a reasonably large part of it. So when you hold 22 names, each of these names will be between 5% and 8% of the portfolio, right? So it appears to be large, but it's a very well diversified in terms of weightages.
Kenneth, before we let you go, maybe a view on defense. We'll get actually Ria up in just a second to talk about this 15-year new roadmap, which the government has announced in terms of procurement and where the focus areas are. Everybody understands and perhaps agrees that it is a long-term sector here in India. It's here to stay. But the question is what part of it to pick? Where is there some valuation sort of headroom? Your thoughts?
Well, in terms of valuation headroom, I think a large part of it is already captured, and not just in the domestic environment, but also in the international environment. So that's where defense stands. It's a long-term play. Yeah, the capex cycle is actually started. You've already got the numbers out there. You can value these companies based on whatever numbers that's coming out from individual governments out there. Any export opportunity that is there for some of these companies would be the upside if it's reasonably large. But I still tend to believe that this will largely be driven by government capex on the ground. Valuations are tight. I don't think there is significant space for valuations to move northwards. It's just left to how these companies can deliver in terms of earnings and in terms of how their balance sheets fall in place.
Okay. All right. Good to have that advice. Thank you very much for joining us this morning. Appreciate you taking out the time. And we look forward to connecting again soon. You have a good day. Thanks. Well, that's a view coming in from Old Bridge Mutual Fund. Now, since we were just discussing defense, let's understand what is this 15-year roadmap which the Defense Ministry has outlined and what is going to be the focus area. Ria is here with the fine print. Ria.
Well, yes, good morning. Let's understand what this defense roadmap is about. The Indian Defense Ministry has laid out a 15-year roadmap for the industry, which is essentially a blueprint guiding the armed forces technology and equipment needs till the 2030s. And it focuses on modernization, innovation, as well as self-reliance. And although it is not a purchase commitment, it does signal future priorities. First, coming to the priorities for the Indian Army, they will be focusing on next-gen tanks, which includes active protection systems for T-90 tanks, as well as FRCVs, which will replace the T-72 tanks, and light tanks as well. For missiles, they are looking to procure 4th and 5th gen ATGMs, air-to-air missile systems for helicopters, as well as ULP GMs. And for communications, they will be looking to procure advanced integrated electronic warfare systems. For the Indian Navy, they are going to focus on nuclear-powered warships, which will include nuclear propulsion for future aircraft carriers as well as other surface combatants. And they will also focus on modernizing their fleets, which includes next-gen destroyers and frigates, next-gen corvettes, as well as next-gen fast interceptor crafts, as well as MCMVs. They are also going to focus on surveillance and sensors, which includes airborne AESA radars for fighter aircrafts, oceanic satellites, and electro-optical sensors. And lastly, they are going to focus on autonomous systems, which includes high-endurance autonomous underwater vessels and unmanned mine countermeasure suites as well. Coming to the priorities for the Indian Air Force, they are going to focus on long-range precision weapons, which includes cruise missiles, guided ammunition, air-to-surface missiles for fighters and bombers as well. They are also looking to procure space or air-to-ground high-speed communication systems, as well as drone or UAV-based signals intelligence and electronics intelligence. There are also some requirements, some joint requirements for the tri-services, which includes remotely piloted aircraft systems, air-to-surface and surface-to-surface missiles, as well as hypersonic missiles, for which they are looking to procure over 500 scramjet-powered systems. And the last thing they will be focusing on is AI-driven warfare, which includes advanced electronic warfare, counter-UAS systems, as well as next-gen targeting. Now, who stands to benefit from all of this? Essentially, all defense players, once the final procurement approvals or these orders flow through, which includes your PSUs like HAL, Bharat Electronics, BDL, all three shipyards, as well as the private defense players.
Okay, so the entire ecosystem benefits eventually, starting first with, of course, the heavy lifters, the big PSUs. Got that point, Riya? Thank you very much for giving us the details over there. Let's look at the market. Quick glance before we move on. Market's actually cruising along quite nicely, 85 points higher on the Nifty. 24,800 is here. So let's see. Well, we've been in conversation with a number of companies to understand what the GST cuts are going to mean for the companies and for the individual sectors. And we're putting the spotlight now on the auto ancillary space. Sunil Bohra, Group CFO at Uno Minda, is with us now. And of course, our three talking points are the overall impact of GST cut on auto parts, specifically on the company. What is the impact on volumes and margins? And then what do these cuts mean for EV adoption? Because the tax differential between ICE and EVs reduces with the kind of cuts that have been announced. So let's go step by step. Thanks very much, Sunil, for joining in. So let me start right there. First of all, how much of your, in terms of by revenue, how much of what you were producing was in the 28% bracket, which now comes down to 18%? So how should we start understanding the impact on your company, and what happens to the existing inventory in the pipeline?
Yeah. So starting with your first question in terms of the products GST 28 versus 18. So large part of products were actually in 28%, which will get into 18%. But because we are primarily into a B2B business, which is almost 90% of revenues come from the direct OEMs. So there you won't see any impact because GST, we all know, is a pass-through. So from that perspective, there is not going to be any impact. But yes, from a B2C perspective, which is the aftermarket segment, which is almost 9-10% of our revenues, definitely their prices will come down in line with the tax cuts. And this, we do hope that that will bring in some sort of consumption. But it's a little early to comment because the consumption which we see in aftermarket is primarily a need-based consumption where you want to replace products which you need to. And you don't just replace like that just because taxes have come down. So you may not see any significant impact, but yes, it will bring the prices down in the B2C segment. Large part, 90% revenue B2B, as I said, no impact.
And how is the implementation going to be carried out? My second part of the question was just to understand the technicalities of it. How do you mark your current inventory? Because 22nd onwards, the tax level will be lowered, right?
Yeah, absolutely. So from inventory perspective, obviously they are currently carried at cost only. We don't carry including GST. So whatever GST you pay, that is anyway taken up as an input credit. So that lies a credit in your GST account, and the new revenue which happens post 22nd of September will happen at 18%. So from a pure B2B perspective, definitely it's not a significant impact other than just changing your rates.
It's pretty smooth, yeah. Okay, got it. So the transition for you remains very, very smooth. 9 to 10% of your business is B2C, and that's where we need to see if there can be a further leg up. Got that.
All right. Hi, Mr. Bora. Good to see you in, sir. So clearly, this will spell better times for the way ahead. But a quick question, does the GST reduction impact your pricing competitiveness in comparison to imports? Is there a threat of imports?
Not really, because when you import, there is a separate custom duty or the taxes plus the GST. So from that perspective, we don't expect any significant impact, because when we sell, obviously we sell at cost plus GST, and when you import also, you have to pay these similar taxes, which you can avail the input credits.
All right. Now the hope is that demand comes back. But what were your observations for majority of the second quarter? Was demand okay? Was it faltering a little bit? Many on the street believe that, tariff or not, there were some measures that were needed to be taken internally, and that's been taken. So what is your analysis of demand?
So from our perspective, our demand is primarily to our end consumers, and that has been on the trot as per the annual guidance and the month-on-month guidance which we get from our customers. So from our perspective, whatever components get into vehicle manufacturing, there has been negligible, I would say, no impact or no meaningful impact from this rate transition, because we all know, because of this anticipated rate cuts when it was announced to when it is impacted, there has been some deferment. Maybe people would have chosen to defer their purchases for the time being because of this anticipated benefit. But despite that, our customers have been continuing the production because it was primarily deferment for a few weeks, and it is not seen as any significant downside. In fact, we are expecting that post this rate cuts in line with the industry, we do expect that the demand should go up. Now, how much it will go up, I think everybody's in wait and watch mode, because this definitely brings the prices down, as we all know, significantly, and affordability definitely increases. So government has done multiple actions, we all know, right? Leaving more hands of money in the taxpayers' hand by reducing the tax rates, or the 12 lakh rupees of tax exemption. Then now we had these rate cuts by RBI in terms of interest rates. Now we have these GST cuts. So affordability definitely has improved on various counts. So overall industry is very, very optimistic.
Sunil, hi. Morning. There is the tax cut here. There is indirect tax hike in the US. A lot of these one-offs. But at a fundamental level, can you give us a sense of how business is progressing? What's happening? How's demand otherwise on a steady state basis across your product categories? What is the direction of travel?
Prashant, we continue to have our same trajectory. There is no hiccup. In fact, there are positive signs. Industry is preparing for the next leg of significant growth. We all know all our customers are expanding, and so we are. We have almost 12 new plants which are under construction, and we are quite optimistic that the growth momentum or the phase currently we are in, that is here to stay for a quite long time. So from volume perspective, yes, they have been broadly in line with what we have been estimating. And from 22nd of September, we are all gearing up for meeting our customers' demand should there be an increase in end customer demand.
Many of these OEMs have already passed on, right? Effective immediately. They're not waiting for the 22nd.
Right. You're right.
So in that sense, I mean, you should be hearing from these from the OEMs. I mean, now in the sense, right? Of course, depending on what they are seeing on the ground after these price cuts.
Yeah. So that's what, Prashant, it's a little early to comment what they're seeing on ground, because to pass on the message till the end, it takes some time. But as I said, there has been no impact on volumes because of this anticipated cut post 15th of August. And our customers have been sort of building up inventory. And from that perspective, our operations have been going in a very steady, smooth way.
So all things put together, Sunil, this year, what, 20% growth? More than that? Less than that? Teens?
Very difficult to say, but I can tell you that in the first quarter, we all know industry grew by a couple of percentage points, and we grew by almost 16%.
Yeah.
So obviously, we do expect industry to grow, and hopefully, we should be able to maintain our growth rate what we have delivered in the first quarter.
The third point we wanted to understand, Sunil, was whether this move on GST, whether it fundamentally changes the whole roadmap of EV adoption. Because ICE vehicles suddenly get that much more affordable, right? So the propensity of just going in for an ICE becomes very direct. What's your thought on this?
Very difficult to say, honestly, because there is a section of a consumer which is preferring EV because of not only the cost differential, but also because of the cost of running, cost of operations, and maybe impact to environment, etc. A lot of regulations there now which are driving in terms of what vehicle you can drive on road, because we all know the pollutions have been spiking. There are various factors why people have been adopting for EV. Yes, this price reduction might impact a little bit, but we are in a very nascent way or nascent stage of the EV volumes. Two-wheeler is somewhere around 7 to 8%, three-wheeler is something around, four-wheeler is around 3 to 4% of overall volumes. We are very small and base, so it has to grow. Now, how much it will grow, time is only tell, and that's why we say we never normally sort of try and speculate what the penetration is going to be. But overall, long term, we still believe that the numbers where we are today will increase despite this, what you call the price differential being reducing.
Sunil, we leave it there. Good luck and, all the best as you continue to execute when what seems like a pretty good trajectory of growth for you. As you said, 12 new plants under construction. Growth over a long period of time. There'll be, of course, pulls and pushes and a little bit here, a little bit there, but seems to be on pretty good track. Thank you. That is Sunil Bora of Uno Minda with perspective on the business. 24,800 on this Nifty. We're up about, 90 odd points right now. I highlighted NetWeb in the morning as we opened up. NetWeb was up 6-7%. It's cooled off to about being up 2%, but it's still the number one volume-led gainer right now. Moship is still up 8%. There's another company called, MICEL. It's not a new company. It's been around for a while. It's basically MIC Electronics, basically. It's shortened to MICEL. It's up on very large volumes, some 1,700 crores in market cap, $77 on your screen, and 17%. Very large volume. Number 5 across the NSE. So you've got many of these shooting stars coming up, right? Look at JP Power, 5% higher on JP Power. Again, very large volumes at this point in time. And of course, some of the other stuff is we've already highlighted. Volumes are still picking up through the course of the day. By the way, on the Nifty, we're up 90, but we already had one dip. The market was up 60 points. It sold off to being absolutely flat. And then this is now the second move higher, which we are seeing at this point in time. We'll take a quick commercial break here. We're going to come back and banks and financials in focus on the other side. We'll have Vishal Goyal of UBS joining in to talk about exactly that. Stay tuned, coming up.
Welcome back. Well, we are continuing to decode the implications of this big boost, economic boost that's been given in the form of the GST cut. We're putting the spotlight on the financial sector now. Vishal Goyal, Managing Director, India Financials Analyst at UBS Global Research is with us now. And of course, we want to cover 3 talking points. Credit growth and how might that shape up from here on. Of course, what are the expectations from the RBI? And of course, bank earnings. Really, will things get better as we progress down the line into this year? Vishal, great to have you on. So let's take it step by step, starting with point number 1. Now, a lot of people believe that maybe a good way of playing the GST cut, the stimulus that's being given to the economy, would be through financials, because eventually, perhaps, people borrow more. Do you have that view? And where are you in terms of your expectation of system-wide credit growth? And which are the, the subcategories of financials which will perhaps surprise on the upside, purely in terms of growth?
Hi, Surabhi. Thanks for having us. So, yes, I guess the H2 expectations are generally high. Like we are all expecting the rebound in H2. And thanks to the stimulus from government in various forms, whether it starts from the IT rebate, GST now, plus the monetary easing, which we have seen. So we are from deficit liquidity to now surplus liquidity. So I think all this should enable some pickup in the credit growth. Now, from current 10%, we are estimating it to go to 11 to 12%. And a lot, of course, will depend on how the festive season goes and how the consumption cycle picks up. In terms of, I think, the breakdown, we still feel the consumption will continue to drive the growth for the system. I think the corporate capex is still small to drive overall growth. And therefore, I think it will be largely consumption driven, partly supported by SME lending. And those two remain the key drivers. In fact, in our recent publication on thematic for next 5 years, also we kind of highlighting that there is room for more growth from these two particular segments.
All right. Hi, Vishal. Good to see you, Ben. But what's your approach, from the financial pack itself? Because that could be one way of playing it. But would you go for the NBFCs, private or public sector banks?
Yes. See, I guess, again, if you think from a growth rate point of view, NBFCs clearly, has been growing at a faster rate than banks even in past. I feel the environment is still supportive, easy liquidity, lower rates. They definitely.
Oh, I think we've just lost that line with Vishal. We'll try and reconnect with him in just a bit. Quick check on the market. By the way, the Midcap market is really having a great Monday because the Midcap index is outperforming the Nifty by a mile. And you have a very positive advance decline ratio as well on the NSE. Almost 3 stocks are advancing to just 1 declining stock. So it's looking good. Let's figure out what's moving then in the Midcap market. We've discussed, of course, TBO Tech, but there are other names as well. One, MobiKwik is on the move once again, 8.5% on the higher side. There's Acme Solar, there is GMDC, Prime Focus, where a bunch of very notable investors have checked in, including Mr. Ramesh Damani. That stock's locked up in 10% circuit. It hasn't moved, hasn't budged at all. So these are the key names on the upside for the time being. Let's just go back and check some of the stocks that were on the radar in terms of news as well. Vedanta is still stable. I mean, still down only 1.5 to 2%. And the real estate stocks, Suntech, where promoters have infused some money in the company, 500 crores, 3.5% up on Suntech. And Max Estates is also up and about.
Well, that's right. Let's focus on metals, though. And Morgan Stanley has come out with the note on steel. They've upgraded JSW Steel to overweight. The target price they've raised to around 1,300 rupees. They've also gone ahead and upgraded Tata Steel. The target price comes up for you on the screen, 200 rupees. And SAIL, the target price has been raised to around 150 rupees. 140 rupees, beg your pardon. They have an equal weight, though, on Jindal Steel. That target price they've raised, though, to around 1,150 rupees. Let's tell you the factors at play. They have turned constructive on steel spreads expansion. They're also expecting domestic steel prices to expand as the demand is likely to improve. They point out that China's anti-involution theme is also gaining traction. That is, they'll restrict production, restrict supply, which in turn will be good for pricing. And since China's the big king in terms of the capacity globally, well, if China does that, then that's good news for global prices as well. They say that the global macro factors are also turning favorable. And because of all these factors, they've gone ahead and raised the steel prices estimates by around 3% each for FY27 and FY28. So put all this together, Morgan Stanley has got constructive on steel companies. And last week itself, here at CNBC-TV18 had highlighted various factors at play, from anti-involution, from Fed rate cuts, the kind of measures taken by the domestic regulators here, or the central government as well, to protect domestic companies. And all these companies have done quite well. But I think Vishal Goel is back with us. Vishal, you were going to give us the preference, between NBFCs, private and public sector banks. Please go ahead, and good to have you on camera.
Yeah, sorry about that. I guess, see, I was saying that NBFCs have historically grown faster than banks because, they have smaller books and again, focus more on consumption. Given the benign liquidity environment and funding environment, we feel that NBFCs would continue to grow faster at roughly 1.4x of banks. Banks also have corporate and agri books, which are not growing as fast as retail. And that's why I think NBFCs should be growing faster than the banks, even in the near term.
Okay, so NBFCs will grow faster than banks. Within NBFCs, Vishal, I mean, which segment are you more optimistic on? The ones that are more, say, gold loan focused, or is it going to be housing or consumer financing? We all remember what happened to Bajaj Finance, right? Just after the GST cuts were announced. So what type of NBFCs?
Yes, I think, see, housing will remain the largest, product along with business loans, which is SME and business loans. So those are the large two products. Actually, consumption lending in India is still very small. If you look at credit cards, it's only 1% of GDP. Even personal loan plus credit cards will be like 8% of GDP. So I think there is more room for consumption credit to grow. We have seen some consolidation in this product in the last 18 months. Also, we've seen an NPL cycles in 23. And therefore, I think this segment can grow faster, especially given that the GST stimulus would be directed towards more on the consumption and basically should have some effect on that lending as well.
Okay, so that's on the NBFC side. For large banks, Vishal, what's the forecast as of now? Do you expect any of this? The fact that, I mean, the income tax cuts have also now, they're seeping through the system. This is the year that they're at play, and then the GST cuts. Large banks, how should one consider them, if at all?
See, I guess large private sector banks, they are still driven by consumption credit, and retail remains a large part of their balance sheet. So to that extent, they should be able to grow closer to 14-15%. And that is like our range forecast for most of them. I think in terms of margins, we already know that this repo cut repricing would have some margin dilution in the near term. But beyond that, I think as we go closer to FY27, probably Q4, we'll start seeing NII growth also coming back for them. So I would say, we'll work with 14-15% loan growth for this year. Probably more NII growth next year as the margin stabilizes.
Vishal, even, I was shocked to hear it, but even the rate of growth in home loans as a segment, that has fallen very sharply, right? Single digits now. Sharp deceleration. So in terms of segments, where do you see the maximum delta if this is to pick up and go the other way?
See, I guess the maximum delta would still be driven by consumption, as I was saying. And within consumption, we have already seen, as I said, correction in the unsecured lending. That should start picking up. See, gold has had a very good run, right? Backed by the price grown at almost 30% CAGR in the last 5 years. But that, I think, might still, continue to grow at faster than the credit, like maybe closer to 15%. I guess SME credit, business loans and SME credit, that book would also continue to grow faster than the overall book. So those 3-4, I think I would say segments. See, auto, etc., would also see some pickup just because of the stimulus. But I think at the overall scheme of things, the size would be small.
So basically, a consumer and SME kind of loans, right? Those are the two areas.
Yes.
Right. Yes. That's exactly. We spoke with Sanjeev Bajaj last week, and those are the two segments he identified as well. And actually, other CEOs we've spoken to as well said, well, this is where the maximum sort of boost, etc., will show up. Just one more question, Vishal. Many banks and bankers we speak to say, well, the regulator is still very keen on doing more to reverse the sentiment and for lenders to be able to lend more in an easier way, etc. We've heard things like, a relook at risk weights on specific segments could be in the works. In terms of future steps from a regulatory standpoint, now rate cuts, is it one or done? Is it, are we going to see one more, etc.? We don't know. But is there other steps which could be meaningful What could those be, Vishal?
I agree with you, Prashant. I think since March or April, I think the regulatory situation is very different. I think from a tightening on all fronts in the last 2 years, we are seeing, relaxing and accommodative stance on not only on monetary and repo cuts, but also on some of the regulations for banks, whether it is ECL or provisioning or, like the risk weights on unsecured LDR related, pressures, etc. So I guess there is at least a benign, environment from a regulatory point of view for growth to pick up. I guess now liquidity is already in abundant, right? So I think what regulator generally can do is relax more on LCR or, some like for the CRR cut also would be happening. So a lot has already happened in the near term. I guess if this does not pick up, then they could look to maybe relax some more internal regulatory, I would say, measures which allows bank to lend more from the liquidity. But I guess I think the task at hand would be credit demand, right? Like how you get the demand to come back. One can be just simply lower rates, and the second could be all this stimulus which is already happening on the other side.
And both have happened, right? I mean, to some degree, at least in the near term. Vishal, just one last question from my side. When you speak with foreign investors that you advise on for stocks under your coverage, how is positioning in this space now relative to, and is that a factor at all, one way or the other? I remember a year and a half, 2 years, till 2 years back, I mean, the refrain seems to be, well, everybody likes the space, but everybody's already overweight. So then what's going to happen from here? But has that changed at all? Has enough time correction happened? What's the sense?
Yeah, I'll go back a little back in time. See, if you look at the positioning in the last 6-7 years, how it has evolved, it's basically, it was hidden only defensive names, right? Some quality private sector names, no exposure to SOEs, no exposure to the smaller or no struggling private sector banks. From there, it basically became almost everything you own in the sector. That basically happened maybe a couple of, till maybe last 18 months. And in the last 12-18 months, what we are seeing is again some shedding, I would say, or reduction in the low quality names. Or low quality in the sense like the names which are not performing as much. So within private sector also. And so overall, I would say there is a difficult to put a number whether how much overweight was there. But, from high overweight, it could have been a low overweight or, the weight definitely has reduced. That's the sense I think we get when we speak to them.
All right, Vishal, the last 3 or 4 years, if I were to pick up one set of finances actually that have re-rated, could be the power financiers. They have really moved up. Do you think there is still value out there? And also, if you could comment on gold finances, because, this is an ancillary way of playing the theme. If you're bullish on power, maybe if you want to play it via the financing theme, then some of these power finances have done well. And we saw what, a couple of those gold finances, the numbers that they have delivered, and those stocks have, seen a big spurt up. So do you think there's more potential?
Yeah, I guess, Nigel, gold is, the price has helped. Plus, like if you see the gold AUM CAGR is 30% in the last 5 years. So it's phenomenal. Like it is kind of the best in the overall financial services in terms of growth. Can it continue further? I mean, a lot will also still depend on, whether the gold price, remains here or there is a sharp correction from here. We don't cover the names in particular, but I think we are expecting around 15% growth from this segment, given that the base is already very high. There's nothing, wrong in the business as of now, but generally, I think we think from a very high base, we should see a 15% kind of CAGR over that. I think on your question on power finance, yes, I guess we are positive on that segment. I think in particularly because the valuations are reasonable and ROE, etc. are decent. I think in terms of growth, while there are a lot of discussion about growth picking up, I guess the struggle for this financiers has been the loan growth numbers, right? And the low teens or close to teens kind of growth numbers is what right now expected. If that surprised positively, I think there would be a good re-rating potential in some of these names.
All right. Vishal, we'll leave it there. Thank you very much for joining us. It's a good conversation and good insights from you as always. Thank you for joining us here on CNBC TV18. 80 points on the Nifty is what you have. So 24,824. You know, we've been highlighting all the names which are high. I just want to look at the other side as well. By the way, it's one way. So advanced decline, 2,000 up and about 700 lower. So almost 3:1 in terms of advances to decline ratio. Amber is down 2%. It's, I think, it's basically from the highs. It's come off quite sharply. And I'll tell you, from on Friday, it closed at about 7,800 bucks basically was the close. It rose to about 7,850 and now stocks at about 7,600. So it's actually dropped quite sharply from the opening gap up that we saw on that one. That is Amber. Lots of other stuff also moving, but I mean, the weight of volume, etc., is largely on what is going up, not what is going down. Vinay Rajani is with us, a senior technical and derivative analyst at HDFC Securities. Vinay, good to have you with us here. Good morning. How would you trade the market? What would you do on the Nifty indices? And then, of course, your stocks.
Yeah, good morning and thanks for having the show. So 450-point rise from the lower level, 24,400 is a very strong base. From that, we saw a bounce back and gradually Nifty is getting strength. Now it is above 5, 10, 20, and in fact today it has surpassed the 50 days EMA. So gradually markets are getting strength. Overall, if I were to talk about the 24,400 to 25,000 is a broader range for the market. And for as far as Nifty is concerned, yes, above 25,000 we will get a confirmation of a bullish breakout. By that time it will be too late for stock, because if I were to see the broader markets, it is getting stronger day by day. Started with the auto sector, followed by auto ancillary, then FMCG, then metal stocks. Some of the hotel stocks performed very well and they've been doing well. And now I can see some railway stocks building strength on the charts. So gradually, many stocks have started performing. Momentum is started building up in many of the stocks. So broader market is performing well. If stock pickers in the mid-cap and broader market segment wait for the breakout of 25,000, it will be late also, because no doubt about 25,000, there is a breakout in the Nifty, but broader markets are throwing a lot of opportunities for the traders to trade in. So I would suggest that one should remain with a positive bias. One can trade in the market, and stocks and sectors which are performing well, we can trade, and there are a lot of opportunities are there. So 25,000 above which we can get a fully bullish breakout setup in the Nifty. Bank Nifty level is 54,500, above which we will get a breakout. But I think one can look at the stocks which are giving a lot of opportunities on the to generate the alpha in the short term. So yes, there are stocks which looks very strong to me. One of the sector and segment which is fresh breakout on the chart is the railway space. So RVNL looking good around 334. Stop loss can be kept at 325. On the upside, I'm expecting a target of 350 in next 3-4 session. The second pick I would take from the outperformer sector, which is auto, and that is a commercial vehicle segment, Ashok Leyland. So Ashok Leyland around 135, 136, one can go long. 132 should be the stop loss. And on the upside, I'm expecting a target of 140 to 141. So overall, this space is likely to do well. And stock specific, there are many opportunities which can be traded with the appropriate stop losses.
Okay. All right. Thank you very much for that. We'll keep those levels in mind as well for the index. Need to take a quick break. Come back on the other side. We'll have Manisha Gupta joining in with a roundup of all the commodity market action and a couple of the key stocks which are hitting the headlines this Monday morning. Welcome back. So the equity market is having a fine Monday morning. No problems there. Let's figure out what's happening in commodities. Manisha is joining in. Manisha, what's the latest?
Well, it's a kind of a morning where you have everything trading on a higher side. So you have gold near all-time highs, silver at 14-year highs, crude oil prices taking higher, coffee, rubber, everything is firm. But I want to focus on the global food prices. And there's an FAO report which has come out with the global food price index for the month of August. The prices here are at a 2-year highs. So when you look at a month-on-month jump, it's not so much. But on the yearly basis, we are up by 7% as compared to August in 2024. So strong commodity prices is what we are working with in here as well. So the prices are highest since Feb 2023. And the major of gains really seem to be coming in case of sugar and edible oils. This is where the inflation really seems to be catching up in the international markets there. I'll start with vegetable oils because here you have the highest inflation, 1.4%. The vegetable oil index is trading at the highest in 3 years as well. Now, there is gain in case of palm and sunflower oil prices, and that is because of the biodiesel mandate that Indonesia really seems to be putting with. It started with B30 and B40 and is talking about B50 as well in sense of blending in the next year. That is where sun and palm get their support from. It also has to do with the maize prices, which also are trading on a higher side because of the US feed and ethanol demand. So everything which seems to be getting divided in sense of food, feed and fuel is trading on the higher side right now. And then it also has to be with the meat price index, where you have seen 0.5% of gain, trading at a record highs in the global markets there as well. Sugar prices gained up too after 5 months of constant declines because of higher production expectations in Brazil and India. You have seen sugar gain up on the index as well. What has seen a decline, though, within the food price index has been cereals. This is down for a 5th month and down nearly 0.8% on a month-on-month basis. The other is wheat, a big decliner really, because we're looking at a very big harvest in European Union, in Russia. Indian wheat crop also expected to be strong. And then it is about rice, where India is the largest producer exporter as well. And with Indian prices of rice trading at a 3-year lows, that is impacting the international food price index also. Another thing that what the FAO has done is it has come out with the global cereal production as well. They're looking at 2025 gaining by 3.5%. And now this is a new record highs that we're looking at. Maize has surged up by nearly 6%. Not so much in case of wheat, but you have seen rice, which also is looking at higher production. So when you look at wheat, cereal, maize, rice, higher production numbers in the global markets are keeping these prices under check.
All right, Manisha, thank you very much for that. That's commodities with food grain, cereals, etc. under the microscope there. Manisha, thank you for that. Well, let's talk about real estate. Suntec is in focus and Max is the other one which is in focus as well. Ria is going to put the spotlight on these two names once again. Ria, over to you.
Well, yes, both of these stocks are in focus today. First up, looking at Sunteck Realty. They have issued 1.17 crore warrants convertible into equity shares, aggregating to about rupees 500 crores. The issue price for this is rupees 425 per share, and this will be allotted to the promoter and the promoter group, who are going to subscribe around 66.5% of the total issue. Other investors for this include NT Asian Fund, Utpal Seth, as well as Mukul Agarwal. The next one is Max Estates. They have secured the development rights on a 7.25-acre land parcel. The group housing development potential for this is 1.3 million square feet with a GDV potential of over rupees 3,000 crores. And the outlay associated towards the transaction is expected to be around rupees 534 crores. So both of these stocks are performing well in today's session, trading higher by around 3 to 3.5%.
All right, Ria, thank you very much for that. So those are real estate companies in focus. We're going to take a quick commercial break here. We're going to come back with a very special conversation. My colleague Lata will be speaking with KVS Manian, the Federal Bank CEO, on the outlook for the bank. That's coming up in just a quick bit.
Welcome back. Post the GST cuts, we saw NBFC stocks like Bajaj Finance run up on hopes there will be more consumption and more consumption loans. Logically, banks should also benefit from such a consumption growth, but banking stocks did not react immediately after the news. To assess the outlook after the bunch of government steps to spur consumption, I have with me an ace banker, Managing Director and CEO of Federal Bank, Mr. KVS Manian. Good morning, Mr. Manian, and thank you very much for coming to our studio. It's still only 2 days after Onam, so happy Onam to you as well.
Thank you, same to you.
Well, let's start with this GST rate cuts. Do you see consumption getting a boost?
So I do hope that the consumption gets a boost, though of course there will be some hold on to the demand for this month, I guess, most part of this month. But hopefully from the next quarter, we'll see some impact in demand. The way I look at it is this is good from demand perspective. Interest rate perspective, I am not yet sure where it goes.
Yeah, I'll come to that, cost of deposits and interest rate cuts. But just to finish the growth argument, you know, your best performing sectors were commercial banking and CVs. Those were the two pillars in the just ended quarter.
Right.
Would you expect that CVs will do well simply because the cuts have come?
Yeah, so CVs, it's good for CVs, that is one. But Lata, the way I look at it is we are still a small player in CVs, so we should do well irrespective.
Okay. Oh, irrespective.
Yes.
And what about commercial banking?
Commercial
do you
banking.
think that the consumption can spur more? From commercial banking are still large SMEs.
Yes.
Or MSMEs.
Yes. So, I am more, if you see our last quarter also, we have put more emphasis on the commercial banking, and the small business have still grown slightly lesser than that. Because we are feeling more confident about the large SMEs. Okay. The tariff impact on small SMEs, we are kind of wanting to assess that, what the implications of those will be. And as you know, many people in the industry have called out, though our book is not showing any signs of stress. Many people have called out stress in the
finance minister has
small
promised
SME.
a package.
Yes.
So she spoke to our channels.
Yes. So I am hoping that that part also picks up. But commercial side, the larger SMEs, I think we are very confident. Our book is very good, and we want to continue to grow that book.
Okay, so let's come to a number. How do you expect credit growth for the full year, for this quarter, for next quarter? Any numbers you can give us?
So, Lata, we've been guiding that we will grow at 1.2 to 1.4 times the nominal GDP growth. Of course, nominal GDP has taken a hit just now, but I'm assuming that through the next 2 quarters, it will normalize a bit. So, we continue to keep that guidance as
1.1 to 1.2 times.
1.2 to 1.4. If the credit growth is muted, we'll probably operate at the lower end of this. Otherwise, we'll operate at the higher end of
Okay, now let me come to the cost of funds. Have you all seen a fall?
Yes, of course. Of course, we have seen a fall. As you know, we dropped our savings rate also and term deposit rates as well. And we have continued to grow our deposits in spite of that. So we have seen a drop in funds, cost of funds. Last quarter, if you looked at our numbers, our cost of funds dropped by more than 18 bips.
So did the NIMs.
So did the NIMs. Of course, NIMs, as you know, are dependent on, nowadays, most banks have 40 to 50% of their book in the repo linked assets, and it's a natural drop.
Loan.
So we are hoping that the fall in cost of funds continues, because the deposits will continue to reprice till May. Okay. So we think
so, another just near-term number. If there is no rate cut, what are your NIMs likely to be now and by the end of the year? If there is another cut, which can happen because of the CPI fall, then what are your impact on the NIMs now and end of the year?
Right. Again, Lata, we have guided that up. Post our last quarter, we said that we are close to the bottom of our NIM and ROA trajectory. Because if you know, we reprice T+1 basis. The day repo drops, we reprice it on the same day. There are banks that go up to 90 days on that. So we've taken large part of the fall already. And therefore, we think we are close to the bottom. We had guided that not less than 5 to 10 basis on the NIM
so
side.
So 2.94 can become 2.85, not lower than that.
Yeah, not more than that. I mean, hopefully
but
better.
When does the U come?
So I think we should see uptick from here on.
Second quarter itself?
Second quarter, like I said, there may be small impact, but after that, the next 2 quarters of the year, we should see an uptick.
Okay.
On both ROA and...
so your year-end NIM could be over 3?
Yes, of course. Yes.
Okay.
Surely.
Okay. So now let me come to the MFI issue, which obviously showed up in higher slippages for you, higher credit cost.
Yes.
What's the sense?
So, as you know, if you saw our last quarter, there are 2 things I want to talk about. One is the increased credit cost we took was primarily because of MFI. If you looked at the slippages of all the other non-MFI assets, they were exactly where they were 1 year back. Our slippage was 0.77% sans the MFI thing. It remained exactly the same 1 year later, 0.77 to the second decimal.
Okay.
So the primary increase in credit cost came out of the MFI business, where we feel the peak has already happened. May was our peak month. We have seen drop in slippages since May, June, July both. August we have not gone public with the data, but June, July we have seen a drop, and we think we are past the peak on that.
Okay.
And we've also guided that in spite of the fact that we took a 65 basis credit cost in the first quarter, our annual guidance on credit cost remains 55 bips. Okay. So we have not changed our guidance.
You expect the provisioning to come down?
Yes.
I mean, loan loss provisions to come down.
Yes. Yes.
What about MFI? I mean, we just had a note from CRIF. They were a little, MFI, MSME and SME.
Right.
They were a little worried. They are seeing trouble. So do you think MFI goes down, but business banking, for instance, can show more...
So like I briefly mentioned earlier, we aren't seeing any stress in our SME portfolio, business banking portfolio.
Okay.
But having said that, it is an area that I want to tread cautiously for sure, because like I said, people have called out stress, and there are small SMEs which can have impact due to tariffs, and hopefully the package that the government is talking about happens, then it will give us comfort. But just now I remain cautious, but I'm still optimistic. It's not that we don't want to grow that book. We want to grow that book, but we will be relatively more cautious at the lower end of SMEs than at the upper end of the SMEs.
Okay. So overall, what is the ROE guidance now? Now, after the new developments in tax cuts, new developments in tariffs, what is the ROA guidance?
So, like I said, we have probably seen the bottom of our ROA journey just now in this rate cycle. Of course, subject to no more new rate cuts. I think we should see an uptick from here.
Okay. No, I'll tell you why. Because this quarter, you all are not going to get other income. Your last quarter for all the banks, although net interest income fell, this other income component, because of the rise in bonds, helped.
Yes.
But this time there will be bond book losses.
Yeah. So, Lata, if you looked at our last quarter, our pure fee-based income also grew by more than 20%, 21% actually.
Yeah.
So we are also growing our fee income strongly. So yes, you are right that on the prop side, there may be some impact of the higher interest rates. But you know, these higher interest rates, as you know, this has been range bound, right? 20 bips here, there, and you don't know when it retraces back, the interest rates retrace back. If the next CPI call is lower, you never know the interest rates.
The CPI call is going to be lower. So I think bankers have to be prepared for a larger possibility of another cut. I mean, we can't read the RBI.
Right.
But if most economists are pricing in a cut, therefore, what is the ROA trajectory?
So the further cut will impact ROAs. There is no question about that. Again, we should be clear that will be the case. Having said that, you know, there are 2-3 things we are doing. One is, if you see our dependence on floating rate assets is going down. 1 year back, 53% of our assets used to be floating rate. Today, they are 48%. Okay. So we are also, reducing that. Okay. So these should help us, mitigate the impact of falling interest rates. Of course, we are also trying to change the mix of our liability side into more CASA, which also you have seen last quarter, the results have been good on that.
Oh, yes.
So I would say mix of things. There will be things we will do to defend the drop, but there will be some impact, of course. And if you noticed our last quarter results again, the drop in NIM that we reported was significantly lower than most analysts expected, right? Because of all these cost of fund drop and the mix change on the asset side, all of that is also playing out. Okay. So we'll continue to do our best on all of that.
Okay. Anything we should know about your subsidiaries, the NBFC or the insurance? Any other activities that you are planning?
On the insurance side, as you know, we have an approval to take our stake from 26 to 30%. We are in the process. Yeah. So we have both the approvals in place now. RBI as well as IRD approval is in place. So we are in the process of executing that transaction. So we'll take our stake to 30%.
And on FedBank Financial Services?
On FedBank Financial Services, it is status quo. Nothing, no plans.
And no capital raising either?
No capital raise either.
Okay. No, I mean, even for federal?
Even for federal, not just now.
Not just now, as in how long will your capital last?
No, so I think we are at 16% capital adequacy just now. So I think we are okay. Something like a year we can do without capital raise.
With this kind of growth, yes. Okay, and finally, you gave us a 2028 ROA goal.
Right.
You want to refresh it?
Yeah, no, so...
that was the 2% goal.
It is not exactly 2, but ROA 2 is a bit high. But I would say 1.5 kind of an ROA is what we want to aim for in the next 2 to 3 years. And that's what we said in our February analyst presentation. And that's the direction we are moving in. Of course, the number is important. But, it depends on the macro, what the overall industry ROAs look like and all that. But, yeah, we are directionally headed towards the 1.5 and 14-15% ROE, 1.4, 1.5.
We do hope by 28, a lot of the tariff uncertainties at least will settle down.
Yes.
And our growth path will be far more clearer.
Yes.
Thank you very much.
Thank you, Radha.
For
Pleasure
dropping
being
into
here.
the studio and for chatting with us.
Thank you so much. Pleasure being here. Thank you for having me.
Well, we have to wrap up on Bazaar on that note. Chartbusters coming up after the break.
The auto rally continues as companies cut prices to pass on GST rate cuts. The sector leads gains led by Bharat Forge, Tata Motors and M&M.
Metals are the top sectoral gainers. Brokerage firm Morgan Stanley turns constructive on the sector, upgrading JSW Steel, Tata Steel and SAIL. All sectoral stocks trade higher in trade.
Samvardhana Motherson sets a revenue target of $108 billion and an ROC of 40% by FY30. The stock higher by 3.5%.
TBO Tech continues to surge following its acquisition of US-based travel advisor Classic Vacations. The stock is higher with a gain of around 7%.
Shares of Prime Focus locked in upper circuit for the second session after notable investors Ramesh Damani, Utpal Seth, Madhu Kela buy stake in the company in Friday's block trade.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and the markets are holding in the green. There are pockets of strength, the broader markets in the green as well. Mangalam, we have to say the bulls, they have started off the week on a positive note.
It started on the positive note. The way they end will be, the test of that, because over the last few trading sessions, every time the Nifty has gone to levels closer to 24,900, closer to 25,000, we've seen some supply come by. The question is whether that sustains or not, and whether there is that expected short covering that comes by or not. 93% of FI positions on the short side. But there are a lot of stocks which are moving around, irrespective of the consolidation that we're seeing in the market. And one of them is TBO Tech, which is in focus on account of the acquisition that it did. $125 million is what they paid for Classic Vacations. And those are the important points that we will discuss with the management as well. The growth and synergies coming in from Classic Vacations acquisition, the near-term outlook on travel industry, and more importantly, overall long-term revenue mix and take rates as well. Ankush Nijhawan, who's the co-founder and joint MD of TBO Tech, joins in. Along with him is Gaurav Bhatnagar, who's again a co-founder and joint MD at TBO Tech. Gaurav and Ankush, thank you so much for joining in. The street clearly likes this acquisition. Ever since you've made this acquisition, $125 million is what you've paid to scale up your revenue in the US, which accounted for just about 5% of your gross transaction value. Ankush, just a question to you with regards to the operational and revenue scale synergies that you would get from an acquisition like this. Immediately, yes, it adds about 30 to 40% to your revenue. Brokerages estimate a 4 to 5% EPS accretion over the next few years as well. But from your endpoint, where do you think you can scale TBO's organic revenues because of this acquisition? And where could the cost synergies come in? Have you put a number to that?
Good morning, Mangalam. Mangalam, this question I would request Gaurav to take, if that's okay.
Go ahead, Gaurav.
Yeah, hi, Mangalam. Thanks for having us over. So, Mangalam, we have to look at this acquisition from two perspectives. One is the US market entry. This is one market where we had been the slowest to enter, and we had made a couple of attempts in terms of different strategies for the market. So this acquisition makes a lot of sense because now it gives us significant scale in what is also the largest outbound travel market in the world. So as our business matures, we would expect the business to reflect the global mix of luxury travel demand. And from that perspective, we would expect US to be one of the largest or maybe the second largest market for us. So this gives us a significant scale. The second aspect to look at, and which I think helps the overall business for TBO beyond US as well, is the access to luxury travel supply. We shared this data in our analyst call as well last week, that the average ADR or the average daily rate at which Classic operates is nearly $1,000 per night compared to the $250 per night that TBO does right now. So we've started from what we call premium outbound travel, so which is more like 4-star deluxe, early 5-star. Classic, on the other hand, firmly operates in the luxury end of the spectrum. So we start getting access to that supply, and that supply is relevant not only for the US outbound market, it's relevant for luxury travel overall, right? So for example, Europe is a big destination for Classic right now, and Europe is also a large destination for TBO. So we expect that, yes, standalone accretion from what we get from this business is what it is, and I think the analysts have a view on it. But we have to look at it from a broader perspective, saying that if the company's thesis has been that luxury travel is the segment that will grow, and this is also the segment that is largely serviced by travel advisors, then it helps us entrench ourselves in that end of the spectrum as well.
All right. Hi, Ankush and Gaurav. Congratulations on making this acquisition. It seems to be strategically good, And also, the street is optimistic because the kind of addition on the revenue as well as on the EBITDA front. So that's good. But a couple of questions out here. One is the acquired entity, the last 3 years there's been no growth. So do you see growth come back over there? If yes, where do you expect this business to scale from around $100 million? Point number one. Point number two, the margin gap is closer on 700 basis points. They are at 10%, you're doing closer on 17%. Will it be that, these margins of the acquired entity as well gradually moves up maybe to mid-teens in the next few years?
Yeah, no, fair questions, Nigel. Look, I think from a perspective of growth, two things to keep in mind over here. One, the US has seen a fair bit of turbulence last couple of years, right? Because of the geopolitical environment. So, for example, Mexico is a big destination for Classic. And outbound to Mexico has been, meaningfully hit from US overall. So I think that is some macroeconomic headwind, which we expect to see a turnaround over the course of time. Second thing to keep in mind is that Classic was so far owned by a, not by a strategic owner, but by a, by kind of like a private equity / family office. So the priorities were very different, right? I think they still, in spite of a flattish top line, they did show bottom line growth. So the priorities were very different when you're owned by a private equity as when you're part of a strategic larger setup. So we definitely are banking on organic growth as well in the Classic business from the synergies we will derive. The way we'll also look at it is that how fast can the North America business or TBO as a whole, including Classic, can grow. And there we remain very optimistic. I think I'll not hazard to give any forward-looking numbers on this. We would definitely expect top-line growth to happen. On the bottom line, Nigel, I think we have to first understand how the Classic business is slightly different from the TBO business in terms of how revenue gets measured. So Classic works on what's a commissionable model. So you would see the take rates are very high, almost 23%. Now, half of that take rate is actually just commission that goes back to the travel agents. So about GP, is hence 50% of the overall take rate. Even at that, GP is quite impressive at 11%, which is more than double of what TBO does organically. So I see that as a big positive. Now, as you know, these businesses demonstrate operating leverages. So our expectation is that as we enable the business a little bit, all top line growth should meaningfully go down to the bottom line. And hence we should expect EBITDA margins to improve. Very hard to say will the EBITDA margins converge at where the broader TBO margins are. But if I was to look at another metric of where is the EBITDA as a percentage of GTV, then this business is already accretive for us, right? They are nearly 2% plus on EBITDA as a percent of GTV, which is how many of the large mature OTAs, measure their financial outcomes. So from that perspective, this business is already accretive, and I think it'll grow from there.
All right, we take that point. But, from a improvement standpoint, if you could tell us, are you working with, say, 100, 200 basis points improvement? Yes, difficult to say whether they converge or not. But at least from what you can see right now, there should be at least 100, 200 basis points improvement?
Are you just, putting a little bit of words in my mouth there, Manglam? But look, I think...
No, we're asking for...
We're asking you out of curiosity, because the current difference is close to around 500 basis points. You're saying it will obviously not converge. So I'm saying, will you meet them halfway?
That may be one way to look at it. I think in the short run, and look, we have yet to own the business in the sense that it closes in the first week of October, right?
Yeah.
So for us to be able to create such a granular perspective on the business is a little bit hard. We have identified synergies. I would be surprised if we don't deliver at least a couple of percentage points in EBITDA improvement over the next 2 or 3 years.
Got that. A couple of percentage points improvement in EBITDA and meaningful improvement in growth as well. As the ownership has changed, focus will change as well. Ankush, we asked you a question, you directed it to Gaurav. Let's ask you a question again. If you could give us a growth breakdown for the ex-Classic Vacations current business for you. The first quarter obviously was impacted by disruptions. The second quarter, have those disruptions continued? What is the outlook on growth for this year, GTV, on both airlines as well as hotels?
So, Manglam, I think it was a very, very tough last quarter for the obvious reasons we all know. But I think Q2 is showing some promising traction. I think, and we are doing things which we're supposed to do. And yes, there is a lot of positivity in the market now. I think the Q1 is behind us. Plus, with the festive season, especially coming in India, with Diwali and the Dussehra breaks, we anticipate some good movement happening, and I think in terms of our forecast for growth, we are in line what we think we should be delivering, but as a company, Mangalam, we don't give any forwards, but what I can tell you is our focus remains, and hopefully we'll deliver what we have been talking to the market.
Okay, all right. I wanted to get your view on a direction for the profitability of the company, because one would say, it's more than a $2 billion market capitalization company and giving net profit of 220 crores in the last year.
Yeah.
But the street is optimistic about the prospects ahead. So I'm looking at a Jefferies note. They are talking about profitability move from an early 200 crores to close to around 380 crores in FY27. And post that, they're also talking about 500 crores of net profitability. Do you think that's the direction the company is headed? Because if you take that into the equation, then the company doesn't look too expensive. What's your take?
So I think the 380, is obviously was something which was, not before Classic's acquisition, right? So we are fairly confident, to move in that direction. And obviously, Jumbo Online, which was an acquisition, if you remember, Nigel, is now going to have a full year with us at TBO as well. And the 500, I think what Jefferies is obviously crores. What Jefferies is giving is keeping in mind our, full year of hopefully, delivering the Classic acquisition, as Gaurav mentioned in the beginning. So I think we are moving in the right direction. Plus, we believe that sometime next year our operating leverages will start playing up. Because there has been a lot of front loading in terms of building our distribution. Not just in India, overseas as well, very aggressively. So hopefully that will play up and give us some operating leverage, which we've been talking about in somewhere in 2026.
And at what level will the hotels and airlines mix sustain?
I think it's a conscious effort, Mangalam, for us to build a hotel business, because that's where real profitability comes in. Nevertheless, our airline play in India is extremely important because one, it gives us a lot of meat in building our platform in India and cross-selling hotel business. Plus, I think the whole growth of aviation happening from India is something we cannot ignore. But yes, I would say at least 80-85% of business will be our hotels, which will obviously make our EBITDA and profitability much better, because that is the higher margin business for us across.
Take that point. Thank you so much for that. The street likes the acquisition. Over the last month or so, the stock has rallied about 22%. You believe that with all the front-loading investments that you've made, maybe going forward, things would improve for you in the company, and that's what the street is betting for as well. Take a short break, come back, and more on the markets, and a lot of stock-specific action. Gaurav, Ankush, thank you for joining in.
Welcome back. Markets continue to hold in the green. The problem yet again is the Nifty band. That's not coming to the party. That's still down only around 30 points or thereabouts underperforming the Nifty. If that gets its act together, it's like the star batsman coming to the crease. Let's see whether or not that can happen. But let's get in Shivangi Sarda, who joins us on the show. Hi, Shivangi. Good morning. Good to see you in. Hope you're having a good start to the week. What's your view? Nifty is good for more? Or do you think we're going to be in this range? What would the fresh trade be?
Thank you for having me. So we've seen that the indices have witnessed kind of volatile cues from the last few sessions. And, even though there has been a comeback of the bulls, but then the sustaining at the higher levels has been quite questionable. Now we are, standing above the key support levels of 24,650 marks. But then again, we'll have to hold above 24,800, which also happens to be the 50-daily exponential moving average level for the next leg of rally to commence and, cross the psychological 25K barriers. So it needs to hold these levels again, for the fresh leg of rally to continue. But we are going for buy on decline stance, as we have been seeing that, higher bottom structure can be maintained from the last 6 trading sessions. So overall, markets are steadily moving forward, a bit of volatility, but again, we are heading northwards. So we are
all right, heading northwards, and buy on decline is something that you would prescribe to all your clients. Interestingly, not only is the Nifty bank underperforming, the Nifty IT index too has been buoyed down right now. And ever since the GST announcement that has come in, the GST cut announcement, the FMCG pack has been on a bit of an extended profit taking as well. So the FMCG index comes up for you currently at the lower end of today's trading range, just above the flat line for that index. What do you think would power this market ahead, Shivangi? Are there any individual stock sectors that you're betting on?
So stock-specific ideas on my radar has been first up from the auto space, which is in a lot of action. M&M has been catching attention from the last 17 weeks. It had consolidated and now it's coming out of the range with good volumes and price action seen here. So this one's on radar with good open interest addition as well. So recommending a buy here with a target of 38.50 and a stop of 35.80 levels. And the second pick on my radar is Paytm. Of course, new age digital companies are in focus, and this wallet has been, respecting its 50-daily exponential moving averages from the month of April this year. So we've seen that good retracement level from any small declines and holding at the higher levels quite resiliently. So 1300 is what we're looking at for Paytm with a stop of 12.25 levels.
Okay, all right. Thanks a lot for that, Shivangi. Well, I think time to slip, into a short break. Actually, before that, let's focus on our special segment where we get you a few ideas for profit from Money Control Pro. Bharat Jiyani of moneycontrol.com joins us to talk about a stock that he's tracking closely. Bharat?
This ideas would be NCC Limited. The company posted weak Q1 results with revenues declining by 6% YY. Delayed project approvals and payments led to a weak Q1 results. Despite a weak Q1, the company has retained its growth guidance of 10% for the current fiscal. Improvement in the project payment cycle as well as approvals would lead to a strong performance from the current quarter. The company sees a good order prospect pipeline worth 2.5 lakh crore rupees in the current fiscal. The company has already backed projects worth 7,500 crore rupees in April to August period. Additionally, the company is L1 bidder in projects worth rupees 5,000 crore. The company has retained its order inflow guidance of 22 to 25,000 crore rupees for the current fiscal. Additionally, the company is sitting on a strong order book worth rupees 70,000 crore. This is about 3.2 times FY25 revenues and provides a strong growth visibility going ahead. The company has a strong balance sheet with debt to equity of 0.3 times. A stronger balance sheet would ensure smooth project execution. At the current market price, stocks trading at a PE of 12 times FY27 projections. Investors can add this topic. Thank you.
All right, Bharat, thanks a lot for that. With that, we'll take a short break and come back, get you more on the markets. A lot of stocks buzzing around. We have Eicher Motors, which has moved to the high point of trade as well. As we speak, the auto stocks obviously have been a buzz. Well, ever since the GST cuts were announced or expected, the fresh leg of rally has come by in the auto space, and that continues even post the announcement. So we were talking about Eicher Motors, M&M doing well. Look at something like a Bajaj Auto and Maruti as well. All of them moving higher and very close to their all-time highs. For Maruti, just within 1% away from its 52-week high as well. And we're seeing that support come by in a lot of these auto ancillary names too. Just keep an eye out on a couple of these new age companies. Delivery, as we move towards the festive season, new age logistics would be in focus because e-commerce typically sees a high delivery season during this time, and delivery obviously has a higher share in that part of logistics. So that stock doing fairly well in trade. But speaking about the GST itself and the impact that it could have on the government's economic roadmap, the fiscal deficit, etc., we had an exclusive conversation with the Finance Minister, Nirmala Sitharaman, who said that GST rationalization has been a key driver of consumption without compromising on fiscal discipline. She also urged industries to go ahead and pass on these tax benefits to consumers. We've seen auto companies go ahead and take those cuts. Sudhir Sithapati said the FMCG industry too is committed to passing on these cuts. The Finance Minister spoke with Network 18's Rahul Joshi.
You've put more money into the hands of the consumer. You brought down for the middle classes, the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut.
Right.
The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. Okay. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
There's nothing beyond. So that 1% is what makes for the demerit goods, right, which popular parlance says sin goods.
Yeah.
So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments. It will fire up investments as well.
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts, and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah, have you seen that in the past?
Well, at least the moment the income tax reduction happened, you heard people very clearly coming out and says, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college. My daughter is already doing engineering. I'll be able to fund her for her higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit?
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time. And so with the fiscal deficit, and this is the last point of my gliding path, right, I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have
to. And you don't see that happening in the near future?
Not in the immediate future.
Well, as we move towards the end of Chartbusters, just keep an eye out on TBO Tech. That stock has moved to the high point of trade, up 9%. It was already buzzing. We had a word with the management. They do believe that US revenues are likely to grow. Thereafter, there would be margin improvement in the acquisition that they've made as well. And overall business in India would, while come from airlines, they are focusing on hotels because that is where they make higher money. That's where the higher take rates are. So Street likes all of that. The The stock up nearly 9% over and above what it was before the management joined us as well. Meanwhile, we're also seeing some traction in Parag Milk. Remember, dairy stocks have it better because of the GST rate rationalization that has come in. Nearly all of the portfolio is at either 5% or 0%, so that stock up nearly 6%. What we'll do is take your leave on this edition of Chartbusters with the news that the Nifty Bank has slipped marginally into the red, taking the Nifty lower by about a few points as well. The Nifty is just up by about 50 points, so we'll watch out for that. From Nigel, me, the entire team, thank you for watching.
Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormis Fatakia. Good morning, Hormis. Well, we ended flat last week, but Friday was a decent session for the markets. Today, it's been volatile, so to say. We did see some fall from the highs, and again we saw some recoup. Nifty opened above that 24,800 mark. Right now we are below that, but yes, still there are gains of around 50 points on the Nifty. It's autos all the way, metals which are supporting the index as well, and of course we'll discuss all of that in greater detail as well, especially metals being the big story that we have today, and Nifty Auto, of course, because of the GST cut, and that has been passed on as well to the consumers. That continues to be in focus. So it's the consumption theme that's working out for the street right now. What's not doing so well? It's the Nifty IT space continues to be a big fall there. And we also have the banking names. So those names are not doing so well right now. So it's a market where there are pockets which are doing extremely well, but the others not supporting it so much. And a lot of individual names that we have on our radar as well. So let's go across to that. Hormis is here with us to put the spotlight on top movers in the market. Hormis, tell us more.
It may be a cautious a start to the new trading week, but there are some stocks that are actually throwing caution to the wind, and Shelby is one of them. You're seeing some follow-up buying after the 11% surge that was witnessed in Friday's session. It's up 7% in today's session as well. Now, Friday's gain was the biggest single-day gain that the stock has seen since May of 21, and already in the first couple of hours of the trading session, we've already had more than 30 lakh shares being traded compared to a 20-day average of just 31,000 shares. Now, Friday's volumes of 1.5 crore was the highest that the stock had seen on record, and courtesy of this 2-day move that the stock has seen, the stock is now finally nearing its IPO price of 248. The stock had listed back in 2017. There is, of course, no stopping MobiKwik as well. The stock ended higher last week, continues to move higher today as well. 11% higher now on the stock, has gained 48% now in the last 6 trading sessions, and it's up in 5 out of the last 6 of them. And the commonality in all 6 trading sessions has been the fact that the volumes every single day have been in excess of 1 crore shares. Now, even today, we've already seen 1.5 crore shares change hands compared to the 20-day average of close to 39 lakh shares. Now, stock with this 30-odd% surge that it had seen last week has now gone above its IPO price, which was around 278 rupees. Auto and auto ancillaries have been the theme since the Prime Minister's address on the 15th of August. So steel strips wheels is one such name. Thus, this stock is also up in 6 out of the last 7 trading sessions. Volumes over 7.5 lakh shares have changed hands today compared to a 20-day average of just close to 60,000 shares. And as a result of today's surge, the stock has broken above its 50 and its 100-day moving average, both of which are placed at levels of 233. But unfortunately, the returns over the last 2 years have been zero, because the stock is up 23% this year, was down 23% last year as well. So status quo being restored here. Orient Technologies, the last one on the list, the stock has snapped a 2-day losing streak today. Now almost 3.5 lakh shares changing hands in this 7% up move so far. And the 20-day average too is just around 40,000 shares. Now it is at a very important level because the 50-day moving average is exactly at 324, which is where the stock currently trades at. But the stock has been a big underperformer after its listing in August of last year. From a post-listing high of 674, the stock has already halved from those levels. So some stocks that are moving within the broader markets, even as the markets continue to remain in cautious mode.
All right, some interesting names there. Thank you so much for joining us, Hormuz, with all that with that list. And you mentioned auto ancillaries. The entire auto space has been in focus. So let's get it, Sudarshan. He has some update on Samvardhan Motherson. Sudarshan, what's the update here?
So it's been all about auto in the last, say, 15 days after PM Modi spoke about GST reforms on 15th of August. And since then, auto index is up 11%, and all the auto stocks are higher as well. But today, one stock is higher, and it has its own reason, that is Samvardhana Motherson. Over the weekend, company has announced or unveiled its plan for FY30, giving the gross revenue target of $108 billion. That is up more than 4 times from FY25's revenue of $25.7 billion. Also, company is saying that it's going to deliver 40% consolidated ROCE versus 18% that it has seen in FY25. And one important statement that company has made, and it's important considering recent news related to tariff, it's saying that no single country or company will contribute more than 75% to its incremental revenue that it would see over FY30. And also, it will maintain dividend payout in the ratio of 40%. Now, after recent listing, not recent listing, the last 1 year, one listing that we had seen from Motherson Group, that was Motherson Wiring. Now, company is saying that more listing can be done over the next few years. And talking about the impact of tariff, company is saying that there is no material impact.
All right, so that's about Samvardhan Motherson. No impact because of US tariffs. That's also been one of the bigger risks for the stock and the industry. But thank you so much, Sudarshan, for making sense of what's happening in this particular stock. Let me talk about the realty space, because there's a lot of action happening there as well. Let's start with Sunteck Realty, because there is some investment that has come by. There has been an issue of 1.17 crore warrants, which are convertible into equity shares amounting to around 500 crore rupees. And the issue price here is 425 rupees a share. Now, remember, the company says that it will be allotted to promoter and promoter group. They will be subscribing around 66.5% of this overall issue. So anytime promoters are subscribing, that increases confidence for any investor as well. And other investors include NT-Asian Fund, there's Utpal Sheth, and also Mukul Agrawal. So that stock is taking note of that, higher 3% in trade as we speak. Max Estates also in focus. We had spoken to them last week. They spoke about their plans of adding more portfolio. This time around, they have secured developmental rights for a 7.25-acre land parcel. And this is a group housing project which has a development potential of 1.3 million square feet. The total development potential is over 3,000 crore rupees. Now, remember, all of this is in Gurugram. And the company says the outlay will be around 534 crore rupees for this particular transaction that they have. And this adds to the launch pipeline that they have. More than 17,000 crore rupees is what they were looking at. And they are quite confident of achieving that mark as well. So, Street taking note of that. These two realty names on our radar today, Hormuz.
Indeed, and Sunteck Realty, of course, there were some interesting data points that had emerged in that Friday's move that the stock had seen. Almost 65 lakh shares that traded hands. That was the highest volume that the stock had seen since January of 2025. So, building on to those gains of Friday is Sunteck Realty, 461 on the stock. And by the way, the Nifty continues to remain below 24,800. 45 points higher on the index. Take a short break. On the other side, we put the spotlight on the crypto market. Manisha Gupta joins us on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back, and still almost 50 points higher on the index. Some movers then. Prime focus, of course, remains in a 10% circuit. TBO Tech, we just heard from the management a few minutes earlier. That also now 9% higher on that stock as well. Precision Camshafts has made a move higher now, 8% on that stock as well. Shalby, of course, we spoke about that just a few minutes earlier as well. Now, on the losing side, though, Apollo Micro is seeing some bit of profit booking, and considering the fact that the stock has risen almost 85 to 90% in the last 5 weeks. So, some profit booking coming in here, 6% lower on that stock. Paradeep Phosphates too, trading around 5% lower on there as well. Amber Enterprises made an announcement earlier this morning regarding the fundraise that its subsidiary has done, its electronics business. That stock is now at the lowest point of the day. 4% lower on that stock as well. A couple of order wins that had come in. Vikram Solar just announced an order win earlier in the day. That stock is now up 9%. It's a recent listing, of course. It continues to build on to those gains. Now 351 on Vikram Solar as well. So these are some of the broader market movers. Of course, we just spoke of MobiKwik as well. Now that stock is up 12% as we speak. GMDC continues to move higher, was up 25 to 30% last week and is up another 6% in today's trading session as well. Of course, there are some other names as well within the broader markets that are doing well for themselves. Nesco is one such name, 6.5% higher on that stock. And Adani Power has made a move towards the upside among the top gainers on the Nifty 500. 5.75% higher there on Adani Power as well. 644 now on the stock at the highest point of the day. And some of the others, of course, we spoke of Samvardhana Motherson. Keynes Technologies is up around 4% as well. So the entire auto and related space is, of course, doing well. Ashok Leyland is up 4.5%. Bharat Forge is doing well for itself. There's some specialty chemical names that are making a mark today. Aarti Industries is up 3% as well. As promised, shifting focus to the crypto space, and Manisha is here with more on that. Manisha, what do you have for us today?
Well, on Crypto Corner, we're going to be talking about on how various countries are looking at crypto as an asset class and the regulations therein. Well, let me remind you and start with US, because this is where we've seen lead coming in when it comes to regulation. Instead of being a case-to-case basis, there's a national structure on cryptos being devised here. We already have seen the Genius Act being signed into a law, and we do understand that there are a couple of them still being worked upon, like the Clarity and the CBDC Surveillance Act. So that is something that the US markets are looking at this point in time in sense of clarity there. Apart from that, we are also looking at ETFs, which are now being traded, and we are looking at record volumes coming in for ETFs as well. So when it comes to US, it is a big bang that we've seen come in sense of friendly regulations in sense of crypto as an asset class. Talk about Canada, and we are looking at regulations being worked quite strongly here as well. The crypto investment firms are classified as money service businesses, and they also are taxed accordingly. The digital asset are taxed like commodities, and here as well you have crypto ETFs which are traded quite strongly. Actually, some of the ETFs which are not launched in US are actually launched in Canada and trading well. Next on my list is the UK, where the UK also began regulating crypto as an asset class since 2020. A lot of their rules actually seem to be coming in a sense in 2026. Here as well, a broader regulatory framework is in development, and as I said, the implementation is expected by 2026. Switzerland should come in on your screens, and here as well, we're looking at regulatory approach quite strongly considered. It is structured quite strongly as well, and the crypto holdings are subject to income tax and wealth taxes. Take a look at El Salvador, and this is where the history was created in 2021. This was the first country which declared Bitcoin as a legal tender. So buying, holding, selling, purchasing goods and services is what El Salvador does. Apart from that, when you look at the taxes part of it, it is exempted for foreign investors on income earned from Bitcoin transactions. So clearly very friendly when it comes to El Salvador. Singapore, in the meanwhile, licenses crypto exchanges and custodial wallets providers under Payment Services Act enacted in 2019. European Union also has done leaps and bounds when it comes to regulatory in case of crypto, adopted the first unified crypto regulation, the markets and crypto assets, in 2023. For EU as well, the framework emphasizes investor protection, financial stability, and cross-border regulatory consistency. Japan, in the meanwhile, also seems to be taking a step ahead in 2025. It's preparing to launch the first yen-pegged stablecoin. It's working quite strongly on that, and this is expected to reshape and how Japan is approaching the global markets in sense of payment systems. China as well has had a love and hate relationship when it comes to crypto, but China is also exploring now a privately issued yuan stablecoin. It already has a digital yuan existing. Hong Kong, in the meanwhile, is introducing stablecoin regulation. It did that on 1st of August and is expected to bring more framework and more structured framework going forward when it comes to many of these cryptos there. And then take a look at Pakistan, and much of the developments have come in this year when it comes to crypto. Pakistan has established a crypto council, a new regulatory body for cryptocurrencies, and this council already has said that they will be acquiring a Bitcoin reserve there. And then you have Bhutan as well, where visitors now can use cryptocurrencies to buy, sell goods and services, and can pay nearly all aspects of their journey in Bhutan as an economy there. Bhutan also is one of the most crypto-accessible destinations in the world at this point in time. And the final country on my chart is India, where we still are awaiting a national structure, a draft policy, and a discussion paper as well. But in the meanwhile, you have cryptos, which are classified as a virtual digital asset. This is under Section 224A. Cryptos also are taxable at a flat rate of 30%, regardless of your period of holding. And then, of course, there's 1% TDS as well. Well, with that, let's go for a short break. When we come back, we'll talk more markets and news on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. You're still tuned into Trading Hour, and the big exclusive. Finance Minister spoke to Network 18's Rahul Joshi on the recent spike in bond yields. FM said bond yields becoming unsustainably high will have a bearing on both central and state government borrowings. Finance Minister also said RBI has started to diversify from US government securities. Listen in.
Nirmalaji, India holds about $227 billion of US Treasury securities. It also holds a lot of gold in its reserves. Should we diversify away from US Treasuries for reserves?
To some extent, I think the Reserve Bank of India has already started doing it. I wouldn't want to divulge more by saying how are they doing it. But I think Reserve Bank has taken a very considered decision, and they've also done by purchasing gold. So I think the bank is competent and they're taking a fine call on it.
So we've seen that since June this year, the yield on 10-year bonds have risen 30 basis points since June, to more than 6.5%. Are you concerned about rising borrowing costs?
Yes. I wouldn't say I'm concerned, but I'm observing it. It is not affordable. And also at a time when interest rates are otherwise low,
yes,
bond yields becoming unsustainably high has a big bearing on the government. Not just our union government, states are also up against odds in getting affordable,
Also your fiscal math?
My fiscal math is as of now absolutely
of course,
fine.
Yeah.
Exclusive conversation there with the finance minister. On to corporate conversations then. SIS has recently acquired AP Securitas Private Limited. Now let's get the management of SIS and we'll take this conversation forward based on three important points. The first one, of course, being the synergies that the management sees from this acquisition. Now, whether this AP Securities acquisition will be a margin accretive one, And will the company up their mid-teens growth guidance for FY26? Now, these are the three important talking points where we base our conversation on. Dheeraj Singh, who is the CEO at SIS, joins in now to take this conversation forward. Dheeraj, good morning. Thank you for joining in. If you tell us more about this acquisition, first up, that you have made of AP Securities, how does that help you as a company in terms of synergies? And is this margin accretive to you immediately as it takes effect? Tell us more on that.
So this is a landmark acquisition for us. It is the largest security deal in India and for us also. AP Securities is a 40-year-old company, currently run rating at about 110 crores per month, which adds to our SIS monthly run rate of about 1,200 crores. So combined now, we are run rating annualized basis of more than 15,000 crore, which had been our guidance. And hopefully this should be the largest incremental growth year ever.
Yes, I'm sorry, Mr. Singh, you said 15,000 crore rupees.
Yes, combined now, we should be crossing this year in more than 15,000 crore.
You made revenues of 3,500 crore rupees last year. That number that you said was for the revenues?
Last year, we made about 13,000 crore revenue.
Okay. All right, my bad. Yes, that's the quarterly number that I was talking about. I wanted to understand the margins overall for this acquisition. What would your margins look like once the consolidated picture comes in place?
So the deal is margin accretive, EPS accretive, and ROCE accretive. We have evaluated on that basis. Combined, we should expect a consolidation of about more than 50 crores EBITDA consolidation. And in terms of the EBITDA percentage margin, it should remain about the same. And in years following, that should increase further.
So what are the current margins for the acquired entity? If you can give us that particular number.
So the margins for this business is about, it should add about 50 crores or plus in terms of EBITDA. And we expect with the synergies that we have with the combined entity in terms of both the back-end side as well as on the client side, this will increase further in the years to come.
50 crores of EBITDA every month, Mr. Singh?
No, on a yearly basis.
On a yearly basis, okay. And what does this now do to your growth guidance for the year? You still maintain that mid-teens growth guidance that you had earlier projected?
Yes, we've been projecting 15% plus, and we are confident of that, probably a little higher for this year.
And since you say that this is margin accretive, do you believe that this 4.5% margins that you've been reporting over the last, say, 4 to 5 quarters, does that go into the high single digits, say, maybe if not this year, then maybe next year?
We are confident that we will achieve a 5.5-6% EBITDA margin for the group in a year's time. And this acquisition will work towards that also.
Mr. Singh, I wanted to understand, you said it will help you gain market share. What is the current market share that you have already? What kind of growth are you seeing, say, in 2 to 3 years for your own company?
So India market share for our security business is about 7 to 8% for the organized market. Typically, a market leader would have about 15 to 20% market share. So there's still a lot of room to play. And this particular acquisition will help us because AP Securities is the number 6 in the industry for security industry. We are clearly the number 1. Now with the combined entity, our India business itself will be twice the size of our nearest competitor in security. Our India business will also become more than 10,000 crore, just the India business. I'm not talking about the international, and will contribute more than 75% EBITDA for the group. So it consolidates with our strategy. The AP Securities is also very strong on the northern side of the market, which will help us to consolidate and achieve the density benefits for the northern market. They bring a lot of experience and skills in the e-surveillance market, which will combine with our alarms e-surveillance business. So there are many other synergies that we will work upon as the next 2-3 years.
Mr. Singh, two-part question here. You, in the press release, says it's an interim consideration of 73.5 crore rupees. Will there be more consideration which you will be paying? Plus, is it a profit-making company? Because for a revenues of around 1,100 crore rupees, 75 crore rupees seems like a good deal that you have maintained this time.
Yes, our deal criteria are very rigorous, and we believe we have a good win-win deal. We work on tranche basis, so it's a ratchet structure. We have acquired a majority as of now, and there'll be an earn-out over the next 3 years. And we hope the business does much better for the promoters to get a much better payout later.
So what are the contours of this deal? 73.5 crore rupees now. Will you have to pay more once there are certain targets received? Also, is this entity that you have acquired profit making already?
Yes, it is a profit-making entity, and that is why it is both EBITDA accretive and EPS accretive, as well as ROCE accretive. But we have taken only a 51% stake as of now. The balance will be paid out in the final tranche after 3 years' time, and that will be based on the EBITDA that they achieve at that particular point of time. So it's a ratchet structure that they will be paid upon.
How much will you be paying as the balance, Mr. Singh, in 3 years' time?
Because it's a ratchet structure, there's no guarantee for the payment that they'll get in 3 years' time. It's linked by a formula to the EBITDA growth that they achieve. But it can be anywhere in the range of 200, 300 crores to give you an estimate.
So you are saying from 50 crores currently that they have on an annual EBITDA levels, if they achieve 200 to 300 crore rupees, is when you'll have to pay more money to the company for the acquisition that you've made. Am I understanding that correct?
No, if they are growing at about 20% CAGR on the EBITDA, so if their 50 crores EBITDA grows to about 80 crores EBITDA, then we'll be paying them a multiple based on the EBITDA at that point of time, adjusted for, of course, the net debt at that point of time.
Okay, how much more will you have to pay, Mr. Singh, if that number is achieved?
Yes, if the numbers are achieved, then it can be anywhere between 200 to 300 crores in terms of equity payout.
And how much cash that you have in your books?
The current payout is all through the internal accruals and the NCDs that we've already raised. So our net debt equity EBITDA ratio is changing very minor from 0.7 to 0.9. And at that point of time, after 3 years, we will look at how to pay them out.
Okay, so there's not enough cash in the books to make the payment for the future for now.
Yeah, that's 3 years later. But as for the current tranche, we have enough cash in the books. And it'll be generated through internal accruals.
Right. So basically, as of now, for this tranche, you will not be raising any debt. But in case in future, if the need arises, your debt to equity goes up to 0.9 from 0.7 is what you mentioned, right?
Correct. Yes.
Right. So, and just one final question, Mr. Singh, what about your international business? Has that stabilized? Because the last time you spoke to us, you had mentioned that the government grants for the Singapore business were not received and that dented your international business. Has that come through? Part 1 and part 2 being the SIS Prosegur IPO approval that you had received from the regulator. When do we see that hitting the bourses?
Coming on the second part, the SIS Prosegur Cash, the IPO. We've got the approval, as I mentioned the last time, and we have a time frame window of about 12 months' time. So we expect to be listed hopefully before the April, May of next year.
All right, yeah, go ahead.
National business, yes. The margins are something that we are working upon. The revenues are strong and robust, one of the best revenue years, but the margins is where we are working upon.
Okay, all right. So we have a lot more questions. We're out of time today, Mr. Singh, but thank you so much for joining us and explaining the rationale of the investment or the acquisition that you've made. More importantly, they have to pay out more in case the acquired company achieves certain threshold as well in terms of EBITDA. For now, we'll move on and get in Nagraj Shetty from HDFC Securities for a quick technical check on the markets. Nagraj, good morning. Thank you so much for joining in. Can you quickly tell us the important levels to watch out for on the Nifty and individual names as well?
Hi, good afternoon. Market has been consolidating after a small uptrend from the lower levels. I think the overall trend remains positive. We have seen some good base building around 24,400 levels. From here onwards, market Nifty is likely to move towards the important resistance of around 25,000 to 25,100 levels in the next few sessions. And as far as stocks are concerned, I'm on a bullish on a railway stock, particularly IRFC. IRFC, we have seen some tremendous decline from the higher levels. Recently, it made an important bottom reversal around 118 and moved up from there on. Currently showing an attempt of bounce back and attempt of upside breakout of the cluster resistance around 125 levels. I think one should go long from here onwards, and immediate upside target would be around 132. One can place a stop loss at 120. Second one is from Tanla platforms. Chartically, it has been in a gradual up move recently, and we have seen some a longer consolidation movement. This stock has repeatedly tested the hurdle of around 665 odd levels and currently placed at that level. I'm expecting decisive upside breakout of 665 levels in the next few sessions, and one can place look to buy at this point of time. Immediate target would be around 700. One can place a stop loss at 640.
Nagaraj, thank you for sparing time joining us today with your views on the index and on specific stocks as well. Take a short break. On the other side, put the spotlight on the big story of the day, on the metal space in our special segment. Stay tuned, we'll be right back.
Welcome back. You're still tuned into Trading Hour, and this is our big story, metal index that's been surging in now. Nigel is here to tell us more. Nigel, tell us what's happening overall. Why are metal stocks in focus?
Well, I'll give you 5 big reasons, Sonal, and that's the same reason that I said last week as well. And from there on, we have seen a continued up move in terms of metal stocks. So sentiment globally seems to be changing. One is the street is bracing, or the globe is bracing for Fed rate cuts. Now, when Fed cuts rates, it normally stimulates the economies, and that's why, in fact, there is hope on that front. And now, it's a very, very high probability that in September we'll see a Fed rate cut. And Fed rate cuts are good for base metal prices. Point number one. Point number two. China's anti-involution drive, that's gaining momentum. What is that? They're restricting the supply of metals, steel, base metals in the markets because, otherwise they're self-destructing. So they're slowing down the pace of production, and it's very, very evident if you look at the year-to-date steel production as well as lower. And they're saying by the end of this year, there'll be further capacity cuts. So that's good news. However, keep an eye out on exports because exports continue to remain elevated. That is the steel exports that I'm talking about. So that's point number two. Point number three, China seems to be on the recovery mode because both their manufacturing PMI, their services PMI that came out last week, that was better than what the street was working with. Point number four, let's look inward. The DGTR, they have recommended protection for the steel sector for the next 3 years. It will be 11 to around 12%. So there is some protection. And point number five, suddenly there's bonhomie between India as well as China. So that as well is giving a bit of a sentiment boost. So these are the top 5 reasons that metals have been buzzing.
5 important reasons why the metals are doing well. Most of the stocks are also doing well, but there is one that isn't, and that is Vedanta. Why is that so, Nigel?
Well, Vedanta always does something different, right? You don't know what the promoter entity is going to do next, and that's the reason why it's not been getting the valuations. Now, the problem this time around is they're being a little bit ambitious according to what the street has, the way the street is looking at it, because source-based information that our colleague Ritu is picking up is that they could be in the forefront to grab Jaiprakash Associates assets for around 17,000 crores. Though you need to keep in mind this is not a done deal and it will be done in a staggered manner. So, it's not a done deal as of now. But if it's a deal going in that direction, then the street doesn't like it. And I'll tell you why. Nuvama has put out a few points. They consider this event as a negative for minority shareholders, point number one. They are unconvinced with the rationale. The assets could be good. There could be some kind of dilution or some kind of sale of non-core assets, in the coming months and years if it goes through. But they're not convinced with the rationale. Point number three is they're saying it's an unrelated business. The priority should be in deleveraging. Why are you doing this? Point number four, they're saying in the demerged entity, the Vedanta Limited is likely to pick up this particular asset, which will be a cumulative of 17,000 crores. And they're not sure about, how exactly they will fund it. They see some kind of challenges in terms of funding it in Vedanta Limited, in the demerged entity. And point number five, they say that the culmination of the transaction will restrict any kind of re-rating. Remember, metals are going to do well. Then Vedanta is the play that you get exposure across various metals. But Nuvama, because of that, they are not too impressed with this transaction if indeed it goes through.
Okay, all right. So that's about Vedanta. But, even Morgan Stanley has come out with a note on the steel makers. Nigel, what's the note suggesting?
Well, they've gone ahead. They've upgraded JSW Steel, Tata Steel, as well as SAIL. On JSPL, they maintain their equal weight and the target price is 1,150. Now, they have put out a few data points. They are turning constructive on the steel spreads expansion. So that's point number one. The other point that they're saying is they're expecting domestic steel prices to recover from year on because demand will improve. And normally post the monsoon, you see a couple of price hikes that come about. They're also pointing out the other point that we made, that China's anti-involution theme, that's gaining traction. And besides that, they're saying that global factors are turning positive. So because of all of this, they've gone ahead and they've raised their steel price estimates for the next couple of years by around 3%. And that's why they expect the Ferrous Pack steel stocks to outperform over the next few months. So that's the tale with regard to the big story of today. You have metals that are buzzing on a whole host of factors. Vedanta is not performing, and steel, Morgan Stanley seems to have upgraded all of those stocks. Back to you.
All right. Interesting take there. Thank you so much, Nigel, for explaining to us. Metal's a big mover today, and that explains the reason why. But we have to talk about the F&O space now. Sudarshan is joining us now, bringing us the latest trends. Sudarshan.
So while market remains higher, Nifty is up above 24,800, but it's yet to, we can't say that we are out of danger zone, and the culprits remain IT index, which is top losing index currently, and also to an extent Nifty Bank, because at one point was in the red, but it's back in the green, but remains around flat line. And now, especially talking about Nifty Bank, if you take a look at in the last 7 sessions, it has been flat, and just it has been seeing selling on every rise. So support remains around 53,560. That was the last week low, and resistance is around 20-day moving average. That is the 54,840. What does volatility index indicate? So it's up 1%, so not indicating much. It's a similar thing about put-call ratio. It's at 1 versus 0.89. But now take a look at the Nifty. Put options 24,800. Premium at 49 versus Fridays of 100. 24,700. Premium at 21 versus 56. Now call options 24,850. Premium has been flat. 24,900. Premium has seen a just minor increase. So it tells you one thing. Whether, even if market is higher, it's expected to be in a range that we have been seeing for the last few sessions. So support for Nifty remains around 20-day moving average of 24,707, and resistance is at 50-day moving average, that is 24,960. I've taken 3 stocks. First one is Bharat Forge, that is seeing short covering, and 2 stocks that have been seeing fresh longs, and those are Mahindra & Mahindra and Kaynes Technologies.
Interesting. Sudarshan, thank you for that update. Of course, the texture is what has been over the last week or so, being a sell on every rally, be it on the Nifty or be it on the Nifty Bank as well. And the Nifty Bank continues to remain that pain point for the markets along with IT. Take a short break. On the other side, we discuss market fundamentals with Nikunj Doshi from Bay Capital, who joins us on the other side. Stay tuned. Welcome back. Continuing our conversation on the markets then with Nikunj Doshi of Bay Capital. Nikunj, very good morning. Thank you for sparing time and joining us today. You know, you've mentioned in your note about some of the holdings that you have in your portfolios. A name that intrigued me was Car Trade Technologies. Now, among it was at one point for a better part of last year, was one of the worst performing new age IPOs. Just 1600 rupee IPO price falling to almost 300. Now it's well above 2500. What has triggered this turnaround, part one, and where do you find more value now going forward, considering the fact that it has a lot of subsidiaries as well, so value unlocking prospects and so on and so forth?
So, frankly speaking, first of all, thank you for having me on CNBC. Card trade means I first like to brief as a team what we have been doing for last several years is that we have focused on several pre-IPO transactions, and card trade was one of the transactions that we had looked pre-IPO also. And when it got priced, we believed that pricing was slightly on the aggressive side, so we didn't participate. And after the IPO also, we waited for it to correct. And when we bought that time, price was around 500 rupees and market cap was around 2200 rupees. They had 1100 odd crores of cash on the books. We obviously looked at it on the fundamental side and then took a call on the company, because auto industry as a class as an industry was passing through tough times, and most of the dealers as well as OEMs were focusing more on the getting, I would say, eyeballs or perhaps the customers to buy in for their brands. Car trade as a classified platform, they had a much better business model wherein if you surf, you do not have to give your number, but when you are interested in buying of a vehicle, then you have to give your number. So that gives a concrete kind of lead to the dealers as well as I would say OEMs also come to know about this. So it's a very, I would say, kind of very good business model they have. Secondly, the trigger came in when they bought OLX. So I think they got it very at attractive valuations. And OLX also had two kinds of business, B2B and B2C. B2B was making losses, and there it was a working capital intensive as well. So they shut down, after acquiring OLX, they shut down the B2B business and they focus only on B2C. And that has been like doing very well for them. Even first 2 months number they have reported, and again there also they have reported good growth in OLX India. So I think as a business, it was doing well. But valuation was not right at the time of the IPO. Now the fundamentals have changed, and what we are seeing is the price, which is again reflecting the good fundamentals of the company.
Already up 80% this year. The other one that you have is Ixigo, which is Lurch Avenues Technology. The stock has been buzzing since its Q1 numbers. Do you think that uptick will continue for this particular name? Do you think it's already priced in the growth that you're talking about?
See, again, digital business is one thing is, again, as a firm, as I said, Ixigo was a pre-IPO investment for our firm. And digital business is like we have been tracking, and digital business is the main trigger, I would say, is that when a J curve kicks in, that's the time when you see profitability shooting through the roof. And most of these businesses initially have to spend on client acquisition. So when you look at the initial numbers, you don't see that profitability on their books. But once they pass that level, and when the J curve triggers, that's the time when they report huge profits. So for Ixigo, again, A, market means addressable market is huge. B, their focus is on the next billion consumers. So the people, they started with train and then bus. So clients or customers who are focused, who are using their service for train or bus, when they aspire to move on to air, again, it's a natural call for them to get onto the Ixigo platform. So I think they have a long runway to go, and addressable market is huge. So I think overall, if you take another 5 years view, then obviously there's a huge upside still available. But again, if you look at the shorter term, perhaps it is pricing the current fundamentals.
Another stock that's up 80% this year. Since we were on the subject of new age IPOs, Nikunj, is also delivery in your holdings. You know, all of these new age IPOs, they've made their lows, they've rebounded from their lows. Delivery, unfortunately, is not one of those names. Still continues to hover below its IPO price. In fact, its post-listing high also happens to be its IPO price, which is 487. Do you see over a longer period of time that the street will eventually begin to value the stock that you believe that it deserves?
Yes, so again, see, in delivery also, if you look at the business model, I think they saw some setback when Miso decided to go inward for their courier service, logistics business. But again, if you look at the current acquisition, what they've done, the industry is consolidating because loss-making new age companies, if they don't get fund, then it becomes difficult for them to survive. So we see a possibility of consolidation in the logistics space and e-com parcel space. And if you look at the cost structure of delivery, I don't think anyone else can meet that kind of a cost structure for the e-com parcels or for the other services that they are offering. So I think they are now at the point where you will start seeing the fundamentals picking up and numbers reflecting that. So I think another 2 years I would give to delivery and we'll see a good kind of a J-curve coming into their earnings as well.
All right, so you're bullish on some of these new age stocks or digital names, so to say. It was a pleasure speaking with you. You have a lot more stocks to talk about, but that for some other time. Thank you so much for joining in today with your thoughts and the outlook on these names. But auto stocks, they continue to be in the spotlight. The companies have slashed prices following the GST rate cut. Let's go across to Sudarshan, standing by the big wall to put the price cuts into perspective. Sudarshan.
So August 15, Independence Day, and PM Modi's speech from the rampart of Red Fort announced a big GST reform after 8 years of its implementation and called it double Diwali bonus. And that triggered a big move in auto names. Since then, that is August 15, auto index is up 11% and most of the leading names from TVS, Hero, Maruti to M&M have seen a move somewhere in the range of 11 to 17%. Fast forward to September 3. GST Council held a meeting considering proposals related to GST reforms. And its unanimous decision, Council has approved all the proposals as expected. And that led to what came as a big surprise was that Council decided to implement those GST reforms from September 2022. Now, that has helped most companies basically saved most companies from what it could have been a washout festive season. And in resultant, here comes a big price cut for everything we use to commute, no matter it's an entry vehicle or the luxury car. The prices have gone for a major revision from as low as of rupees 30,000 to as high as almost rupees 9 lakh. Let's start with Mahindra & Mahindra. It has announced price cut up to rupees 1.56 lakh and has already come into effect on September 6. The Bolero price drops from rupees 10.52 lakh to rupees 9.25 lakh, a reduction of almost rupees 1.30 lakh. The Scorpio is now rupees 1.45 lakh cheaper, and the Thar Roxx sees a cut of almost rupees 1.33 lakh. And its flagship XUV 700 price is now down by almost rupees 1.43 lakh. Next in the list is Tata Motors. It has taken a price cut for both its passenger vehicles and commercial vehicles, and that would be effective September 22. In passenger vehicles, prices have been cut by up to almost rupees 1.55 lakh, and the Nexon is cheaper by rupees 1.55 lakh, Safari by rupees 1.45 lakh, the Punch by rupees 85,000, and the entry vehicle, that is Tigor, by rupees 80,000. In commercial vehicles, reductions are even steeper. Heavy trucks are cheaper by up to rupees 4.65 lakh, buses and vans by as much as rupees 4.35 lakh, and small CVs and pickups prices have been reduced by up to rupees 1.10 lakh. And if you are planning to buy Creta, Venue or i20, take a look at the price cut announced by Hyundai. Prices have dropped by as much as rupees 2.40 lakh. The i20 price is now rupees 98,000 cheaper. The Venue price has dropped by rupees 1.23 lakh. The Creta sees a reduction of almost rupees 72,000, Al-Khazar by rupees 75,000 and Tucson by as much as rupees 2.40 lakh. Even luxury car makers have joined all these companies and have aligned their prices with the new GST regime. Audi has slashed prices by up to rupees 7.80 lakh. BMW has announced reductions of as much as rupees 8.90 lakh, and Mercedes-Benz has cut prices across its portfolio ranging from rupees 2.60 lakh to as much as 11 lakh rupees. So what next? The big question is, will the industry see a revival in demand? That is, we'll have to wait and watch.
We'll keep on waiting and watching for that if there is a revival in demand, of course, especially considering the festive season is on the corner. So, Darshan, thank you for that detailed analysis of what gets cheaper when it comes to cars. Take a short break. On the other side, we put the spotlight on SPEL Semiconductors in our special segment, Under the Lens. Welcome back onto our special segment, Under the Lens. Sonal has hopped across to the wall and she is putting the lens on a stock called SPEL Semiconductors, Sonal.
Yes, SPEL Semiconductor, the stock has been on a tear of the bosses. The stock has rallied 100% in just 1 month and it soared 72% in the last 5 trading sessions alone. But you know, does the surge match the fundamentals? Let's take a closer look now. What's happening here? SPEL is engaged in semiconductor assembly and testing. Its business covers wafer sorting, assembly, testing and drop services for integrated circuit chips. But financials tell a sobering story. In Q1 FY26, revenue stood at 1.93 crore. That's it, a sharp fall compared to 8 crores that we saw in FY25 and 12 crores in FY24. Operating performance remains under pressure with an EBITDA loss of 0.5 crores in Q1 against a loss of 6 crores last year. And at the bottom line, losses continue to widen. Just look at that screen. 5.5 crores in Q1 compared to 21 crores in FY25 and 17 crores in FY24. Key ratios raise a red flag as well. Debt to equity surged to 2.4, which indicated a sharp increase in leverage. Debt service coverage ratio remains negative at 3.81, which means earnings are inadequate to cover obligations. Auditors of the company, they have filed a qualified opinion, which basically highlights uncertainty around the company's going concern status, along with inadequate inventory control as well. The company has identified land at Marai Malai Nagar, valued at 30.8 crore for sale, and has already received advances of around 47 crore rupees against sale of capital assets. The company has capital work in progress of around 11.7 lakh for machinery and is eyeing government incentives for assembly, test, mark and packaging units, where the centre promises a 50% subsidy on investments above 50 crores, with Tamil Nadu adding another 25% subsidy. Funding discussions with banks and institutions are underway to leverage these incentives. So this is something which the company plans to do. Now let's talk about shareholding. Promoters hold 59.7% stake. Singapore-based Netronics Semiconductor Technology owns nearly 55% stake. Netronics acquired SPEL in 2014, but not many financial details are available about this company in public domain. The company, however, has not received any government approval under the recent Semicon India program, when it actually registered under the scheme, but other big players have received the approval. The company thus has a big promise in its name, but the current financials and status of its operations do not offer the kind of confidence to justify its market capitalization of over 1,000 crore rupees. But can it defy skeptics and spring a surprise? Only time will tell.
As they say in Hindi, the fark between Kathni and Karni. We'll keep an eye out on SPEL Semiconductor. So interesting there. Thank you for that. Call time on this edition of Trading Hour. We leave you with the Nifty, still 70 points higher, above the 24,800 mark. From Sonal and me, thank you for watching. Halftime report on the other side.
Stocks perk up after Trump and Modi Twitter exchange emphasizes strategic US-India ties. Hope of a tariff resolution soon provides a lift. Auto and metals are big gainers while IT and consumer durables drag.
Mahindra & Mahindra dropped prices of its ICE SUVs with immediate effect. Tata Motors and Hyundai too cut prices across models starting September 22nd. Uno Minda tells CNBC-TV18 they are all geared up to meet a likely pickup in demand.
Vedanta has come out top in the open challenge bid for JP Associates with an offer of rupees 17,000 crores, but the stock sulks as the analysts see it as a high-priced, unrelated diversification.
The finance minister tells Network 18 that the government is looking at every aspect of reform following the big GST rationalization that's seen as boosting consumption and one that drives capex. A package for tariff hit exporters is also on the anvil, even as the government is set to meet its budget targets, including divestment of IDBI Bank by the end of this fiscal.
Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Manglam Malu as well as Vinny Motiwala. Well, it is turning out to be a session where we are seeing some amount of, positivity, you would have to say, on our markets. So we have the Nifty, which is up around 0.3%, and we're gaining steam, you'd have to say, along with the Bank Nifty as well, which is up around 0.3%. But what really stands out is the broader markets. It outperformed last week, it was steady last week, and let's see whether it manages to build on these gains formidably or not. The Midcap Index up around 0.8%, along with a positive advanced decline ratio on our hands. Needless to say, it is two different directions that the Nifty Auto Index as well as the Nifty IT Index are moving, similar to what we saw last week, the Nifty Auto Index gaining, while the Nifty IT Index is currently in the red, down around 0.5%. Hi, guys.
Hi, Ekta. Good afternoon, Vinny. The most important part for me in the second half of trade today so far has been that the initial dip that happened on the Nifty, the dip was bought into, and that rally was led by Nifty Bank. Remember, the Nifty Bank has been underperforming for a while, and as we speak right now, the Nifty Bank's found some fresh legs of a rally. If that sustains, then maybe we see a further up move on the Nifty. And any further up move on the Nifty, if that sustains, then we'll have fuel in terms of the FII short positions that are at 93% who would run for cover. Tomorrow is also the weekly options expiry for the Nifty. So the Nifty being led in the second half of trade so far, post 11, by the Nifty Bank would be the biggest positive that I'm watching out for. And even as the market's moving higher, the India VIX is contained below that 11 mark. So let's see how that pans out. The only fly in the ointment, what happens to the IT index? Like Ekta pointed out, it's been underperforming for a while. So whether that reduces its underperformance or not is something we'll be watching out for, along with any resumptive buying in the FMCG space, because it's been seeing a lot of profit taking ever since the GST announcements have come in. So will FMCG stocks once again resume their rally, and whether IT stocks resume their rally or not would be the big triggers.
Absolutely. Good afternoon, guys. So yes, you all have highlighted the main market triggers that have come in. Some of the names that we should be keeping an eye out on today. Prime Focus, that's continuing to be in focus. Vikram Solar, Acme Solar, Suntech Realty. Some of these real estate names today are buzzing in trade as well. But let's move on to our first segment for the day. That's Movers and Shakers segment. We have our team standing by. And first up, Sonal, Suntech Realty as well as Max Estate. Both these are in focus today.
Oh, yes, they are. Let me start with Suntech Realty. There is a warrant issue that has happened, and the company will be issuing 1.17 crore warrants convertible into equity shares, which will be a total amount of 500 crore rupees. It will be allotted to the promoters, which will be subscribing to 66.5% of the total subscription. And the other notable names include NT Asia and the other names on your screen as well. There's Utpal Sheth as well, who will be subscribing to this particular name. That is the reason why stock is in focus today. Max Estates, because the company has secured developmental rights on a 7.24-acre land parcel, and the group housing development potential is 1.3 million square feet. This is in Gurugram. The company says gross developmental potential is around 3,000 crore rupees. The outflow is associated around 534 crore rupees, but this adds to their project pipeline. They had spoken about development potential of 17,000 crore plus in this financial year as well. So this adds to that, and that's what the street is excited about.
Okay, all right, Sonal. Thanks very much for that. So a couple of those real estate counters in focus. But Vamakshi is here to tell us about why she's looking at Prime Focus. Vamakshi, go ahead.
Well, Ekta, you know, this stock has done extremely well over the last two sessions. It's up, in fact, 21%. And today as well, it's locked in that upper circuit of almost 10%. And this is for the second consecutive day. Now, keep in mind that Prime Focus is largely an integrated media and entertainment services provider. Now, they provide post-production services, which includes digital, intermediate, visual effects, 2D to 3D conversion, and all of these other creative services to the media and entertainment industry. Now, in FY25, the company had a revenue of around 3,600 crore, EBITDA margin of around 20.5%, and a net loss of 377 crores. Today, the stock is in focus on the back of a block deal. Approximately 1.2 crore shares changed hands today, and this is approximately 4% of equity. And the sellers and the buyers are not known immediately, so we'll be waiting by till the evening to get those details. But in fact, you know, on Friday as well, there was a block deal. We saw almost 3.3% equity change hands, and you know, largely the selling came from Marina as well as Augusta Investments, who sold around 1.5% and 1.75% stake in the company respectively. But more importantly, it's important to look at who has actually bought into the share. So a couple of renowned investors. Take a look at Singularity Large Value Funds, which is owned by Madhusudan Kela as well as his son Yash Kela. They picked up a nearly 2% stake in the company. The other notable name that has appeared is Ramesh Damani, who has picked up a 0.26% stake. Utpal Setu has picked up a 0.56% stake in the company. Now, apart from this, FE Securities and Samyak Enterprises were also some notable names. Now, let's take a look at the shareholding pattern as well. The promoters own somewhere around 68% or so in the company. There are no mutual funds that hold this name, but there are some notable holders like Augusta Investments, which held an almost 8.86% stake in the company back in June. Marina as well, 7.5% stake here, and Augusta Investments Zero, which holds a nearly 2% stake.
All right, Vamakshi, thanks a lot for that. Let's talk about Vikram Solar then. That's the other one which is buzzing around in today's trading session, up nearly 10%. Vivek joins in to tell us what the update here is. Vivek.
Well, that's right. So it's an order win here. Remember, Vikram Solar, it's a very recent listing, listed on the exchanges towards the end of August. Close to 4.5 gigawatt of solar module capacity. They're looking to ramp it up to 7.5 gigawatt by the end of FY27. So what's the development today? The company today has announced to the exchanges that they've received close to 336 megawatt module supply order from L&T. This is for the Khavda solar project. Taking a rough estimate of close to 1.5 crore per megawatt, this particular order win is reasonably substantial at close to 450 to 500 crores. Now, what is it that the company is saying? The modules will be deployed in Gujarat. The timelines for the delivery of this order is from November 2025 to March 2026. So the entire revenue ideally should be booked in FY26 itself. Remember, the end of Q1, the company had an order book at 10.3 gigawatts. So this is in addition to that particular development. Vikram Solar recent listing doing very well in the session today.
Thank you so much for that, Vivek. But let's go across to Nigel now. Vedanta, that's in focus as well, and that's sulking into it, down almost 1.5%. Nigel, what's happening here and why are we seeing the fall today?
Well, sources are indicating to CNBC-TV18, to my colleague Ritu actually, that Vedanta is likely to emerge one of the top bidders for JP Associates assets, and the total outflow will be close to around 17,000 crores. But you need to know the 17,000 crores will be paid over a staggered period, so it won't be all at one go. And also, this is not a done deal. So we'll have to wait by to see, what are the other suitors saying and how things progress on this front. But for the time being, they appear to be in the reckoning for JP Associates assets. I'll tell you what the street will not like. The street will not like them being overambitious. And it's actually, they're diversifying when the need doesn't really arise because the metal cycle is picking up. And this is one of the only stocks that's trading from the metal pack in the red. Nuvama has come out with the note, though. They consider this went negative for the minority shareholders. They also go ahead to say that they are unconvinced by the rationale that they're given for the assets. Maybe, in fact, the assets have longer-term value, but why to get into that? That's the point that they're making. They're also saying that the company is getting into an unrelated business. Their focus actually should be on deleveraging. So they don't see the sense in them doing this. And in the demerged entity, this entity, if it comes into their books, it will be housed under Vedanta Limited. And they are saying that funding of this 17,000 crores odd could be a little bit challenging. Finally, they're saying because of this proposed acquisition, it could likely restrict any kind of re-rating of the stock. And I'll tell you what, with the stock trading at less than 5 times EV upon EBITDA, if you want to play metals, you have a good combined entity out here of Vedanta. You also have the demerger in the works if you don't like the combined entity. That's what could unlock value. So this doesn't seem to be the most favorable outcome for shareholders, though the company, as we've seen in the past, they have their own ambitions. The street, though, doesn't like it.
Okay, all right. Yes, clearly the street giving it a thumbs down today. That's Vedanta down around 1.6%. Nigel, thanks very much for that. But it's good to see at least the proportion of stocks in our M&S list is in the green, and a lot of them, 2 of them, are up around 10% today. We'll take a short break, but we'll get you more on the markets once we're back. Also focus on the rise in MTF borrowings. All that on the other side. Stay tuned.
Now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut.
Right.
The rates are coming down. So the citizen now has a choice.
Could we make the Chinese markets more accessible to Indian, Indian companies?
Just a lot of work to be done in that area. There's no hiding it. We need to have trade conversations, market access conversations, non-tariff barrier conversations with the Chinese.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmalaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple.
Welcome back to Halftime Report on CNBC-TV18. Markets as of now managing to hold on to 24,800, almost a 95-point uptick that we're seeing for the Nifty. In the last 15 minutes, Ola Electric, Tube Investment. Keep an eye out on these 2 names. They've seen a bit of a run-up coming in just the last 15 minutes. So that is something that we'll be keeping an eye out on. But which are the other stocks that are buzzing in trade today? Vivek is here to give us that list. Vivek.
Well, thank you so much for that. Another session where we've seen very choppy moves. But despite that, more gainers than laggards in today's trading session. The first set of stocks doing very well is the auto pack. Now, within the auto pack, the stock we are focusing on today is actually Hero Motor. The street clearly likes the announcement of a new CEO from next year onwards. And on the back of that, the stock higher by 2.5% today. The entire metal pack, especially the ferrous names, doing very well in the session today. A Morgan Stanley upgrade note coming in across the entire pack, aiding the up move as well. So SAIL, Tata Steel, JSW, Nalco, all of these stocks among the top gainers today. Along with that, after a period of prolonged underperformance, we're actually seeing quite a bit of an up move or a recovery as far as the auto ancillary names are concerned. Samvardhana Motherson, remember the company held an analyst meet over the weekend. Stock higher by 4%, Bharat Forge higher by almost 6%, and Sona Comstar doing, along with these names, doing very well. Prime Focus, something you alluded to earlier in the show in terms of very large noted investors checking in. The stock perched at the upper circuit today. And Ellen Berry, now this particular stock, not one name that we discuss too often, Motilal Oswal has gone ahead and initiated coverage on the name. This particular stock higher by 3%. On the other hand, not too many laggards, but a few stocks does go ahead and hit the eye. The entire IT pack under a bit of pressure today. Persistent Systems down over 1%. Vedanta, Street clearly doesn't like the fact that the company is going ahead and, aggressively bidding for assets outside of its own competency. So Vedanta under a bit of pressure today. And lastly, Asian Energy Services, a small cap name. This particular stock has gone ahead and merged one of the promoter entity companies into itself. The street doesn't like that. Bit of profit booking down 9% in the session today for Asian Energy Services.
Okay, all right, Vivek. Thanks very much for that. So a lot of buzzing stocks in today's trading session. But let's now focus on one particular topic, which is a bit worrisome at this point in time. The leverage bets by Indian investors are nearly 1 lakh crore. To put it into perspective, it's a 13x jump in just the past 5 years. So from around 2020 to 2025, there's a rise of around 13 times. Hormuz has been doing the number crunching. He's here with more data on this. Hormuz, over to you.
Some interesting insights discovered by our colleagues Ruchit and Yusuf about these leveraged bets from Indian investors that have seen a 13x jump, as you mentioned, over the last 5 years. From the end of 2020, which is the number stood around 7,500 crore rupees, that as of last Friday's close is now standing at around 95,000 crore rupees as we speak. And you could take the number as well in terms of the number of shares that have been on the borrowing list as well. That too has seen a 10x jump from 2020's end, which was close to around 50 crore to almost 480 crore shares now that feature on the list of the leveraged stocks. Now, what is this marginal trading facility? Now, that is, of course, there's a service offered by stockbrokers to the traders or the investors, which allows these traders or investors to buy more stock in excess of the capital that they have. Now, for example, if they are buying shares worth around 1,000 rupees, now they can avail this facility where they have to make an upfront margin payment of around 200. Then the broker can furnish the remaining 800 rupees. But where does the risk arise? The risk arises from the fact that when the stock price falls, now the brokers have the authority to square off the positions in the absence of additional collateral that needs to be furnished by either that trader or the investor. Now, this forced selling therefore can intensify the selling in another way. When the market is lower, that can intensify the selling pressure. Now, which stocks feature in this list? Mostly the blue chip names and some of the high momentum PSU names as well. Look at the list here is Reliance Industries, TCS, Tata Motors, names like Geo Financial. Among the PSUs, we have names like Masgaon Dock, Bharat Electronics, HAL is top of the pile in this list. And there's some high momentum names, high retail holding names like Suzlon Energy, Yes Bank, REC, all of them feature in this list. But is this a market risk event? And now we saw both Ruchit and Yusuf spoke to HDFC Securities' Ashish Rathi. He mentioned that the MTF does not pose a systemic risk in the current market because the product has matured over a period of time, and along with margins mandated by the regulators, it does not pose a risk as of now. And even during the COVID period, this MTF facility was only helpful in boosting volumes in the cash market instead of posing a risk for the market. Now, of course, SEBI in its FY25 annual report also mentions that there is a comprehensive review of the current margin system that is underway, and what is also underway is the evaluation of the MTF norms and the eligible scripts that can be a part of it. Of course, not a major risk as of now, but the leverage bets are definitely on the higher side, a 13x jump in the last 5 years.
All right, we take that point, a 13x jump in the last 5 years. Obviously, in the last 5 years, the volumes in the market itself have increased by a lot as well. So interesting data point out there, narrated by Hormuz, obviously found out by our colleagues Ruchit as well as Yusuf. We'll take a short break, but not without spotting some stocks. Look at AB Fashion and Retail. Ever since the stock has come out of the F&O trading and become a cash stock, look at the up moves that we've seen. In this month itself, it's up nearly 17%. Remember, the last few days of it going into expiry, when it was its last series of being in the F&O, the stock had seen a bit of a decline. In fact, it was a lot of long positions that were seeing unwinding, and now they are seeing fresh bids in the cash market space. And alongside that, obviously, the benefit from the GST helps them as well. Along with that, we have an up move that we are seeing on Brainbees as well. The erstwhile, better known as the company that runs the First Cry business. And we have Britannia, which has moved higher as well. We had Varun Berry join us on Friday, say that this will improve their volumes going forward, the GST cuts that is. Before we slip into a short break, also pull up Ola Electric. That stock saw a big gash on Friday's trading session after a big up move that we saw, one of the accidents of the day on Friday. But that dip has been bought into the stock higher by nearly 6.5%. On the other side, we have Aditya Agarwala joining in with some trading strategies.
Welcome back. Well, for the markets, it's steady for the broader markets. So we have a couple of stocks. Just keep your eye out on even something like an Ashok Leyland. It is at the best levels that it's seen in 1 year. So Ashok Leyland should come up for you. And Bosch is also at the best levels that it's seen in the past year. So both those stocks are doing well in today's trading session. Ashok Leyland up around 5% Bosch showing a gain of around almost 2% at this point. But let's go across to Mangalam now. He's going to tell us what he's tracking in the F&O space. Mangalam, over to you.
Well, it's a better looking screen this afternoon than what it was in the morning or late morning as well. And that the reason for that is the markets have moved higher. The initial dip has been bought into, and that dip has actually been led by the banking stocks, which had actually earlier been underperforming. So the Nifty 1/3% higher, the Nifty Bank 1/3% higher. The broader markets, they're making your portfolios feel a lot better in today's trading session. All of this while the volatility is contained. So the India VIX is currently sub 11, and that's a positive. And the advanced decline ratio as well tells you that, the green line is firmly ahead of the red line. And we have that gap which has been maintained over the last hour or two. And that's a positive because, the gap being maintained tells you that the market is steady as she goes. Important Nifty levels to watch out for. We took support at near 20-day moving average today, and we haven't breached that on the downside. And having said that, we've also gone ahead and gone past the 100-day moving average on the Nifty. All of this sets us up for the 50-day moving average, which is closer to the 25,000 mark. And that's something we'll be watching out for. The biggest driver for that would be the Nifty Bank, which also has crossed past important levels. And now the next resistance level for the Nifty Bank is at 54,840, which is the 20-day moving average. Put writing has come back. So ahead of the expiry tomorrow, we have put call ratio which has moved from 0.9 to 1, implying that there have been some put writers who are active in today's trading session. So the 24,800 put, that is the one that should come up for you as the Nifty holds above the 2400 mark. 24,800 put has a premium of 40 rupees. Open interest of 2 crore shares, selling you around 24,750, 24,760 is strong support. And, were that to even break, we have support further lower as well at 24,700 put. Those put writers are also fairly active in today's trading session, telling you closer to 24,675 could be the next leg of support coming in. On the way up, however, 24,850 call writers are still fairly active, and as are the 24,900 call writers. 24,850 call has a premium of 56 rupees and 24,900 call has a premium of 36 rupees. What does that tell you? That levels around 24,900 to 24,950, which is closer to the 50-day moving average that I spoke about, might see some supply. But if the market sustains above those levels, there are enough shorts in the system to propel this rally further beyond that 25,000 mark as well. We spoke about stocks. A lot of them belong to the auto space, and that's where the action is literally revving up. A lot of shorts caught on the wrong side in Bharat Forge, so they're covering their positions. That stock is up around 5.5%. Samvardhana Motherson also doing extremely well. M&M has been hitting fresh record highs ever since the GST announcement has come by. Here too, a lot of long positions are being added. But just watching out for Amber Ent, that's the one stock which is seeing a lot of short positions being added. Over the weekend, the announcement of them monetizing stake in their 90% subsidiary did come by, and the stock's not taken that well, down about 4%, with a lot of shorts piling up on that counter.
Okay, Mangalam, thank you so much for that. Keeping an eye out on those, auto names and Amber Enterprises as well, specifically, and how they are moving and how they will move in the second half of the trading session. But let's also bring on board Aditya Agarwala from Invest4Edu, joining us on the show to give us a check on the technical front. Aditya, good afternoon. Thank you so much for joining in. Your thoughts in terms of the levels that we should keep an eye out on now in terms of markets, Nifty, Bank Nifty, as well as which are your individual stocks that you're tracking?
Good afternoon, Vinny. Thanks for having the show. Clearly, we're looking at 24,850 to 25,000, 24,900 on the upside as far as the immediate hurdles on the Nifty is concerned. And once we cross that, 25,000 happens to be the major resistance as of now. A lot of open interest is also built up at that level. So clearly 25,000 for the moment is a major hurdle which the market participants, especially the bulls, need to take out for a rally, sustained rally to levels of 25,200, 25,400. But the setup does tell me that in the coming trading sessions, maybe today or within this week, you will see a follow-through rally beyond 25,000, and you should see levels of 25,200. So the undertone of the market doesn't look all that weak to me as of now. On the downside, 24,700, 24,600 continues to act as a good support area. I'll just wait it out for markets to take out 24,900 decisively and then take a fresh long position on the index itself for a target 25,000, 25,200 just I spoke of. Bank Nifty is something which Mangalam also spoke of, has been acting as the major drag, and that needs to take out levels of 54,400 on the upside. Once that is taken out, then you will see a sustained rally in the banks, and that will lead to this rally in the Nifty as well. So my sense is Bank Nifty too could see a spike to levels of 55,000 on the upside, led by both the PSU and the private sector banks. So overall, I feel both the Nifty and the Bank Nifty will have a decent rally this week, led by Bank Nifty, of course, to 55,000 and Nifty maybe 54,200 on the upside. Talking of stock specific, I've got a couple of buy recommendations, clearly because of the undertone is still bullish. Aditya Birla Capital, AB Capital is something which is looking quite interesting, Vinny, and I think there is more room on the upside even from current levels. So I would recommend a fresh long addition here for a target of 306 on the upside with a stop loss on the downside, close to about 285. So with a stop loss at 285 on the downside, a fresh long addition for a target of 306. And Motherson Sumi is something which is looking quite interesting. Samvardhana Motherson, that is for a target of 110 on the upside with a stop loss at 95 on the downside. This is also one stock that I think one should clearly look at from a trading perspective.
Okay, all right, Aditya, thanks very much for joining in and giving us all of those stocks in focus in today's trading session. On the technicals, we need to take a short break, but up next we're going to be discussing commodities. Manisha Gupta will be joining in. She has with her Avinash Gupta, the Vice Chair of GJC. Stay tuned.
Your first reactions on this GST rationalization?
I see this as the most transformative step the nation has seen possibly in the last 50, 60 years.
What was the driving motivation, behind this bill?
Every item which comes under the GST, goods or services, had to be looked at. So even as I'm grouping for families, their day-to-day items, this thought of what the classification is causing as a problem also had to be addressed.
Welcome back, and joining us on the show now is Avinash Gupta. He's Vice Chairman at the GJC and joins us live here. Avinash, hi, thank you so much for joining in. First of all, your sense on silver, because we're trading at a new 14-year highs in the international markets. The time that we took $39 and $40 and $41 an ounce on the higher side as well, with expectations that silver will continue to outperform gold in the very near future. How are you looking at, one, the fundamentals, and is the retail demand continuing strong?
On fundamentals, I can say one thing: the fundamentals are very, very strong for silver, and it is not going to hamper because of all the tariff things and all, because every country is working on the renewable energy and the EVs, on which the major consumption on the industrial side is going to happen for silver. On the demand side, on the jewelry as well as the artifacts and utensils, in India is concerned, it is going strong, and with the price rise of silver, it is giving much important aspect to the consumers that this is the metal in which they should be invested in, as jewelry, as artifacts, as utensils also. So I think it is going great for silver this year, and it will continue till the end of the year, because the festivals have just started with Ganpati, and now this 15 days little bit slowness will be there because of the Shradh, but it is going to be great. I'm looking it on a very positive note, Manisha.
All right. Mr. Gupta, would you have a sense on prices from here? Because we have had those forecasts for $42 and $43 and $45 and beyond.
Manisha ji, I have been always a positive guy on silver prices, and by the end of this year, I am looking at $45 minimum, and we may cross the all-time high of $50 by the end of this year. I'm very positive on this. With the Goldman Sachs report coming in, that has given me much more confidence on both the metals, gold and silver. So I think silver should be doing very good.
How are you looking at the silver prices in the Indian markets? Because we've already done 1,25,000 rupees per kg. Are you looking at much more higher gains? And also, what's your sense on silver imports into India this year?
See, silver imports are going on strong. It has already crossed 2,500 tons almost. And I am looking that this trend to continue further also. As far as the price in India is concerned, I am pretty confident about 1,35,000 by Diwali, and it may be roughly around 1,50,000 by the end of the year.
How are you also looking at gold prices since we have you with us? Because here as well, we are trading at all-time highs in the global markets, $3,600 an ounce done. For the Indian markets, it's 1,08,000 rupees per 10 grams. What kind of price moves are you looking here? And at these levels, is the retail still buying gold?
No, retail definitely it's becoming little slow because of the Pitra Paksh coming in. Festival Ganpati, we have seen a good amount of people coming in and buying jewelry. And on the price front, I can tell you one thing. As far as gold is concerned, the Goldman Sachs report which has come will give a strong push to the bulls to start moving towards the gold thing. Hopefully, we are getting some signals from Trump that he is on one side, he's saying the relations with India or the tariffs are going to be a little bit eased or something like that. And the second moment, they give a wrong signal. And yesterday, I was seeing a report wherein I saw the report of Russia central bank buying a lot of gold. So the more and more central banks are buying the gold, it is going to be a big positive for gold. And I see gold going up by another 10% by the end of the year is not going to be a big challenge.
Well, it's not just the Goldman Sachs report, Mr. Gupta. It's Bank of America, it is Citi. Almost everybody is talking about very high prices of gold going forward. Goldman Sachs just reiterating what everybody else is saying. But how are you looking at the Indian demand from here? Because at these higher prices, almost everybody is talked about on how the volumes could see a bit of a decline. Is the industry working with lower numbers in this quarter?
See, the domestic industry has started working on lowering the caratage and making the jewelry lighter, because the Indian consumers' pocket size we need to look at. And definitely Indian jewelry industry is working very strongly to align with the pocket-friendly consumer. And Indian consumer is very smart. Indian consumer knows that gold has given the lot of returns to them in the past also, and that is going to keep on giving that. So definitely we are seeing a robust market, but simultaneously I will tell you one thing, we might see a dip of 10 to 15% in quantity this year.
How are you also looking at the exchange market? Because that is another one that has been buzzing since the time gold prices hit $3,500 an ounce in this year. Have the exchanges gone down, or is it still, would you say, a 50-50 of a market right now?
No, I think exchanges have gone down because the exchanges gone up because of some rumors in the market that gold might go down to 55,000. So at that time, there were exchanges and returns which were coming in, but it has dropped down a lot. So from 50-60% to 25-30% it has come down.
How are you also looking at the Indian exports right now? Because all the exhibitions that we've seen in the Indian markets did give us a very positive cue. But then US being a major market has slowed down considerably. How are the other markets showing in sense of cues and interest in India?
No, I think India is going to be a little bit hit taking from the export tariff which has come from US. But fortunately for us, we have done FTAs with UK. That can be a very huge market for gem and jewelry industry, and especially gold jewelry when I'm talking about. So it is going to be a very new market and very strong market for India, because there is a lot of Indian diaspora in UK also. So I think we will be able to get through in near future, because now we are trying and focusing more on the Middle East regions. Like we have a great business already with UAE. We are trying to open up in Saudi. We are trying to open up in Oman. We are trying to open up the Australian markets. So we have a lot of things to on our platter to work and see that the exports from the gem and jewelry industry grows further and further.
Point taken. Mr. Gupta, thank you so much for joining in. Well, that's the cue coming in for gold and silver. Higher prices anticipated. Volumes, of course, could take a hit, but the value-wise, the numbers are expected firm. But with that, we'll go for a break, come back and talk more market specifics.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty has inched up a bit more, right? 24,850 above that mark. 120 points odd up is what the Nifty is trading at. 0.5% uptick there. And in the last almost 40 minutes, we've seen Ola Electric. That's something that spiked up in trade as well. So keep an eye out on that one in today's trading session. But let's move on. And sources tell CNBC-TV18 that Life Insurance Council and LIC are likely to write to the Finance Ministry and CBIC with two demands around GST changes. Yash is joining in with us to give us more details on this one. Afternoon, Yash.
Hello, good afternoon. So, of course, as we had it last week, the GST changes and what it meant for life insurance companies in terms of increased costs. Now, what we've been given to understand from our sources is that LI Council, which is Life Insurance Council, as well as the largest life insurance company, that is LIC, are expected to write to a Finance Ministry as well as CBIC, that is Central Board of Indirect Taxes as well as Customs, with two important demands when it comes to the GST changes. The first demand, as we've been given to understand, is make GST changes more prospective and not retrospective. What that essentially means is that life insurance policies generally are 15 years, 20 years long, and these get renewed every year or every 2 years. So, as far as the input tax credit is concerned, on these policies which are already in existence, that input tax credit element should be allowed because these policies were priced at that time, keeping in mind the element of input tax credit, and suddenly when that is taken away on a policy which has already been priced will be a big negative, and hence that input tax credit should be allowed as far as the existing policies which are in running are concerned. The second demand is with respect to exemption of GST on commission expenses. Of course, the government said that the insurance premium on life insurance will be exempted from GST and the reinsurance expenses thereof will be exempted. But another important expense for insurance companies is commission, and life insurance companies are likely to seek commission to be exempted from GST as well. Remember, both reinsurance cost and commission cost together form about 80 to 85% of the total expenses. And life insurance companies are of the view that if commission gets exempted just like reinsurance expenses, then it could mean a win-win situation for both policyholders as well as insurance companies, where policyholders would get the entire benefit of GST and insurance companies won't have to take that additional cost burden when it comes to their own books. The life insurance companies are also expected to reach out to the insurance regulator IRDAI, asking the regulator to endorse its view and seek these two important demands from the Finance Ministry and CBIC, as I mentioned.
All right, take that point, Yash. Thank you so much for that. We'll watch out for how this pans out. Just watch out for a few stocks. We were talking about the Nifty moving higher. Nifty Bank is supporting it, but Reliance, the giant, is waking up once again. So the stock has moved to the high point of trade. It's recovered from the lows, currently sitting with a gain of almost 0.5%. So if Reliance continues to hold well along with the Nifty Bank, then we probably see further up move. Eicher Motors has moved to the record high as our ticker team is alerting us. And we've seen some traction build on Jio Financial as well. So Jio Financial Services currently at the high point of trade. Even as autos are moving higher, we first saw auto ancillaries do well. Some of the tire stocks do well. Now look at the battery names. We have Exide, which has moved higher. Exide has moved to the high point of trade with a gain of almost 3%. And, obviously benefits from the increased auto demand because it makes the auto batteries. Take a short break, come back, focus on defense stocks as the centre's 15-year plan has been unveiled. The roadmap has been unveiled. We'll talk about what that means.
Your first reactions on this GST rationalization?
I see this as the most transformative step the nation has seen possibly in the last 50, 60 years.
What was the driving motivation, behind this bill?
Every item which comes under the GST, goods or services, had to be looked at. So even as I'm grouping for families, their day-to-day items, this thought of what the classification is causing as a problem also had to be addressed.
Welcome back. Well, let's talk about specific stocks and one particular sector which is in focus, the defense space. The Defense Ministry has unveiled India's 15-year defense plan, a comprehensive modernization roadmap. Ria's here with details on what it means and what could the stock implication also be.
Well, yes, the Indian Defence Ministry has laid out a defence roadmap for the next 15 years for the industry, and this is essentially a blueprint guiding the armed forces technology and equipment needs into the 2030s. Now, this focuses on modernization, innovation as well as self-reliance, and while this is not a purchase commitment, it still signals future priorities. Now, coming to the priorities for the Indian Army first, they are going to be focusing on next-gen tanks, active protection systems for T-90 tanks as well as FRCVs, which are going to replace T-72 tanks, and they are also looking to procure light tanks in the future. For missiles, they are looking to procure 4th and 5th gen ATGMs, air-to-air missile systems for helicopters as well as unmanned aerial vehicle launched precision guided missiles, and for communication they are looking to acquire advanced integrated electronic warfare systems. For the Indian Navy, the first priority will be nuclear powered warships. For this, they will be requiring nuclear propulsion for future aircraft carriers as well as other surface combatants, and they will also be focusing on modernizing their fleet, which will include next-gen frigates and destroyers, next-gen corvettes as well as next-gen fast interceptor crafts and MCMVs as well. They are also looking to acquire some surveillance and sensor equipment, which includes airborne AESA radars for lighter aircraft or for fighter aircrafts, oceanic satellites as well as electro-optical sensors, and even autonomous systems, which will include high-endurance autonomous underwater vehicles and unmanned mine countermeasure suites as well. Moving on to the priorities for the Indian Air Force, they will be focusing on 3 major areas. The first one is long-range precision weapons, which includes cruise missiles, guided ammunition, air-to-surface missiles for fighters and bombers. The second space is the space or air-to-ground high-speed communication systems, and the last one is AI-driven warfare. The last one is drone or UAV-based signals intelligence and electronics intelligence as well. The last segment that we're looking at is the joint requirements for the tri-services, which will include remotely piloted aircraft systems, air-to-surface and surface-to-surface missiles, as well as hypersonic missiles, for which they will be acquiring over 500 scramjet-powered systems. And the last key focus will be AI-driven warfare, which will include advanced electronic warfare, counter UAS systems, as well as next-gen targeting. Now, who stands to benefit from all of these procurements that are laid out over the next 15 years? It will be all of these defense companies. Once the final approvals actually come through and the orders flow through to these companies, these will include PSUs like HAL, Bharat Electronics and Bharat Dynamics, all 3 shipyards as well as the private defense companies.
Okay, Ria, thank you so much for that. We'll be keeping an eye out on the defense back, but just a quick word in terms of what the market is doing right now. 24,850, that's where the Nifty is managing to hold on to 120 points, almost up in today's trading session. So a bit of an inch up in terms of what we saw when we started the show at 12. It was around 24,800, so 50-60 odd point uptick that we've seen. And in the last one are Ola Electric, JM Financials, Exide, Tube Investments. Those are some of the names that have seen a bit of a spike up coming in. So that's something that we'll be keeping an eye out on in the trading session as well. Lastly, IT, that continues to see an underperformance and down 0.4%. But with that, we are absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, a Business Lunch.
Stocks perk up after the Trump and Modi Twitter exchange emphasizes strategic US-India ties. Hope of a tariff resolution soon provides a lift. Auto and metals are big gainers while IT and consumer durables drag.
Mahindra & Mahindra drops prices of its ICE SUVs with immediate effect. Tata Motors and Hyundai also cut prices across models starting the 22nd of September. Uno Minda tells CNBC-TV18 they are geared up to meet a likely pickup in demand.
Vedanta has come out tops in the open challenge bids for JP Associates with an offer of 17,000 crore rupees, but the stock sulks as analysts see it as a high price, unrelated diversification.
The finance minister tells Network 18 that the government is looking at every aspect of reform following the big GST rationalization. On that seen boosting consumption and driving capex. A package for tariff-hit exporters is also on the anvil, even as the government is set to meet its budget targets, including disinvestment of IDBI Bank by the end of this financial year.
Well, hello and welcome to Business Lunch live from the CNBC-TV18 Motilal Oswal studio. I am Bamakshi Thoria and as always, I have with me Hormas Fatakia. Hormas, well, good afternoon to you. You know, today is turning out to be an exceptionally good day. We're trading close to the day's highest point. The Nifty is up 120 points or so, and the mid-cap end of the market is also firing.
Hello, Midcap, and good afternoon to you as well, Bamakshi. And it's the big trigger, of course, is the Nifty Bank. The underperformer of last week was underperforming for a better part of this session as well. And since 11 o'clock, the index has seen a bit of a pickup, and it's a near 300-point recovery from the lows of the day. And that has what has resulted in the Nifty moving to the day's high of 24,850 is where we stand. Of course, we now enter that congestion zone, 24,850 to 25,000. It'll be interesting to see if we manage to sustain at these levels, because the texture of the market, at least until today, has been a sell-on rally. And the post Prime Minister Modi's Independence Day address, the high that the index made, 25,154, is still quite a distance away from that level. It's still around 300 points away from there. But the Nifty Bank participating will give the bulls a lot of comfort, and the mid-cap end of the market continuing to do what it is, and it's continuing to outperform. The mid-cap index is at the highs of the day, and that continues to be a 550-point advance for the mid-cap index, almost 1% higher now. So overall, a positive start to the week for the indices and for the markets. The expectations, though, are slightly tempered down considering the developments that happened over the weekend.
Well, absolutely, Hormas. You know, sectorally speaking as well, the picture hasn't changed much if we compare it to the last week, because last week Nifty Auto did exceptionally well, especially on the back of the GST announcements. The Nifty Auto Index is up another 3% today, starting on a very good note, and this is being driven by Bharat Forge, Ashok Leyland, Motherson, just some of the counters that are surging upwards of over 4%. Apart from that, the metal index is also doing extremely well, up almost 1%, led by JSW Steel, which is up 3%. SAIL is another counter that is doing extremely well, up 2.5%. But what's not doing well, similar to last week, is the Nifty IT index that has managed to dip by almost 0.5%, and it is being dragged by names like Persistent, which is down almost 1%. LTI Mindtree also trading with a cut. But moving on then, let's focus in on an exclusive conversation with CNBC-TV18. Finance Minister Nirmala Sitharaman outlined the government's economic roadmap, highlighting GST rationalization as a key driver of consumption without compromising fiscal discipline.
There's more money given already through the income tax cut. Right. The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number, which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
With consumption going up, there's a potential for capacities to grow, investments to grow. It has an immediate psychological effect that I can do this, which was beyond my affordability.
And therefore, I think there will be a buoyancy in terms of revenue.
You know, after the Prime Minister's address on Independence Day and the subsequent rationalization of GST, the one sector that has been in top gear has been the auto stocks. The companies have already cut prices to pass on these GST rate cuts, even though they take effect from the 22nd of this month. Sudarshan is now standing by to put these price cuts into perspective and how cheaper will your potential cars become. Sudarshan.
So August 15, Independence Day, and Prime Minister Modi's speech from the rampart of Red Fort announced a big GST reform after 8 years of its implementation and called it double Diwali bonus. And that triggered a big move in auto names. Since then, auto index is up 11% and most of the leading names from TVS Motor, Hero MotoCorp and Maruti to M&M have seen a move somewhere in the range of 11 to 17%. Fast forward to September 13. GST Council held the meeting considering proposals related to GST reforms, and in a unanimous decision, Council has approved all the proposals as expected. And what came as a surprising was the decision to implement these reforms from September 22, saving most companies from what it could have been a washout festive season. And in resultant, here comes a big price cut for everything we use to commute. No matter it's an entry vehicle car or a luxury car, the prices have gone for a major revision from as low as of rupees 30,000 to as high as almost rupees 9 lakh. Let's start with Mahindra & Mahindra. It has announced price cut up to rupees 1.56 lakh and has already come into effect on September 6. The Bolero's price drops from rupees 10.52 lakh to rupees 9.25 lakh, a reduction of almost rupees 1.30 lakh. The Scorpio is now rupees 1.45 lakh cheaper. The Thar Rocks sees a cut of almost rupees 1.33 lakh. And their flagship XUV 700 price is now down by rupees 1.43 lakh. Next in the list is Tata Motors. It has taken a cut for both passenger vehicles and commercial vehicles, and that price cut would be effective September 22. In passenger vehicles, cuts go up to rupees 1.55 lakh, and the Nexon is cheaper by rupees 1.55 lakh. The Safari by rupees 1.45 lakh, the Punch by rupees 85,000, and the Tigor by rupees 80,000. In commercial vehicle segment, reductions are even steeper. Heavy trucks are cheaper by up to rupees 4.65 lakh. Buses and vans by as much as rupees 4.35 lakh, and small CVs and pickups by up to rupees 1.10 lakh. And if you are planning to buy Creta, Venue or i20, take a look at the price cut announced by Hyundai. Prices have been dropped by up to rupees 2.40 lakh. The i20 price is now rupees 98,000 cheaper. Venue price drops by rupees 1.23 lakh, and the Creta sees a reduction of rupees 72,000. The Alcazar by rupees 75,000 and Tucson by as much as rupees 2.40 lakh. Even luxury car makers have joined in and have aligned their prices with the new GST regime. Audi has slashed prices by up to rupees 7.80 lakh. BMW has announced reductions of as much as rupees 8.90 lakh, and Mercedes-Benz has cut prices across its portfolio ranging from rupees 2.60 lakh to as much as rupees 11 lakh. So what next? The big question, will the industry see a revival in demand? We'll have to wait and watch.
Well, thank you so much for that, Sudarshan. Auto stocks clearly in the top gear, but Sudarshan, will we wait for a new car from you as well and a party for that?
We'll have to see. So I've just driven my car for the last 2 years, so it's a long time before I go for a new one.
All right, Sudarshan, but let's go across to Gaurav now for a quick check on some of the stocks that are buzzing around in trade. Gaurav?
Well, yes, first let's talk about the Ujjivan Small Finance Bank. The company had its analyst day where they said that the loan book is going to be around 1 lakh crores by FY30, which gives a CAGR of around 25% from here on. Other than that, they are also saying that the ROE is going to be somewhere in the range of 1.82% and ROE will be somewhere around 16 to 18%. So definitely a positive news flow for investors. D Developments Engineering, now this company is also in focus, and the reason being that company has said that they have completed their expansion at Anjar facility, which is situated in Gujarat, and after the commencement, now this total facilities capacity stands at around 30,000 metric ton per annum. Vedanta, now this stock is under pressure because company has emerged as a top bidder for Jai Prakash Associates. Now remember, why this is negative is that now analysts are not taking it in a positive way. In fact, Nuvama has said that the company is actually getting into unrelated business, whereas the focus should be on deleveraging. SpiceJet, here also we saw some pressure, and the reason being company came up with the numbers. Revenue has declined almost by 34%, while company also reported net losses of around 234 crore rupees versus what it was at a profit of around 158 crores just a year ago. Max Estates, now here the company has said that they will be acquiring 7.25 acres of land in Gurgaon with a value of 534 crores and the gross development value of more than 3,000 crores. So definitely a positive news flow here. And Sunteck Realty. Now this company is also in focus because board meeting is going to happen on 30th of September, where company will consider the issue of warrants to raise around 500 crores at 405 rupees per share. So definitely all these stocks are in focus, and we're also seeing some kind of action happening around these stocks today.
Indeed. Gaurav, thank you for that update. Sunteck Realty building on to Friday's gains, now 3.5% higher on that stock as well. But from all the buzzing names to one specific segment, that is defense, where the ministry has unveiled India's 15-year defense plan, which is a comprehensive modernization roadmap. Ria is here with more details on this. Ria.
Well, yes, the Defence Ministry has laid out a roadmap for the next 15 years for the entire industry, and this is essentially a blueprint that will guide the armed forces technology and equipment needs till the 2030s. Now, this focuses on modernization, innovation, as well as self-reliance, and although it is not a commitment for procurement, it does signal future priorities for the entire industry as a whole. First, coming to the priorities for the Indian Army, they will be focusing on next-gen tanks, active protection systems for the T-90 tanks, as well as FRCVs, which is going to replace the T-72 fleet, and they are also looking to procure light tanks in the future. They are also going to be focusing on missiles, which will include 4th and 5th generation ATGMs, air-to-air missile systems for helicopters, and UL PGMs as well. And for communication, they will be focusing on advanced integrated electronic warfare systems. The next segment is the Indian Navy. The first priority that they have will be nuclear-powered warships, for which they will be requiring nuclear propulsion for future aircraft carriers as well as other surface combatants. They will also be focusing on modernizing their fleet, and this will include the next generation corvettes, next gen destroyers and frigates, as well as next gen fast interceptor crafts and MCMVs as well. They are also going to be focusing on surveillance and sensors, which includes airborne AESA radars for fighter aircraft, oceanic satellites, as well as electro-optical sensors. And apart from this, they are also going to be focusing on autonomous systems, which will include high endurance autonomous underwater vehicles, as well as unmanned mine countermeasure suites. Moving on to the priorities for the Indian Air Force, three major segments here. The first one is the long-range precision weapons, which includes cruise missiles, guided ammunition, air-to-surface missiles for fighters and bombers as well. The second segment is the space or air-to-ground high-speed communication systems, and the last one is drone or UAV-based signals intelligence and electronics intelligence as well. Apart from this, there are also some joint requirements for the tri-services. These will include remotely piloted aircraft systems, air-to-surface and surface-to-surface missiles, and hypersonic missiles, for which over 500 scramjet-powered systems will be required. And the last segment that they will be focusing on is AI-driven warfare, which includes advanced electronic warfare, counter-UAS systems, as well as next-gen targeting. Now, who stands to benefit from all of these procurements that are laid out over the next 15 years? It will be all of these defense companies. Once the final procurement approvals come through and the orders flow through to these companies, these will include PSUs like HAL, Bharat Electronics and Bharat Dynamics, all three shipyards, as well as the private defense companies.
Well, thank you so much for that comprehensive list, Ria. But, let's slip into a very short break then. More news and updates follow on the other side, so don't go anywhere.
Your first reactions on this GST rationalization?
I see this as the most transformative step the nation has seen possibly in the last 50, 60 years. We will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific.
Can we trust China?
Now that we have been largely able to resolve the issues of disagreement with China, I think it was very natural that we should also reset our ties.
Welcome back. Now, amidst the ongoing tensions between Washington and New Delhi over tariffs and purchases of Russian oil, US President Donald Trump said that India and the United States have a special relationship and that there is nothing to worry about. Listen in to what he had to say.
I always will. I'll always be friends with Modi. He's great. Prime Minister, he's great. I'll always be friends, but I just don't like what he's doing at this particular moment. But India and the United States have a special relationship. There's nothing to worry about.
In fact, sources tell CNBC-TV18 the recent positive statements regarding India-US relations made by US President Donald Trump and Prime Minister Narendra Modi can be seen as a first step towards the lowering of tensions between both the countries. Now, both India and the US are likely to work towards finding a common ground now, sources said, and PM Modi and Trump's statements can be seen as the first sign of positive signaling by both sides about the strength of the overall India-US partnership. Now, sources also added that since the last few weeks, officials of both countries have been in touch at senior levels. Parikshit is here to tell us more. Parikshit?
First clear signs of both India and US trying to put the relationship back on track. US President Donald Trump, while addressing a question from a reporter in the Oval Office, said, "I'll always be friends with Narendra Modi. He's a great prime minister. He's great, but I just don't like what he's doing at present. India and the US have a very special relationship. There's nothing to worry about. We always have our moments on occasion." The prime minister also reacting positively and saying that I deeply appreciate and reciprocate President Trump's positive assessment of India-US ties. Now, this is very important because in the last few weeks, there had been a lot of tension between India and the US, and especially from the US side, some very sharp rhetoric had been seen. President Trump called the relationship with India a one-sided disaster. You had Peter Navarro saying that India is a laundromat for the Kremlin and we are fueling Putin's war and supporting him. Then you had Howard Lutnick, who has said this week that India has been very unreasonable and they should be saying sorry. But the current positive statements between India and the US by the leaders of the two countries indicates that there is now an opening as far as negotiations go. The communications had not broken down. They were taking place over the last few months. But now, clearly there is an opening for both sides to find a common ground, give some concessions and arrive at some sort of breakthrough which puts the relationship back on a positive path. Having said that, despite all the trade tensions, the larger strategic partnership was continuing. There was bipartisan consensus that the India-US relationship is a relationship for the future and extremely important. Foreign policy watchers are welcoming statements by Prime Minister Modi and President Trump, but they say that we will have to approach things cautiously. This is not a victory. This is not a truce as of now. This is not a win. We will have to see what happens with the 25% additional tariff and also the 25% reciprocal tariff. Remember, India has sought a fair deal whereby a 10% tariff will be imposed by both sides, or it could be in the range of 10 to 15%. Will this be acceptable to the US? That remains to be seen. But clearly, there will have to be some concessions by both India and the US. Foreign policy watchers have also said that there is possibly some scope for India to trim its purchases of oil from Russia. How much and till what extent will India do that? That remains to be seen. There was also a lot of worry in the IT sector because some of Trump's loyalists and members of the Republican Party like Laura Loomer had said that Donald Trump could next impose restrictions which will hit India's IT sector and also H-1B visas, where Indian professionals are big beneficiaries. That had created a lot of jitters in the market, but former Foreign Secretary Harshvardhan Shringla went on to say that when it comes to H-1B visas, the Indians may have been a big beneficiary, but we have brought huge value to the American population and the American economy. And the US government and US businesses recognize that. And if they hurt the Indian IT sector, then it will be to the detriment of both India and the US. So therefore, clearly there is some amount of realization that there is a need to put the India-US relationship back on track. There are common challenges that the two countries face around the world and in the Indo-Pacific as well.
Parikshit, thank you for that update. Meanwhile, External Affairs Minister Subramaniam Jaishankar said that Prime Minister Modi attaches enormous importance to the India-US partnership and they remain engaged with the US. Listen.
Prime Minister Modi obviously attaches enormous importance to our partnership with the United States. Where President Trump is concerned, he's always had a very good personal equation with President Trump. But the point is, look, we are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Well, speaking to CNBC-TV18, Finance Minister Nirmala Sitharaman said she hopes the current 50% US tariffs on India is not a long-haul situation. Commerce Minister Piyush Goyal also said few comments are unlikely to derail the years-long ties between both the nations.
There is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it, but there is something coming to help them, so that this tirade of the tariff is something which they can face, and also suddenly having to look for newer markets is also a challenge, but we'll have to help them out on that.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmalaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs.
Some of the officials of the Trump administration, calling it Modi's war, or, a laundromat of Kremlin. I mean, how do you react to this? I mean, are conciliatory noises coming from the other side now?
I think there could be either some misunderstandings or some personal opinions that may be reflected in that. I do not think that deters the US and India from continuing to maintain a strategic alliance and partnership. Our friendship is far stronger than a few comments that may be made by a few people.
Exclusive conversations there with the Finance Minister and from Commerce Minister Piyush Goyal as well. Now, Donald Trump also said that he's ready to move a secondary phase of sanctions on Russia. The closest he's come to suggesting that he's on the verge of ramping up sanctions against Moscow or its oil buyers over the war in Ukraine. Listen in.
Are you ready to move to the second phase of sanctions against Russia or punishing Putin?
Well, meanwhile, Treasury Secretary Scott Bessent said that the US and the European Union could heap secondary tariffs on the countries that buy Russian oil, pushing the Russian economy to the brink of collapse and bringing Russian President Vladimir Putin to the negotiating table. Well, on that note, let's slip into a very short break for now. More news and updates follow on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC-TV18. Well, let's get you some updates from the world of sports. Carlos Alcaraz beat Jannik Sinner over 4 sets to claim the US Open title on Sunday and tighten his grip on the rivalry between the two current top seeds of the men's game. Now, in an echo of the win that first propelled him to the #1 spot in 2022, Alcaraz's second New York title lifted him back to the top of the world rankings and took his Grand Slam haul to 6.
Bracing for a new rivalry then in the world of men's tennis. But we call time on this edition of Business Lunch. From Amakshi and me, thank you for watching. We leave you with the index close to the highest point of the day, near the mark of 24,850. Don't go anywhere. Midcap radar on the other side.
Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, things have taken a turn for the better. Now we are up around 120 points, comfortably above the 24,850 mark. And, you know, across the board, we are seeing recovery. This one led by Bank Nifty, which was under pressure, but now it's up almost 250 points.
That's right. Good afternoon. So we are starting off the week on a strong note. Some green on the screen. It's been a choppy trading session, but especially in the last half hour, 1 hour of the session, we are seeing some buying, especially in the broader end of the market. We have a lot lined up on the show, so let's start off with the top headlines. Stocks perk up with key indices trading near the day's highest point. Mid-caps rally, auto and metals are big gainers, while IT and consumer durables drag.
Shares of Prime Focus logged an upper circuit for the second session in a row. Notable investors Ramesh Damani, Utpal Sheth, Madhukela buy stake in Friday's block deal.
Asian Energy Services under pressure after it merges with Oilmax Energy by absorbing the company into itself. Asian Energy to issue new shares to Oilmax Energy shareholders as per the shareholding ratio. Stock down over 8%.
Suntec Realty gains after company issues 1.17 crore warrants to promoters. Not only to promoters, 66.5% of that has gone to promoters. Stock up nearly 3%. Max Estate surges after it secures development rights for a 7.25-acre land parcel in Gurugram with gross development value potential of over 3,000 crore rupees.
Vikram Solar surges after it bags a 336 megawatt module supply order for Khavda Solar project from L&T. The stock surges over 8%. Well, welcome to Midcap Radar. What we're essentially seeing in the last hour of the session has been the fact that there has been some buying activity that's picked up as far as the broader end of the markets are concerned. The advanced decline ratio is something that has now gone and tended towards the positive side, given the fact that there was significant selling pressure that we did witness, especially in the last hour of the session. What is it that's doing quite well? Well, the entire gold finance bank is doing very well in the session today. Remember, gold prices are on an upswing, so names like Muthoot Finance, Manappuram, as well as IIFL, all of these names now trading near the day's highest point, all of them trading with gains anywhere in the range of 2 to 4%. What are the other set of stocks doing very well in the session? Well, you can't look beyond the auto pack. All of the auto names, remember TVS Motors, that particular stock saw an upgrade today. M&M, Maruti Hero Motor, announcement of a new CEO. That stock is doing very well in the session, near the day's highest point. And you're also seeing some buying emerging as far as the cement pack is concerned. So names like Shree Cement also doing quite well in the session. But remember, this is our special Midcap Radar, and this is our special segment Midcap Movers. Sonal has gone by to the wall to take us through all of the midcaps that are moving around in the session.
Oh, well, yes, quite a few names that are buzzing in trade. Midcap index is at the day's high as well. So let's talk about some gainers first up, and then we'll talk about the losers as well in trade. So we have Sarasa Tech, which is higher by 18.5%. MIC Electronics, it's been buzzing off late and 20% higher on that one. Precision Camshafts, the sudden move there has been surging since we started the trading session. 17% there. One MobiKwik, this is a curious case. The stock has been surging 13.5%. Another day, another move there. Sterlite Tech is up around 10% as we speak right now. Now to the losers, we have Paradeep Phosphates, which is lower in trade right now, 8.5% gone. Vimta Labs, it was a big mover in last week. Today, there's some profit booking we are seeing. Apollo Microsystems down 7.5%. We have Amberent, which is down 4%. EID Parry is the other one. And remember, we'll also be focusing on Asia Energy Services today on our Midcap Spotlight. That's an important one, which is down in trade around 10%. So watch out for that one, because that stock will be on our radar as well.
Well, thank you so much for that, Sonal. Asia Energy Services is something that we look forward to a little later in the show. Well, it's a good time to welcome Ruchit Jain from Motilal Oswal Financial Services for a quick technical check on the market. Thank you so much, Ruchit, for joining us. Well, it's been a choppy trading session, but now the Nifty continues to trade above the 24,850 mark. Where do you see markets headed from this point on?
Yeah, hi, very good afternoon. Well, in the last few days, in fact, last couple of weeks, we have seen that the markets on the index front is going through some time-wise corrective phase, where 24,400 to 500 has been acting as a good support, and on the upside, 25,000 is the resistance, which is not taken out yet. But if you look at the broader markets, and the Nifty Midcap Index post this correction have formed a good support base around its 100-day exponential moving average, and have seen a good positive advanced decline ratio since last few days. So clearly you can see that it's more of a stock pickers or a sector specific movements market, where although the benchmark indices are not showing any kind of trended phase, but there are certain sectors which are showing a good momentum on the positive side. So on the index front, we believe that markets would continue this small consolidation for the near term until 25,000 is broken out. We do not expect any significant momentum there. But yes, if you go down to stocks or the sectors, then I think much better opportunities are placed for short-term trading there.
Okay, all right. And what about individual names, Ruchit? Anything that comes to your mind?
Yeah, so a couple of names, Sonal, which we are looking to trade with a positive bias. One is we have recommended to go long on AB Capital. If you look at last 2 or 3 weeks when the entire market has corrected, No, the AB Capital is one of the stock which has not shown any kind of price-wise correction. So no, it has been an outperformer even when the markets were correcting. So we believe that the stock would continue its outperformance since the 20-day EMA has also been acting as a support, and we expect an up move to continue towards 310 kind of levels. So at current levels, one can go long on AB Capital with stop loss below 270 for potential targets of 310. And we have seen a significant run up in auto names, post this GST reforms. And certain auto ancillary names are looking much positive, where we think that going ahead, the next round of rally could start. Apollo Tyres within this auto ancillary basket technically is looking very strong. We have already seen some price rise as well as corrective phase in this stock. And now price up moves have been supported by good volumes of late. So Apollo Tyres short-term traders can look to buy over here with stop below 470 for potential targets around 510.
Okay, thank you so much, Richard, for joining us, giving us a sense of your view on the markets as well as your individual trading calls. Well, it's a good time to slip into a short break. We'll get you more on the markets, and we'll also focus on Asia Energy Services, which is our mid-cap spotlight in today's trading session.
Your first reactions on this GST rationalization?
I see this as the most transformative step the nation has seen possibly in the last 50, 60 years.
What was the driving motivation, behind this bill?
Every item which comes under the GST, goods or services, had to be looked at. So even as I'm grouping for families, their day-to-day items, this thought of what the classification is causing as a problem also had to be addressed.
Welcome back. You're still tuned into Midcap Radar. Well, let's talk about an important and interesting story. Leveraged bets by Indian investors are near 1 lakh crore rupees, a 13 times jump in 5 years. Hormuz is here with more details and analysis as well. Hormuz.
There's some interesting insights dug up by our colleagues Yusuf and Ruchit, and they have mentioned the fact that the leveraged positions or leveraged bets of Indian investors is nearing the mark of 1 lakh crore rupees. Now, starting of the end of 2020, which was that number stood around 7,500 crore. As of Friday's closing, that number is close to 95,000 crore rupees, and that's a 13x jump. Now, even on the number of shares as well on which the leverage positions have been taken, that number too has seen a 10x jump from around 49 crore shares at the end of 2020 to almost 480 crore shares as of last Friday's closing. Now, what exactly is this MTF or the margin trading facility? Now, it is this facility that is provided by brokers to traders and investors to buy more shares beyond their capital capacity. Now, for example, if somebody is buying shares worth 1,000 rupees, they can furnish the earlier margin requirement of 200 rupees and the broker can furnish the rest, which is around 800 rupees. That is where the leverage comes in. It becomes a highly profitable trade if the prices go up, but the risk comes in when the prices go down, and then the brokers are authorized to square off the positions in the absence of additional collateral if it is not provided to the broker at that particular point of time. And this forced selling could accentuate the selling pressure in a downward market. That is what puts in this such a trade at risk. Now, when it comes to the most leveraged stocks in this list, you will often find blue chip stocks or the most traded PSU names or ones where retail concentration is very high. So take a look at the blue chip names. Look at Reliance Industries, Tata Motors, TCS, PSU names like Mazda, Dog, Bharat Electronics, REC, and with high retail holdings as well, like the likes of Yes Bank and Suzlon Energy, CDSL, all of them feature in this list. Now, whether this is a risk for the market, we did speak to Ashish Rathi of HDFC Securities, and he mentioned that this, the MTF does not pose a systemic risk to the market as of now, because over these last 5 years, the product has matured, and with the regulations being put in place, it does not pose a risk for the market as of now. And the fact that the MTF during the COVID period as well, it only led to an increase in cash market volumes and not pose a risk for the market. Well, even market regulator SEBI in its annual report mentioned that the comprehensive review of the current margin system is underway. What is also underway is the evaluation of the MTF norms and the eligible scripts that can be placed under this. So interesting insights coming in. The leveraged positions for now, not a risk for the market, but definitely a 13x jump over the last 5 years.
Okay, that's a big surge and interesting inputs by our colleagues Yusuf and Richard as well. But this is a special segment, Midcap Spotlight. We are focusing on Asia Energy Services. The stock is under pressure today, down around 8%. The news that came by over the weekend is that the company will be merging with Oilmax Energy Private Limited, and this is into Asia Energy Services Limited itself. Oilmax will be dissolved without winding up. All the assets, liabilities, rights and approvals will vest in Asia Energy. Now remember, it will also mean that Oilmax, the holding that they have in Asian Energy will be cancelled. Remember, Oilmax holds 66% stake in Asia Energy. So it's kind of a reverse merger which is happening with subsidiary, where holding companies getting merged with the subsidiary here. And Asian Energy will issue new shares to Oilmax as per share exchange ratio, which we'll discuss about in the later part. This will mean that it will be a consolidated business. Both the entities will be merged and the scheme will be effective in 12 months. What will happen to the promoter holding? Pre-merger, it is around 65%. Post-merger, it will come to 47%. Now, let's talk and look at the financials. Revenues together will come in to 593 crore rupees because 128 crores will be added by oil energy. EBITDA will double from current levels. It will come in at 143 crore rupees, and profits will also double to come in at 91 crore rupees. That plate where the consolidated financials will come by is here for you on the screen. So basically, their EBITDA and profits are doubling. There will be an issue of 117 shares for every 10 shares which is held in Oilmax. This would mean Asian Oil will be diluting their equity by around 46% in order to improve the merged entities financials, or doubling of EBITDA and profits as well. I did some calculations. Now profits are doubling from 42 crore rupees to 91 crore rupees, and calculating the shares which they have mentioned in their investor presentation as well, it would mean that EPS is improving from 8.4 rupees to 9.89 rupees a share. There is an improvement of 17% in the merged entity by way of EPS. But despite that, we are seeing that the stock is down in trade. But do remember, the stock is already up 140% in last 6 months. There's been a big surge that we are seeing. So there is some profit booking, sell on news, something of that sort is what is happening here. But yes, this merger is positive for shareholders of Asian Energy Services because there is an EPS improvement in the merged entity. But yes, some profit booking is what we are seeing right now.
Well, some very interesting analysis there, Sonal. And like you mentioned, don't go by the price movement just today. It's purely profit booking after what's essentially been almost a 2.5 times jump up in the share price. Thank you so much for sharing those details with us. Well, we'll now slip into a short break. We'll get you more on the markets and also focus on Prime Focus as well as Vikram Solar, both stocks which are buzzing in today's trading session. Stay tuned. Welcome back to Midcap Radar. Well, one particular stock from the broad end of the markets that's perched at the upper circuit for the second straight session is Prime Focus. Vamakshi joins in to decode all of the moves that's been happening as far as this particular name is concerned.
Well, absolutely, Vivek. You know, the stock has managed to surge over 20%, 21% or so in the last two trading sessions. Now, keep in mind that this is a company that we don't speak about very often. So, you know, just to provide some context to our viewers, this is an integrated media and entertainment services powerhouse. It provides post-production services, which includes digital, intermediate, visual effects and the likes of it. All of these creative services are provided by the company to the media and entertainment industry. Now in FY25, the company had a revenue of 3,600 odd crores with an EBITDA margin of 20.5%, and they managed to report a net loss of almost 377 crores. Now today the stock is in focus on the back of a block deal. About 4% equity or 1.2 crore shares changed hands in today's trading session. The sellers and the buyers are not immediately known, but we'll be waiting by later this evening for those details to come out. But keep in mind that this is the second block deal that has taken place in the last 7 days or so. On Friday as well, there was a block deal wherein almost 3.3% equity changed hands. Now the sellers were largely some of these public shareholders, which includes Marina as well as Augusta Investments. But more importantly, it's we need to keep an eye out on who has actually bought. Now Singularity large value funds, which are owned by Madhusudan Kela as well as his son Yash Kela, bought almost 2% stake in the company. Some other notable investors includes Ramesh Damani as well as Utpal Seth, which have picked up a 0.26% stake and 0.56% stake respectively, and there are some other investors involved as well. Now take a look at the shareholding pattern of the company. Now the promoters hold currently around 68%. There are no mutual funds currently, but there are some notable holders which have sold their stake, which includes Augusta Investments, which held a nearly 8.86% stake in the company back in June 2025. Of course, now with the stake reduction, the numbers will come down. For Marina as well, they hold a 7.5% stake, and on Augusta Investment Zero also hold a 2% stake in the company.
Well, thank you so much for that, Vamakshi, joining us and breaking down all of the buyers as well as sellers in Friday's block deal. It'll be interesting to track the prospects of Prime Focus going forward. But another stock from the broad end of the markets, one from the renewable energy space, a recently listed name, is Vikram Solar. Vikram Solar has seen a strong up move today on good volumes. This is after the company announced to the exchanges a significant order win. What is it that the company has announced to the exchanges today? The company has secured a 336 megawatt module supply order from L&T. Now, this is for L&T's renewable energy project at Khavda in Gujarat. This particular modules will be deployed in Gujarat itself, and the timelines for the delivery is from November 2025 to March 2026, indicating that the company should be able to book the revenues from this particular order in FY26 itself. Remember, the capacity as far as solar modules is concerned for the company during the IPO, remember the company just listed towards the end of August, was at close to 4.5 gigawatt. The order book at the end of Q1 was close to 10.3 gigawatt, indicating that the company currently has significant orders in hand. Now, what will be interesting is that I just used the back of the envelope rule of thumb calculation of close to 1.5 crore worth of order prospects from this particular order. So close to 450 to 500 crores worth is what this particular order should come about. It'll be interesting to see once the results do come about, what is the actual quantum of this particular order. But the street clearly likes this particular development.
Oh yes, 6.5% higher on this name. So that explains the move as well. But let's move on. In an exclusive conversation with CNBC-TV18, Finance Minister Nirmala Sitharaman outlined the government's economic roadmap, highlighting GST rationalization as a key driver of consumption without compromising fiscal discipline. She also urged industries to pass on tax benefits to customers. Listen into some excerpts of her conversation with Network 18's Rahul Joshi.
You've put more money into the hands of the consumer. You brought down for the middle classes the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut.
Right.
The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. Okay. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
There's nothing beyond. So that 1% is what makes for the demerit goods, right, which popular parlance says sin goods.
Yeah.
So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments. It will fire up investments as well.
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts, and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah. Have you seen that in the past?
Well, at least the moment the income tax reduction happened, you heard people very clearly coming out and saying, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college. My daughter is already doing engineering. I'll be able to fund her for her higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit?
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time. And so with the fiscal deficit. And this is the last point of my gliding path. Right. I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have to.
And you don't see that happening in the near future?
Not in the immediate future.
All right, that's the word coming in from the finance minister. But for the markets, there is some fall from the highs of the day. From the we were above the 24,850 mark, so a small bit of selling from the highs as well. But if we talk about the broader market movers, IOL Chem, that should come up for you on the screen. That stock is up 15%. Himmat Singha Steel is the other one, up 8%. Steel strips, we've been talking about auto ancillaries doing really well. So that stock is up around 7%. And all these GST cut beneficiaries from the dairy space, so Parag Milk Foods is up around 7%. That stock should also be on your radar. So a lot of moving parts, but what we'll do is we'll take your leave on Midcap Radar right now, but Finding Alpha special show is up next.
Hello and welcome to Finding Alpha. On today's episode, we focus on how to identify and invest in structural growth themes through platform businesses. To help us unpack this theme, joining me on the show today is Sandeep Agarwal, fund manager at Sovilo Investment Managers. From digital transformation to new age consumption, well, Sandeep will be shedding light on why platform-led models could be the next big driver of wealth creation. Well, Sandeep, thanks a lot for coming down and welcome to the show.
Thank you, Nigel, and good afternoon. And thanks to all your viewers, your production team, and everyone who enabled this. So before we start this discussion, I would like to just give a disclaimer because we run a SEBI-registered PMS. So we may hold, buy, sell any of the stocks discussed during the conversation in self and client portfolio. Hereby sharing my thought process and industry insight and not providing any direct or indirect recommendation on any of the stocks.
Got it, Sandeep. We'll get that disclaimer periodically up for our viewers as well on the screen. So, the regulators are well, they're satisfied with what you say. But we want to learn a lot about tech-related plays and also platform companies, because today we're talking about tech with a twist. So let's get first, to this question that we discuss quite often actually. Why hasn't India produced, say, a Magnificent Seven type of tech giant yet? Could you tell us what's holding us back? And do you believe actually we're headed in that direction? We're getting a little impatient.
Yeah. So it is a very interesting question. And Nigel, let me tell you that, evolving a platform like Mag 7 type of companies, it takes time. It is a factor of GDP growth rate. It is a factor of how internet is spreading and all those things. These platforms, if you see Mag 7, I am tracking for last 20 years, they have evolved over a period of time. You will be surprised to know that Microsoft listed in 1986 at $750 million valuation only. And at that time, US GDP was $4.9 trillion. And we are not yet there. And we are seeing in India, small caps list at $750 million. Okay. So I think, we in our country also now, when GDP comes in, when GDP starts growing and the incremental money which comes, this money, allows people to spend on different things which generate the need for platforms, and that is how the ecosystem of tech develops.
So, Sandeep, just to get this clear, you're talking about Microsoft when it listed as a percentage of the US GDP was how much? Currently, what is it? And if you could tell us, what about our guys? Here we talk about TCS, Infosys, Reliance. Where are they as a percentage of GDP, since you're comparing the market capitalization as a percentage of GDP? Tell us more.
So when Microsoft listed, it was in 3-4 decimal places as a percentage of US GDP.
Okay.
Today, it is in double digit, 13-14% of US GDP, which is a huge number. But if you see the journey also, as GDP grows, the incremental amount which comes up, more and more goes to these players who are in platform enablers. Okay. Because they make life easier for everyone. Okay. So that is how in India, I think if you see today Reliance and TCS, they are 1 to 5% of the India GDP. So they are doing phenomenally well. And I think they have listed at much higher percentage of GDP than what you have, may not be Reliance, but TCS at least, because TCS listed at $10-12 billion in 2004. So we are doing great in my view, and we need to see data in full perspective. We cannot just say that Magnificent Seven is doing phenomenal and we are not doing.
Okay. So you're saying in the coming years, as India scales higher into a bigger economy, you're expecting these companies' market cap as a percentage of GDP to go to double digits?
Yeah, absolutely. I think it will go.
Okay, all right. Now let's talk about the platform business itself. Could you tell us which are the platform businesses that excite you right now? And also there's plenty of talk, right, about getting in early, pre-IPO and the likes. What is your comment on that?
So, platforms are very interesting business. So I will just tell you why platforms become important and how they grow. So for platforms, one thing is internet spread and internet penetration, which has gone up substantially in last 7-8 years. So India has become a platform-friendly country in only last 8-10 years because our affordable telecom and affordable and good reach and good bandwidth has been available in last 8-10 years only.
Okay.
Now, second thing is why platforms are becoming important, because if you see the fertility rates in last 20-25 years, they have fallen from 2.5 to now below 2, which means that, you are below replacement level. And now you add to that the falling population growth rate, it is now below 1%, which was around 1.5, 1.6% 2 decades back.
Okay.
And now you add to that the nuclear family concept. People are working, both partners are working and all. So earlier, the chotus of your home who used to do your small stuff, bring this thing, bring that thing, that has been replaced. There was a vacuum, right? And that space has been taken by these delivery platforms, whether it is Zomato or Swiggy or whatever.
Right.
So it is a very interesting way, and this will increasingly, as you move forward, this will continue to replace those chotus in the rural. Right now, they have replaced the chotus in the urban and semi-urban. And it needs internet, it needs platforms, and it needs delivery, everything. And it will happen, and it will grow very phenomenally in my view going forward.
Talking about the chotus, I used to be a chotu at my home, and I loved it. Go and help out, but I don't know whether the kids will do that right now. But as you're saying, you believe that these platforms like Zomato, Swiggy, they still have a longer runway going ahead. Let me get in a soundbite first. In fact, Sanjeev Bikhchandani, who is the founder and executive vice chair of InfoEdge, explained how no one thought that Zomato's market share could rise to a point where it is now. Let's listen in to that comment.
We got lucky in Zomato that we went there into Zomato in 2010, and we were so low in the first 4 rounds. And then the floodgates opened of capital, and suddenly they got as much capital as they needed and wanted and more.
Yeah.
Okay, and now I haven't checked last week, but last time I checked, the market cap was over 3 lakh crores.
Over 3 lakh crores, that's correct.
Yeah, but so you got to go in early. You got to stay the course. You got to demonstrate commitment and faith and keep on investing. And you have to be right.
Who would have thought after that rocky listing, Zomato had more than 3 lakh crore. In fact, but we also spoke to Swiggy's leadership, who spoke on the dream for Swiggy and where they expect to reach their goal. Let's listen what they had to say.
As I spoke, right, like for us, it's
100
million people 15 times a month.
100 million people 15 times a month.
Yeah.
And, ballpark, when do you believe you'll be able to get there?
See, they say, right, like you overestimate the short term and underestimate the long term. So my heart says, hopefully in the short term, but I think it'll probably be 10 years.
We looked at general data as well. The quick commerce penetration in proper urban, where you would expect it to be very high, still lower than the modern trade penetration. So I think there's still 2 to 3 years of clear opportunity available there. T2, T3 is like whole ocean still essentially actually lying there. We believe, as we said, right, we are in Bhubaneswar, we are in Patna, we are going all the places. Those cities really surprise us. I mean, I think
what's been the biggest surprise in operating in a Patna, in a Bhubaneswar, etc.?
I think Patna we launched, and in like 4 or 5 days it reached honestly 1,000 orders without even advertising or even informing people.
Interesting times. Sandeep, but tell us, about the entry time. Everyone wants to get into the race early, because they want to make the big money. What is your view on that, about entry, pre-IPO? Sometimes it's very risky as well. A lot of investors you hear who have burnt their fingers. Your take?
Yeah, so, Sanjeev is master of when to enter and how to enter. So, no one can probably match him. He's different. But let me give you some data which will give you an idea. So, Amazon listed in 1997, right? Till 2015, their net income went up only 20 times. But their burn went down from 21% negative to 0%. And in this period, the market cap went up more than 200 times, right? Now, after 2015, when they became profitable, their net profit has gone up by 117 times, but market cap has gone up only 8 times. The point I'm trying to make is that you have to match, the formula is that, your incremental growth should be much higher than your incremental burn. So your burn ratio has to consistently fall, and when you see that, that is the time when highest value creation happens. Once it starts making profit, all the big institutions come and everyone comes, so your returns will also be a compounding story and not a multi-bagger story. That has been the story across the globe in all platforms broadly.
So Amazon till 2015, the burn ratio came down from what to what?
21% to 0%.
Negative 21% to 0%, and from 2015 to 2025, it went up
from 0 to 11%.
11%. Got up. That's the big swing out there. Got it. Now let's talk about the other aspect. Most people talk about hotels and airlines when it comes to tourism. But you've spoken about some unconventional thoughts that you have, some unconventional angles, including the rich biodiversity and the big cats that India hosts. Could you explain that to us before we get to the market relation? Oh, the big cats, that's a big attraction in India.
So I'm a big fan of tigers and I love tigers. So I will give you some data. There are 573 wildlife sanctuaries in India, and India is the only country where you find one-horned rhino, you find snow leopard, you find now cheetah, which is imported, you have Royal Bengal tiger, and you have Asiatic lions. Nowhere, including Africa, you won't get tigers, right? So this is one country where you get everything, right? And there are more than 400 rivers and more than 1 lakh water bodies. Our team has done research which says that out of 780 districts in India, majority of them, more than 80-90% of them, have water body, hill station, religious place, or wildlife, or a combination of 2 or 3 of them. So we are very, very well placed to grow tourism in a big way. And when tourism grows, then platforms will grow in a very, very different way, because to handle such a traffic on an exponential basis and on a year-over-year basis, to give experience and good quality of customer experience, you have to, enable more and more platforms. So I believe a lot of platforms will come in the tourism side.
Okay, all right. But how do you play this theme? If you could help us out on that aspect as well. If I'm looking at playing the tourism play via an app or via a platform, what comes on your radar?
So, right now, even for hotels, we are also, playing through the listed hotels and small hotels and all that. And there are 1 or 2 car travel agencies, we are playing that. But we are very keen that, something which comes and replaces or is a quasi Airbnb in India and gets listed, we will like to play that theme, because this is going to be a very big theme. And also, this theme will also be a catalyst to Zomato and Swiggy also, because when tourists go to a particular place, they will order sometimes in the evening, they will go in the morning somewhere, but in the evening they will like food to be delivered in their hotel or lodge or wherever they're staying.
So from the hotel place that you're looking at, in the unlisted space, I think you're still researching on OYO.
Right.
That's something that you're looking at. And from the listed pack, with all due disclosures, Ecos is a company you like.
Yeah, we like it, but we may or may not be invested. So
okay, all right. Ecos Mobility, got it. Now, we have a viewer query that's coming in, and since you're sounding very, very optimistic about these food delivery apps, they are becoming a household habit. So the query is that itself, because you're talking about this, but could it have an impact on health trends? And that's what could position diagnostics for strong growth. Do you agree? How should investors play this theme with regard to the diagnostic space, given that there's going to be so much of eating from out?
Oh, fantastic question by whoever has asked, and thanks for the question. So, see, what happens is right now, whatever food you're ordering from outside, and the foods are being ordered because lifestyle is becoming more and more busy. Both the partners are working. Kids have different choices of food. They need it instantly, right? So, and it is becoming incrementally difficult to get help for cooking food and all that. So, people are ordering. Now, obviously, when this food is ordered and when it comes home, you have to reheat. So, it reduces the nutrient constituent of that food. So, obviously, after 10-15 years, I believe a lot of preventive healthcare and the curative healthcare will pick up because of these habits, because they have their own setbacks. And I think that is the place where, diagnostic will become very big. And again, in diagnostics, you will see a lot of logistics chains evolving, a lot of platforms coming in.
Okay, all right. Taking that discussion a little ahead then, could food delivery platforms themselves, get into this diagnostic space, and there could be unexpected growth even from here? Could this be an optional value?
It could be, because they already have lot part of that system, but I think this will need different skill set, and I am sure that if not the direct food delivery guys, someone else will develop and come out with it.
Okay, all right. You're also bullish on other platforms, right? I think Book My Show is something that you've liked. In the automotive space as well, I think you liked Car Trade, if I'm not mistaken. So tell us the investment rationale there.
So, again, rationals are broadly similar. Both the family members are working. They don't have time. No one can go and buy the tickets on the stand in queue and buy tickets. Plus, platforms give you the choice to select the seats and all that, So it is much, much easier. So it is convenience. See, technology and platforms make life convenient, easier, and they save time. And that's why anything which is enabling those, and if they have the right content or right offering, for example, if you go to Book My Show, they have everything, any drama, anything you want to buy ticket for, everything is broadly available. Even the World Cup tickets were available. So basically, they are an aggregator. So I think, they will also do phenomenal well, and they charge a bomb for fees. I have just recently experienced it.
Okay. No, so that's Book My Show, and that clearly, there is a lot of potential. But from a stock market perspective, investor, perspective, they will want to understand, what about Car Trade? I think the stock is up 2-3 times in the last 1 year. It did some inorganic growth as well. Is there a bigger potential for companies like these?
Yeah, absolutely. Because, again, all the platforms are addressing the same thing. They're saving time. They are giving you more choices. They are giving you bids and all those things. So, all these platforms have a very big advantage of giving you everything at your fingertip. And your mobile is basically the place from where you can do everything. So, as long as that factor is addressed, I think platforms do well. But in platform business, only you have to be careful that, whoever has the maximum footprint or whoever has the maximum audience, they are the winners. Not everyone can make money because the burns are very high.
Okay, all right. Sandeep, I'm just going to drift a bit away from the platform themes, because, there is some work that I've done with regard to CapEx spend as well. So when a company announces a CapEx spend, you often break it down into 3 broad pieces. So explain that to us, walk us through that, and also highlight where there will be real opportunities. So, assuming someone is going ahead and announcing a big capex, break up the top 3 segments that you're looking at, and where is the opportunity?
So, Nigel, very good question again. So, we roam around in all the important districts, industrial districts in the country, in Gujarat, Karnataka, Tamil Nadu. We try to find what is happening on the field. My team is mostly on the road, and it's a large team which is doing that. So, what we are observing consistently when we speak to the promoters of these companies in the manufacturing side, if you see if the capex is total 100 rupees, then 30 to 40 is core machinery, which is generally imported from China, Japan, Sweden, all these countries, right? 30 to 40% is ancillary, right? You are putting the utilities, you are putting some of the machines which can be made in Rajkot, Ludhiana, or some parts of the country. And 15 to 20% is the shade, the whole development of the site, right?
Right.
We are seeing that in shade almost it is 100% indigenous. In the ancillary, there are 2 reasons. One, why we are able to develop in India, because the core machinery is not very complicated. It is more fabrication, welding, customizing and all that. This needs a lot of space, right? And the transportation and the logistics is a very, very big challenge. And that is the reason this is today already being made in India. You see, if someone is announcing 100 crore of capex, broadly at least 60% will be done in India.
Okay.
So that is a very big theme which we play.
So which is the component that's being imported out of the 3 broad categories?
So all the ancillaries, like, the chimneys
so
and everything.
machinery and shed is where there is that...
core machinery we import, shed and the ancillary we make in India.
We make in India.
Yeah.
Got it. And which are the companies that could potentially be the plays out here from, which are into these 3 big segments that you're talking about?
So I think, with all disclaimers in place, I think there are a lot of companies which are doing superb work in the ancillary side, and the good part is the companies which are doing ancillary, they are also slowly promoting towards making the core, right? Because the cost differential is huge and they learn and they do reverse engineering. So we have seen great work being done by Anup Engineering, Elecon, so many of the companies which are doing superb work in that space also. And Ajax is also there, Kilburn is there. And you will see more and more unlisted companies coming out in this space which are doing the ancillary or the shade. And this is really, really very core to the country. And, it will slowly move up the value chain. And you will see that 30-40% of core machinery going down to 15-20% in the next 7-8 years.
So some of these companies, Azad, Anup, Kilburn, Shelly Engineering as well, they've already seen a big run. So do you think investors that are getting in, they have to be ready for a longer run? Because the potential is huge, but in the near term, they could have run up a good bit. Would that be a fair estimate?
Yes, you are absolutely right. So, price earning ratio is very important. PEG ratios are very important. People have to see that because, sometimes this stocks built in next 5, 7, 10 years of growth. So there could be time correction and there could be price correction and, investors can suffer. So that is a challenge. So you have to identify them at a right price. Anyone can identify because you just put in screener, everything is there.
Right.
But right price, right management and all those things, all hygiene factors have to be in a place. But this space is very good.
Okay, all right. Let's focus on Reliance as well. But first, at the recent Reliance AGM, Mr. Mukesh Ambani unveiled Reliance Intelligence as India's AI engine. Let's in fact hear out the man himself and then we'll get Sandeep's view on this space.
It is my great pleasure and privilege to announce the formation of a new wholly owned subsidiary of Reliance called Reliance Intelligence. This new company is conceived with 4 clear missions. 1, to house India's next generation AI infrastructure. Reliance Intelligence will build gigawatt scale AI-ready data centers powered by green energy and engineered for training and inference at national scale. 2, to house global partnerships. Reliance Intelligence will bring the world's best tech companies and open source communities together. 3, to build AI services for India. Reliance Intelligence will deliver trusted, easy-to-use AI services for consumers. And 4, to house talent for AI. Above all, Reliance Intelligence will create a home for world-class researchers, engineers, designers, and product builders.
Sandeep, lot of queries on this one, Reliance Intelligence. Could you tell us how significant could the opportunity be? If you could break it up for us.
Yeah, sure. So, I used to track Reliance when I was in Edelweiss. the telecom part. So I can say you that, they are doing phenomenal work. And this, if you see what this strategy is and why they have announced Reliance Intelligence now, it is all well timed. So if you see, Perplexity has made a strategic move by partnering with Airtel for free services. And at the same time, OpenAI is giving it 399 rupees per month. Right now, what you need for AI, right? There is a consumer AI and there is an enterprise AI.
Right.
But you need three things. One is the hardware, one is the software, and one is the platform to distribute. So on the hardware, we cannot make all the hardwares today. So what Reliance is doing, they have done a joint venture and they are spending around 855 crore rupees in Jamnagar to buy the servers and the GPUs. So spending that money, they are buying. They're very smart. Sorted. They don't want to make. They will buy it, right?
Correct.
Then they have acquired. They have tied up with Meta. Meta, people think that tying up with Meta will not do big change and all that. But I will tell you, their Llama model. Earlier it was for developer. Now they have started making it for the larger consumer in place. And you see the Meta hiring. They have hired everyone from the best places. So all LLM players, all the AI architects, everything, whichever best talent was available, from base salary of $100 million to 1.4 billion also. Now they have hired the best talent in the world, and they are building this Llama. And I believe that the software part or the LLM part will be addressed soon. So you will have the hardware, you will have the software. Now what you need, third part, is platform. So Reliance has already bought Haptic in 2019.
Okay.
And they will start distributing their offering through this platform because they have already Jio, which has all the information, all the data of the consumers. So I think they have built a wonderful ecosystem, and it is a very well thought thing. How big it will happen, how people will embrace, I don't know that. But I think it is a complete ecosystem which is there today.
Okay, so you believe the opportunity could be very, very large?
Yes.
Do you want to put a number to that?
It will be very big. I think, let me put it this way, that, there are very fair chance of Reliance becoming one of the size of Mag 7 in next 7-10 years if everything goes right. With a disclaimer that, we may be holding, not holding, selling, buying the stock in our PMS or self-client portfolio.
And just to clear it for our viewers, LLM is large language model.
Yes.
All right. Sandeep, we request you to stay with us. We're going to take a snappy break, come back. We'll try to squeeze in a couple of queries. Don't go anywhere. Welcome back. You're tuned in Finding Alpha. You're on CNBC-TV18. We've got time for one query, and we've got quite a few queries on that itself. That's the new listing, Urban Company. What is the view, Sandeep, out here? Do you think that investors should give it a look? Should they be putting their money out there? your brief analysis.
So I will tell you how I think of urban company, right? So I will bring Chotu back into the conversation and also the nuclear family concept. So earlier, our grandparents or parents, whoever was senior in the family, there was a joint family. We used to know the plumber, we used to know some or other person who is doing some kind of work, right?
Correct.
Now with fast, everyone going for work and families becoming nuclear, now, it is not possible to take someone's help, how much time you will ask someone. The guy may not be available at that time. So, that there is a big vacuum that, both husband, wife are working, couples are working. They need someone to come and, solve the problem when they are not there or when they are there at their convenience and all. Now, urban company being or any other platform, they are very professional. They track the guy, they do everything. Moreover, nowadays, there are a lot of security cameras put in everyone's home. So you can track from your office also that whether the guy has come, he's doing, your kids are safe and everything, right? So this is phenomenal, right? They are solving all the problems which otherwise used to consume a lot of time. And people generally see that, what is the incremental cost? What is the relevant costing basically? So I am working in office comfortably and my work is getting done at home. I'm paying 20-30% extra, it's fine, but there is being done by someone professional. Plus, if you have any complaints, they will come back and resolve. Every whole network is there, right? So I think these platforms will again, they are solving a very critical problem for the people and they will do phenomenally well over long term. I'm not recommending anything, we are not invested. But we love the concept of the business.
But you all will be giving it a look ahead of the IPO. Well, Sandeep, we appreciate you coming down. As you're telling us, there's tremendous potential for a lot of platforms. India is not very, very far off of having our own Magnificent Seven. Reliance could be the potential company that makes it to that list or could be heading in that direction itself. And platforms, be it Zomato, Swiggy, InfoEdge, Cartrade, there's tremendous potential ahead. Thanks a lot, Sandeep, for coming down and explaining that to us. Approaching tech with a twist, platforms is the way to go. We've got all your disclosures up for you on the screen, so don't worry about that. Well, on that note, though, we'll wrap up on this edition of Finding Alpha. Thanks a lot for watching.
headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a fairly positive start, if you can call it that. The Hang Seng trading around 0.3% higher.
India and the United States have a special relationship. There's nothing to worry about.
On the way up, 980 to 25,000 and significant resistance zone for the Nifty.
It is helpful. Is it enough? Only hindsight and Trump's tweets will tell.
Income tax cut and the reduction in GST across the board, both of these will spur consumption.
It's higher, 24,800 plus on the index, about a third of a percent up.
So it's going to be good for volumes this quarter, for volumes going into this couple of months.
This is good from demand perspective. Interest rate perspective, I am not yet sure where it goes.
24,800 mark. Right now we are below that, but yes, still there are gains of around 50 points on the Nifty.
They could be in the forefront to grab Jaiprakash Associates assets for around 17,000 crores.
Big price cut for everything we use to commute, no matter it's an entry vehicle car or a luxury car.
Things have taken a turn for the better. Now we are up around 120 points, comfortably above the 24,850 mark.
Well, that is the day so far, and markets are cruising along nicely. It's not explosive on the way up, but it's a decent 100-plus point gain on the index. That is the Nifty up on your screen. I'm Prashant. Ekta is with me here, and Nigel will join us in just a bit from now. Ekta, hi, afternoon.
Hi, Prashant. Yes, absolutely. You know, the markets seem to have picked up pace at this point in time. We have the broader markets which are doing better. So the mid-cap index up around 0.8%. The small-cap index not showing that much in terms of momentum as much as, say, the broader, say, the mid-cap index. But nonetheless, you know, good going really for the broader markets. The advanced decline ratio also has managed to sustain at around 2:1. Consumption stocks, to watch out for that because that seems to be trending lower. The likes of Trent, Nestle, Asian Paints, just to name a few. But we have the auto stocks which are zooming ahead, and that seems to be really the talk for today's trading session, along with the entire metals pack. But let's tell you what we have on the show today. Let's kick off with auto stocks, which continue to surge following the GST rate rationalization exercise. Today's big movers are Samvardhan Motherson, which has given ambitious growth targets, and Bharat Forge, which is surging on strong Class 8 truck orders and signs of a thaw between India and the United States. Momentum also continues in metal stocks, which are surging on multiple tailwinds, like potential rate cuts and China's anti-involution drive. Brokerage Morgan Stanley has also turned constructive on the sector. Swiggy too is in focus, up by about 1% after Nomura upgraded the counter to a buy rating with a target of 500 rupees. So a lot to talk about, Prashant.
Absolutely. By the way, before we go any further, for the Nifty, it is basically back almost, I mean, not almost, we are at the 61.8% retracement of the last fall that we've seen, which is from the high of 21st of August to the low of the 1st of September. 21st high, 1st of September low. So the retracement is 24,878. You know, we took that in a big move right out after that GST announcement. That is on Thursday morning, last Thursday morning. You know, markets opened much above it, crossed it comfortably, and then, of course, we ended sharply lower. And, of course, Friday wasn't all that great either. But today we are back at those levels, exactly there, 24,881, 2 or 3 points away from, let's see, I mean, if this is a hurdle or not. For the Nifty Bank as well, I think, you know, we're basically close to the resistance zone, at least at the lower end of the resistance zone as we put out earlier today. A bit of a sharper move which is developing in the last 5 or 7 minutes of trade. So how should you position yourself in the last hour? Mitesh is with us with exactly that. Mitesh, you know, the broader call is still contracting, ranged. But, you know, you see these moves sometimes. The question, though, is how much do you sort of go along with these moves and try to build positions and play upsides? What would you recommend?
I think for the time being, I would agree that the market is not giving any signs of expansion. But what can happen is that you might head towards the upper end of the range. There are two levels which I'm watching on the upside. One is 25,000 round number. Also is the fact that there's a good amount of call options open interest there. And 25,150 to about 25,250, which is the earlier pivots and retracement area. So in that sense, I think, the market, I believe, is heading at least towards the upper end of the range. We're not sure if a breakout is yet. But with that kind of a view, the buyers should be trading with stock ideas on the long side. I have, in fact, two calls right now. Putco is something, which I like. That's a buy if it starts getting past 219, 219.20. It's trading around that level, just a rupee lower. But a breakout will happen about 218.5. So 219, 219.25 if it clears. Buy with a stop at 215. Look for a target of 227 to about 230. And APL Apollo is the other stock which I like. It's showing a good continuation pattern. So buy here with a stop at 1670 for targets of 1735.
Okay, all right. Individual names there. Mitesh, if I can request you to just stay with us for 1 minute longer. I just want to ask you about the two auto names we want to highlight as well, right? So we're going to talk about Samvardhana, and then we're going to talk about Bharat Forge. If you look at the Nifty Auto Index, Bharat Forge is by far the big outperformer. Let's start with Samvardhana, and Sud is standing by to run us through both these names. Sud, tell us, you got bigger targets and, of course, a fair bit of guidance coming through for the next couple of years from them.
So over the weekend, Samvardhana Motherson has come out with a plan for FY30 and it has given some of the ambitious targets. But before I talk about FY30 target, let's take a look. That company in FY20 had given the target for FY25. And did the company manage to achieve that? So on global light volume front, company had given the target of 98 million units. It has achieved 90 million units. Revenue target was of $36 billion. It has achieved 25.7 billion. And for ROCE, company continues to give 40%, but in FY25, actual ROCE was 18.4%. But what about FY30? Again, company has given an ambitious target. For revenue, it has given of 108 billion versus 25.7 billion that it has seen in FY25. That's an increase of almost 5 times. On ROCE, it continues to give 40%. But some of the other targets that we need to mention first, company is saying that from here, no single company or country will contribute more than 10% to its total revenue. It's very important considering the tariff news that we have been seeing over the last few months. And up to 75% of total revenue will come from the acquisition that companies plan to do in both auto and the non-auto segment. Second, will maintain dividend payout of up to 40%, and more value accretion will be done that company had done of Motherson Wiring. So on the similar line, company is looking to done more value accretion and higher content that company is planning to do, because as of now it's doing major assembly of parts. Now companies plan to do full assembly of the car going forward. Brokers are also positive. JP Morgan has an overweight call, target is 105. Jeffrey has a buy call, target is 110. And Nuvama too has a buy call with a target of 110. And Incred has an add call and target here 170. Now coming to Bharat Forge, today it's up more than 6%. And so if you remember over the weekend, both US President Donald Trump and Indian Prime Minister have made certain statements that both countries respect each other and echo the sentiment that Donald Trump had talked about. And it was tweeted by, again, Prime Minister Modi. So sentiment positive, that has weighed on the stock. Apart from that, last week, just on Friday, we saw that company had released, not company, we had got Class 8 truck sales from the industry, and it has shown an improvement on month-on-month basis. And if you take a look at the historical data, so basically for them, year-wise, year starts in September and it ends in August. So normally from September, we start seeing order inflows. So in 2024 also, September had seen a huge inflow of the orders, and it was up somewhere around 30 to 40% YOY. So there is an expectation that this month we might see a similar inflow. And on stock-wise, if you take a look, it has literally underperformed its peers. It's still down 7% for 2025 versus an uptick of almost 10% for Nifty Auto Index. And if you compare with peers, all the peers are up somewhere in the range of 7% to 40%.
Okay, all right, Sudarshan, thanks very much for that. So Bharat Forge as well as Motherson in focus. Mitesh, what's your view on both of these?
Bharat Forge is something which I like a lot. I think today the way the chart is setting up, There is definitely a pricing volume breakout which is taking place, and as long as the stock now remains above 1180-85 zones, good chance at 1240 is the minimum target, or 1270 looks like to be the more logical target. So from a trading point of view, quite a good stance. Motherson, that's Motherson Sumi System, right? The 100 rupee stock. That's also, given a sign of a turnaround today. There is a historical trend line around this 102, 103 marks. So maybe around this level you might see a breather, but I think once it clears that, this stock should get past to about levels of 111. So again, a very positive chart setup over here, but keep an eye on the 100 to 103 zone.
Okay, Mitesh, thank you very much for that, those trades, and of course your view on these two names as well. Deepan Mehta is with us, Director at Elixir Equities. Deepan, good to have you on the program. The funda view that, what Sud started with on Samvardhana was pretty interesting. FY30 targets, but he started with the targets given in 20 for 25, and whether they've kind of sort of met those targets. And clearly on the three matrices that Sud pointed out, they've not. And there are even bigger targets now. How would you, as an investor, read into some of this?
No, I think it was very well explained and kept in context also, that they couldn't meet the FY25 targets. Then what is the hope that they'll meet the FY30 targets? And next 2-3 years are going to be extremely challenging for any global multinational company, considering geopolitical events and President Trump's various strategies and India's relationship with the US. So it's very difficult for how they can project to FY30 also. I think these are aspirations. They are not targets. They hope to do it if it is possible to do, if at all. And in such a circumstances, I think investor can clearly, not go by those targets and do some extrapolation that maybe stock may start to perform because of that. I'm not in that camp. In any case, I think it's fairly valued at about 31, 32 times. It trades at a premium to some of the other auto ancillary companies globally as well. The past track record has been a bit patchy, as you can see. And it's got so many moving parts, so much of complication, that I think it's best to avoid it. So I would say that don't go by these, kind of tall claims made by the management, and look for better stories in the auto ancillary business.
Okay, all right. Deepan, you have come, I think, positive on the cement space, but I want your view on metals. Let's see what's your view out there. But let's run you through the news space first. Metals in this month itself, the metal index has outperformed the Nifty. And clearly there's a lot of traction that we're seeing out there. The few points that you need to work with regard to the global cues. One is the Fed is likely to cut rates. Rate cuts are good for base metal prices. China's anti-involution drive, that's gaining momentum as well. We had highlighted this last week. And the PMI number, both the manufacturing and services, were a little bit better. In addition to that, domestically as well, or looking inward, we have some protection that's there with regard to steel imports, which is good news, between 11 to around 12%. And China and India, well, that relation is warming up. So that's a positive sentiment. But why is Vedanta sulking? Well, Vedanta, they've gone ahead. They've likely to have emerged as the highest bidder for Jaiprakash Associates. And, that's what source-based information is indicating. My colleague Ritu has brought us this information. The street doesn't like this over-aggression, unnecessary diversification. And Nuvama, they have put in, a few points. They believe that this event is negative for minority shareholders. They're unconvinced with the rationale. They believe they rather look at, at deleveraging the balance sheet rather than this moving into an unrelated space. They're also saying how will this be funded will be interesting, because in a demerged entity, it's likely to be housed under Vedanta Limited. So 17,000 crores is not a small amount. The culmination of the deal, though, that's something that will restrict re-rating of the stock, because if the global metal space is looking up, Vedanta will be absent if they're going to do something like this. Keep in mind, it's not a done deal as yet. This payment as well will be staggered in nature, so we'll have to see how this plays out. Moving to Morgan Stanley on steel, they have gone ahead, they have upgraded JSW Steel, Tata Steel, as well as SAIL. JSPL as well, they have an equal weight out there, target price of around 1,150. They're turning constructive on the spreads. They believe that the anti-involution drive, well, that's gaining momentum. They're seeing green shoots with regard to, global economy as well. And finally, because of all of this, they've gone ahead and increased their steel price estimates by 3% each for the next two fiscals. So that explains why you have all these metal stocks that are buzzing around. And Vedanta, well, they're missing out because of this ambitious, inorganic growth that they're looking at. Deepan, anyone's finding a place in your portfolio, either these ferrous, non-ferrous names. In fact, last Monday here on CNBC-TV18 itself, we had pointed out that IMFA, that's the one that produces ferrochrome. I have not checked the price as of last, but earlier today that stock was buzzing as well. I think it's up close to 10-12% in a week because ferrochrome prices as well have done quite well. Any view?
Nigel, good afternoon. I think I still maintain my negative view on metals. Sure, there could be a trading rally from time to time if you get the cycle right. But end of the day, they are commodity stocks and there's high degree of volatility in their earnings. So for our perspective, it is best to avoid. I mean, I was listening to you on this finding alpha and all platform companies and all that. So, the entire composition and texture of Indian capital markets has changed. And we have to look for more service, new age, new oriented businesses. I think, metals and all in a way are passe. And from time to time, they'll come in the limelight because of news flow. But end of the day, they do not do too much in our investors' portfolio. So for me, entire metal pack is an avoid. And there are so many interesting other businesses which have got listed in the last few months, years or so, and maybe focus should be over there.
Okay, all right. So that's on the entire metals pack. Dipan, just wanted to get your sense in terms of what's taking place with a couple of these consumption stocks today. Trent, for example, is seeing some amount of profit booking. Asian Paints is also in the red. Is that routine or would that be an opportunity to pick up some shares today?
I think still both these companies are pretty expensive and you could be seeing some profit taken in Trent as well. Valuations for Trent still remain quite astounding, although I wouldn't recommend selling it as a measure of disclosure. We are remaining invested in the company, but it's just that one should anticipate slower growth. And if at all, I think returns may be in line with the underlying EPS growth. Asian Paints, I think, still under stress because of the competitive intensity. So that's an avoid from our perspective. But look, I think overall, because of GST cut, many sectors, subsectors have become quite interesting. And if they're able to grow, improve their growth rates, a lot of them could be great investment ideas.
By the way, in the pharma space, so look at something like a Cohance. Cohance is up at about 990 or so. Ekta, I think there was a coverage last week, right?
Yeah.
And I think
there was
initiating coverage from one of the brokers, and I mean it's not very recent in the market. It's been around. It's 5 years in the market, right? Cohance. So that is something which is looking good. Of course, over a period of time, I mean it's actually done well. So 990, 991.
In the last few minutes, suddenly the pharma index has slipped actually. If you look at Dr. Reddy's supply, just pull up the pharma index and the Nifty has come off a little bit from the top. The pharma index has actually moved into the red as we speak.
Sharp move.
Yeah, Dr. Reddy's, Cipla, Sun Pharma, all of them. Ekta, hopefully there's no news flow.
Hopefully there's no tweets overnight or executive orders.
Street is sniffing something. I'm not sure what it is.
As of now, there's a little bit of negative news for Dr. Reddy's. There were those observations, 7 observations to their API facility, which is located in the UK. But it's been down 1% for the entire day. It's down around 1.1% at this point. So let's see. As of now, maybe the street is a bit cautious in terms of what's taking place with pharmaceuticals. But Dipan, what's your sense? Do you think that generics would be under threat in terms of what could be happening when it comes to the US and what they could be doing when it comes to pharmaceuticals?
See, if not immediately, I think this will always remain a big threat for the Indian pharma industry because clearly Trump has said that he wants to get manufacturing of pharma products back into USA. And he's still got another 3 or 4 years or so. So they'll keep on chipping away at it. And that's not great news for Indian pharma companies. And one needs to get extremely selective in the space. No doubt that, these stocks have done well last few quarters or so. But, this particular risk factor, what it will do is it will reduce the PE multiple for the entire pharma industry, especially companies which are exporting to the US. And by selective, I think we need to get into spaces which may not get affected so much in the event of there being any levy on or tariffs on pharma products. So in that space, I think CDMO players, we spoke about Cohance. So there's Cohance, there's Blue Jet, there's Newland, Divi's Laboratories. I think these are the companies, CDMO companies, may be able to weather the Trump tariff far better than some of the other companies like, say, an Aurobindo Pharma or a Dr. Reddy or a Cipla or a Lupin for that matter. So again, I think be selective. And this Trump tariff threat, all it will do is reduce the P multiple because you'll always have this major risk factor.
Okay, all right. Dipan, thanks a lot for joining in and giving us, your view on all of those names. By the way, the markets itself, the last few minutes, pull up the Nifty. That's a bit of a slide that we're seeing from the high point of the day, still holding in the green. But that's a sharp decline that we're seeing. Trent is a stock that at least as it is was down. That slipped a little bit more. Doesn't move the needle too much for the Nifty, but that clearly is one stock that's struggling in today's trading session. Giving it company on the downside is Pharma and Reliance Industries as well, from holding with a gain of close to under percent. That's up only around 0.2%. So keep an eye out on that name. I'll tell you what, we'll slip into a short break. We'll be back. Our Alpha Manager of the Day, Nitin Bhasin of Ambit, joins us on the other side.
Welcome back. Well, for the markets, there are a couple of stocks which are under pressure. So see something like a Pradeep Phosphates is down around 7.5% at this point. And large amount of volumes traded on that one as well. Brightcom is down around 3.3%. So that's a smaller company, but nonetheless. A couple of these banks are seeing profit bookings. So RBL Bank is down around 1%. We have Yes Bank, which is showing some amount of red today. So that stock is down around 1%. We're talking about pharmaceuticals. We have Wockhardt, which is now in the red. So that stock is down around 1% at this point. Cohance holding up well, but even IIFL Finance from that space is not doing too badly. Endurance is also holding up with a good gain of around 2.7%. So there are quite a lot of stocks within the broader markets which are seeing buying at this point in time. But time now to talk about all the top movers in the market. Hormuz is here to tell us what he's looking at. Hormuz, over to you.
There are some interesting moves that you're seeing in the broader markets. You start off, of course, with the space that has been buzzing all through the day, and that's auto and auto anchs. Bharat Forge is one of them. It's the biggest single-day gain that the stock has seen since April of this year, the 6% surge that you're seeing today. Almost well over 30 lakh shares have been traded today, 20-day average of just over 7 lakh. And the 50, 100 and 200-day moving average is within a 10 rupee gap. So this 50-day moving average is around 1190. Then comes the 100-day at 1200, and then the 200 DMA comes at 1208. So it's very close to its 200 DMA, and it's trading well around all of its key moving averages here. The stock, despite this move today, still an underperformer this year, down 12% so far year to date. A stock that has moved on the higher side though is Precision Camshafts, and this 20% upper circuit is the biggest single day gain that the stock has seen since July of 23. This is the 7th straight day of gains for the stock, and it's record volumes that the stock has seen in today's session. Well over 1 crore shares changing hands today compared to a 20-day average of just over a lakh, and it has broken above its 50 and 100-day moving average in today's session, courtesy of its courtesy of this 20% up move. But in 9 years since its listing, the returns that the stock has given from its IPO price is a precious 16% in those 9 years, listed at around 2016 at 186, currently at 220, and already down 40% so far on a year year-to-date basis. IOL Chemicals is the other one, with the biggest single-day gains in September of 23. This 16% move that you're seeing, this is the highest volumes that the stock has seen since December of 24. Well over 2 crore shares changing hands already, compared to a 20-day average of just around 11 lakh shares for the company. The stock has done well this year so far, around about 37% year-to-date, turning out to be the best year that the stock has seen since 2020. And lastly, follow-up action that you're seeing from Friday's move in Shalby. It's up 7% today as well, was up 11% on Friday. The highest volumes that you have seen in the last 12 months on Friday and in today's session. And 40 lakh shares have changed hands today. Well over 1 crore had changed hands on Friday. The 20-day average around about 6 lakh shares. And courtesy of this move, the stock is now closing in on its IPO price of close to 250 rupees. Back to you guys.
All right, Hormuz, thank you very much. Those are interesting moves coming through in the market. Nitin Bhasin is head of institutional equities at Ambit. He's back on the program with us. Nitin, thanks very much for joining us. So this is a bit of a slow burn, right? No big directional moves lasting, but behind the surface, maybe there is some positivity building, and you kind of sort of, once the lid comes off and things explode higher, that's the charitable way to look at things. The other way, of course, is that nothing seems to be sticking very much. And we've had a bunch of these, at least measures from the government aimed at boosting consumption, etc. How would you look at it, and what's the view from here?
Thanks for having me here again. Over the last few months in our interactions, time and again with you and your team, we've maintained that, this last 1 year and perhaps the next 6 months also, the market is not going to be any different from what we have seen till now. Again, very similar to this grinding market where we still continue to prefer large caps over mid caps and small cap. The economic trends, the earnings trends, and we can go deeper into those. They seem to not give you that confidence that a particular bunch of sectors will have a material earnings growth, and hence a stock picker market, a large cap preferred market, all of these measures by the government perhaps only supporting the mood, not accelerating the Indian economy or the earnings growth, I would say.
So 6 months range bound, 6 months more of time correction. Nitin, that's the view.
You can see for yourself, for the last 1 year, Nifty has been pretty much there only. And for the last 1 year, large caps may have delivered a returns of closer to about, let's say, the top 100 stocks, closer to about a few percentage points of positive. Whereas in the last 3 months also, large caps could be positive, but the mid caps and the small caps, no returns to speak of, perhaps would have marginally lost money. So I would say focus more on finding good quality companies, finding companies where valuations are in your favor, and earning estimates look up, because at the larger level, Nifty earnings growth is just 6% for this year in FY26. FY26 is only about 6%. Where do you go out and take a very directional view? So that's my call for our investors. But within that, we can always choose sectors.
Okay. Could you, Nitin, hi, welcome to the show. If you could just narrow down on these sectors that you might be looking at, which do have that earning potential.
I think market, because it has become a very much flow-dependent market, and what we highlight is that if you look at the domestic buying and the FI selling, $54-55 billion came into the markets over the last, let's say, 12 months. Money moves into rotation where there is earnings, where there is lack of earnings. So our call has been, which we've indicated before also, we prefer IT over banks, IT being a contra call. Banks, perhaps we are getting into a little bit of a moderation situation in terms of earnings estimates, revisions, etc. And perhaps also, you never know how the tariff has a quasi effect on the jobs sector, such as gems and jewelry or textiles. Could it become a risk tomorrow? So we would prefer IT, contra view. A lot of earnings cuts are behind us. Perhaps we get into this year, make money over there. That's number one. Number two is FMCG. We've been highlighting again for the last few months, 2 or 3 months now, that rural inflation has been coming off, a reasonably decent monsoon, and now with all the GST cuts, perhaps it helps the more F&B based food and beverage companies or at the value or the FMCG side of it. So we prefer that. And lastly, it would be healthcare / pharma, healthcare followed by pharma. I think those are the three sectors that we have been indicating: IT overweight, FMCG followed by pharma.
Okay, all right. Hi, Nitin. Good to see you. Well, Nitin, all through 2025, we have been talking about the FI positioning at extreme levels. But they're not letting go, right? They continue to sell in the cash market. Lowest in the last 13 years, I think so, in terms of percentage holdings in the cash market. And the short positioning is at the highest, I think, ever, at around 93%. If you look at it in percentage terms. In absolute terms, maybe it got around 5-6%, more to go. What's your take now? There's only so much you can sell, right?
Yeah, I think we've highlighted about this indicator in the past also. This is sort of a contra indicator. When you have such high short positions, it becomes more like a contra position for the near-term bounce. But we see that time and again, the market is neither giving up the ground of 24,500, nor it is gaining anything beyond 25,000 and a few hundred points here and there. So hence, I would say read into this. But the last fortnight, what we have also noticed is they're becoming positive buyers in cash market on auto, in chemicals, and selling a lot of IT and banks. I think FIs also are perhaps trying to figure out where there is a more near-term momentum or where the trends are changing. Perhaps GST led for them to get into the auto companies. So yes, you're right, they can't sell more, but grindingly, they've been selling over the last 12 months. And India remains relatively an expensive market across to the other global markets. So I think this remains for the next 6 months.
What's your sense, Nitin, in terms of how they're approaching consumption?
So in the terms of consumption, me and my team believe that in the near term, at least for the next 6 months or so, the trends appear like the value retail format, the value consumption format from especially rural parts of the world. Within that, you've got food and beverages over HPC, which is personal consumption. I would say those were the trends that could actually stand out. More value, rural, and food and beverage, those sort of things. Premium has held up well in the past. Ultra premium, I'm not doubting that, because we don't see a lot of pain over there either from markets or otherwise. So the ultra premium consumption will stand, but urban consumption, urban mid consumption, urban low consumption should remain under pressure. It's more about, as I mentioned earlier, rural value formats, and within that, food and beverage.
Nitin, we'll leave it there. Good conversation. Thank you very much for joining us here on CNBC-TV18. We'll take a quick commercial break here with news that cool-off has not reversed. That cool-off continues. Just 30 points now on the Nifty, 24,770. And I think for the bulk of the day, we had one dip in the morning, a sharp dip in the morning after the opening gap up. But after that, it sort of continued to build higher and higher. Now, this is the second dip which we are in the throes of. So that's the index. We'll come back, get you quick dealing room check, D-Street chatter with Nimesh, and of course some trading ideas as well on the other side. Stay with us. Well, the cash market is sold off 30 odd points. What's the situation on the futures and options side? Nigel has walked across to the F&O desk. Nigel, tell us.
Well, remember, tomorrow we have the weekly expiry that will be playing out for the Nifty, and there's interesting action out there. So the Nifty, though we're holding mildly in the green, the encouraging part today is that even in uptrending market, when we were higher, we were seeing that there was put writing. So the bulls are making that case where, in fact, in the near term, there is some kind of support. Both the 24,800 put as well as the 24,700 put, both of them have seen a good amount of open interest built up, and the premium out there has crashed. That's telling you the writers at play. However, the Nifty right now, just pull that up, that's up close to around 40-50 points, right? So even if you got the direction right, you went ahead and bought a call, yet you're not making any money. Because just take a look at that call premium, that's not moved anywhere. You know, the 24,900 call or thereabouts, you're not making any money on that one. In fact, the premium is mildly lower. I think we'll have to, correct that particular option play that comes up for you on the screen, because we're talking about the contract of tomorrow. Now, moving to the Nifty levels that we're looking at, the resistance mark, well, it's a recent high, 24,950 to 25,000. That's the important mark. On the downside, going by the options data, 24,600 is the level that you're counting on it holding out. Stocks that are moving around. Bajaj, Bharat Forge, big short covering bounce is what you're seeing. Stock up, open interest down. So we are seeing a bit of a short covering bounce out there. Angel one of the stocks that's corrected 25% from the peak. Well, that as well has come in for a bout of short covering in today's trading session. And autos as a pack is seeing buying today. Whether you're looking at Eicher Motors, stock is higher, open interest built up. Mahindra and Mahindra as well, seeing a good amount of open interest built up. Those stocks are gaining in trade. And Maruti Suzuki as well. The other one we normally look at is stocks that are in and out of the F&O band. RBL Bank, it's still in the F&O band. And, it's still at around 90% of MWPL. So that one continues to remain in the band. There'll have to be a fair bit of unwinding for it to come out of the band. So we'll keep an eye out on that one.
Okay, all right, Nigel. Thanks very much for that. Just watch out for IOL Chemicals also. That one's seen a good gain at this point in time. In fact, it's up around 13%. Good volumes traded on that counter as well. If you look at it, it's up around 20% this month, and it's gained around 33%, 34% this year. So huge outperformance which has come in for IOL Chemicals, as you can see on your screen. Well, time now, however, for our segment D Street Chatter. We have Nimesh who's joining in, and he's going to give us an insight into the dealing rooms and what's taking place. He's going to talk about some stocks as well. Nimesh, give us what the phone calls are picking up today.
I know suddenly there has been a 100-point fall on the Nifty. I'm not sure as to what the reason has been, because I haven't heard any last 30 minutes MOC sell basket or something like that. So need to see what went wrong for the Nifty to collapse so sharply in the last 30 minutes of trade. But in general, the flows have been quite mixed, is what I understand from large institutions. Again, as the Nifty heads towards that very crucial resistance of 24,900, 24,950, we see selling pressure coming in. That's the level to break on the upside for a meaningful short coming rally from here on. So that's the overall feedback from a technical perspective. Auto stands out ever since the GST cut. That's been the big sector outperformer. Even today, the index is up 3%. And today, for a change, a lot of the auto hang stocks have been buzzing and are outperforming. And within the large auto names, it's the export-facing auto stocks which have relatively outperformed today. So that's one space which is doing good, and there is a bit of buying interest as well. Metal is the other space which has done well today. The index has gained nearly 1%. But there is a bit of genuine interest buying from large institutions, is what I understand, in the metal names. And again, there was a Morgan Stanley upgrade as well. So that's also helping a lot of metal stocks to outperform. But generally, from a flow perspective, it's again quite mixed. But it's the one sector which is really outperforming is the auto stocks.
Absolutely. Nimesh, what are you picking up in terms of stocks?
Well, so I'll start with a couple of stocks where I'm expecting large block deals coming very soon. The first one is Kotak Mahindra Bank. A large block expected. Again, a foreign bank owns a little over 1.5%, and they could be the potential seller in Kotak Mahindra Bank. So that's the first stock. Similarly, there is a large block expected in Voltam Transformers as well. In Voltam, my sense is that maybe the promoter entity could be selling 3-4% stake via block deal. So these are two large potential blocks to track in the very near future. The second stock is Manappuram Finance. While gold rising is helped all these gold finance companies, but Manappuram stands out largely on back of very good buying interest. So looks like some institutional interest is back, and this is backed by delivery buying. So that's Manappuram Finance. The third stock is GMDC. That's been a big talking point as well within the dealings in the last few days. Big outperformance and big volumes as well. Some large HNIs have bought in the last couple of days, but looks like there is a lot of HNI interest which is the reason why GMDC has been buzzing of late. And the last is prime focus. Again, I highlighted on Thursday there's going to be a large block. It happened on Friday. The stock had locked an upper circuit. Today there was another large block of 1 crore shares, and now the stock is locked at upper circuit. So in today's block deal, again the seller we know in terms of buyers, couple of HNIs have added is what I understand, and maybe there could be a disclosure of one large FII fund has also bought into today's block deal in prime focus.
Nimish, one other name is MobiKwik. We were talking about this in the newsroom earlier, right? 220 on the 1st of September, 320 today.
Yeah.
Right? I mean, it's 50% this month.
Yeah.
So I don't know what's going on. Yeah, go on.
No, but Prashant, you have to look from the top how much it has fallen as well, right? So it's actually underperformed, and now you're seeing a bit of a pullback. I guess some, like similarly what happened to Ola, some large FIs were sellers, and once that got cleaned out, you're seeing you've seen an outperformance. So I think similar trend is playing out in MobiKwik as well. I'm not too sure about any fundamental reason to this outperformance, but looks like it's more of a technical in nature because of the large supply getting exhausted. You're seeing a bit of a pullback there.
I think ADIA, which is the Abu Dhabi Investment Trust, they sold out their 2.1% stake, but this was last week, and that basically, I think that was a trigger. The stock started moving up from that point, and it's not looked back. But you're right. I mean, the high on this one, MobiKwik, was 698, 700 rupees or so coming through. On prime focus, Nimish, I mean, same set of investors you're picking up, or a newer set?
I guess there are newer set of names which might come. So maybe the existing investors, we all know that Ramesh Damani bought, Madhu Kela bought, as well as Utpal Seth bought. So maybe they would have added more. But in terms of identities, at least I know that there are a couple of other HNI investors who bought in today's block, and maybe you'll see a disclosure of one large FII fund buying into as well in today's block deal.
Well, prominent HNI investors beget other prominent HNI investors sometimes. But interesting. Thanks very much, Nimish, for that. So that's a bunch of specific stock chatter. Always interesting. And that's prime focus. Another circuit, 10% on Friday and 10% today as well. Now, sources suggest that there has been a sharp fall as far as the general insurance premium collections go. This is, of course, for the month of August. And usually we put out the actual numbers. This time we're putting it out a little early. So this is sources for now. Yash is here with details. Yash, take it away.
Well, Prashant, as you rightly said, just at the start of it, let me specify this information is purely source-based at this point of time. But what we've seen in terms of numbers for the general insurance industry in the month of August, the numbers have been weak across the band, be it health insurance companies or general insurance companies. But particularly for New India Assurance, there has been a very sharp drop as far as the August premium collection on a month-on-month basis is concerned. What we've been given to understand is the premium collection for New India Assurance has almost halved in the month of August on a month-on-month basis. For, ICICI Lombard as well as Go Digit, there has been a drop in the premium collection in double digit. Now, to be specific about numbers, sources suggest New India premium collection is down about 47%, coming in at about 2197 crore rupees in the month of August on a month-on-month basis. ICICI Lombard, the premium has dropped by 12%. Go Digit, the premium has dropped by 16%. All these numbers are for the month of August on a month-on-month basis. Niva Bupa Health Insurance, the sharp has been far more contained as far as health insurance companies are concerned. But nevertheless, there's still a drop. Niva Bupa premium collection dropping by 4% in the month of August. Star Health Insurance premium dropping by about 6% in the month of August, all on a month-on-month basis comparison.
Okay, all right, Yash. Thanks very much for that. So that's the general insurance data for the month of August. But Mitesh, back to you. What's your strategy now? What to buy or sell today for a reverse trade tomorrow?
I have one BTS and one STBT call. As for we discussed that earlier, is very clearly a BDST call. Recommend a stop just below levels of 1190. Look for a target of 1220. And LTI Mindtree, in pharma, some stocks are breaking down. So LTI Mindtree is on the negative side for me. Would recommend taking a short with a stop just above 5096 and a target around 5040 on the downside can be looked at.
Okay, all right, Mitesh, thanks very much for that. Just sort of pivoting to a corporate conversation, look at Ola. Ola was up 7% earlier today. It's absolutely flattened out, but so is the market, which was up 120, is up just 20 points now. So my colleague Rachna spoke with Ujjivan Small Finance Bank's CEO and Managing Director Sanjeev Nautiyal, asking him about their plans for Universal Bank license and their FY26 and guidance and beyond. Listen to this small snippet of that conversation. Take that break and see you on the other side.
Our guidance for the financial year 2026 is that we will grow our loan book by 20%, out of which the secured portion would grow by around 35%. We expect to have an ROE of 10 to 12%, and we would have an ROA of 1.2 percentages.
Right, and an asset growth of about 20%. So I wanted to understand, where is this confidence, especially at a time where the cost of funds is so high?
So with the repo rate cuts, we also in the bank have reduced our rates for savings bank and the term deposits. And we think we are very, very competitive in terms of the rates of interest. And we would be able to reach a CASA of around 20% share by financial year 2026.
Okay, 27% was the guidance for FY26 CASA. So I wanted to understand, where would this real push be coming in from, the urban consumers or the rural markets?
So we are focusing on certain select cities and tier 1, tier 2 kind of locations, and we have rolled out a new distribution channel within the liability raising franchise, and we are now segmenting our customers into a high net worth individual, into a corporate salary package, into a NRI customer segment, and we have different teams who are going to focus on these. And we have also bifurcated our teams into a retention and an acquisition team, therefore focusing on both the sides with equal measure. So a lot of initiatives in terms of providing solutions for payments and transactions have been taken by the bank, and I am sure that all these will stand in very good stead for us, and from 25% plus CASA ratio as at March 2025, we should reach the level of 27% share by the end of the year.
Right. You've also applied for the Universal Bank license, as you spoke about. Tell us what the update has been in that process. You said there was a couple of back and forth in terms of some information that the RBI needed.
The application was submitted to the Reserve Bank of India in February 2025, and the Reserve Bank of India is evaluating and assessing our application, and they would be putting up to the appropriate authorities for approval, and we await their decision.
Welcome back. Well, unfortunately, the markets couldn't hold on to morning gains, but still we'll be going home in the green. Anand Tandem is still with us. Anand, give us at least that one stock that you believe still has potential from here on, because the Nifty is still looking jittery, but plenty of opportunities in the broader markets. So tell us something that's come to mind.
Well, I think the one sector that is recession-proof and proof from anything that happens globally would be the hospital sector. It is not cheap, but I think over a period of time, these stocks tend to grow into the valuation. So if you have really a long-term view, I would imagine healthcare, especially hospitals, is a sector that I would kind of favor.
Anand, hi, welcome to the show. Wanted to just pick your brains on the entire CDMO space, if you look at that, because that seems to be, gaining some amount of momentum today. Cohance, for example, is up around 7.5%. We also have a stock such as Loris Labs, which is now picking up a little bit of pace. It's up around 1.5%. What's your sense? Do you think that's a story which could play out further? I mean, Loris has already outperformed this year, and so has Cohance. I mean, not Cohance as much, but Loris. What's your sense on this particular space? Do you think that there's opportunity here?
Well, most of these places are places which one can continue to grow, assuming normal course of business. Loris has been investing a lot in terms of capacity, and it is now time for the capacity to get utilized. And one expects to see that happening over the next few years going forward. India has a natural advantage. There are two issues that one has to look out for. One is that, unfortunately for India, we still import our key starting material from China. So that makes us very exposed to China's trade policies. And one of our largest markets, and perhaps one of the more profitable ones, is actually the US. And that brings us also to the same problem, that given the volatility we have experienced in the tariff policies there, we have a problem as well. The business as a whole, if you were to look at it, we have good chemistry understanding, we have a good quality understanding, we have great relationships with most of the large players who are innovators in the field and so on. So there is nothing actually which prevents us from doing very well in this space, and assuming other things don't shake the confidence, I think this is a sector that can also continue to grow. As I said, the only issue would be how the global trade tariffs, etc., move over the period of time.
So healthcare, right? That's what you're centering, hospitals, drugs, the two areas.
Well, the world is getting older, so is India, and we have yet to find an app that can fix the problem. We have yet to find the, robots that can fix the problem. So till we get to that magic medicine which stops you from aging, I think you will continue to require these services.
By the way, Ekta, on Twitter, I've not read it, by the way. There was this thing trending, Russian cancer,
drug.
Did you see that?
Yes, I did. I briefly saw that the big MNC drugs companies might actually get very jittery looking at that. But I was just also seeing that the WHO has added obesity drugs in the essential list drugs that they have. So that's
which is
that's
your Mounjaros and So. Interesting. We've got some magic drugs, not all.
When you mention magic, that's what comes to mind.
Okay, well, I think market's up about 36 points. By the way, there was some Anand expectation that this back and forth you must have seen, right, between Prime Minister Modi and President Trump. The first overture in that sense from President Trump, hailing PM Modi, and of course the Prime Minister reciprocating warmly. It'll kind of lead to some thaw in relations, and that's like the first step on the ladder down to de-escalation. Any thoughts?
Well, it's difficult to understand what the policy is. The best commentary I have heard, and I will just repeat that in terms of explaining why India became the whipping boy, was that Mr. Trump has decided that he wants to be a peacenik. So he doesn't want to fight China. And one way of not fighting China, as well as showing his displeasure to Russia, is to throw India to the dogs. So, if you can show that by taxing a friend of Russia, you are anti-Russia. At the same time, by not being very friendly to India, you can assure China that they should not proceed, for example, on their stated goal of trying to take over Taiwan, while at the same time not feeling cornered because there is a Quad, would be to put India into the boondocks. and at the same time not attend the quad meeting. So if you were to accept that as the premise why it makes sense for what to do what they do, well then something has to dramatically change for these tariffs, etc., to be withdrawn. Now, some of it could be just signaling, but I would think it will take a little more than that for us to get back to more normal relations.
That personal warmth is to translate to policy action, actual action, right? But again, everyone has got, that's an interesting theory, but everybody's got, all we have is theories in that sense, right? And we're working with theories one way or the other, but I mean, it's got to change and hopefully sooner rather than later. But you're saying, well, don't be so hopeful. It may take a little bit more time than assuming that something will happen quickly. 24/7/70 is where we're at. Anand, stay with us. We're just going to quickly wrap up things here and then come back to you. If you just want to look at the indices, it was out and out an auto day, almost 2.5% gain on the Nifty auto index. And at the number 2 space today is the Nifty EV index. Yeah, there's a Nifty EV index. EV index is up 2.33%. The capital market is the number 3 spot, 1.33% higher. And the consumer index about 1/3% up as well. IT, once again, the biggest loser. So there is no reprieve for the IT stocks. I think we end lower than the low which the Nifty IT index made on Friday. Remember that big swoon which happened in the middle of the session on Friday. And today's close is below the low. So not very comforting here. So 34,350 on the Nifty IT index. Ekta.
Well, yes, and the broader markets didn't do too badly. So we had the mid-cap index, which was up around 0.6%. The advanced decline ratio, even keel, there was a little bit of worsening which took place towards the close of trade. But overall, it's a couple of these pharmaceutical stocks that did well. So Cohance Life did well. It was up around 7.8%. We had Samvardhan Motherson, which was up around 4.4%. IIFL Finance did well, so up around 3% for that particular counter. On the downside, Pradeep Phosphates lost out. That stock was down around 8%. We had a couple of others such as Zaggle Prepaid, Walkhart, Yes Bank, all of these stocks which went home with cuts of anywhere between 1% to 1.5%. But it was specific stocks such as the auto stocks, metal stocks, Vedanta, all of these stocks which really made the market in today's trading session.
Well, that's right, Ekta. From the broader markets, a few more stocks. Taj GVK, we had explained this company around 20 sessions ago that there is a bit of an overhang with a possible large trade. Maybe the street sniffs that that's around the corner. The stock was up close to 7.5% today. Other couple of names here, GMDC, that was up and about in today's trading session, up close to around 6%. And JM Financial as well continues to hold on to gains of close to around 5%. So as we wind up, the Nifty goes home with half a century, the Nifty Bank a century, but the mid-cap index, the triple century. That's why your portfolio is feeling pretty good. Well, we'll wrap up on this edition of Closing Bell. Don't go anywhere. The team of Markets Forward is up next.
Market ends in the green but off highs. Nifty and Sensex deliver mildly higher close, but autos, they continue to bat for the bulls. It's the IT that drags. Mid-caps outperform the blue chips.
Auto and some ancillaries stocks surge in trade. This after automakers dropped rates of its ICE models and players like Samvardhana Motherson set ambitious targets for FY30.
Metal stocks rally today. The index gains nearly 1% on Fed rate cut hopes and improving ties between India and China. However, Vedanta sulks after it emerges as the top bidder for JP Associates.
Hello and welcome to Markets Forward on CNBC-TV18, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vinny Motiwala and with me is my colleague Mangalam Malu as well. Mangalam, a good day is what we started on, but gave up those gains, managing to still close in the green. So I wouldn't say it's that bad of a day, right?
Not that bad of a day, but no different from what we saw all of last week as well, right? The street was hoping for some sort of bazooka rally after the conciliatory tweets that came in from both Donald Trump and Prime Minister Narendra Modi over the weekend. But it was no different. We opened well. Thereafter, we moved higher. And at higher levels, once again, we saw a bit of a supply. So it was the Nifty that ended about 30 points higher. The broader markets continued to do well. But we'll talk about the markets in a short while. We've got you covered for the next 20 minutes with all the big news and key developments on the Lal Street. We get you top corporate voices and all the events that you need to watch out for tomorrow. So let's kick off with the day's market action. Yes, at high levels, we saw some supply, but the broader markets, they did a lot better, making your portfolios feel a lot better as well. But Vinny, it was the auto stocks that continued to do well.
Absolutely. Autos continue to do well. Top sectoral gainer is Nifty Auto. While the drag came in from IT, right? We saw that some bit of a pressure was there on the Nifty IT. At one point of time, it was down almost 1% and then closed with cuts of 0.8%. So that's what we're looking in terms of a market setup. Nifty Bank also managed to see some bit of a gain of 0.1% in today's trading session. But on the show, we have a very exciting lineup for you all, right? So we'll start with the top movers and shakers of the day with Vivek. Also, we'll put the spotlight on the auto sector metals, which rallied in trade. Also try to understand why Vedanta slipped in today's trading session. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. Now let's get started with the first segment for the day. Vivek is joining in with us from the big wall with the top movers and shakers of the day. Vivek.
Well, thank you so much for that. What a choppy trading session that we witnessed, but overall we managed to end the day with more gains rather than losses. Like you mentioned at the start of the show, it was the auto as well as the auto ancillary pack that made all of the moves. Have a look at some of the moves. The auto ancillary pack especially saw Samvardhana Motherson. They had an analyst meet over the weekend. Very strong targets that the company has set for itself. Bharat Forge, a relief rally of almost 6%. M&M continuing its rally. Bajaj Auto up over 4%. Hero Motor too on the back of the news flow of a new CEO being appointed also managed to do very well in the session. The entire metal pack, the Nifty Metal Index. Remember, Morgan Stanley came out with a note today. They upgraded most of the ferrous names. And along with that, you did see most of the ferrous as well as non-ferrous names today making a move higher in the session. Gave up quite a few of those gains towards the later half of the trading session. Prime focus, one stock, on Friday we did see large block deals. Multiple noted investors have checked into this particular name, ended the session on the upper circuit on Friday, and today another 10% for this particular name. MobiKwik, last few trading sessions we've continuously been talking about this particular name. The stock is up for 5 out of the last 6 trading sessions, and in just the last 6 sessions, this stock has seen an up move of close to 46%. And GMDC, one of the top gainers, in fact the topmost gainer as far as the NSE 500 index is concerned. On the other hand, quite a few drags as well. Like you mentioned, the NSE IT index, Friday we did see a freak down move, but it recovered post that. But today there was no relief rally that came about. In fact, most of the names ended the day or the session lower. Vedanta, analysts are worried about the fact that the company has gone ahead and aggressively bidding for non-core assets. The top bidder for Jayaprakash Associates down 3%. And lastly, Asian Energy Services, one name from the broad end of the market, a corporate group simplification that the company has carried out at one point of time was down 10% towards the end of the session. Saw some recovery, down 6% for this particular name today.
Take that point, Vivek. Thank you so much for that. So with that, we'll welcome our guests on the show. We have Jay Thakkar of ICICI Securities and market expert Anand Tandon joining in as well. Good evening, Jay and Anand. Let's come to you, Anand, first. bunch of good news that is coming on the macro front ahead of festive season. Auto sales haven't been too bad. The price cuts will obviously bolster demand, or are expected to bolster demand going forward. The auto pack is doing extremely well. But, good GST cut, good GDP print, all of that isn't reflecting in the markets right now so far. Do you think it's largely because of valuations, everything is priced in, or is there a larger fear that looms on the street?
The numbers that you've mentioned in terms of GST and taxes have been known for a while, and I think are more or less factored in. The numbers in terms of actual production are not actually that great on the domestic side. If you remove what is happening, for example, in two-wheelers and exports, or the non-SUV market for passenger vehicles, or for that matter, if you leave out the tractors, then what's happening on the commercial vehicle sector. The market is kind of toddling around. So, it's hardly a very exciting place in terms of the total volume. Of course, seasonally, you expect that this second half will be better, always has been. And the festive season does drive a very large overall revenue of the full year. But again, will it be a growth compared to last year, and by how much is important? The fact that the government has felt it necessary to kind of trigger, a cut in GST, and the RBI has found it necessary to bring down interest rates also tells you that the consumer demand is weak, and the consumer is also simultaneously over-leveraged. So therefore, to expect a very dramatic increase in consumption also, I think will be a little aggressive position to take. And last but not the least, the fact is that a large part of the thing is also going through a change in the technology. You're moving from ICE engines to EV engines and so on, which brings in new players. So the competitive intensity is also quite high. So net-net, it is not a sector which is going to give you a blow-away rally, even if things do well. At best, you should be expecting a little better performance than what one has seen in the first half.
Right. Jay, can you give your thoughts in terms of Nifty now, what are the levels that we should be keeping an eye on? Tomorrow is that expiry that comes in as well, right? So that, as well as Nifty IT, 5 consecutive trading sessions that we've seen Nifty IT close in the red. Anything that you could indicate on that front?
Sure. Well, as far as Nifty is concerned, I would say, Vinny, that obviously we are not able to see a very good close about 24,800. In fact, Nifty is struggling to close about those levels, 800 to 850 range. And 25,000 definitely is a very near-term hurdle, I think, unless we don't see a close beyond 25,000 on Nifty. The overall bias should be sell on rise, or else it will be sideways to negative. Although we have seen, quite an oversold readings on both Bank Nifty and Financial Nifty, or maybe Nifty IT as well, as you have been saying. I mean, the sectors which have been performing good are probably, Nifty Auto definitely is one sector. Cement is one sector. FMCG did see some bounce, but thereafter got sold off at the higher levels. And, pharma probably is trying to, bounce back from these levels. So these are the 4 sectors, probably, consumer durables as well. So all those related to GST plus pharma. I mean, these are doing good, and rest, I mean, the 50% of the market we need, that is Nifty IT and Nifty Bank. That is clearly under pressure, and I think that till we don't see a recovery there, we're going to see this, Nifty getting sold into at the higher levels. I mean, FI has reduced the selling, momentum or intensity. I mean, last week we just saw 5,000 approximately kind of crores kind of selling in equity cash. Otherwise, it was a one-day figure. So that the momentum has come down, but overall index net long is still below 10%, which is oversold. So I think right now market is finding the direction on the downside. 24,400, that's an immediate support. 25,000 is the immediate resistance. I think market, we need till we don't get this breakout from the 600 points range, is likely to trade with a sideways to negative bias only, mainly because of the pressure on Nifty IT and bank. And I don't see any signs of recovery or short covering on Nifty IT still, despite it trading quite weak, or maybe still, even though we have a lot of shorts there. However, 23,500 is an immediate support on Nifty IT index. I mean, if that holds on, maybe we can say 35,000.
All right, we take that point. Thank you so much for setting that up for us. It's a little tired. It's in a range. It needs to break out of that, even though there are multiple shorts in the system from the FIIs. The auto stocks, they are doing extremely well. So let's talk about those gainers. I mean, they were higher before GST in anticipation of those cuts. They became higher after GST, after those cuts came. And now they are higher because they've cut prices, and add to that, auto ancillaries too have upped their guidance. Sudarshan joins in with what caused these stocks to gain and how they are poised from here.
So what a move the sector has been seeing. The move started on August 15 after Prime Minister Modi spoke about GST reforms and double Diwali bonus. And since then, Nifty Auto Index is up more than 11%. All the leading auto names from TVS Motor to Maruti to Mahindra & Mahindra, Bajaj Auto, Hero, all these stocks are up somewhere in the range of 11 to 17%. Now, today's move came after all these companies have started cutting prices. So for an example, Mahindra & Mahindra has announced price cut up to rupees 1.56 lakhs, and already it has come into effect on September 6. Even Tata Motors has cut passenger vehicle prices by up to rupees 1.55 lakh and commercial vehicle prices by up to rupees 4.65 lakh, and those will come into effect on September 22. And apart from these two names, one Hyundai has gone ahead and cut prices, and that will also come into effect on September 22. Now, talking about auto ancillary names, for Samardhara Motherson, there was a reason. So over the weekend, now company has unveiled its plan for FY30. And now revenue growth target that company has given is of $108 billion by FY30 versus $25.7 billion that it achieved in FY25. That's the growth of more than 5 times. Now, apart from that, company is saying that no country or company will have an exposure of more than 10% to its total revenue. Bharat Forge, it has underperformed its peers in 2025, so we have seen a big run today. The stock has moved more than 6% higher, and also Class 8 truck sales were positive.
Okay, Sudarshan, thank you so much for that. But let's shift focus from autos to metals. When you look at the metal and Nifty Metal Index, that is also something that was buzzing in trade today. And month to date also has seen very good gains among the top sectoral gainers there. Now, today what we're going to be putting the spotlight is on Vedanta. That's sulked in trade, right? And this is after it emerged as the top bidder for Jayaprakash Associates. Now, what is leading to this? Nigel is joining in with us to give us those details.
Well, let's break this up into 3 pieces. First, what's exciting the metal pack? Well, in this month itself, as you pointed out, the metal index has outpaced what the Nifty has done. A few reasons out there. The Fed has gone ahead and is likely to cut rates, so that's always positive for the metal stocks. The second point is China's anti-involution drive. Well, that's picking up pace. That is, they're cutting down on production and they're reducing the supply into the system. That will support prices. Point number 3 is the data coming out of China as well has been looking up, whether it's the services or the manufacturing data. Point number 4, the Indian government itself has put in protection measures that protects the domestic steel industry. And point number 5, India and Chinese bonhomie, well, that's gaining momentum as well. And that always is a positive sentiment. So that's about the metals pack. Point number 2. Why did Vedanta underperform in trade today, in spite of the metals pack doing pretty well? Well, the street is reacting to the source-based information that Vedanta could possibly come up as the highest bidder for JP Associates assets, which will amount to close to around 17,000 crore rupees. Remember, this is source-based information as of now, but you need to know the payment will be over a staggered manner, and maybe the assets as well are pretty good. But the street doesn't like it. They don't want Vedanta to be over-ambitious on this particular asset and, diversify into a space where they're not really present. And that's what Nuvama is pointing out. They believe it's negative for minority shareholders. Instead of going into this diversification, they rather deleverage their balance sheet. So that's why that stock was underperforming. And point number 3 is Morgan Stanley went ahead and they upgraded 3 stocks. There's JSW Steel, Tata Steel, as well as SAIL. While on JSPL, they have an equal rating out there because they're factoring in higher spreads, better global environment, and they've increased their estimates on steel prices. So that explains why metals was in focus today. Back to you guys.
All right, Nigel, thanks a lot for that. Metals in general in focus. However, Vedanta, on account of the street's worries of them bidding for JP Associates under a wee bit of pressure. Anand, the metals pack, do you think, better India-China relations and the prospect of a rate cut by the US offers a decent entry point right now?
Well, neither of those two affect the steel sector in India. If you have better Indo-China, does it mean that in China will be allowed to sell in India? The answer is no. Does it mean that India will be exporting to China? Absolutely not. And if irrespective of what happens in the US, are we able to export to the US given the new tariffs that are there? I don't think so. So frankly, it is simply a protected industry which is growing in terms of capacity because there is also an increased demand, and it is now isolated from the rest of the world. So we are back to pre-1991 levels where you will have a lot of protection and you can therefore make super normal profits. How much you want to pay for that is a question of how long you expect this policy in India of protectionism to continue. If protectionism is bad for the rest of the world, it should be bad for India as well, or is that not logical? So at this stage, should you buy it? It's expensive, but yes, it will be protected, so profits will come through, which is more than can be sent for many of the other sectors.
Okay, Anand, thanks for your view coming in there on the metals pack. But a whole host of other stocks were also in news today, whether you talk about Ujjivan Small Finance Bank, Vikram Solar, Amber Enterprises, DE Development, all of them rallied in today's trading session. What was the reason behind this? Gaurav is joining in with us for that. Gaurav?
Well, yes, first let's talk about Ujjivan Small Finance Bank. During their Investors Day, they have said that by FY30, the loan book growth will be at a CAGR of around 25%, which implies around 1 lakh crore plus of loan book by FY30. And at the same time, they also said that the ROA is going to be somewhere in the range of 1.8 to 2%. So definitely a positive news flow here. Other than that, Vikram Solar, here the company said that they have received a major order for 366 megawatt of module supply from L&T, and as a result, we saw some uptick in this counter. Amber Enterprise also turned in green today, and the reason being that Elgin Enterprises, which is one of the subsidiaries, said that they have secured 1,200 crores of strategic funding from two of the funds, Chris Capital and Incred Growth Fund Capital. Other than that, D Development Engineers, now this company also ended in green today, and the reason being that company said that they have completed their expansion at one of the facilities in Gujarat. With this, the total capacity of this plant is going to be around 30,000 metric ton per annum. Vedanta, we saw some kind of negative flow because of the news flow that the company is a top bidder in Jaiprakash Associates. Other than that, SpiceJet is in focus, and the reason being that company actually reported some decline in revenue of around 34%, and at the same time, net losses that widened almost to 234 crores on a year-on-year basis versus what it was at 158 crores of profits. Max Estate, now this company, we saw company said that they will be acquiring around 7 acres of land in Gurgaon at a cost of around 534 crores and gross development value of 3,000 crore rupees. So definitely a positive news flow here. And lastly, Suntech Realty. Now this company was also in focus because board meeting is going to happen on 30th of September, where they will be considering fundraise via issue of warrants worth 500 crores. So definitely all these stocks are somewhere, we saw some kind of buzz in today's trading session.
Okay, Gaurav, thank you so much for that. But, let's go across to Jay. Jay, your view coming in on any of these names, Amber Enterprises, Ujjivan Small Finance Bank, anything on the charts that you would be watching out for? And Amber Enterprises, that EMS theme, that is something that has been in focus for a while. We've seen the stock run up. Today, a slight bit of that correction we are seeing here.
Yeah, sure. Vinny, I mean, Vikram Solar has less of a data, so would not be able to comment on that. Even for that matter, DE developers. But as far as Amber is concerned, when I look at the derivatives data, we've clearly seen the long build-up in that stock, and particularly until and unless it managed to hold on to the levels of, say, 7,200 to 7,150, I mean, that particular range. This dip should be utilized as a buying opportunity. Overall, we have seen good long build-up out here. The overall sector has also seen a good performance on account of, the rate cuts which has happened on GST. And on the upside, I think that if 7,200 levels are held, then slowly and gradually the stock should inch towards the levels of 7,100. So still the charts, the levels on the charts are intact. The derivatives data is still intact. A one-day fall of 4% doesn't entirely reverse the trend from up to down. But one level to watch out is 7,200, and on the upside, 7,800 levels can be achieved if those levels are held.
All right, take that point. Finally, let's wrap it up with Anand. Anand, your view on the auto stocks, do you like any of them?
I think they are. This is a season where they can do reasonably well, but there isn't too much value in any of them at this stage. I would, if you have to be looking at auto, again, Mahindra is probably the most stable portfolio in performance.
All right, take that point, and that's also the one that has rallied the hardest, almost 52% off their 52-week low and at a record high for that stock. Thanks a lot, gentlemen, for joining in. With that, we'll take a short break, come back, get you all the top corporate voices that were there on the channel today, what they said, and importantly, the key events that you need to watch out for tomorrow. You're watching us here on Markets Forward, the show where we tell you about what took place on street today, but more importantly, prepare you for tomorrow as well. The other things that we watched out for today, some important corporate voices that came through the channel today, and we had TBO Tech, which continued to surge almost 25% this month after the firm said that its acquisition of Classic Valuations would help it scale in outbound travel market globally. In fact, they also added that the US has seen a fair bit of turbulence over the last few years, which got their US business to be flat. Mexico took a hit last year as well. This acquisition will help the firm improve their EBITDA margins and also increase growth in the US markets.
Next up, we also had Federal Bank management who spoke to us. The management expects recovery in demand from the next quarter on the back of GST cuts. Also, it's more confident on large, medium enterprises as against small SMEs, which remain sensitive to tariff. The bank sees no stress in its book despite industry showing concern around small SMEs. Further, the cost of funds has declined and management hopes that the trend sustains going forward. The bank maintains the credit cost guidance of 55 basis points for FY26. Also, the lender claims any further cut will impact return on asset. It's aiming for a 1.5% return on asset in the next 2 to 3 years. That's not all. The lender has approved and approvals to raise stakes in its insurance arm to 30%, which is currently under the process.
All right, and before we wrap up this show, let's get you all the key market events to watch out for ahead of trade tomorrow. Gaurav.
Well, yes, first let's talk about Jane Street versus SEBI. Now, the hearing of this case is going to happen tomorrow in SAT. Remember, Jane Street earlier said that SEBI stands amount of suppression of vital evidence and a breach of natural justice. Other than that, Apple event is also in focus today. Remember, they will be launching a bunch of new products tomorrow. And this is also important given that they're also trying to expand their manufacturing facility in India. Other than that, from the Indian market, we have got a couple of stocks who are going to be on focus. First is Vikram Solar. First quarter's numbers will come tomorrow. So definitely let's watch out for that stock. PNB Housing Finance, now they will have their Investors Day. So let's also see if they are going to give any optimistic targets on the Investor Day. Axis Bank and Swiggy, these companies will be on our radar. And the reason being that they are going to participate in BofA Security 2025 Asia Pacific Conference. Other than that, a bunch of companies who will be in focus on the back of the AGM, which is scheduled for tomorrow, is Concord Biotech, Gujarat Narmada Valley Fertilizers, Deepak Fertilizers, and 5-Star Business. Let's also not forget that tomorrow is the expiry of Nifty and Bank Nifty. So definitely, let's watch out for all these events and see how the day pans out for investors tomorrow.
Okay, Gaurav, thank you so much for that. Surely we'll be keeping an eye out on those important updates. But with that, we're going to wind down this edition of Markets Forward. Thank you so much for tuning in. Don't go anywhere. We'll bring you more news and updates on the other side.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Positive start to the week for the markets. Auto and metal stocks lead the rally while the IT sector drags the markets. Mid-caps outperform the blue chip. President Trump softens his stance on India days after slamming ties as a one-sided disaster, cites a special relationship, says he will always be friends with Prime Minister Modi. The Prime Minister tweets saying he appreciates and fully reciprocates President Trump's sentiments and positive assessment of the ties. Donald Trump vows second stage of sanctions against Russia after Moscow's overnight aerial attacks across Ukraine. A government building in Kyiv was struck by Russian drones. U.S. Treasury Secretary Scott Bessent signaled secondary tariffs on the countries buying Russian oil. Zelensky calls it the right idea. Top automakers announced price cuts days after the GST Council slashes taxes on vehicles, passenger vehicles from Tata Motors, Hyundai, M&M, even luxury car makers like Audi and BMW announced cuts from as low as 30,000 to as high as almost 9 lakh rupees. Commercial vehicles see even steeper reduction in prices. Godrej Consumer CEO Sudhir Senapati says recent GST cuts will boost consumption, also improve competitiveness for branded companies, says consumers will start seeing the reduced prices on FMCG products early October onwards. That's an exclusive. Life insurers industry body and LIC write to the government after the GST Council exempts GST on insurance premium, seeks input tax credit benefit on renewal book, also urges the government to exempt GST on commission expenses. Leverage bets by Indian investors under the margin trading facility near 1 lakh crore rupees see a 13 times jump in 5 years. Hindustan Aeronautics is the most leveraged, followed by Jio Financial and Reliance Industries. A new Supreme Court bench will hear a PIL seeking a probe against Vedanta Group after Justice Vinod Chandran recused himself. The police cites a report by Viceroy Research which claims that Vedanta and its subsidiaries engaged in fraudulent practices. Israel continues its Gaza offensive. At least 21 people killed in the enclave since dawn. Israeli forces destroy another high-rise in Gaza City, bring the number of buildings raised to at least 50 so far. Gen Z's lead protests in Kathmandu against the Nepalese government's social media ban set fire to the parliament building. At least 8 dead after security forces opened fire on protesters. A curfew has been imposed in Kathmandu. Army personnel have been deployed. Well, let's start with the day's market action. As always, the markets closed in the green, but they came off their intraday highs. The Nifty and the Sensex mildly higher today at the end. Auto stocks, of course, continued to be in the fast lane with the index ending 3% higher. That's the Nifty for you. Flat close, flat for the Sensex as well. The mid-cap index up by about 0.5%. But look at Nifty Auto in top gear there, as we pointed out, up by over 3%. Prashant is standing by now to wrap up the day's market action for us. Prashant, the expectation was that over the weekend, the thaw that we saw between India and the US, that would certainly provide some sort of a fillip to the market. It did, but coming off highs at the close.
Well, it was looking like it was going to be a very good session. The morning start was great. There was one brief dip early on, and then there was bought. And through the course of the day, then the market kind of cruised higher, reaching 120, 130 odd point gain on top of Friday's close. And then towards the end came the sharp sell-off, and the market basically ending with minor gains at best. No real news flow, at least not that what we know of at that point. But the market not being able to hold on to those gains. Actually, I mean, you could look at this from a technical perspective as well. From a index level, from a Nifty level, we've come off exactly from an important retracement of the recent fall. So it's a level we put out in the morning as well. The Nifty up on your screen, the Nifty Bank will come up on your screen here as well. Of course, it's an index which has done very poorly as compared to the Nifty. If you take a look at the last few weeks, mid-cap and small-cap indices looked better, but nothing like what we've had over the last few sessions. Now, as far as the large caps are concerned, it was autos all the way. Mahindra & Mahindra, Tata Motors, Bajaj, Eicher, Maruti. These were pretty much the largest gainers on the index. Maybe a few steel names as well. But there also it was only JSW Steel. Tata Steel, of course, was a distant second. In terms of cuts, it was consumer names. Trent was a loser. Asian Paints lost. Nestle was lower in today's trade as well. Broader session, lots of stuff. MobiKwik, I mean, it's up 50% in September. There was a large block where a foreign investor sold their 2% stake. The move began there, and it's done 50% in the month of September. Moschip continues its very, very sharp move on large volumes. Vikram Solar, Cohans is another name which did very well. One more auto name, Bharat Forge. Actually, Bharat Forge was the largest gainer in the auto index. IOL Chemicals was a big mover. Precision Camshaft. There was Cupid. Shalby Hospitals continues to run higher. Stylum, Parag Milk, Zota, Sterlite Tech, Cyan DLM, Style Bazaar, Prime Focus. It's a block we highlighted on Thursday. It happened on Friday, but 20% since. And there was something like a Himmat Singh, a paratextile company, which was higher sharply as well. On the downside, there were a few. Amber was down about 4%. Godfrey Phillips was down 4%. And there was like a Wimta Labs, which ended about 5% in the red as well. So mixed by the close of it, not the promise what we started with, which was a very strong market. Back to you.
Well, thanks very much, Prashant, for wrapping up the market action for us. But let's head straight to the top story this evening. President Donald Trump seems to have softened his stance on India just days after slamming ties with the US as a one-sided disaster. Now, speaking at the Oval Office on Friday, here's what President Trump said. He said he will always be friends with Prime Minister Modi and that there is nothing to be worried about. But only hours earlier, Trump had doubled down on India after Prime Minister Modi visited China to participate in the Shanghai Cooperation Organization summit. Trump had posted on Truth Social saying, and I quote, "Looks like we've lost India and Russia to deepest, darkest China. May they have a long and prosperous future together," end of quote. Now, his post was accompanied with a photograph of Prime Minister Modi, Russian President Putin and Chinese President Xi Jinping from the summit in Tianjin, where they were sharing plenty of light moments together. Now, Prime Minister Modi has responded to President Trump's statement. We'll come to that in just a bit. But here's what President Trump had to say.
I always will. I'll always be friends with Modi. He's great. Prime Minister, he's great. I'll always be friends, but I just don't like what he's doing at this particular moment. But India and the United States have a special relationship. There's nothing to worry about.
Well, that is President Trump. But soon after President Trump's remarks on India-US ties, Prime Minister Modi said that he appreciates and fully reciprocates President Trump's sentiments and positive assessment of their times. Remember, this is the first official response from the Prime Minister to the US President since the Trump administration escalated the tariff offensive. We learned from sources that both India and the US are also working towards finding common ground, signaling a step towards lowering tensions between both countries. However, the Prime Minister will not address the general debate at the United Nations General Assembly, which takes place later this month in New York, where the US President is set to deliver his first address to the UN in his second term. Well, to help make sense of what is going on at this point in time, joining us now is Parikshit Luthra. Parikshit, there's a lot of back and forth that's happened. We saw that statement coming in there from President Trump, but just before President Trump, we saw Howard Lutnick's statement, where Howard Lutnick went as far as to say that India needs to say it's sorry. Now, what do we make of this change in stance? Is it in fact a change in stance at all? And what are government sources telling us on re-establishing contact and engagement with the US?
Well, statements made by Prime Minister Modi and President Trump are the strongest indication of continuing connect between the leaders. That's what sources have told CNBC-TV18. We learned that Indian and US officials have been in regular touch to find common ground. Officials we have spoken to, both in India and US, emphasize that both nations have not changed their overall assessment of the importance of the strategic ties. Trade negotiations have been on for the past few weeks and continue even now. Even as a formal sixth round of talks is yet to be announced. What is the immediate focus? Our understanding is that both sides are in discussions to set aside the 25% additional penalty and reach a trade deal. Sources say that US officials want to see a strong intent from the Indian side to reduce Russian oil and defense purchases. Apart from tariff reduction and reducing the trade deficit, US officials have sought elimination of non-tariff barriers, import limits, and a level playing field for American companies has been sought in repeated trade negotiations. However, the ending of the Russia-Ukraine war is a priority for Donald Trump and the White House right now. And US wants India to make efforts towards ending the war. India, on its part, remains committed to negotiating a BTA, but without any compromise on sectors like agriculture and dairy. So clearly, there is a positive momentum, positive start right now. India will also be carefully evaluating statements coming in from the White House and the Trump administration. And let's take things as it comes. But right now, we're not celebrating. The government is not calling this a truce, but they're saying that, yes, it is at least a positive opening right now.
Prime Minister Modi obviously attaches enormous importance to our partnership with the United States. Where President Trump is concerned, he's always had a very good personal equation with President Trump. But the point is, look, we are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
There is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it, but there is something coming to help them so that this tirade of the tariff is something which they can face, and also suddenly having to look for newer markets is also a challenge, but we'll have to help them out on that.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmalaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs.
And you can watch that conversation with the finance minister that's coming up for you at 5:30 p.m. tonight and 10 p.m. as well. So do tune in for that. Now, Chief Economic Advisor Anantha Nageshwaran says U.S. tariffs may impact India's GDP by 0.5% in FY26. Speaking to Bloomberg, the Chief Economic Advisor said he hopes that the additional 25% tariff is a short-lived phenomena. However, he cautioned that if it extends to the next financial year, then it could pose a major risk to India's growth trajectory. So that's the CEA on the tariff impact. Meanwhile, the 13th round of trade negotiations between India and the European Union currently underway in New Delhi. Sources tell us that the Commerce Minister may meet EU Trade Commissioner on the 12th of September. A key focus area of the discussion will be the protection of certain sensitive sectors, including agriculture. And External Affairs Minister S. Jaishankar will attend the virtual BRICS summit that will convene later today by President Lula da Silva of Brazil. Prime Minister Modi will not participate, while Chinese President Xi and Russian President Putin are expected to be present. This is all virtual. Among other issues, the leaders are expected to discuss ways to deal with Trump's tariffs. In international news, Russia has launched its largest airstrike on Ukraine since the start of the war. The attack set a main government building in central Kyiv on fire, killing at least 4 people. In a post on social media, Ukraine's President Zelensky issued a fresh appeal to allies to strengthen Ukrainian air defenses. Meanwhile, President Trump has said that he was not happy about these attacks and has threatened tougher sanctions on Russia.
Are you ready to move to the second phase of sanctions against Russia or punishing Putin? How was your call with the...
Yes, I think so, says President Trump when asked if he's ready to impose secondary sanctions on Russia. And speaking of sanctions, leaders of the European Union are also exploring sanctions on about half a dozen Russian banks and energy companies. As per Bloomberg, the EU is also planning to target Russia's payment and credit card systems and crypto exchanges. Russian oil continues to be a contentious issue in trade talks. In an interview to NBC News overnight, U.S. Treasury Secretary Scott Bessent has called EU to jointly increase pressure on Russia by imposing tariffs and sanctions on countries buying Russian oil. Meanwhile, Ukraine's President Zelensky has backed President Trump's move to impose tariffs on nations trading with Russia, calling it, and I quote, the right idea. In an interview with ABC News, Zelensky described energy trade with Russia as Putin's weapon against Ukraine. This is a worry for India. Shares of auto companies zooming in trade today after top automakers announced significant price cuts. This comes days after the GST Council cut the GST rates on passenger vehicles. Companies like Maruti, Hyundai, M&M, along with luxury car makers like Audi and BMW have all announced cuts ranging from as low as 30,000 to as high as almost 9 lakh rupees. Sudarshan standing by to give us a breakdown of all the price cuts and what consumers can expect this festive season. Sud.
So August 15, Independence Day, and Prime Minister Modi's speech from the rampart of Red Fort announced a big GST reform after 8 years of its implementation and called it double Diwali bonus, and that triggered a big move in auto names. Since then, auto index is up 11%, and most of the leading names from TVS Motor, Hero MotoCorp, and Maruti to M&M have seen a move somewhere in the range of 11 to 17%. Fast forward to September 13. GST Council held a meeting considering proposals related to GST reforms, and in unanimous decision, Council has approved all the proposals as expected. And what came as a surprising was the decision to implement these reforms from September 22, saving most companies from what it could have been a washout festive season. And in resultant, here comes a big price cut for everything we use to commute. No matter it's an entry vehicle car or a luxury car, the prices have gone for a major revision from as low as of rupees 30,000 to as high as almost rupees 9 lakh. Let's start with Mahindra & Mahindra. It has announced price cut up to rupees 1.56 lakh and has already come into effect on September 6. The Bolero's price drops from rupees 10.52 lakh to rupees 9.25 lakh, a reduction of almost rupees 1.30 lakh. The Scorpio is now rupees 1.45 lakh cheaper. The Thar Rocks sees a cut of almost rupees 1.33 lakh. And their flagship XUV 700 price is now down by rupees 1.43 lakh. Next in the list is Tata Motors. It has taken a cut for both passenger vehicles and commercial vehicles, and that price cut would be effective September 22. In passenger vehicles, cuts go up to rupees 1.55 lakh, and the next one is cheaper by rupees 1.55 lakh. The Safari by rupees 1.45 lakh, the Punch by rupees 85,000, and the Tigor by rupees 80,000. In commercial vehicle segment, reductions are even steeper. Heavy trucks are cheaper by up to rupees 4.65 lakh. Buses and vans by as much as rupees 4.35 lakh, and small CVs and pickups by up to rupees 1.10 lakh. And if you are planning to buy Creta, Venue or i20, take a look at the price cut announced by Hyundai. Prices have been dropped by up to rupees 2.40 lakh. The i20 price is now rupees 98,000 cheaper. Venue price drops by rupees 1.23 lakh, and the Creta sees a reduction of rupees 72,000. The Alcazar by rupees 75,000 and Tucson by as much as rupees 2.40 lakh. Even luxury car makers have joined in and have aligned their prices with the new GST regime. Audi has slashed prices by up to rupees 7.80 lakh. BMW has announced reductions of as much as rupees 8.90 lakh, and Mercedes-Benz has cut prices across its portfolio ranging from rupees 2.60 lakh to as much as rupees 11 lakh. So what next? The big question, will the industry see a revival in demand? We'll have to wait and watch.
So many thanks. Well, that's what's on offer for you if you're out shopping for a car this festive season post the GST cuts. We'll head into a break, but up next, Gen Z lead protests in Kathmandu against the Nepal government, social media ban and set fire to the parliament building. More details when we return. Well, here's a CNBC-TV18 exclusive. Leverage bets by Indian investors under the margin trading facility nears 1 lakh crore rupees, witnessing a 13 times jump in 5 years. Hormuz joins us now with more. Hormuz, take us through what you are picking up. I mean, that's a significant jump there.
There are some interesting insights dug up by our colleagues Yusuf and Ruchit about this margin trading facility and how the leveraged positions have seen a significant increase over the last 5 years. Now, compared to the end of 2020, when this figure stood at around 7,500 crore rupees, this figure now, as of Friday's closing, stands at close to 95,000 crore. That's a 13x jump from this 5-year period that you have seen. Now, even if you take a look at it on a year-on-year basis, not just the absolute figure, but also the number of shares which have been on leveraged positions have seen a 10x jump in the last 5 years, from just around about 50 crore shares at the end of 2020. That figure as of Friday's close stands at close to 480 crore shares. Now, how does this margin trading facility work? Now, this facility is offered by brokers to the traders or the investors who want to purchase shares beyond their present capital. Now, for example, if you are buying shares worth around 1,000 rupees, you can put up the upfront margin requirement of say around 200 rupees, and the rest of the 800 can be funded by the broker. Now, in this case, when the stock moves up, it of course becomes a profitable trade for you, but the risk arises when the stock moves lower and then your positions are under threat, because the broker then has the permission to square off those positions, and because in case you are not able to provide additional collateral to the broker. Now, in a weaker market, such accelerated selling could further accentuate the pressure on the downside for the markets. Now, which are some of those stocks that are the most traded under this MTF? Now, mostly it is the blue chip names or the PSU stocks or stocks which have a large retail concentration. You take a look at the blue chip names: Reliance Industries, TCS, Tata Motors, all of them find a name here. Geo Financial Services as well. Some of the PSU names here. HAL is top of the pile in this list. We take a look at other names like BEL, Mazgaon Dock, and of course a lot of these retail holdings where Suzlon Energy, Yes Bank, CDSL, all of these names find a mention in this list.
All right, Hormuz, many thanks for joining us. Interesting data there. Now, a new Supreme Court bench will hear a PIL seeking a probe against Vedanta Group after Justice Vinod Chandran recused himself. The police cites a report by Viceroy Research which claimed that Vedanta and its subsidiaries engaged in fraudulent practices. Oyo is no longer Oyo. The parent company of the hospitality chain has rebranded itself as Prism, a move it says reflects its global portfolio and premium positioning. The rebrand marks its corporate identity shift for Oyo since its founding and ahead of its expected IPO filing in November. Rachna joins us now with more. Oyo, now Prism. Rachna, what's the story?
Well, big changes are underway at Oyo. Sources tell CNBC-TV18 that the parent company has not yet filed for its IPO, but when it does, it will be under a new corporate name, Prism. The rebrand comes after extremely weak institutional investor sentiment, as we understand from our sources. This was around the brand name Oyo that has prompted the company to reposition itself as a global and premium-focused entity. Now, Oyo was founded in 2012 by Ritesh Agarwal and began as a budget hotel aggregator in India, standardizing small hotels and making them affordable. Over the years, they have expanded for beyond just that. Now they have a portfolio of hotels, vacation homes, co-working spaces and celebration venues, serving over 100 million customers across more than 35 countries. So under the new architecture, the Oyo brand will continue as the consumer-facing budget hotel chain, while Prism becomes the parent company identity, uniting a diverse portfolio that spans Motel 6, Townhouse, Sunday, Palette, Belvilla, Dance Center Studio, Prestige Studio, which is in the US. Now, this along with their Innovate, which is a workspace, and Weddings.in, which is a venue space. Financially speaking, Oyo has turned around sharply, posting a net profit of 229 crore rupees in FY24 and is estimated to have about 620 crore rupees in profit in FY25. Speaking just of Q1 FY26, it's supposed to be around 200 crore rupees, which is more than double of just last year. Now, what we also understand from our sources is that the IPO filing is expected sometime this year, mostly in November. So all eyes are on whether Prism can restore investor confidence and showcase Oyo's global ambitions.
All right, Rachna, many thanks for joining us. Oyo now. Prism. Thousands hitting the streets of Kathmandu days after the Nepal government's decision to ban 26 social media platforms and applications. The Oli government claims that the entities had failed to register with the government under the country's new social media regulation laws. The registration rules come ahead of a proposed wider legislation. What started off as an online protest led to a large-scale demonstration after students in schools and colleges poured onto the streets. Protesters clashed with security forces. They tried to breach the barbed wires outside Parliament. At least 8 dead after security forces opened fire on protesters. A curfew has now been imposed in Kathmandu and army personnel have been deployed. Well, trouble times there in Nepal. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
Hello and welcome to Finding Alpha. On today's episode, we focus on how to identify and invest in structural growth themes through platform businesses. To help us unpack this theme, joining me on the show today is Sandeep Agarwal, Fund Manager at Sovilo Investment Managers. From digital transformation to new age consumption, well, Sandeep will be shedding light on why platform-led models could be the next big driver of wealth creation. Well, Sandeep, thanks a lot for coming down and welcome to the show.
Thank you, Nigel, and good afternoon. And thanks to all your viewers, your production team, and everyone who enabled this. So before we start this discussion, I would like to just give a disclaimer because we run a SEBI-registered PMS. So we may hold, buy, sell any of the stocks discussed during the conversation in self and client portfolio. Hereby sharing my thought process and industry insight and not providing any direct or indirect recommendation on any of the stocks.
Got it, Sandeep. We'll get that disclaimer periodically up for our viewers as well on the screen. So, the regulators are well, they're satisfied with what you say. But we want to learn a lot about tech-related plays and also platform companies, because today we're talking about tech with a twist. So let's get first, to this question that we discuss quite often actually. Why hasn't India produced, say, a Magnificent Seven type of tech giant yet? Could you tell us what's holding us back? And do you believe actually we're headed in that direction? We're getting a little impatient.
Yeah. So it is a very interesting question. And Nigel, let me tell you that, evolving a platform like Mag 7 type of companies, it takes time. It is a factor of GDP growth rate. It is a factor of how internet is spreading and all those things. These platforms, if you see Mag 7, I am tracking for last 20 years, they have evolved over a period of time. You will be surprised to know that Microsoft listed in 1986 at $750 million valuation only. And at that time, US GDP was $4.9 trillion. And we are not yet there. And we are seeing in India small caps listed at $750 million. So I think, we in our country also now when GDP comes in, when GDP starts growing and the incremental money which comes, this money, allows people to spend on different things which generate the need for platforms, and that is how the ecosystem of tech develops.
So Sandeep, just to get this clear, you're talking about Microsoft when it listed as a percentage of the US GDP was how much? Currently, what is it? And if you could tell us, what about our guys? Here we talk about TCS, Infosys, Reliance. Where are they as a percentage of GDP, since you're comparing the market capitalization as a percentage of GDP? Tell us more.
So when Microsoft listed, it was in 3-4 decimal places as a percentage of US GDP.
Okay.
Today, it is in double digit, 13-14% of US GDP, which is a huge number. But if you see the journey also, as GDP grows, the incremental amount which comes up, more and more goes to these players who are in platform enablers, because they make life easier for everyone. So that is how in India, I think if you see today Reliance and TCS, they are 1 to 5% of the India GDP. So they are doing phenomenally well, and I think they have listed at much higher percentage of GDP than what you have. May not be Reliance, but TCS at least, because TCS listed at $10-12 billion in 2004. So we are doing great in my view, and we need to see data in full perspective. We cannot just say that Magnificent 7 is doing phenomenal and we are not doing.
Okay. So you're saying in the coming years, as India scales higher into a bigger economy, you're expecting these companies' market cap as a percentage of GDP to go to double digits?
Yeah, absolutely. I think it will go.
Okay. All right. Now let's talk about the platform business itself. Could you tell us which are the platform businesses that excite you right now? And also there's plenty of talk, right, about getting in early, pre-IPO and the likes. What is your comment on that?
So, platforms are very interesting business. So I will just tell you why platforms become important and how they grow. So for platforms, one thing is internet spread and internet penetration, which has gone up substantially in last 7-8 years. So India has become a platform-friendly country in only last 8-10 years because our affordable telecom and affordable and good reach and good bandwidth has been available in last 8-10 years only.
Okay.
Now, second thing is why platforms are becoming important, because if you see the fertility rates in last 20-25 years, they have fallen from 2.5 to now below 2, which means that you are below replacement level. And now you add to that the falling population growth rate, it is now below 1%, which was around 1.5, 1.6% 2 decades back.
Okay.
And now you add to that the nuclear family concept. People are working, both partners are working and all. So earlier, the chotus of your home who used to do your small stuff, bring this thing, bring that thing, that has been replaced. There was a vacuum, right? And that space has been taken by these delivery platforms, whether it is Zomato or Swiggy or whatever.
Right.
So it is a very interesting way, and this will increasingly, as you move forward, this will continue to replace those chotus in the rural. Right now, they have replaced the chotus in the urban and semi-urban. And it needs internet, it needs platforms, and it needs delivery, everything. And it will happen, and it will grow very phenomenally in my view going forward.
Talking about the chotus, I used to be a chotu at my home, and I loved it, go and help out. But I don't know whether the kids will do that right now. But as you're saying, you believe that these platforms like Zomato, Swiggy, they still have a longer runway going ahead. Let me get in a soundbite first. In fact, Sanjeev Bikhchandani, who is the founder and executive vice chair of InfoEdge, explained how no one thought that Zomato's market share could rise to a point where it is now. Let's listen in to that comment.
We got lucky in Zomato that we went there into Zomato in 2010, and we were so low in the first 4 rounds. And then the floodgates opened of capital, and suddenly they got as much capital as they needed and wanted and more.
Yeah.
Okay, and now I haven't checked last week, but last time I checked, the market cap was over 3 lakh crores.
Over 3 lakh crores, that's correct.
Yeah, but so you got to go in early. You got to stay the course. You got to demonstrate commitment and faith and keep on investing. And you have to be right.
Who would have thought after that rocky listing, Zomato had more than 3 lakh crore. In fact, but we also spoke to Swiggy's leadership, who spoke on the dream for Swiggy and where they expect to reach their goal. Let's listen what they had to say.
As I spoke, right, like for us, it's
100
million people 15 times a month.
100 million people 15 times a month.
Yeah.
And, ballpark, when do you believe you'll be able to get there?
See, they say, right, like you overestimate the short term and underestimate the long term. So my heart says, yeah, hopefully in the short term, but I think it'll probably be 10 years.
We looked at general data as well. The quick commerce penetration in proper urban, where you would expect it to be very high, still lower than the modern trade, penetration. So I think there's still 2 to 3 years of clear opportunity available there. T2, T3 is like whole ocean still essentially actually lying there. We believe, as we said, right, we are in Bhubaneswar, we are in Patna, we are going all the places. Those cities really surprise us. I mean, I think
what's been the biggest surprise in operating in a Patna, in a Bhubaneswar, etc.?
I think Patna we launched, and in like 4 or 5 days it reached honestly 1,000 orders without even advertising or even informing people.
Interesting times. Sandeep, but tell us, about the entry time. Everyone wants to get into the race early, because they want to make the big money. What is your view on that, about entry pre-IPO? Sometimes it's very risky as well. A lot of investors you hear who have burnt their fingers. Your take?
Yeah, so, Sanjeev is master of when to enter and how to enter. So, no one can probably match him. He's different. But let me give you some data which will give you an idea. So, Amazon listed in 1997, right? Till 2015, their net income went up only 20 times. But their burn went down from 21% negative to 0%. And in this period, the market cap went up more than 200 times, right? Now, after 2015, when they became profitable, their net profit has gone up by 117 times, but market cap has gone up only 8 times. The point I'm trying to make is that you have to match, the formula is that, your incremental growth should be much higher than your incremental burn. So your burn ratio has to consistently fall, and when you see that, that is the time when highest value creation happens. Once it starts making profit, all the big institutions come and everyone comes, so your returns will also be a compounding story and not a multi-bagger story. That has been the story across the globe in all platforms broadly.
So Amazon till 2015, the burn ratio came down from what to what?
21% to 0%.
Negative 21% to 0%, and from 2015 to 2025, it went up
from 0 to 11%.
11%. Got up. That's the big swing out there. Got it. Now let's talk about the other aspect. Most people talk about hotels and airlines when it comes to tourism. But you've spoken about some unconventional thoughts that you have, some unconventional angles, including the rich biodiversity and the big cats that India hosts. Could you explain that to us before we get to the market relation over the big cats? That's a big attraction in India.
So I'm a big fan of tigers and I love tigers. So I will give you some data. There are 573 wildlife sanctuaries in India, and India is the only country where you find one-horned rhino, you find snow leopard, you find now cheetah, which is imported, you have Royal Bengal tiger, and you have Asiatic lions. Nowhere, including Africa, you won't get tigers, right? So this is one country where you get everything, right? And they have more than 400 rivers and more than 1 lakh water bodies. Our team has done research which says that out of 780 districts in India, majority of them, more than 80-90% of them, have water body, hill station, religious place, or wildlife, or a combination of 2 or 3 of them. So we are very, very well placed to grow tourism in a big way. And when tourism grows, then platforms will grow in a very, very different way, because to handle such a traffic, on an exponential basis and on a year-over-year basis, to give experience and good quality of customer experience, you have to, enable more and more platforms. So I believe a lot of platforms will come in the tourism side.
Okay, all right. But how do you play this theme? If you could help us out on that aspect as well. If I'm looking at playing the tourism play via an app or via a platform, what comes on your radar?
So, right now, even for hotels, we are also, playing through the listed hotels and small hotels and all that. And there are 1 or 2 car travel agencies, we are playing that. But we are very keen that, something which comes and replaces or is a quasi Airbnb in India and gets listed, we will like to play that theme, because this is going to be a very big theme. And also, this theme will also be a catalyst to Zomato and Swiggy also, because when tourists go to a particular place, they will order sometimes in the evening, they will go in the morning somewhere, but in the evening they will like food to be delivered in their hotel or lodge or wherever they're staying.
So from the hotel place that you're looking at, in the unlisted space, I think you're still researching on OYO.
Right.
That's something that you're looking at. And from the listed pack, with all due disclosures, Ecos is a company you like.
Yeah, we like it, but we may or may not be invested. So
okay, all right. Ecos Mobility, got it. Now, we have a viewer query that's coming in, and since you're sounding very, very optimistic about these food delivery apps, they are becoming a household habit. So the query is that itself, because you're talking about this, but could it have an impact on health trends? And that's what could position diagnostics for strong growth. Do you agree? How should investors play this theme with regard to the diagnostic space, given that there's going to be so much of eating from out?
Oh, fantastic question by whoever has asked, and thanks for the question. So, see, what happens is right now, whatever food you're ordering from outside, and the foods are being ordered because lifestyle is becoming more and more busy. Both the partners are working. Kids have different choices of food. They need it instantly, right? So, and it is becoming incrementally difficult to get help for cooking food and all that. So, people are ordering. Now, obviously, when this food is ordered and when it comes home, you have to reheat. So, it reduces the nutrient constituent of that food. So, obviously, after 10, 15 years, I believe a lot of preventive healthcare and the curative healthcare will pick up because of these habits, because they have their own setbacks. And I think that is the place where, diagnostic will become very big. And again, in diagnostics, you will see a lot of logistics chains evolving, a lot of platforms coming in.
Okay, all right. Taking that, that discussion a little ahead then, could food delivery platforms themselves, get into this diagnostic space, and there could be unexpected growth even from here? Could this be an optional value?
It could be, because they already have lot part of that system, but I think this will need different skill set, and I am sure that if not the direct food delivery guys, someone else will develop and come out with it.
Okay, all right. You're also bullish on other platforms, right? I think Book My Show is something that you've liked. In the automotive space as well, I think you liked Car Trade, if I'm not mistaken. So tell us the investment rationale there.
So again, rationals are broadly similar. Both the family members are working. They don't have time. No one can go and buy the tickets on the stand in queue and buy tickets. Plus, platforms give you the choice to select the seats and all that, So it is much, much easier. So it is convenience. See, technology and platforms make life convenient, easier, and they save time. And that's why anything which is enabling those, and if they have the right content or right offering, for example, if you go to Book My Show, they have everything, any drama, anything you want to buy ticket for, everything is broadly available. Even the World Cup tickets were available. So basically, they are an aggregator. So I think, they will also do phenomenal well, and they charge a bomb for fees. I have just recently experienced it.
Okay. No, so that's Book My Show, and that clearly, there is a lot of potential. But from a stock market perspective, investor, perspective, they will want to understand what about Car Trade. I think the stock is up 2-3 times in the last 1 year. It did some inorganic growth as well. Is there a bigger potential for companies like these?
Yeah, absolutely. Because, again, all the platforms are addressing the same thing. They're saving time. They are giving you more choices. They are giving you bids and all those things. So, all these platforms have a very big advantage of giving you everything at your fingertip. And your mobile is basically the place from where you can do everything. So, as long as that factor is addressed, I think platforms do well. But in platform business, only you have to be careful that, whoever has the maximum footprint or whoever has the maximum audience, they are the winners. Not everyone can make money because the burns are very high.
Okay, all right. Sandeep, I'm just going to drift a little bit away from the platform themes because, there is some work that I've done with regard to capex spend as well. So when a company announces a capex spend, you often break it down into 3 broad pieces. So explain that to us, walk us through that, and also highlight where there will be real opportunities. So, assuming someone is going ahead and announcing a big capex, break up the top 3 segments that you're looking at, and where is the opportunity?
So, Nigel, very good question again. So, we roam around in all the important districts, industrial districts in the country, in Gujarat, Karnataka, Tamil Nadu. We try to find what is happening on the field. My team is mostly on the road, and it is a large team which is doing that. So, what we are observing consistently when we speak to the promoters of these companies in the manufacturing side, if you see if the capex is total 100 rupees, then 30 to 40 is core machinery, which is generally imported from China, Japan, Sweden, all these countries, right? 30 to 40% is ancillary, right? You are putting the utilities, you are putting some of the machines which can be made in Rajkot, Ludhiana, or some parts of the country. And 15 to 20% is the shade, the whole development of the site, right?
Right.
We are seeing that in shade, almost it is 100% indigenous. In the ancillary, there are 2 reasons. One, why we are able to develop in India, because the core machinery is not very complicated. It is more fabrication, welding, customizing and all that. This needs a lot of space, right? And the transportation and the logistics is a very, very big challenge. And that is the reason this is today already being made in India. You see, if someone is announcing 100 crore of capex, broadly at least 60% will be done in India.
Okay.
So that is a very big theme which we
So which
play.
is the component that's being imported out of the three broad categories?
So all the ancillaries, like, the chimneys
so
and everything.
machinery and shed is where there is that...
core machinery we import, shed and the ancillary we make in India.
We make in India.
Yeah.
Got it. And which are the companies that could potentially be the plays out here from, which are into these three big segments that you're talking about?
So I think, with all disclaimers in place, I think there are a lot of companies which are doing superb work in the ancillary side, and the good part is the companies which are doing ancillary, they are also slowly promoting towards making the core, right? Because the cost differential is huge and they learn and they do reverse engineering. So we have seen great work being done by Anup Engineering, Elecon, so many of the companies which are doing superb work in that space also. And Ajax is also there, Kilburn is there. And you will see more and more unlisted companies coming out in this space which are doing the ancillary or the side. And this is really, really very core to the country. And, it will slowly move up the value chain, and you will see that 30-40% of core machinery going down to 15-20% in the next 7-8 years.
So some of these companies, Azad, Anup, Kilburn, Shelly Engineering as well, they've already seen a big run. So do you think investors that are getting in, they have to be ready for a longer run? Because the potential is huge, but in the near term, they could have run up a good bit. Would that be a fair estimate?
Yes, you are absolutely right. So, price earning ratio is very important. PEG ratios are very important. People have to see that because, sometimes this stocks built in next 5, 7, 10 years of growth. So there could be time correction and there could be price correction, and, investors can suffer. So that is the challenge. So you have to identify them at a right price. Anyone can identify because you just put in screener, everything is there.
Right.
But right price, right management and all those things, all hygiene factors have to be in a place. But this space is very good.
Okay, all right. Let's focus on Reliance as well. But first, at the recent Reliance AGM, Mr. Mukesh Ambani unveiled Reliance Intelligence as India's AI engine. Let's in fact hear out the man himself, and then we'll get Sandeep's view on this space.
It is my great pleasure and privilege to announce the formation of a new wholly owned subsidiary of Reliance called Reliance Intelligence. This new company is conceived with 4 clear missions. 1, to house India's next generation AI infrastructure. Reliance Intelligence will build gigawatt scale AI-ready data centers powered by green energy and engineered for training and inference at national scale. 2, to house global partnerships. Reliance Intelligence will bring the world's best tech companies and open source communities together. 3, to build AI services for India. Reliance Intelligence will deliver trusted, easy-to-use AI services for consumers. And 4, to house talent for AI. Above all, Reliance Intelligence will create a home for world-class researchers, engineers, designers, and product builders.
Sandeep, lot of queries on this one, Reliance Intelligence. Could you tell us how significant could the opportunity be if you could break it up for us?
Yeah, sure. So, I used to track Reliance when I was in Edelweiss, the telecom part. So I can say you that, they are doing phenomenal work. And this, if you see what this strategy is and why they have announced Reliance Intelligence now, it is all well timed. So if you see, Perplexity has made a strategic move by partnering with Airtel for free services. And at the same time, OpenAI is giving it 399 rupees per month. Right now, what you need for AI, right? There is a consumer AI and there is an enterprise AI.
Right.
But you need 3 things. One is the hardware, one is the software, and one is the platform to distribute. So on the hardware, we cannot make all the hardwares today. So what Reliance is doing, they have done a joint venture and they are spending around 855 crore rupees in Jamnagar to buy the servers and the GPUs. So spending that money, they are buying, they're very smart. Sorted. They don't want to make, will buy it, right?
Correct.
Then they have they have tied up with Meta. Meta, people think that, tying up with Meta will not do big change and all that. But I will tell you, their Llama model, earlier it was for developer. Now they have started making it for, the larger consumer in place. And you see the Meta hiring. They have hired everyone from the best places. So all LLM players, all the AI architects, everything, whichever best talent was available, from base salary of $100 million to $1.4 billion also. They have hired the best talent in the world. And they are building this Llama, and I believe that the software part or the LLM part will be addressed soon. So you will have the hardware, you will have the software. Now what you need, third part, is platform. So Reliance has already, bought Haptic in 2019.
Okay.
And they will start distributing their offering through this platform because they have already Jio, which has all the information, all the data of the consumers. So I think they have built a wonderful ecosystem, and it is a very well thought thing. How big it will happen, how it will people will embrace, I don't know that. But I think it is a complete ecosystem which is there today.
Okay, so you believe the opportunity could be very, very large?
Yes.
Do you want to put a number to that?
It will be very big. I think, let me put it this way, that, there are very fair chance of Reliance becoming one of the size of Mag 7 in next 7-10 years if everything goes right. With a disclaimer that, we may be holding, not holding, selling, buying this stock in our PMS or self-client portfolio. So,
and just to clear it for our viewers, LLM is large language model.
Yes.
All right, Sandeep, we request you to stay with us. We're going to take a snappy break, come back. We'll try to squeeze in a couple of queries. Don't go anywhere. Welcome back. You're tuned in Finding Alpha. You're on CNBC-TV18. We've got time for one query, and we've got quite a few queries on that itself. That's the new listing, Urban Company. What is the view, Sandeep, out here? Do you think that investors should give it a look? Should they be putting their money out there? Your brief analysis.
So I will tell you how I think of Urban Company, right? So I will bring Chotu back into the conversation and also the nuclear family concept. So earlier, our grandparents or parents, whoever was senior in the family, there was a joint family. We used to know the plumber, we used to know some or other person who is doing some kind of work, right?
Correct.
Now with fast, everyone going for work and families becoming nuclear, now, it is not possible to take someone's help, how much time you will ask someone. The guy may not be available at that time. So, that there is a big vacuum that, both husband, wife are working, couples are working. They need someone to come and, solve the problem when they are not there or when they are there at their convenience and all. Now, Urban Company being or any other platform, they are very professional. They track the guy, they do everything. Moreover, nowadays, there are a lot of security cameras put in everyone's home. So you can track from your office also that whether the guy has come, he's doing your kids are safe and everything, right? So this is phenomenal, right? You know, they are solving all the problems which otherwise used to consume a lot of time, and people generally see that, you know, what is the incremental cost, what is the relevant costing basically. So I am working in office comfortably and my work is getting done at home. I'm paying 20-30% extra, it's fine, but there is being done by someone professional. Plus, if you have any complaints, they will come back and resolve. Every whole network is there, right? So I think these platforms will again, you know, they are solving a very critical problem for the people and they will do phenomenally well over long term. I'm not recommending anything, we are not invested. But we love the concept of the business.
But you all will be giving it a look
absolutely.
ahead of the IPO. Well, Sandeep, we appreciate you coming down. As you're telling us, there's tremendous potential for a lot of platforms. India is not very, very far off of having our own Magnificent Seven. Reliance could be the potential company that makes it to that list, or could be heading in that direction itself. And platforms, be it Zomato, Swiggy, InfoEdge, Cartrade, there's tremendous potential ahead. Thanks a lot, Sandeep, for coming down and explaining that to us. You know, approaching tech with a twist, platforms is the way to go. We've got all your disclosures up for you on the screen, so don't worry about that. Well, on that note, though, we'll wrap up on this edition of Finding Alpha. Thanks a lot for watching.
Hello, welcome to News Center. I'm Parikshit Luthra. The top story this evening: Donald Trump has softened his stance on India days after slamming its ties with the United States as a one-sided disaster. Speaking at the Oval Office on Friday, Trump said that he will always be friends with Prime Minister Narendra Modi and that there is nothing to be worried about. Only hours earlier, Trump had doubled down on India after Prime Minister Modi visited China to participate in the Shanghai Cooperation Organization Summit. He posted on Truth Social saying, and I quote, "Looks like we've lost India and Russia to the deepest, darkest China. May they have a long and prosperous future together." End of quote. His post was accompanied with a photo of Prime Minister Modi, Russian President Putin and Chinese President Xi Jinping from the summit in Tianjin, where they were sharing a light moment. Prime Minister Modi has responded to the statement. We will come to that in just a bit, but first let's listen in to what the US President had to say.
I always will. I'll always be friends with Modi. He's great. Prime Minister, he's great. I'll always be friends, but I just don't like what he's doing at this particular moment. But India and the United States have a special relationship. There's nothing to worry about.
Soon after President Trump's remarks on India-US ties, Prime Minister Narendra Modi said that he appreciates and fully reciprocates President Trump's sentiments and positive assessment of their ties. Remember, this is the first official response from the Prime Minister to the US President since the Trump administration escalated the tariff offensive. We learned from sources that both India and the US are also working towards finding common ground, signaling a step towards lowering tensions between both nations. Sources have also told us that the statements made by Prime Minister Modi and President Trump are the strongest indication of continuing connect between the two leaders. To take this forward, I'm now joined by former Foreign Secretary Nirupama Rao. She was also India's former ambassador to the US. Thank you very much for joining us, Ambassador Rao. Let me begin by asking you, are these statements a sign that things will improve here onwards?
Thank you, Parikshit, for having me on the show. To give you a short answer, the tone today is better, but it's an opening gambit, not a reset. So if you ask me, are these statements a sign things will improve? I would say they're a de-escalation signal, certainly, and they buy both sides some breathing room. Now, President Trump has publicly called the India-US bond special, to use his words, and Prime Minister Modi has reciprocated, and our External Affairs Minister has kind of amplified that framing. So in a sense, this calms markets and bureaucracies enough to keep the channels open, but it doesn't undo tariffs or resolve, the frictions as far as the US is concerned in regard to our relations with Russia or China.
Important points there, ma'am. Let me also ask you, this is at best an opening overture, something that you've also said earlier. What do you think has led to this positive signaling?
Well, first and foremost, I would say the risk of backlash, because if you recall, President Trump said a few days ago that the US had lost India to deepest, darkest China. And that's a line that kind of, I think, spooks people. It spooks allies, it spooks partners. It definitely drew criticism. And the friendlier post, I suppose, his friendlier statement corrects course. And our Prime Minister's reply also meets it halfway. Now, there's the tariff overhang also. The US duties, as we all know, as announced, are at 50% on a wide basket, and no new talks have been announced. So both sides, I believe, needed a political valve while the officials reassess the next steps. And the optics, thirdly, the optics around the Shanghai Cooperation Organization summit. So after the leaders at the SCO met around the end of last month and early this month, neither side, I believe neither the US nor India wants the narrative to harden that India is drifting. So a positive signal of the sort you heard yesterday counters that. And then finally, domestic data, economic data out of the US. August jobs were weak, unemployment up by 4.3%. And a softer economy, if you can have it, raises the premium on predictable trade ties and calmer headlines. So it's a kind of effort to calm the situation, to sort of give it some stability. But we're not there yet.
We're not there yet. And I think this is what the government is also emphasizing. This is not a truce. This is not a victory. We cannot call this a win. This is just a first positive signal. Now, you've also emphasized earlier that the domestic sentiment in India has been deeply bruised by the kind of statements that have been made by Howard Lutnick, Scott Bessent and Peter Navarro. Lutnick even going on to the extent of saying that India will have to say sorry. Does this mean we will have to be very cautious in picking up threads from here?
I think the Lutnick, Bessent, Navarro statement or noise or whatever you can call it has definitely stirred a hornet's nest. And domestic sentiment is rather bruised in India, as I've said before. And comments like Mr. Lutnick saying India will have to say sorry calls for sanctions over Russian oil from Mr. Besant and Navarro's jabs have landed, I think, very badly in India, and they will linger in public memory. Let's not, hide that. Therefore, all this that we've been hearing, this noise, these, the way they've heaped scorn on us, I think there is necessity for caution now in tone and, of course, firmness and substance in trying to build the common ground that you referred to. So we have acknowledged Mr. Trump's remarks. Prime Minister Modi has acknowledged those remarks, but we have always rejected the premise about negotiating under ultimatums. That is not our style, that is not our approach, that is not our policy. We will pivot according to our interests, and I think that is the best way forward.
Right. How do you think India should approach talks from here onwards? Should we insist on one deal which removes not only the 25% additional penalty, but also addresses concerns on our reciprocal tariffs?
Well, I think we should be calm, but we should be transactional, and our approach should be layered. I think the first priority is to de-risk, and perhaps, and I'm not privy, of course, to discussions within government, but I believe we could propose a narrow stabilization package like export facilitation, carve-outs for critical supply chains, defense co-production continuity, and that all this doesn't require touching the biggest political landmines on day one. And then perhaps a very laddered trade track. Phase one, removing 25% of the additional penalty layer on top of baseline duties. Phase two, addressing reciprocal concerns like select tariff lines, data standards, agri-quotas, with performance-based triggers. And US reporting itself, I believe, notes that the 25% add-on is the immediate choke point for resuming talks, as even our press has reported. And thirdly, we need very quiet offsets, maybe targeted energy and security purchases that are commercially rational, but visibly count in Mr. Trump's ledger, without, of course, affecting our strategic autonomy.
Right. Coming back to the SE.
Well, if I may add, it's better to sequence things than bundle everything, because we don't want a single deal that will invite last-minute moving of goalposts. So we take it stage at a time and let ourselves bank the relief early and condition the next tranche on verifiable steps on both sides. So you want small, bankable bites.
Right. One thing that we are seeing, Scott Bessent has on Sunday again said that they are considering, along with the European Union, further sanctions, further secondary tariffs on countries that buy Russian oil, because they want to cripple the Russian economy, not allow it to wage the war. So clearly more sanctions, more secondary tariffs are not off the table. Now, how should we read the sentiment in the US when you also have this threat of further sanctions against India?
Well, I think there are lessons to be learned about engaging this administration, and particularly President Trump. Forget what Mr. Bessent is saying, and forget all that. The very negative vibrations that continue to be directed towards us. I think where we deal with this administration, and particularly with the top leadership, with Mr. Trump, I know this is difficult for us to stomach and to swallow at this time, but he is looking, I think, for personal respect and institutional receipts. So if he, is able to send out positive signals to us, we can be courteous and make it visible that our leader-to-leader messages are, in the right tone. He will keep citing his wins, but even as we respond to him in as positive a manner as we can, provided he is positive too, I think it's very wise to anchor everything in written and measurable side letters. So, front load the optics, whatever they are, but backload the substance. And that is why we need to tie whatever concessions we make to dated milestones, because this is an administration. Forget what they're saying in public, but even where deals have been reached, as they have with Japan and South Korea, they are prone to changing it. So we need very, very defined milestones, and we should never trade autonomy for atmospherics, because praise, he may heap praise on us, but it costs nothing. We need to look at what action is being taken on the ground. So there are lots of benefits, but there are also a lot of risks to personal diplomacy, because the benefits may be we unblock the agenda, we headline stability, but there are lots of risks. There is a lot of volatility, and all the public ultimatums, like you mentioned, Mr. Besant saying today, and asking for some deal after each concession. So you have to pair whatever personalized diplomacy is being undertaken with very structured guardrails. It's very important. This is constant evaluation. I talked about the need for constant evaluation. It's like a patient in the emergency ward. You need to constantly evaluate it. And you have to be able to defend what you do back home, domestically, within this country. That's also important.
Ambassador Rao, the question about buying Russian oil. All data shows that we will remain as the #2 biggest buyer of Russian oil in September. This is important for our strategic needs and for our meeting our energy needs, and we'll continue to do so. How will we show the US an intent that we can reduce or trim purchases from Russia, or we have a strong intent to help the US in ending the war? Because currently this seems to be a priority for the US administration, especially Donald Trump. He has this goal of being the person who ends the Russia-Ukraine war. How does India help him or make a compromise without cutting down our strategic partnership with Russia?
We've never been for the war in Ukraine. We've been very, very vocal about the need for peace and settlement of the conflict between Russia and Ukraine. So nobody really can doubt our credentials as far as that is concerned. As far as the import of Russian oil is concerned, obviously we will be dictated by our strategic interests, by our energy needs, by our own energy security, and what is good for the country. I don't believe we in any way have been privateering, as Besant and Navarro and others have been calling it, as far as this conflict between Russia and Ukraine is concerned, and reaping benefits for ourselves. So those charges, I think, need to be firmly refuted. And the United States, and that is where I think the challenge to our diplomacy lies, I think they have to understand there is an energy calculus here. And whatever we've done has been within the G7 price cap compliance. So there should be no really these Besant-style noises being continued to be made. I think what we need to establish is a 24/7 hotline protocol with the United States, and so that we can deal with these rhetoric spikes. Statements made like this should not escalate the problem. We should look at de-escalation.
That's an important point. 24/7 hotline protocol to deal with this kind of sharp rhetoric coming in from the US. We are taking a short break, Ambassador Rao, but don't go anywhere. We'll tell our viewers to stay with us. When we return, we're going to be discussing more about the optics at the SEO summit. How much of this is a reset? How much of this is a recalibration? And also, what about India's engagement with China and the BRICS? All of that coming up on the other side. Welcome back. You are watching News Center. We still have with us Nirupama Rao, former Foreign Secretary. Ambassador Rao, let me ask you about the optics at the SCO. We spent a considerable amount of time with the Chinese president, almost 55 minutes to an hour, 2 hours with the Russian president. How much of this was a reset? How much of this was recalibration? And how much of this was just optics to show that India will be committed to multilateralism and we will accelerate our multilateral approach if cornered by the US?
I think there is no doubting of India's commitment to constructive multilateralism. And when you look at the SCO summit, of course, the Chinese do these things with a great deal of panache and pomp and circumstance. But if you are to ask me about takeaways from the SCO summit and the fact that Mr. Modi and Mr. Xi Jinping were able to meet and converse after a long time, I think when you think of the India-China relationship today and post the meetings in Tianjin, what you should expect is not a grand pivot. You know, there are realities on the border. You're aware of the situation along the line of actual control, the unresolved problems that relate to the boundary between the two countries, the critical dependencies that have, I must say, unfortunately developed where India is concerned on China over the last couple of decades, and regional contestation in South Asia, as you know, the whole China factor, especially the China-Pakistan relationship. So they keep the ceiling very low on this relationship and the floor very uneven. So the SCO optics really don't erase the structural rivalry between our two countries, but they keep the door ajar. They keep the door open for communication and connectivity and better coordination, I think, when it comes to stabilizing the situation along the border. So we don't discount the importance of these meetings. So as far as it comes to Russia, of course, we have a time-tested relationship. There is a great deal of mutual trust because of the legacy nature of this relationship and the defense and security interests that have been there predate anything to do with the Ukraine conflict. So, you know, there is a kind of definition to the India-Russia relationship that in a sense eclipses all the kind of debate and discussion you see concerning Russia today in the West.
I would also like to ask you about a statement made by the Chinese ambassador. He has said on Twitter that it is high time for India and China to do big business, big investments and big commitments together. It seems that China is extending that olive branch. How do you think India and China relations will take shape in the next 3 to 4 years? And are the current positive statements by the two sides more to do with the kind of geopolitical situation we find ourselves in? It also began last year at the Kazan summit, not immediately because of what's happening with the Trump administration.
Yes, of course, the move towards disengagement and de-escalation began at last year's Kazan summit in Russia. But, you know, I think with China, if I may use this metaphor, it's like playing some kind of three-dimensional chess in the dark. I think the pieces keep changing shape. The rules shift mid-game. So for all the hyperbole and the diplo-speak of the Chinese ambassador, I think sometimes the Chinese tend to knock the board over while they're smiling at the cameras. So I think you should unpack all this that way. Please, we shouldn't think that all is dandy with the Chinese just because we've had a couple of these meetings. There are problems, there are challenges, there is a history to this relationship. So we have to be very clear-eyed and hard-nosed about it.
Right, that indeed is an important statement, ma'am. I would also like to ask you about BRICS, because we saw Howard Lutnick also attacking BRICS for de-dollarization. Today, there is a BRICS virtual summit that Xi Jinping would be attending at the invitation of the Brazilian president. The External Affairs Minister is participating there on behalf of India. The Prime Minister is not going to be there. Do you expect India to somehow recalibrate its relationship with BRICS as a positive overture to Donald Trump? How do you think our relationship with BRICS is going to change?
You know, without sounding too defensive, I would say that as far as India and the BRICS are concerned, there is nothing, absolutely nothing, not a shard of evidence that we have done anything concerning BRICS that the Americans should see as something directed against them. So, you know, they are subjecting us to this kind of whiplash diplomacy, scorn one day, friendship the next, and that's how bruises are created by statements like this. So I think, you know, we should, in a sense, set aside these verbal jabs and tell the Americans exactly where we stand and where they get off on this. And they're trying to put us through a stress test. But historically, India-US ties have survived worse storms. You know, the sanctions or the special economic measures, as they were called after the 1998 nuclear tests. We had disagreements over Iraq. We've had differences over trade for a long time. So let's look at the ballast in the relationship. And that's what, on the American side, this very much vaunted, much elevated bipartisan consensus should also understand the shared democratic identity, the defense cooperation. We've bought billions of dollars of defense equipment from the United States in the last few years, despite what Mr. Trump says. The partnership on emerging technologies, the people-to-people linkages, the role of the Indian diaspora, you know, this is what has brought our two countries together. So this whiplash diplomacy, I think we have to stop. And that's why we need a protocol that is able to say this rhetoric must be set aside. We value the partnership too much to let rhetoric derail it. So all this is just tactical turbulence, but let's focus on the strategic continuity of the relationship.
Right. Also, Ambassador Rao, considering that we have a transactional president in the White House, as you mentioned, a lot of the changes in statements that we have seen could also be because of the domestic economic situation in the White House. He also needs to show victories to his population. Having said that, even if we do achieve some sort of trade agreement, some sort of understanding with the US, it is quite possible that President Trump may demand more in 2026 for that matter. So now, how do we take, especially companies who are invested in India and US, how do we take a long-term view of this relationship? Will the larger relationship remain the same 3 years from now, or has the relationship between India and US changed for good?
I don't believe it has changed for good, but it has gone through a phase of extraordinary turbulence. And as I said, these are injuries that are kind of whiplash injuries. And you know that whiplash injuries take time to heal. And there is also, I believe, the apprehension that no matter what we offer, President Trump could ask for more. So how do you handle that? I think that really is the challenge for the remaining years of his administration. How do you cap the game? How do you lock in reciprocity? How do how do we pause benefits if agreed relief isn't delivered? So I think the strategy for India is not to have a single vendor approach. We have to have multiple patrons, multiple partners. We have to keep the G7, the Quad, the EU tracks warm so that we're not negotiating in a tunnel with the Trump administration. So if you ask me to boil it down to an approach, let's be gracious in public, but very precise in private and relentless about verification.
Right. Finally, ma'am, we've run out of time, but just in a few seconds, what kind of concession should we offer on the trade deal? I'm not talking about the 25% additional tariff, but when it comes to the actual tariff arrangement and the market access, where do you think the ball should finally land as far as India is concerned?
I don't think that's a question you should address to me. It has to be addressed to the officials who are actually engaged in this process. They are best equipped. and best able to answer that kind of question. I think we should look for the best deal for India, a deal that safeguards our national interest, but also keeps in mind that there is a ballast to the India-US relationship. It is a vital, crucial, consequential, indispensable partnership for both our countries. So keep that in mind also. Keep that in the range of vision also.
All right. All right, Ambassador Rao, pleasure talking to you. Thank you so much for this comprehensive conversation of India-US ties and how we are looking at and how we should ideally look at the changes in the relationship with China, Russia and the BRICS as well. With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Nirmala ji, thank you so much for giving us this exclusive interview, one of your first to any media outlet. This is after this monumental, historic decision of GST rationalization. In many ways, GST 2, the second coming, there has been a lot of talk in the past. Let me begin with a broader question. From the Prime Minister's vision of making life easy for the common man, of, reducing the burden on the common man. You did it in your budget last time by cutting the income tax rate, a bonanza for the middle class. What was the vision behind this? What did the Prime Minister tell you? How did it come about?
Thank you very much for giving me this opportunity to interact soon after this major reform measure has been approved by the Council. And I thank every one of the ministers who've attended the meeting, the states, the finance ministers, and supported it. Otherwise, it wouldn't have come to see the light of the day. Well, the Prime Minister did announce it from the Red Fort on Independence Day. But even about 8 months ago, he called me once and had a long talk about how GST can be, revamped, looked at, and only from one point of view. He said, look, both from the point of view of the process and also for the common man, the tax rates, is there a way in which we can make it simpler? So I had agreed that I will go into it and come back to him. Then around the budget, when we were talking about many, tax-related issues, he reminded me about the work which has got to be done. And I assured him again that time that yes, the work is progressing and I'll come back to him. So sometime after the budget session was over of the Parliament, I said I'm somewhere close to giving him a proposal, which he can guide me further and so on. And then a bit later, much later, because you know the developments of May, April, when Operation Sindoor had happened, and after April priorities have been on very many different grounds, and when next opportunity came, I went, gave him a detailed description. Is that I just want, as I said at the first meeting, the simplistic or simplified, not simplistic, simplified way of doing business. So I don't want small people, small businesses sitting at the computer, getting the auditor to do it. And also, like the way we did in the budget, respecting the middle class, respecting the taxpayer, respecting people who are really the ones out of their salaries giving the tax. We need to do something for the day-to-day indirect tax, which falls on every Indian citizen in some way or the other. So this tax is something which touches the lives of every citizen, and therefore we need to be a lot more sensitive. So I went back with this comment, redid it, sharp focused it, and that's how this proposal came. And we, for the first time in GST's history, Council's history, the centre has come up with a proposal. Till now it used to be the group of ministers which consisted only of state ministers. Yes. Never has the centre been a part of any GOM. This is the first time, both in the case of the compensation cess, where the MOS Finance, central government, was the chair to decide how to handle the closure of the compensation cess, and a comprehensive proposal as regards GST being given by the central government. So it's unique in very many ways. Every rule of the House, of the Council, had to be looked at afresh, yes, even to put the proposal. Yes. So I'm glad it went through the whole grind, didn't ignore any rule or expectation or the law of the GST, and has gone through.
And taking everyone along, unanimously.
That's right.
At the heart of this is obviously, the common man. In fact, Money Control had put out a tweet saying that how it also impacts, it is the health of every citizen in India, to which the Prime Minister, in fact, said that it is also to do with Swasth Bharat.
Yes.
So what was the driving motivation, behind this bill?
See, I had to do a dredging kind of an exercise.
Yes.
Every item which comes under the GST, goods or services, had to be looked at, not just by their codes, not just by their names, but to regroup them from the point of view of daily use items, that which is consumed by citizens, middle class, the poor in particular, and then you looked at those which are going to hit the farmers, those which are going to hit the middle class, and so on. Because eventually, daily use items or items which are necessary for this transition of India from a emerging, developing economy to a Vikasit Bharat, yes, cannot be on the back of, just the approach of we need more development, bridges, roads, some contracts for works and so on, but also that the aspirations of the growing families will have to be met. So we had to regroup them in such a way, okay, this is essential for, let's say, the families, poor middle class families. Of course the rich will come in. So what do we do as a treatment for it? But even as we were talking about this, we are talking about the classification of goods and services. I, without any hesitation, will bring that example of the popcorn. Why am I saying hesitation? Because I was pilloried on it.
Yes, absolutely.
But that tells you the problem of classification, where we brought in a system, no doubt, which was an improvement of over the pre-GST era, where every state defined its own and had its own rate and so on. So GST in 2017 was an improvement over what was earlier. But it still required some more simplification, and that's why this exercise. And in the case of the popcorn, it led to a lot of litigation, courts coming up with different kind of voices, and states losing revenue because of the classification being different. People chose to have the higher taxed sugary chocolatey popcorn shown in as a salted popcorn because that has only very little tax on it. So this arbitrage because of classification had to be overcome. So even as I'm grouping for families, their day-to-day items, this thought of what the classification is causing as a problem also had to be addressed. Like that, I think it was one of the, for me it was a fascinating exercise. It was rigorous, it took a lot of my time and time which would have gone in for something else. But I think this was absolutely rewarding an exercise because you brought in that temperament which is so important, that citizen looks at these things in one particular way. Revenue is not the consideration. So that helped us.
So now that you've done two monumental things, you've put more money into the hands of the consumer, you brought down for the middle classes the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut. Right. The rates are coming down. So the citizen now has a choice. To meet his aspirations and his expectations, he cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18. That's right. There's nothing beyond. So that 1% is what makes for the demerit goods, right, which popular parlance says sin goods. Yeah. So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments, it will fire up investments as well?
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts, and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah. Have you seen that in the past?
Well, at least the moment the income tax reduction happened, you heard people very clearly coming out and saying, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college. My daughter is already doing engineering. I'll be able to fund her for her higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit?
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time, and so with the fiscal deficit. And this is the last point of my gliding path. Right. I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have to.
And you don't see that happening in the near future?
Not in the immediate future.
Okay. Let's move, to a few broader economic questions as well. With GST rationalization, inflation is likely to come down quite naturally. Does it make a case for further repo rate cuts in the future? I know it's not your, but generally, directionally speaking.
Not my domain. We'll have to see how the RBI assesses for itself.
September 22nd is a tight deadline. Are you confident you'll be able to roll this? Is the back end ready?
Yes, the back end was mentally prepared, and many structural things have already started getting corrected, reset, and so on. It is with the agreement of these GSTN-related technology managing team-related issues that we have had a discussion with them, and they have clearly given me the confidence that yes, they will be rolling it out on September 22nd.
So Rahul Gandhi, who earlier called it Gabbar Singh tax, now has been talking about one nation, one tax. On the other hand, former Finance Minister P. Chidambaram, he said that, it is 8 years too late. How do you react to all of this?
Well, being in the opposition, I think they have to say something. When the popular response has been so overwhelming, for an opposition to try to take some credit out of it, but yet with a hesitation that the credit should not be completely given to the government is quite understandable. But I would want them to ponder that neither could they bring it in because they couldn't win the confidence of the states, nor could they truly and literally understand how the mechanism works. After all, the GST Council has members from Congress party,
yes.
Finance ministers from Congress-ruled states are there. But I have a feeling the Congress High Command, as they call it, doesn't do its homework to understand the way in which this wonderful organization works, the GST Council. And therefore, at one point in time, they call it Gabbar Singh tax, another point in time saying, oh, this is fine, but it should have come earlier. These are clearly statements coming from people who have not really spent time to understand how post-independence, that one institution which has been created, a constitutional body, if I'm right, this is the only one which has been created post-independence,
yes.
is spent 8 years, but has delivered so much in terms of revenue, in terms of uniting this country, in terms of making ease of doing business a reality, and is now coming up quickly in succession within 8 years with the second generation reforms. To understand it and then to comment would help the government, not stray comments which doesn't get into the details.
Nirmala ji, this has been widely hailed as one of the dramatic reforms of this government. Obviously, a dil mange more. So, what next? PM has set up 2 official level committees on next gen reforms. 2 group of ministers have also been formed, headed by Amit Shah and Rajnath ji. What can we expect in the coming months? What is the idea going forward? How do you look at reforms in the bigger picture?
Quite a lot of work was done about the next set of reforms which we need to undertake, even prior to 24 Lok Sabha elections. And then some departments moved, like ours moved faster. There are other departments which are moving faster as well, whether it is looking at the environment-related issues, sustainability-related issues, opening up for private sector, sectors which have been the domain and the privy of the government. These are things where lots of action is happening. Various departments are moving. The science and technology is moving very fast. IT is moving very fast. IT as in semiconductors and other things. So that big area of reform, if you ask me, in which these 2 committees will look at, and also the committee which is headed by former Cabinet Secretary Rajiv Gauba. Right. I expect reforms which will have to now trickle down rather than remaining as a domain of only the union government. The state governments are somewhat also moving towards reforming on very many scales. But the third layer of India's democracy, the urban local bodies and the panchayats, is where the next forceful action has to move. Otherwise, the speed with which we want to move India and the aspirations to be met in India for people to live in a society, live in a country which is fairly developed, and our citizens get their aspirations met, I think we have to take the reform agenda just not to the states, but also to the third layer.
As I move to discussing the GDP numbers for Q1, just before that, another last question on GST, which is how will you ensure that you pass on the benefit to the consumers? We've seen anti-profiteering in the past, so how do you plan to tackle this? Is there a way in which the government is looking at it? How do you ensure?
At the moment, there isn't any particular mechanism that I can say I have. But I certainly am seized of the question, also coming from many citizens themselves who are saying, it's great that you've done this, it's great that you're bringing in this kind of a drastic cut in taxes, but how will you ensure that we'll benefit from it? And how will you ensure that it's not going to disappear on the course to reach? We'll have to keep talking with industry, we'll have to nudge them, we'll have to... I'm glad in the case of the insurance sector, the public sector insurance companies have come forward to openly say that they will indeed pass the rate cuts to the citizens, those who are taking the insurance for themselves. So I'm sure the private sector would also do it in insurance, and so with other things.
You're expecting them to announce that they will pass on the benefit?
Many of them are doing it.
Couple of them have, some of them have announced. So Q1 GDP numbers are heartening 7.8%, at a time when President Trump said that, India is a dead economy. How do you react to something like that?
I may not be able to comment on, let's say, foreign head of the state commenting on it. But in India, one line which I keep repeating several times, probably even once when I met you once earlier when we chatted like this, it is the cynics within India who worry me. It is the naysayers within India who worry me. Assume somebody had said it, a head of state has said it. Building India together, and all of us together building India, are we going to carry those tales or stories or observations which somebody else says and then repeat that here, oh, so and so has said this, India's a dead economy, we knew it, this is happening, that's happening. India requires its citizens to be respected. They are toiling and struggling and working to build their families and their economies, their own personal family wealth and whatever. At this time when we are trying to create more opportunities, do we need the naysayers to even borrow such observations, be it as it may that it is coming from a head of state? Do we need our own people to use these expressions? It is undermining not the government, you're undermining our citizens' efforts. And a responsible opposition, I wished didn't repeat these lines, but I think it is, I would react only to what our people are saying rather than a head of state elsewhere.
No, five-quarter high number, I think it gives us a lot of confidence in the Indian economy.
And also inflation coming down.
Yes.
Drastically coming down.
Yes. But it brings us to a related point, which is on the point of tariffs. Now that tariffs with the US are at 50%, what is the likely impact on the GDP going forward? There are various estimates by various sort of consultancies, from 10 basis points all the way to 100 basis points, some have predicted. Where do you see the impact really of this?
But with the reform like this, many of that should be offset.
Yes.
So it is never a situation of a one fixated point. It's a dynamic situation where you're moving from one to another with newer players coming in, newer factors coming into play in this scheme of things. This one, you have the GST reforms, which is going to make people understand that they can fetch more things with the same amount of money with which they bought some amount earlier. So it is very clear that industries have been speaking about the tariff and its impact. The government has designed something for itself. We will come out with something to handhold those who are hit by the 50% tariff from the US. This has been said earlier. I've met up with the delegations when I went to Chennai in recent past few days. I have said this there and I will repeat it. Government is working.
So will they be allowed to sell in India, or how do you plan to alleviate their concerns?
No, there is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it, but there is something coming to help them so that this tirade of the tariff is something which they can face, and also suddenly having to look for newer markets is also a challenge, but we'll have to help them out on that.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs, whether in terms of rates, logistics, anything. So where we buy our oil from, especially being a big ticket foreign exchange related item, where we pay so much out of our pocket, highest in terms of import, we will have to take a call which suits us best. So we will undoubtedly be buying.
Another question about, the officials of the Trump administration have been using really hurtful language against India. Saying that we are Brahmins profiteering at the expense of, ordinary Indians, or, calling the Ukraine-Russia war Modi's war, or us as Kremlin's laundromat. How do you see all this? I mean, how do you react to something like this?
Very much the same principle as I said earlier. It is one thing, it can be hurtful. It is one thing for a foreign government head of state or an official or anybody to say all that. And the global diplomatic world is astonished that that kind of an expression is being used against India. And that will have people in the diplomatic arena to respond or to deal with. But what hurts me more is when those very expressions are being justified in India. Oh, don't you all know, don't you, I mean, you know, dirty, unwashed Indians, you don't understand what this expression means? This is how, this is explained. Who wants these explanations from Indians? Who actually wants us to know better? And who are these people explaining to us, this expression is used in this context? Yes. I'm outraged by that. I don't want explanations to justify that. Whether I'm going to have to deal with them, stand up and challenge them or retort is a different story. Right. But Indians quoting those words and telling us, oh, you dirty Indians, you don't know this colonial justification of the language that is being used against Indians, against such countries which have come out of its colony and from its empire and stood up to build its own country with its own self-confidence. And even now when we are talking about Atmanirbhar, it's not just in terms of producing everything in your country. It's also about being
self-reliance.
There is no self-respect.
Self-respect.
As much as you want everything produced in India for Atmanirbharta, you should have something of a self-respect. If somebody is saying, all of us in one voice should respond to it, rather than have a few of us justify it by saying, don't you all understand it? Are you a part of the imperialists? No. I'm outraged more by that.
Yeah, the opposition picking up this and, making it their own narrative.
And saying...
Like dead economy was picked up by Congress, Rahul Gandhi to say.
And even for this, Brahmins are being are the ones who are benefiting out of it. Oh, you Indians,
Boston Brahmins.
Yes, Boston Brahmins. Oh, you Indians, you don't understand this Russian oil purchase is to help Brahmins to benefit of it, and you are being fooled. Exactly the same divide and rule principle which the British used here, which the imperialists used here. And even today you have the friends of the imperialists telling us, no, the expression Boston Brahmin is this and not that. Who damn cares? I'm sorry. Yeah. Who damn cares? I want Indians to think for ourselves. I want those Indians who are now defending that language to get up and say, we are free from you all. Now for over 75, 80 years, we'll mind our business, we'll take care of ourselves, refrain from using these words. Should have been that voice. That not being the voice, And upar se to teach us saying, don't you know the meaning of this expression? Outrageous.
Today we've got to know Nirmala Sitharaman ko gussa kyun aata hai. Now, moving on to economy, any plans to liberalize FDI or FPI regulations further?
I do not want to give a headline, but certainly we are looking at every aspect of reform.
How do we, this is probably the right time to, assure foreign investors to invest in India. What are some of the steps that we should take that would, give them this confidence? I mean, this one was a big one in itself, but going forward.
First thing, I think our institutions such as Parliament should debate issues, should question government on the proposals, on the policies, on government's actions. That gives confidence to people saying India's democracy actually literally discusses these issues. Without that, the government can go about doing what is right for the public. But the institution of the Parliament is not being used for its prime purpose. Why is it important? It gives a feeling that both the opposition and the ruling parties are talking on issues. Instead of holding placards and standing in the House, if there is a meaningful discussion, it will convey a lot about the policy strength. That is one thing. Second, our regulatory institutions, and I've said this before, but I'll repeat it here. Regulatory institutions should not go to the extent of micromanaging. I want businesses to do their businesses. They have powerful boards which run them. And the regulator, in consultation with the stakeholders, should allow them to function, of course, keep a watch, and do a soft touch regulation. If regulators across the board, I'm not talking just of the finance domain regulators, all over, should have a open-minded approach, a soft touch approach, above all, not micromanage businesses.
Private investment has been a topic of discussion. How do we revive animal spirits, for the private sector to invest? This has been a, discussion that we've been having over the course of many interviews, and you've been also exhorting the private sector. How do we get about?
But I think, to be fair to them, they are moving in.
Okay.
And they are taking decisions about how they want to expand.
So you'd see a significant change?
I see a significant change, and I see that enthusiasm now in wanting to understand how things will move from the industry. And I'm sure they are conscious that opportunities lie in India and they should do things.
How would you react to S&P's, India's sovereign rating by S&P, which has gone up? High time, would you say?
Yes, and it is, I think, as a result of a lot of work done by the Department of Economic Affairs, the Chief Economic Advisor. They have been persistent with talking with them, giving them adequate data-based information, and their conversations have actually today shown us the result. And I'm glad that they're doing it. They should continue doing it with other agencies also, because with our growth being with what it is, with our fiscal, macroeconomic fundamentals being what they are, with our inflation being under control, with our foreign exchange growing, with our stock market being so buoyant, it is difficult to understand how parameters of similar and comparable nature elsewhere attract a much better rating, whereas ours don't. And conversely, parameters which are worse than ours seem to be having better rating. Just can't explain it. So I think the work of the DEA and the CEA is well cut out in this regard. They will have to work with agencies.
Nirmalji, you're right about all the macro indicators looking up. But revenue growth for corporate India has remained tepid. It's at a 7-quarter low of 3.7%. How do you explain that? GDP on one hand growing at 7.8%. What really accounts for this?
I think it's also a question of how they're deploying their resources and how they're earning out of it. Businesses will also have to look at the way in which their risk-taking capacities can increase, and that's what is going to be the prime mover in terms of revenues for businesses. So, but that's a business call. It's not for me to say.
Right. Nirmalaji, India and China are now mending sort of fences. So, right now it is at the level of resuming the flights and giving visas to each other. But what could be the next steps? How could we make the Chinese markets more accessible to Indian companies? There is, of course, a huge deficit of $100 billion here. So how do we do that? I mean, what are the next steps?
There's just a lot of work to be done in that area. There's no hiding it. We need to have trade conversations, market access conversations, non-tariff barrier conversations with the Chinese. Unless we do that, and unless there is a true engagement and not a procrastinating engagement, you may talk as much as you want on these issues. I've done it myself. And to have a conclusion arrived at takes a lot of time with the Chinese. Sorry. Market access is something which has not been realized despite our almost a decade-long engagement with the Chinese. In between, everything had come to a halt. But on both these issues, there should be meaningful conversations. Otherwise, the very products that we want to export to China go through different destinations to China. But why can't it go directly?
Yeah. And will it also be reciprocal? I mean, Press Note 3 prevents investments from China to India. So would you look at, doing something about that as well?
As it is, I think in one or two cases, particular cases, we have relaxed some of them. And in those sectors where their technology has come in, and the technicians and also the experts had to come to actually see the projects through, we've not allowed these experts to come. That has now changed. In some sectors, people are coming in, where projects are already on the ground.
So India will be open to that idea?
Of course.
Yes. Nirmalaji, you've ushered in the boldest of reforms. I say this in every interview that we do because you corporate tax cut. I mean, that was a phenomenal sort of move. Then after that last budget, we have income tax rates going down. Now GST2, as I called it. So, one thing that we probably haven't seen enough is on private disinvestment. What would you say to that? You did sell Air India, but after that, things have been slow.
You'll see action in that also.
This year?
Yes.
Oh, that's great news. Any deadline for strategic stake sale in IDBI Bank?
No, I think the secretary has already, DIPAM secretary has already spoken about it. IDBI is moving quite fast.
Okay.
And I expect it to be concluded this
financial year? Okay, and any more banks which could then be looked at after this?
I wouldn't say any more banks. I'm not negating anything.
Right.
But yes, more disinvestments.
More disinvestments, okay. So we've seen that since June this year, the yield on 10-year bonds have risen 30 basis points since June, to more than 6.5%. Are you concerned about rising borrowing costs?
Yes. I wouldn't say I'm concerned, but I'm observing it. It is not affordable. And also at a time when interest rates are otherwise low,
yes,
bond yields becoming unsustainably high has a big bearing on the government. Not just our union government, states are also up against odds in getting affordable,
Also your fiscal math?
My fiscal math is as of now absolutely
of course,
fine.
Yeah. So, Nirmalaji, we are again, near an election. Bihar elections are coming up, and before every elections, we have seen all political parties dole out reveries, and we've discussed this in previous, encounters as well. Does this worry you? State after state, promising welfare schemes, doling out reveries, and how does it all really add up for a country like ours?
I think I'll speak for all finance ministers.
Yes.
It is a very, very difficult thing. to have a scheme approved and also budgeted for is not wrong. And I would approve of that, because that at least takes the view of the legislature and also makes it public about how they are financed, and therefore also brings in that responsibility to keep your revenue generation equally attended to. But what most often happens, not so much with Prime Minister Modi's leadership, but I can say what generally happens is you give away a promise. Once you have to come to fulfill it, you're searching and scrambling for resources. And if you're an opposition-ruled party, it is very quickly arsenal in your hand to say central government is not giving me money. That's the biggest unsustainable argument. I'm more tempted to say bogus argument. Because you give a promise, you win the election, you come to power, and then after that you're not able to fund it.
Yeah,
why would you want to?
A lot of cases.
Yes, why would you want to throw the blame at somebody else, particularly the union government?
Yes.
So these kind of sort of recklessness in dealing with public finance has got to be discouraged. There's no doubt on it.
Nirmalaji, India holds about $227 billion of US Treasury securities. It also holds a lot of gold in its reserves. Should we diversify away from US Treasuries for reserves?
To some extent, I think the Reserve Bank of India has already started doing it. I wouldn't want to divulge more by saying how are they doing it. But I think Reserve Bank has taken a very considered decision, and they've also done by purchasing gold. So I think the bank is competent and they're taking a fine call on it.
One more question was on the decision to ban online gaming, which came as a surprise to many, especially, after many years when people had poured in a lot of money in that business. What was the thinking behind this? How do you assure people of consistency in sort of decision making at a time like this?
No, what is the time? What is so special about the time like this?
No, what I meant was that, a lot of investments had come into that sector.
No doubt. Yeah. We have not banned games which are for recreational purpose.
Right.
We are still online games for these things are not banned. It is only when you start betting with money. And why is it? Not because we want to say we don't like it. It's a question of the number of people who came to say families are getting absolutely shaken up.
Yeah, that's true.
Their monthly bills are shooting up, and children cannot be controlled from the temptation. And many children, in fact, I wouldn't mind even saying this. There was a finance minister who once met me in a very different context.
Right.
And he narrated an incident of his own family, where his own grandson, who's a very good person, the child is a very good child, well groomed and well brought up,
right,
used his credit card for just one day for some other purpose of a family's genuine buying requirement. He helped them because children are very savvy. Post that one another day, he picked up the card and said, I want to just do something. They said, all right, please. Because they never suspected this child as, into games and into betting and things like that. So the boy used the card and played and gave back the card. Again, probably he did it 2 or 3 times more. Phenomenal increase in the bill that month. And that's when the grandfather sat up and said, what's going on? Let's check up. And this grandson told him right in front of him that it was all free. I didn't go into any money playing game.
He didn't know.
So the methodology is, say it's free, you get in, and for the duration of time that you've played, some kind of a charge is put, and again tempts you to go into another round and so on. So the adolescent child is under the impression that he's playing a free game.
Right.
But he ended up paying through his nose. So that's a classic example, but many people approached us, the PMO and so on, and said, this is ruining our country, ruining our youth, please do something. That's where this bill has come.
Okay. No, understood. The rupee is at an all-time low against the dollar. Does it concern you?
It is, I've said this and I'm going to have to repeat it. It is only against the dollar that the rupee is highly volatile. Whereas rupee is not affected similarly by other currencies. So, and there are countries in emerging markets and even in developed countries whose currencies against the dollar are weakening. So it is an issue on that aspect and at that level about the volatility as a result of the strengthening dollar. It's not rupee getting weakening. I know I've been trolled immensely for saying this, but this is the truth. So.
Okay, thank you. Nirmala ji, one last question. For profitable companies with over 1,000 crore turnover, 2% of their profits go into CSR. Now, at a time like this, when MSMEs are facing a problem because of tariff issues, etc., is there any thought to take a relook at this for a little while?
Nothing before me as yet. Okay. If there's anything, I'll tell you, but there's nothing.
All right. Nirmala ji, thank you so much for your time. Thank you for patiently answering all our questions, very candid. And heartiest congratulations on yet another big reform, GST2 or rationalization of GST. Thank you so much for being with us.
Thank you very much.
and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always, Shruti Mishra and Ritu Singh. These are the top headlines from the startup world. Venture Catalyst has raised 150 crore rupees through a mix of primary and secondary shares, valuing it at $200 million. The funds will help expand teams, launch new funds and develop AI tools. New investors include Ashish Kacholia, Shah Rukh Khan's family office and Aishwarya Rai.
True Frost and Butler, a provider of commercial refrigeration and food service equipment, has raised $7 million in growth funding from Carbidine Capital. The proceeds will be used to enhance customer experience by strengthening order fulfillment, expanding service infrastructure, boosting domestic manufacturing, and exploring international markets.
Oyo is no longer Oyo. The parent company of the hospitality chain has rebranded itself as Prism, a move it says reflects its global portfolio and premium positioning. The rebrand works first major corporate identity shift for Oyo since its founding and ahead of its expected IPO filing in November.
Cloud-based cybersecurity firm Netskope is seeking a valuation of up to $6.5 billion in its initial public offering in the United States. Netskope said that it would sell 47.8 million shares, priced between $15 and $17 a piece, to raise as much as $813 million.
Meta is reportedly hiring contractors in the United States at rates of up to 4,850 rupees per hour to develop Hindi language AI chatbots designed for Indian users. These roles are part of Meta's larger plan to expand its AI presence in fast-growing markets like India, Indonesia, and Mexico, according to a Business Insider report. PhysicsWallah has filed its DRHP, eyeing a 3,820 crore rupee IPO. The EdTech unicorn, founded by Alak Pandey, is betting on its hybrid model and 2 million strong student base to make a splash on Dalal Street. Rachna Dhanrajani had first reported this on December 30th, and she joins us now with all of those details. Rachna?
India's edtech story is entering a new chapter, with PhysicsWallah filing papers for 3,820 crore rupee IPO. This makes it the first Indian edtech unicorn to go public, and unlike most venture-backed startups, it will debut with over 80% promoter holding intact. We had first reported about the edtech company's IPO plans back in December, and now confirming it, we have the updated DRHP that the company filed over the weekend. Now, the offer size breaks down into a 3,100 crore rupee fresh issue and a 720 crore rupee offer for sale. Both the founders, Alak Pandey and Pratik Boop, are set to dilute a small portion of their holdings, about 360 crore each. While the bulk of the proceeds will go directly into the company's expansion strategy that is increasingly offline first. PhysicsWallah began in 2016, as we know it, with a YouTube channel and a teacher-led digital model. But today, its offline network has surged from just 28 centers in FY23 to nearly 200 in FY25. Revenues reflect this pivot. Offline income jumped more than 4 times in 2 years to 1,350 crore rupees, nearly on par with 1,404 that was earned via online. Now, the company plans to deploy the IPO funds in line with this hybrid model. Nearly 460 crore rupees have been earmarked for new centers and about 548 crore for lease costs, about 470 crore rupees for investments and acquisitions in subsidiaries such as Xylem Learning and Utkarsh Classes. Now, all of this comes at a time when India's edtech story was a bit shaken. So there is clearly a financial turnaround story that we also saw with PhysicsWallah. Revenue was at about 2,886 crore rupees, while the losses narrowed to 240 crore rupees compared to a massive 1,127 crore rupees in the previous year. The company has also moved into positive net worth and cut debt, which is crucial marker in the edtech sector, where many peers are still struggling, as we just spoke about them. Now, for years, PhysicsWallah had celebrated being the only profitable edtech, but profitability slipped last year. Some of this was due to accounting changes, but operational costs, especially from offline expansion, that have also weighed in on the margins. The attrition rate has also been high for over 2 years. Now, competition from entrenched offline giants like Akash and Alan did not come in pretty well for PhysicsWallah, especially in the test prep and training segment where they are. Will this now all of this will lead to pressure on growth, or how will they come out and as they debut on the D Street are some things that we will be closely watching for, as it's not just for the company but also for the startup ecosystem together.
Well, thank you, Rachna, for those details on Physicswala's IPO, also on what's brewing, from building a content to commerce brand to now reimagining startup acceleration with AI. Darpan Sanghvi has launched a new venture co-founder Circle, an AI-native acceleration platform for startups and MSMEs. Co-founder Circle claims it's bringing together community, capital and AI all under one roof. Darpan Sanghvi joins us now to talk about his latest bet, the lessons from the Good Glam Group, and how he plans to make entrepreneurship more accessible. Darpan, welcome back to Startup Street. You've said that this platform is designed so founders don't lose focus, control, or their moral compass. Darpan, was that shaped by your own experience of hyper-scaling at the Good Glam Group?
I've talked about this, I wrote about it as well, that I felt that, at Good Glam, when I reflected back, I think I did not realize when momentum became the momentum trap, right? See, it's, we as entrepreneurs are striving for momentum, that right time when everything is going correctly and you can compound things, right? That was the time for me in 2021 when we did those 10, 11 acquisitions, we did those 4 back-to-back fundraisers.
Yes.
But when to pull back, stop, consolidate, and focus on that rather than continuing to acquire more, which is what I was trying in 22 as well, right? And which, which is one of the reasons that led to eventually what ended up happening at Good Glam Group. So I think at Co-Founder Circle, one very big important piece of Co-Founder Circle is mentorship and incubation by people who've been there, done that, to startups who are just coming up.
All right. You spoke about the Good Glam Group. It no longer operates as a house of brands and is selling assets individually. Darpan, you've spoken about ensuring restitution as well, setting up a fund for employees, for vendors and shareholders. What is the update on that front?
So we have, as we launched, Co-Founder Circle was the first step towards it, right? For me to be able to create any kind of value back, I need to start something. Unless I don't start something, how will I create value? And with that value, how can only with that value can I start creating that restitution fund. So our stakeholders and our employees have been informed about this. The day we announced Co-Founder Circle, we are setting up. We've told everyone that post the announcement, between 4 to 6 weeks of the announcement, everybody will get their respective instruments, which will give them that piece of Co-Founder Circle. Which, if Co-Founder Circle succeeds, they are able to see some of that back as well.
Okay, you've also pledged, Darpan, 50% of Co-Founder Circle's equity to employees, ecosystem members, and even ex-stakeholder of Good Glam Group. Elaborate on this approach.
So I think, it stems from 2 reasons. One is, what happened at Good Glam Group, and I really want to find a way to make it whole to all my previous stakeholders at Good Glam Group. And 2, if you see what Co-Founder Circle stands for, it is, making entrepreneurship accessible for all, making the community a part of everyone's entrepreneurial journey. So what we did was that on day 0, Co-Founder Circle, 50% of the equity of Co-Founder Circle through different instruments is distributed amongst ex-Good Glam stakeholders, team members at Co-Founder Circle, and even my ex-Good Glam employees who had vested ESOPs. And the ecosystem on Co-Founder Circle that's going to mentor, incubate, and propel startups so that everybody's excited. And if you also saw, we talked about where 100% of free cash flow, over 20% PAT will go into reinvesting in the startups. All of this, I'm hoping, is going to fuel a flywheel where the community itself is promoting entrepreneurship, and it's all self-sustaining, and it's not just a one-time thing, so that people are more incentivized to help others on Co-Founder Circle because they get part of their equity that's being distributed. And then when Co-Founder Circle is making money, so people are doing deals on Co-Founder Circle. And so when Co-Founder Circle makes money, that money goes back in reinvesting in startups. So the flywheel is sort of fueling and funding itself.
Okay. Darpan, but looking back, do you feel the House of Brands model was flawed for India, or the Good Glam Group's, shutting shop was more about timing and execution?
Shruti, I've really reflected. As you can imagine, I've spent so many nights thinking about what went wrong, what I could have done differently. Obviously, it was extremely, extremely hard, right? I think, look, if you look at giants like L'Oreal, Unilever, they're all House of Brands. House of Brands has existed. I think what went wrong was we were too early to do a House of Brand. We should have first had one massive brand doing 1,000, 1,500 crore in revenue, all systems and processes well set, right? That brand generating cash flow, no more learning curves. We were still learning on the first brand when I went and made so many acquisitions, right? So I think house of brands, I think you just have to do it after you've reached a certain scale. Your systems, processes, people, everything is well established and set. And then you can integrate more brands and try to scale them up with that approach that had worked really, really well for your first brand. So I'd say that was probably the biggest issue on house of brands, that that none of us had that one large brand, and we were all startups, right? We should have been established for maybe 5, 7, 10 years of stable growth with profitability before embarking on house of brands.
Absolutely. So those are the learnings. But Darpan, going back to co-founder circle, one final question. Like you mentioned, it is an AI native acceleration platform, and you've built RACE, which is research, advisory, connection, execution, AI stack. How is this different from traditional accelerator or incubator models that startups are already familiar with?
Traditional incubators and traditional accelerators are closed models. You apply, you enter that accelerator and that incubator, and then only a set number of startups are able to work within that accelerator. What we're doing at Co-Founder Circle is we've created a platform that enables people to incubate and accelerate. While Co-Founder Circle will do its own set of incubation and acceleration for startups in different categories, other incubators, other startups, other mentors will be able to use our platforms to run their own cohorts of startups for their own incubation and acceleration. The RACE AI stack that you talked about powers all of this. RACE, as you said, stands for Research, Advisory, Connection, Execution. We as entrepreneurs, what we need the most is, in addition to information, how do we turn that information into outcomes? That is what RACE does. So when you go as an entrepreneur and you pose your problem, whether it's an idea that's turning into a startup or whether you're already running something and you want to scale it, RACE will pull out the right data, advise you on strategy, but more importantly, connect you to the right people, the right partners, the right mentors, the right investors, and help you execute that with the right AI tools over there. Extremely ambitious, but we're confident we can pull it off.
All right, Darpan, you've also committed that 100% of free cash flow, above 20% profit after tax, will go back into startups on the platform. Is this a signal that Co-Founder Circle will not just be about scale, but mostly about sustainability?
I completely agree. It puts our focus on ensuring that we're hitting profitability, because that number is so ahead in front of us that another mistake that I made while at Good Glam, where we were focused more on growth and not on profitability. Here we want to be focused on profitability from day one. And what we want to do is, come be a part of Co-Founder Circle, whether you're a partner, whether you're a person, whether you're an investor, whether you're a mentor, right? And then as Co-Founder Circle becomes profitable, that free cash flow goes back into startups on the platform. So the startups become the biggest beneficiary, first of incubation and acceleration, and then from the funding that comes directly from Co-Founder Circle. If we are able to create this virtuous cycle, then absolutely it's incredibly sustainable.
And on that note, I'll have to wrap up our conversation. Many thanks for joining us on Startup Street, and wish you the very best with Co-Founder Circle.
On that note, moving on to Investor Eye, India's venture capital landscape just got a boost. Elevate Venture Partners, backed by Venture Catalyst, has closed its maiden fund at 1,400 crore rupees, or $160 million. The fund has drawn in big money from sovereign funds, global institutions, family offices, and even unicorn founders, underscoring the conviction in Elevate's strategy. Already a third of the corpus has been deployed into firms like AstroTalk, IDFI, Small Case, Porter, and Snapmint. The rest will be invested over the next 12 to 18 months in high-growth businesses. Elevate says it's betting on profitability, resilience, and scale, backing India's next generation of market leaders. And joining me now to discuss that further is the managing partner at Elevate Venture Partners, Naveen Honagudi. Naveen, thank you so much for taking time out and being here with us on Startup Street. Let me start by asking you, despite a global fundraising slowdown, Elevate has raised 1,400 crore rupees, right? If you could sort of outline what factors help you close such a large maiden fund in this environment, and what are investors saying about the startup ecosystem in India?
Yeah, firstly, thank you so much for having me over. I think one of the main reasons why we ended up closing such a large fund, probably the largest for any maiden fund in India, was largely due to our strategy. Our focus on investing into growth stage companies and focus on profitability, right? If you look at it in India today, the entire ecosystem of funding is like an hourglass. There are a lot of investors at an early stage, very few in growth stage, and then it increases significantly at late stage. And that growth stage is what we are capturing, essentially looking to invest in companies with $100 to $300 million of valuation and investing anywhere between $10 to $30 million. Back in 21-22, this was an overcrowded space, but currently it's completely empty. None of the large global investors are investing in this space, which leaves a huge opportunity for homegrown growth stage fund managers like us to invest.
Sure, so leaving a big opportunity here, but you've already invested about 1/3 of the corpus into 5 companies. If you could sort of tell us what made you bet on these specific companies and how do you plan to deploy the remaining 2/3 over the next 12 to 18 months?
So each of these founding companies have been around. Our youngest company is probably 2017 born. Our oldest company is probably 2012 born. So these founders have been there. They've executed on that strategy for anywhere between 7 to 10 years before we've ended up investing. They've seen the worst during the COVID time. They've figured out that profitability is freedom. And we end up investing only in profitable companies. They've seen near-death situations for at least 3 to 4 times. So all of this has made the founder extremely resilient at the time of our investment. Clearly, we are nowhere close to the 21 market. We've seen companies who've grown 4x, 5x since 21, and these are probably the best companies in India. But the valuations have probably jumped anywhere between 30 to 50%, right? This provides an excellent vintage for us to pick and choose the companies that we want to invest in at the growth stage.
Sure, and if you could quickly tell me, you've said profitability a few times right now, so you emphasize profitability, resilience, and scale, right? So how do you sort of balance growth with profitability when evaluating potential investments? Also, if you could outline, the check sizes of these investments.
Yeah, so that was a misnomer 3-4 years back, right? Wherein there was a trade-off between growth and profitability, but that's not true. If you end up speaking to entrepreneurs today, which I was just looking at your news, right? I mean, Physics Wala, they've been growing extremely well and they're getting to profitability as well. So founders are no longer seeing this as a trade-off. Our portfolio company has been growing at about 50% year on year, given the large market opportunities that they are targeting, right? You had asked me another question about what's the forecast for us for the next 18 months. The intent is to make about 12 to 14 investments, probably another 7 to 8. So we will be deploying at about 4 to 5 investments a year. That sort of speed is where we'll be looking to invest.
So 4 to 5 investments a year. Now, your companies are reportedly growing at 30% annually while also remaining profitable. What's the common thread among these companies that fits Elevate's thesis? And if you could also tell me the sectors that are on your radar.
Sure. So we look at investing only in technology-enabled businesses. 3 broad sectors: consumer internet, fintech, and enterprise software. So each of our 5 companies that we've invested, and even companies going forward, will end up being in one of these 3 broad sectors. In terms of focus or common themes that are there between our startups, beyond being profitable and growing at 50% year on year, these companies have had existing institutional investors. Just from a signaling perspective, it helps, given corporate governance would largely not be a challenge in any of these portfolio companies. So our portfolio companies is backed by marquee investors such as Tiger Global, Sequoia, and so on and so forth. We don't look at investing into companies which have significant binary risk, which takes off, gaming, social network, and so on and so forth under this. So, and of course, looking at investing into founders who've been there for at least 8 to 12 years, and more importantly, are number 1 and number 2 in their category. So these are the large 4 or 5 themes that runs across all our 5 portfolio companies, and that's what we look at while investing in the future as well.
So that's your investment thesis going forward. All right, Naveen, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best going forward.
Thank you so much for having me over. Thank you.
Well, with that, it's time for us to head into a short break. Coming up on the other side, e-commerce player Amazon is preparing for its annual mega event, the Great Indian Festival. Over 17 lakh sellers is set to offer 40 lakh products to the customers. We speak to Amazon India's head, Sameer Kumar, on the other side. Welcome back to Startup Street. E-commerce player Amazon is preparing for its annual mega event, the Great Indian Festival. Over 17 lakh sellers are set to offer 40 lakh products to customers, and the timing of the sale coincides with the big GST reforms. Amazon India's head, Sameer Kumar, believes this will be a big boost for sellers and customers. Listen in.
GST is just a boost. It's an additional boost that the government has given to both our sellers and our customers. So our sellers are excited as well because it also simplifies their life in terms of listing products on Amazon and not having to register in multiple cities or multiple states. And for our customers, the rate change is going to be really, really exciting. So, but we have been preparing for this festival for a long time, right? Like since we ended our last year festival, we got into the mode of getting ready for the next one. So we have 1.7 million sellers who will be selling with us.
Sure.
We invested 2,000 crores in our infrastructure, so we are ready for all the products that are going to come in. So that means we are also improving, like 50% of our cities are going to get same-day delivery instead of, they didn't get it last year. Similarly, even more cities are going to get next-day delivery on a very last set of products. So 40 lakhs product or 4 million products will be available for next day. 1 million product or 1 lakh product, 10 lakh product will be available for same-day delivery. And so we are excited about that. Along with that, we have going to have really great bank offers, including no-cost AMI, Amazon Pay Later, all the payment products that we have. So people can afford the product and buy big tech. So if you have a need for whether it's kitchen stuff that you're going to buy for Dhanteras or you're buying apparel and shoes for the festive season, we are ready for all of that. And then along with that, we also have our quick commerce offering. Amazon Now is ramping up in Delhi and Bangalore, and I'm excited about that. It's a big change, like when you cut some of the slabs from 28 to 18% and from 18 to 5 or 12 to 5%, definitely customers are going to see a big boost. And we are also working with our sellers to ensure that the sellers are passing on the saving back to the customer. So sellers are excited about getting bigger sales, and we hope that will result in them passing on the benefit to our customer. And when you lower prices, we tend to get bigger volume. So it's funny, but we are looking forward to that.
How are plans panning out? We heard from Bengaluru, now in Delhi. What are your plans going forward as far as quick commerce
I think
spread?
it's Delhi NCR. So we are not just doing Delhi, but it's also Gurgaon, Noida, Faridabad. Some of the adjoining areas are also included in that. We were first 4 months, we were testing things and making sure we got the experience right in Bengaluru. And since then, we are in a hyper mode to keep expanding. And it's all about, as soon as our micro-fulfillment center is ready in a neighborhood, we light it up. And so hopefully in the coming days and weeks, you will see we'll blanket Delhi NCR as well as Bengaluru. And stay tuned, we have much, much bigger plan for rest of the year and next year.
Consumer growth fund Venturi Partners has announced the first close of its second fund at $150 million, which is going to back high-growth consumer brands across India and Southeast Asia. It is targeting a corpus of $225 million by June of next year and will back disruptive, purpose-driven brands across these markets that are positioned to benefit from structural tailwinds, including rising consumer spending and favorable demographics. It is going to make initial investments of $15 to $40 million. For more on this and their investment thesis, I have with me Rishika Chandan, the managing partner of Venturi Partners. Rishika, thanks so much for your time here on CNBC-TV18. Venture capital fundraising is picking up after a bit of a lull in India. Start by telling us, of course, about your investment thesis and what really got your investors to commit this $150 million.
That means that we typically invest in companies from Series B to Series D. Check sizes ranging from $15 to $40 million. And we invest only in consumer brands across different subsegments in India and Southeast Asia. I would say 70% India and up to 30% in Southeast Asia. In terms of why investors have sort of supported us again with respect to Fund 2, I think the reason is a couple of things. One is India and Southeast Asia together are about 30% of the world's population and therefore consumer markets. These are also markets that are growing at the fastest clip when you compare it to other geographies. And then that coupled with the fact that, just the average consumer age in India and Southeast Asia ranges anywhere from 25 to 29 years. These markets are just ripe for disruption of brands. Most sort of segments that you look at across, are largely unorganized. And given the rising awareness and digital exposure that consumers have, they all want brands, and there just isn't enough availability of those in these markets. And I think our investors recognize that. Also, our Fund 1 portfolio, has been doing very well.
Well, Venturi is emphasizing this purpose-driven brand and structural consumer tailwinds, but what really defines this purpose-driven brand in your investment lens, and what kind of returns will that translate into?
Yeah, so when we say purpose-driven brands, right, what we mean is really brands that do good for the consumer, either by giving them a better product or service for the same price point, or being able to deliver more value to the customer. So, for example, we have an investment in Southeast Asia, which is a hard discounter, whose mandate is to really be able to offer consumers the same products that they would buy from any other retail outlet at probably 30-40% cheaper. In terms of returns, I would say because we're a growth investor, we look for returns from anywhere from, call it 2.5 to 4 times MOIC on our capital.
So your plan is that the Fund 2 is going to invest $15 to $40 million across 10 companies. What are these 10 companies? How soon are you going to start investing? Have you already identified some?
Absolutely. So we're actually close to investing in one company. I think we should announce that in, call it the next week or 2 weeks. And we're already in term sheet stage on our second investment from Fund 2. So we've definitely started deploying. We continue to look actively at different sectors in India, whether it's ranging from elderly care, pet care, new food and beverage products and services, so on and so forth.
Okay, so no names there, but the final close of $225 million by June, is that on track? And could you exceed this amount too?
Yeah, look, in terms of timeline, we expect to get to the final close of 225, like you said, by June 26. We have a hard cap of 250. Now, whether we get to that or not is really a function of where the markets are. And you're more than aware of the volatility, but we feel very confident to get to at least $225 million.
You also mentioned a 1:1 co-investment option alongside Fund 2. Now, how does this structure really benefit LPs and founders, and how does it give Venturi an edge when it comes to winning deals?
Yeah. So look, from Venturi's perspective, right, it gives us a lot of flexibility in check size. And that's why I said $15 to $40 million, because the fund can invest up to $20 million. And the balance comes through our co-investment pool. So the advantage of that is that not only can we get access to better and high quality growth companies and lead rounds, but we also always necessarily need a board seat. And sometimes you need to get to the $40, $50 million check size to get to a board seat. So that is how we sort of, can help founders by just being able to have flexibility on check size, do more follow-on rounds. From an LP's perspective, right, if you think about the co-investment pool, the 1:1 allows them to also directly access the company if they feel that it is in a space that is directly relevant to them. There are also more favorable economics on the co-investment side. And when you club that together with the fund, effectively, it means lower management fees for them.
From toothpaste to soaps, from cars to bikes, the tax rate on more than 500 items and services has now been tweaked from the 22nd of September. Now, these sweeping changes are the biggest in the 8-year history of the GST. The GST Council meetings so far have only seen changes in about 20 or 30 items on an average. The idea here is to give a boost to consumption, and it is timed ahead of the festive season. The government is also hoping for buoyancy in demand to offset at least some of the estimated impact of the 48,000 crore rupees to its revenues. Now, these measures also come at a time when Indian exporters are facing a debilitating 50% tariff on shipments to the US. While these cuts are not linked to the tariff developments, the hope is that they will further strengthen the domestic economy. These cuts also come as India's household savings have been under pressure, with debt rising since the pandemic. So will this move put enough money in the hands of the Indian consumer? This is the editor's playbook, and we have a full house here to discuss the GST cuts and its potential impact on people, companies, and the economy at large. So let's go straight to it. It's been 8 years in the making. One can argue about whether this should have happened earlier, but, the point is the cuts have come, and no one can argue with the fact that we are now in an era of a simplified goods and services tax. Two rates, essentially 5 and 18 and 40%, which is where you have select items, sin goods and luxury items coming in. So it also does away with a lot of the classification issues that we faced in the previous regime, a lot of litigation on account of that. So it is simpler, it is easier, and the hope is that it will drive consumption. Let's break it up into sectors now, and let's go to the big one. Because remember, in the previous regime, 28%, which was meant to be the slab that housed sin goods and luxury goods, was expanded to include all kinds of things. I mean, cement made its way into the 28% bracket. Cars, bikes, everything was in the 28% bracket. So that moved from 28% down to 18% for a whole host of these goods is going to make a significant difference. And Parikshit, for the auto sector specifically, I mean, for companies like Maruti, Mr. Bhargav has been crying himself hoarse, saying that this is the need of the hour. This kind of revives, or hopefully will revive, the small car segment, won't it?
Absolutely. And you rightly said, Shireen, when it comes to GST, the auto sector is one of the biggest contributors. 15-16% of overall GST revenues for the government comes from the automobile sector. And yes, the small car segment had been ailing for the last many years, especially since COVID-19. And now what we're seeing is R.C. Bhargav saying that the small car industry may actually see a growth of 5 to 8%. And one statement that he made will stay with me. And he said that, yes, the market may be shifting to SUVs, but small cars are here to stay with this kind of GST reduction. And he is expecting a 10% growth in festive sales. So that was an important one. Even for two-wheelers, the entry-level two-wheeler had been ailing for many, many months now. Rajiv Bajaj said that two-wheelers never really recovered from COVID-19, but they are now likely to see all-time highs and maybe higher sales than the pre-COVID period as well. Almost the entire automobile segment, including components, comes now at the 18% bracket. When you speak about cars, 1200cc, 4000 millimeters for petrol and hybrid, and 1500cc for diesel, and 4000 millimeters in length and hybrid and diesel. So everything comes under the 18% bracket, and all big and mid-sized SUVs, luxury cars in the 40% bracket.
And there's actually relief even there, because the fear was that there would be an additional levy to compensate for the fact that the cess was being done away with. But that's not the case. It is 40%. It's a flat rate of 40%, even as far as the luxury vehicles are concerned. So even there, they've actually managed to squeeze in some benefit.
Absolutely. So there is a 5 to 8% price reduction all across. You will see a 5 to 8% for two-wheelers, for commuter motorcycles, for entry-level cars, and even for luxury vehicles as well. Mercedes-Benz, BMW, all of them are going to come out with new prices. So if you speak about average prices, we're told that for cars, it could come down in the range of 30 to 60,000 rupees. For two-wheelers, it could come down from anywhere between 3,000 to 8,000 rupees. It's big. In the festive season, everybody wants discounts and price cuts of that kind. But at a larger level, Shireen, the government also making its policy intent very clear that they are going to be focusing on EVs as far as lower taxation is concerned. Everything else, including hybrids, will be either at 18% or 40%. So that also is a very important takeaway.
Yes, the government making its intent, as you pointed out, clear. It continues to bat for EVs, hybrids now in the 40% bracket. But Prashant, let's talk about what all of this now eventually means as far as the markets were concerned. And, you know, as we've been discussing, a lot of this had probably already been factored in, had been priced in for the markets, because the Prime Minister made the announcements and then we did our bit. CNBC-TV18 has been reporting down to the last item on what the rates would be, and that's exactly how it's panned out. But what does it now mean, Prashant, for earnings? You know, Ramdev was on talking about that big earnings bump up that he expects to kick in next year. What does it mean as far as valuations in the markets are concerned?
Shireen, you know, I'm only half joking when I say that Timsy got it. I mean, I'm serious. I mean, I think you also said Timsy got it down to the T. The only thing which was a surprise was that the announcement was supposed to come one day late. It came one day earlier, right? Apart from that, I mean, I think it was...
बच्चे की जान लोगे क्या? That is the government's decision.
No, I'm just saying...
They agreed so quickly. That was actually quite a shocker. You'd expect some disagreement.
So there was bipartisan support. But, you know, Shireen, and we were talking about this yesterday as well, right? And there's been a lot of hand-wringing and general, not anxiety, but people wondering, why is there something we're missing? You know, is GST really going to do, or is there some fine print? Is the benefit not really there? And that largely was on the back of markets selling off and kind of, you know, cooling off even today, right? But I think we got to take this in the context of the fact that from the 14th of August, which is one day before Prime Minister Modi's speech, when, you know, he said from the Red Fort that big bang GST reforms are coming, till, you know, day before yesterday's close, you know, the three sectors, Parikshit talked about the auto sector, biggest beneficiary in that sense. The index was up 7%. The consumer sector, 7%. FMCG, which is staples, etc., 4.5%. So there was a decent rally which had already taken place. So that is the very near term in terms of, I mean, to answer the question, and this is part of the, but this is an important part of the puzzle why the markets are not very enthused by it. I looked at numbers, I mean, and I think eventually, Shireen, it's going to come down to, as we always say, stocks are a function of earnings and earnings growth. Is there going to be a big earnings growth on the back of this GST cut? No, the basic thing is this, right? All companies we are speaking to are saying that volumes will go up, but we know for a fact that these GST cuts have to be passed through by different degrees. So the volume bump up will largely be, in a way, negated, you know, top down will be negated by the price pass through. So at a net level, what is the impact which companies will get to keep? That is essentially what the earnings delta is going to be. I looked at CRISIL, and this is just what their estimate is. CRISIL says that the GST boost to revenues, this is top line revenues, and I spoke with the CRISIL analyst. I mean, it just came out. This is pretty large sample, 800 large companies is what they've looked at. This is 2/3 of the BSE, overall BSE market capitalization, these 800 companies. The GST boost to top line, which is revenues, is 0.25 to 0.5%. 25 to 50 basis points, that's it. Which means that total revenue growth for the year, FY26, is between 6 and 7%. Look at it another way. So this is revenue. I looked at earnings. Is there any earnings change? Again, I looked at as of the 14th of August and as of the 4th of September, which is yesterday's close. How have earnings moved? Maybe this is a little unfair because analysts don't pencil in earnings changes on announcements, right? They'll only make changes once the actual stuff comes, which is only 2 days old. So maybe it'll still happen. But so far, the earnings change here, this is net earnings, net profits. CRISIL was revenues, this is profits. The earnings change in this 15-day period is 0.82% for Nifty 50 companies.
What's the
This
number?
is Bloomberg estimate.
1100, how much is it?
1105. It was 11,096 on the 14th of August.
If it goes back to 1100 plus, we would still go back to the number in April, March end or earlier in the year.
Because there were some downgrades earlier.
Correct.
Now you're just coming back.
So
on earnings, just to add one more number, so I was looking at the Motilal note, which came after the GST announcements. So for the Nifty, I mean, after GST and everything, right now they're expecting 10% earnings growth. For their own set of stocks, their own universe, they're at 12%. Like Prashant is saying, that as companies start exhibiting tangible improvement in
12%
demand.
after the downgrade. So I'm saying that what I'm trying to say is
After
you are
Q1. So
essentially-
after Q1, there was some downgrades.
Correct.
Now, obviously, there is a
Then
GST
get negated,
boost.
and now we can give, for the full year, we can still expect 11 to 12% earnings growth.
Yeah, that's where we are
That's the key
at.
message for most of the
And
analysts.
hopefully, if the festive season is really great and if we get a better than expected second quarter, if 12 starts moving to 13, 14, we know which direction the market is.
I guess what will help this is if we end up reporting 11-12% growth, markets will get stabilized and there will be inflows also back into India markets. What was lacking in the last 2-3 quarters was purely the earnings. We've been consistently seeing downgrades for the last 3 quarters. If this helps to at least hold the downgrades and we again go back to 11-12% of earnings growth, I guess money will come back to India. That's the key message from most of the analysts.
So the earnings growth
Yeah,
will
I
come.
think that's an important message. And eventually, as Prashant was also pointing out, the proof of the pudding will actually be in the eating. So we'll have to see what starts to happen on the ground, that festive kicker, how much of the consumption boost that is being anticipated actually delivers in terms of reality. And, going back, of course, to anecdotal conversations, I just had the Swiggy Instamart folks on the program, and their belief was very clear. In fact, the words used were that we expect this festive season to be higher in multiples in comparison to the previous year, and that was the indication that they're starting to get post-Rakhi, etc. So, one will have to wait to see, but I think that's the big bet, right? That the consumption boost will result in an earnings boost as well. But Surabhi, let's also link this to the macros as well. And of course, the markets are going to be looking at what's happening as far as the macros are concerned, both in terms of growth, in terms of fiscal space, and in terms of, what next now?
Yeah, absolutely. So if there's one message from the market that's loud and clear is the market is not worried about a fiscal slippage right now. In fact, most of the notes that have come in since the GST cuts were announced, they're very sanguine in nature. So let's go through the numbers. And the entire thesis is based on actual facts. What has happened? The effective GST weighted average rate has moved down dramatically. When GST was introduced in 2016, we were at about 14.5%. The next round of cuts happened in 2019 when that effective rate came down to about 11.6%. And now, give or take, it should be around 9.5% with the latest cuts, the 2025 cuts. But despite the fact that the effective rate has gone down, look at collections. They've been averaging about somewhere around the 2 lakh crore rupee mark on a monthly basis fairly consistently. And that's where the hope comes in from. So now let's talk about the revenue loss. Over a 12-month period, we know that the gross loss is going to be within the vicinity of about 94,000 crores. The net loss is 48,000 crores. So you look at only 6 months because the impact for FY26 is only 6 months. So the loss for 6 months, revenue loss is 24,000 crores. The centers part of that is under 7,000 crores. So it's not a very large slippage that we're talking about. Therefore, not much of the worry. Now, for the amount that is being foregone, what is the impact in terms of GDP, etc.? Prashant mentioned on earnings and on revenue growth. So if you look at some of the other estimates, I mean, the range between full year basis, when this really starts flowing through going into FY27, it should be between 15 to 30 basis points of GDP. I have an estimate from Nuvama. They're saying the net stimulus full year FY27 will amount to about 0.4 to 0.5%, so roughly 0.5% of GDP, thanks to all the cuts finally flowing through. Not just this, it'll have a further impact on lowering inflation, which anyway is not a problem right now. SBI is saying that over the full year period next year, inflation could be lower by about 65 to 70 basis points. That's another positive. And if you put everything together, the income tax cut, the GST cut, as well as the monetary easing, then as per HSBC, I mean, the total stimulus to the economy is well over 0.5%. It should start coming through and to a large extent at least help perhaps mitigate or offset the US tariff impact, if not fully, but in a large way, because this is all domestic.
This is a more conservative estimate. Elara Capital says 110, 100 to 120 basis points
over the course of the next
4 to 6 quarters.
And you know, go ahead, Nivesh.
Shirin, just to add to what Surabhi said, two data points from what you put out, you know, from a market perspective. One about the inflation part, and most of the economists have now started penciling in at least 25 basis point rate cut further, and there is an outside chance of a 50 basis point rate cut as well. So that's one data point which will be important from a market point of view. The other data point was about the revenue loss, right? You said the center's losses are 7,000 crore.
For this fiscal,
For this fiscal. The bigger share will be with the states. And that is where, you know, the capex companies, especially who are dependent on state capex and state money, that is where a bit of risk is now coming in, and people have started talking about it that, you know, will that be a bit of an hit for the companies which are very much dependent on state capex?
As Nimesh was pointing out, Surabhi said, macros are all in the pink of health.
Actually, I have some data on this.
Just 1 minute. You know, macros are absolutely in great shape. But over the last couple of years, if you see, you know, people have been at the margin saying maybe we need to do a little bit of fiscal pump priming. But there has been pushback. There's been pushback. Now, we've had very steady macro data points for about 3, 4, 5 years, actually more than that, right? The fiscal deficit, etc., has been... So now you've got mainstream economists who come on.
If you take out the pandemic,
this is welcome. Even 2 years ago, this would not have been the case. This would not have been the reaction. Now, but that acknowledgement is there that you know, all macros are great, and we need to focus on the micros, which is
a lot of people have been saying that for a while now. And I want to sort of tie it up to what Nimesh said, right? The idea is if economy is a cycle or a two-wheeler, because we all like it, it's demand and supply are two wheels. You can't have one rotating and the other stopping. And I think that's been the problem with the policy approach. From 2014 till, you know, post-pandemic, we kept talking about supply-side reforms, supply-side reforms, supply-side reforms, and nobody still is investing because there is no demand. And this goes back to a couple of conversations before also. I said the same thing. When there is demand, investment will come on automatically. So there was a need to keep both wheels rotating, and I think finally that has started.
Gone back to Keynes.
Yeah. No, but on that note, the situation is, the situation on the demand side is actually much worse than what the market possibly knows, but it's not part of the conversations, right? In hush-hush. So here's the data that I'm looking at, right? In the last 12 months, the moving average growth of personal loans, car sales, home loans, corporate wage growth, rural wage growth, except for rural wages, everything has declined significantly. Like 500 basis point decline in personal loans. Car sales.
The rate of growth has declined.
Correct. So 18%, the moving average, what was there 12 months ago, which is in July 2024, in the case of personal loans, it was 18%. Now it is 13%, right? The 12-month moving average has sharply slowed down, which essentially means that whatever savings that comes now into my pocket as a consumer, let's say a middle-class consumer, I am more likely to first settle my debt, then buy Diwali sweets.
We wish. That's personal finance, teachings 101.
No.
I'm not sure if people really do that.
See, the point is that if you're talking about Gen Z is getting the money from their parents, right? So, but other than that, people who still have to fend for themselves, they have to first prepay their debt so that they can borrow in the future.
Because they want to go to Europe. Take another travel loan.
But you have a
and then
point,
dekha
Surabhi,
jayega.
right? You have a point in that, because I'll tell you, after debt and dairy, let's say I'm dairy as a Diwali sweet something, right? Debt, Diwali basics, and then the next thing will be booking a vacation, right? That's probably going to be the order of expense.
The data comparison is the early data is as of when?
July to July, 12-month moving average. What it was at the end of July 2024 versus what it is at the end of July 2025. It's DSP mutual fund data which they have.
The other thing is that on some of the points, right, and this is, we've discussed this in the past, consumption has seen after COVID, there's also that COVID factor. For about 2-3 years after COVID, I think that repressed consumption.
Correct.
We used
So you're probably not going to see that kind of a bump. There will be no revenge travel.
Revenge buying.
But there might be slightly better buying than what it was.
एक बार को आपने बड़ा घर ले लिया, गाड़ी ले लिया.
एक बार में बड़ा घर लेगा तो कुछ के लिए बचता नहीं है और.
Saying that this happened, that one cycle is completely.
But I have a question for Parikshit in all this. So now,
no, I want to close off that loop.
Yeah,
I'm saying so first because 42% of our household savings is household this thing is debt now, right? And it's a sharp increase from the last decade or so. So this is the household debt is a problem, and people will have to repay. Otherwise, there will be another sort of a cascading effect which we don't want. So people will pay, and some of that will come down. And then you will say, like I said, Diwali sweets, then travel and thereabouts. So what is left for discretionary is up to debate, and that is why I think market is not that excited right now. That's my reading of it.
my question to Parikshit and to Shireen as well, actually. So the market's mood swings. It's got everything that domestically you could ask for. Great macros, policy response, fiscal, monetary, everything. So the mood swing seems to be very clearly linked to one man called Donald Trump. So we go back to square one, right? And there, I don't know, I mean, what's next? Because...
I'll tell you, you spoke twice about good macros. The macros are looking good. Generally, markets and macros don't go together, right? I mean, it's always the other way around. When there is a bad macro, markets do well because markets look forward. This all good macro, good data is all priced in. So what I wanted to ask Shireen was, you pepped us very well on the GST, right? Through Timsy and everybody. Now what market is asking is, what next in the next 45 days? GST is done, mil gaya sabko rate cut. Ab kya denge? What will next government do? That is a big thing which I guess market is going to focus on.
And I think that is a very valid point, Nimesh. And again, I want to come back to a conversation that we had with Rajiv Memani, the president of CII, yesterday. And I think that there was a line there that was very instructive, that this is a sequence of steps that the government is taking. And this is one of the first few in that sequence of steps. Now, look, I think there is cognizance within the government at this point in time that we don't know what Donald Trump is going to do. Is he going to put more? Is he going to take it back? And we cannot lease out our life to the way that Donald Trump decides to tweet or not tweet, or the decisions that the US administration will take. So what is in our control is what we can do to strengthen our economy, our domestic economy, and also our engagement with the rest of the world. Look at that meeting with China, the meeting between Prime Minister Modi and Xi Jinping. I mean, it's very clear. There is no sort of now pussyfooting around the fact that we want to engage economically with China. We want to do business. We want to look at more opportunities. Those were the words from the Commerce Minister yesterday. I would think that we're likely to see more measures on that front, whether that press note 3 review, etc. I would imagine these are things that we should look out for.
Or maybe just stabilizing the relationship, that it doesn't burst whatever we need we get.
Yeah, exactly.
So I think
clearly FDI X of US is what we need to track now going forward.
See, I think the big surprise is still going to come from what happens between India and US. And I'm here.
Yeah, for the market, I think that will be a big surprise.
That will be the trigger because right now people are bracing for the worst. Right? They're pretty much up to August, they were waiting, they thought something will work out.
And let's not take away from the fact that we, of course, want to ignore the rhetoric, and there's too much of it out there, but the market is still reading all the posts
and I'm saying,
everybody in the US
I want to highlight a couple of positive signs there, right? One is yesterday's Piyush Goyal interview that we had on our channel, right? Rahul's interview, and I think the poise and the communication of, we are not going to get down in the mud with you was very clear, right? No matter what you say. Number two is on the day, Shireen, that you mentioned Xi Jinping's meeting with Prime Minister Modi, that morning the US Embassy puts out a tweet, which is extremely different in its tone from what Trump and his sidekicks have been taking. It is very polite. It is an outreach that we've not seen from Washington, D.C. for a while. And that came with a quote from Marco Rubio, right? Which was again about defining India and US's relationship as a, defining one for the next century, the same words that our people have been using here. And I think this poise and this patience will likely pay off, I mean, in an ideal situation. And if it does, if it works, before, let's say, because Boyle said that it's still possible before November.
So the next meeting is in November 4th.
So before that, there is a quad. Before that, there is a quad. Before that, there's going to be BRICS. So depending on what comes out of the BRICS, will set the...
Quad will be contingent on Donald Trump.
Exactly. Will be contingent on whether Trump actually comes for the quad.
And there has to be a deal.
I think something very positive that came out of the SCO meetings and those photo ops, as optics as it might be, is that maybe there is a realization, and Washington was watching every single bit of it. There was a rant of tweets from the US president on every post, every handshake, every smile, and perhaps that tells us that now Washington has realized that they're not pushing back just New Delhi alone. There is a bit of taking on China. There would be perhaps a need to take on Russia. If you really need to get real, then more sanctions, etc.
And you say take on,
can't just bully India alone. Maybe, I hope that's the message that's gone out.
I think my reading is slightly different, which is essentially, I think he will soften his stance in all three cases.
Exactly.
Right?
Yeah.
Because that day, again, his tweet in the evening after the meeting, etc., was a bit of the point is that he's back on the table to negotiate.
Exactly.
That was the vibe of his tweet that evening.
Yes.
So he's willing to talk.
Let's not run ahead of ourselves.
It's all of this is projections.
A day is too long in the Trump administration era. But at this point in time, I think what is very clear is that India continues to try and engage. India is very mindful of wanting to engage. We are going to have to see whether the Trump administration takes up that offer and whether we start to see officials on both sides coming together and sitting across the table. But that is, of course, the big question at this point in time. But guys, we're out of time. But the GST is done. And as Nimesh was pointing out, the market is now asking what next. And as always, we promise you on CNBC TV18 that we will tell you what's next, just as we did as with the GST. This is, of course, your GST destination, but this is also your destination for the most credible and insightful news breaks. So Prashant, Surbhi, Nimesh, Sriram, Parikshit, as always, great having you back on the Editor's Playbook. We'll see you all again. Take care, and thanks very much for watching.
Thank you.
Piyushji, thank you so much for giving Network 18 this exclusive interview. Welcome to the show.
Thank you.
What a day to be interviewing you. Historic reform in GST rationalization. You've been in the center of news for so long, so it's a great time to be interviewing you. My first question, all this started with the Prime Minister's address on the 15th of August, Independence Day, when he spoke about Atmanirbharta. He framed it in the context of Swadeshi, he framed it in the context of quality drive, and he also, so that is where it all started, and it has led to this. He gave a hint to us on that day that big reforms are coming. So here it is, your first reactions on this GST rationalization.
Well, I'd like to compliment Prime Minister Modi for taking this bold decision. I see this as the most transformative step the nation has seen possibly in the last 50, 60 years. This is a journey that Prime Minister Narendra Modi started right in 2014. Back then, he spoke about making in India.
Hello, welcome to this special broadcast. I'm Parikshit Luthra. The Indian auto industry was in top gear today with stocks hitting the highest level in nearly a year. Here's why. GST cut on small cars and bikes lifted sentiment. Small cars and two-wheelers below 350cc will now attract a GST of 18%. SUVs and luxury cars will now be taxed at 40% GST, with the cess component being done away with. I caught up with R.C. Bhargav, Maruti Suzuki chairman, to get a sense of what it means for their company and the sector at large.
I think this major reform by the government is going to make not only a big difference to the automobile industry, but is going to make a big difference to the economy as a whole. Certainly the small car segment is the big beneficiary. It will, I assume, from the 22nd of September onwards, our expectation is that we will start getting into about 10% growth a year instead of the current stagnation and decline. I believe the automobile industry, as a result, will also move away from its 1%, 2% growth and get into a 6-7% growth as a whole.
Right. So you're saying you're expecting 10% growth in FY26?
For the remaining part of 26.
Right.
The first 6 months have gone anyway.
So overall, how do you expect FY26 to finish, sir?
Well, if I take first 6 half to have zero, actually we are at a decline, then overall for the year we should get, for the small car segment, a growth of maybe between 4 and 5%.
Right. That indeed is an important point. Now, when it comes to the policy clarity, do you think the government has also now clarified the policy intent that EVs will be at one rate, 5%? Beyond that, if you have a small car, either in CNG or petrol or hybrid or any other alternate fuel, that will be taxed at 18%. Large cars, large SUVs, hybrid, alternate fuels would go in 40% bracket. Do you think the policy intent is now clear?
Very clear.
On hybrids, sir, do you feel that the cost advantage that hybrids may have had marginally earlier, for example, a large hybrid car over 1500cc had a 28% GST and a 15% cess, and maybe a large SUV or a luxury car would have had a 50% tax rate if you look at a 22% cess. Do you think that benefit has now gone?
Certainly gone, because both are going to be at the same rate.
Does this impact the sale of hybrid cars?
Not very much, because at that end of the market, Parikshit, the market is very small. You're talking of a price range of around 40-50 lakhs. It's a very small market there. So the impact, theoretically, there's an impact, but overall, in terms of volume, it's not going to make much of an impact.
Right. I would also like to ask you about the reduction in prices. We were just speaking to Mercedes-Benz, and they said they expect prices to come down for luxury cars in the range of 5 to 8%. As a veteran of the industry, sir, what is the estimate or what is the good news you could give to consumers?
Well, we expect that at the entry level, let's say the Alto level, I can't give you an exact figure, but I think the reduction in retail price for the customer will be between 8.5% and 9%.
That's an important aspect. So you believe that for entry-level cars, 8.5% to 9% to even 10% could be the price reduction?
I don't think it can become as much as 10% because the tax benefit is 10%. And there are costs like transport costs and dealers' margins and some extra costs, which don't get into the GST calculation. So it'll always be a little bit less than 10%.
Right. What about the rest of your segments, be it sedans, be it small SUVs?
The price will all reduce in all the vehicles because the minimum in the bigger segment was 43%. That comes down to 40%. So 3% reduction in tax will translate into roughly a 1.5% change in the retail price. Some cars went up to 45%, including cess. So 5% reduction would mean roughly 2.5% reduction in retail price.
Right. So 2.5% price reduction across the portfolio.
For those which are in the 45% bracket.
Right. That indeed is an important point, sir. Is Maruti Suzuki going to ramp up production now?
We hope that the demand will increase substantially and that we will be able to increase production, yes.
Right. Now, in terms of the future portfolio for Maruti Suzuki, now that this rate rationalization exercise is over, what do you think will be the product mix that Maruti will focus on?
You know, our strength has always been the small car market. I believe that the demand for small cars is going to pick up again because there has been a suppressed demand for years. Customers have been waiting for relief. This year, the government has done a number of good things which have combined to give the customer a great feeling of optimism in the future.
All right. So that was the stalwart of the Indian auto industry, R.C. Bhargav, in conversation with CNBC-TV18. Let's move on and get you a conversation with Anish Shah, Group Chief Executive Officer and Managing Director of the Mahindra Group. He said he's confident that the GST cut will boost demand with the start of the festivity. Adds that this will come as a cheer at a time when markets had seen a slowdown in the last few quarters. Let's listen in.
The overall impact on the economy, and to me that is the biggest factor in this change. It is a very dramatic one. It ushers in a new era of simplification and possibly a new era of ease of doing business as well. It will have a very significant impact on consumption. And this is something that should in some ways create that momentum that we were looking for in the economy. A lot of the fundamentals have been in place, but I think this is a very significant move that will create that momentum and propel India to an 8 to 10% growth rate overall. So that is the reason why we feel it is a very important milestone for our economy and sets it up in the right way. I'll let Rajesh cover the details from an auto perspective in specifics, but from an overall economic standpoint, this is a very, very positive move.
Fair enough. You're very positive in terms of the overall economic impact. Rajesh, if I can ask you then the specific bit, what percentage in the 18% slab and what percentage in the 40% slab? And of course, we will get to the tractor GST rate reduction as well, which I think is a big positive for Mahindra. Go on.
Yeah, so Prashant, like Anish said, we're delighted with the news overall. It's a huge enabler to demand and consumption. Markets have seen some kind of a slowdown over the last few quarters, and I think this will be a very good boost, timed very well with the start of the festive season. To the specific of your question, I actually want to, you got to see the auto and farm business, which is key part of the M&M Limited company, as a sum of three key segments. The tractor segment, which is tractors and farm machines, the commercial vehicle segment, and then the SUV segment. So tractors gets a big boost, 12 to 5%, which will lead to prices coming down 40 to 60%. And that on an average basis, we do about 35 to 40,000 volume a month. Then we have the pickup portfolio, which is LCVs less than 3.5 tons, which will move from 28 to 18, which is about 25,000. So I'm just giving you these broad numbers so that you get a context of the volume. Our SUV portfolio is in the region of 45,000. Roughly 40% of that will be in the 18%, and 55-60% will be in the 40%. But we have to keep in mind that we also have EVs, which will be in the 5%. So overall, if you kind of, were to leave out the 40%, we have a very large chunk of volume pickup plus SUVs in the 18%, And then we have tractors and EVs in the 5%.
Rajesh, around 40% in the 18% overall. Would I be okay in the ballpark?
No, it'll be higher when you add the pickups, the commercial vehicles. So it'll be almost 65% when we add the commercial vehicles as well.
In the 18%
So when we report
slab.
our auto numbers, it includes commercial vehicles as well.
Mr. Jejurikar, if I could ask you, I know it's very early, but maybe your team has already done the back of the envelope calculations. If we talk about the full revenue of the automotive segment, let's leave aside farm equipment. So if you talk about full year revenue, then is there a way of gauging that, what part of the portfolio, with the volume breakup that you just gave us, what part of the portfolio or what percentage of that revenue gets a positive leg up because of the reduction to 18%? And what part perhaps, which will be few, which go into that 40% category? So that percentage of the revenue, perhaps you have to see how the volumes play out.
No, every part of the portfolio will get a volume up, Surabhi, because 40 is also benefit of 8%. So what was in 40 was 48%, including the cess. So even there's an 8% benefit. So every part of our portfolio gets a leg up. EVs are unchanged, but everything else gets a leg up, between 8 to 13%.
Going back to the overall point, to what extent, I mean, how should we, interpret or imagine the sort of boost and, whether it's going to be a lasting boost to consumption and specifically to the auto sector that these cuts will yield? I mean, say, given your monthly run rate, of course, there'll be an immediate bump up, I guess, all the pent-up demand maybe in the next